horizons, Middle East and Africa, for the story.
Employment Confederation, wages for new hires in the UK rising at their weakest pace in over 4 years. So that's what I've got on my mind. Guy, let's go to the open.
OK, let's talk about some numbers. Let's give you the opening trade. It is time for that this Monday morning. Let's see what happens. Kind of first full week that we've had, you could argue, for quite some time. But the FTSE 100... not doing much at the open as anticipated. We are expecting a more positive picture to emerge across Europe. We do have a little bit of a legacy coming through from Friday that we need to factor into our thinking as well. So the stock 600 is up by 0.2%. Keep an eye on oil stocks, keep an eye on the oil majors, but also keep an eye on the miners as well. And that's all going to be factored into the FTSE 100 this morning. There's a few single stocks that we need to be watching out for as well. We were mentioning just what was happening with ASML. We'll see what the reaction is to the Mistral news on that. But the CAC 40, interestingly enough, is the outperformer this morning. Not the laggard, the outperformer, as we approach the ousting of another French government a little later on this afternoon. But it's interesting to see the French stocks are on the front foot this morning. We'll wait for the DAX, we'll wait for the SMI. We'll see what's happening there in just a moment. Val, what do you got from the sector point of view?
Well, from the sector point of view, we have all but two in the green so far in the first few moments of trade. At the top of the basket, no surprise, is energy. That sector up around 1% to start today's trade. Technology not so far behind. That sector's up 0.6% due to gains in ASML. That share is up just less than 1% in the first moments of trade. At the bottom of the basket, we have travel and leisure and telecom. So it does seem to be kind of a normal risk-on day when it comes to these markets here in Europe. We have 407 stocks in the green, only 92 in the red across Europe this morning.
Yeah, so just diving into energy, so you've got BP up 1.4%, Repsol 1.3%, about the same for Shell, Total not far behind. So all of those in the green off the back of the oil moves. You mentioned ASML, those shares up 0.9% at this moment. And we were discussing the UK recruiters, just zooming out to the broader index. The FTSE up 0.25%, about the same move for the FTSE 250, but it's green across the screen for European equities. And as you say, Guy, that probably comes back to the macro picture when we look at the US futures moves as well.
It's interesting. French stocks are up, and you can see why. Airbus is having a good day this morning in terms of points. Total is up. It's having a good day in terms of points. Schneider's up. The company so associated with the build-out, the AI build-out, it's up quite nicely. Sanofi's trading. None of these companies are directly related to really what happens in France. They are global stocks that are maybe being buffeted more by what's happening on the global picture rather than what's happening with the French picture. But it's interesting to see the outperformance coming through from France. But it's not necessarily French-related, I would argue, in terms of what we are seeing.
Yeah, but it kind of chimes with what we heard from our last guest, that even the euro hasn't really been reacting to the French political crisis. We'll keep an eye on how that delves out with the vote to take place later tonight. So this could be more of tomorrow's market news in terms of the French political instability. But let's broaden this out to the bigger macro picture. Joining us now across the table is Nancy Curtin, the CIO at AITI Tiedemann Global. Thank you for joining us this morning, Nancy. I read that you're still positive on U.S. stocks, but what did you make of the Friday payroll report and all the revisions that we've gotten?
Well, first of all, it was decidedly weak, that's for sure, at 22K. But I think we have to remember that the break-even job creation rate is coming down from the crazy numbers we had, in the last couple of years. Whether it's 60 or 70K remains to be seen. So in that context, it probably didn't look too bad. When you looked and parsed through the data, where was the weakness? Government sector, DOGE, probably the tariff impact, manufacturing, wholesale trade. Maybe the worst is behind us. Construction, the Fed easing will help that. So we have a sense that this is a weak patch, absolutely could continue. We'll keep an eye on it. But as we head towards 2026, we do think an increase in CapEx and investment spend, which tends to correlate to job creation, could be the sort of antidote to the weakness that we're currently seeing. And remember, the unemployment rate, 4.3, is within the FOMC's definition of full employment.
Well, Nancy, I guess the one thing that could hamper the equity market rally is a return of fiscal worries that we're starting to see glimpses of, at least here in Europe. The UK last week, we have our eye on France. Look what happened in Japan over the weekend. Is that something you're concerned about? And would there be a catalyst that could arise that maybe would knock your enthusiasm for U.S. assets?
So, look, we're dropping prime ministers like flies here. Another one today. And I think the picture in France, in Japan and UK, is a picture that's more challenging. Obviously, they have very high debt levels like the United States. The option to grow out of that debt is less clear, right? So just pursuing austerity, which obviously the populists don't think is a good idea, they're very, very challenged in getting those things. We need more structural reform, deregulation, et cetera. So I think there is pressure on long end of bond markets, and that could be the United States. Having said that, we need to look to see whether the U.S. experiences kind of a 1990s playbook, which is an improvement in productivity. Remember, that brought GDP higher in the United States in the late 1990s. It brought inflation lower. And actually, the debt and deficit levels improved as a result of surging tax receipts. So it's one of the things we're watching. And remember, in the second quarter, productivity in the United States came in at 3.3%, a pretty strong number.
Well, could one of those catalysts be these legal hurdles that Trump's tariffs have to clear? Because, of course, the consequence could be he doesn't have enough money to cut taxes as much as he'd like and not therefore able to boost the economy as much as you expect.
Well, great question, because the income coming in from the tariffs is running about $25–30 billion a month, money created out of nowhere in a way. Now, the legal challenges, it's going to go to the Supreme Court. We probably won't know until next year. There's a conservative majority. And by the way, there's about 4 or 5 other statutes that Trump has at his disposal to use, Section 232 by way of example. So, look, we think tariffs are going to be a feature of the Trump administration no matter what happens on IEEP. Yeah, there is a legal challenge. I have a feeling he'll get through it, but we'll have to see. It goes to the Supreme Court next.
So basically, don't worry about that for now.
For now.
Just coming back to the jobs market, are we kind of in a Goldilocks moment then? Is it enough to justify 50 basis points, the weakness in the labour market?
I don't think so. I think the Fed, and we heard from Goolsbee last week on Bloomberg, there are too many conflicts. You've got full employment, you've got a softer jobs market, but you don't see firings, you don't see unemployment rising too dramatically. It's a confusing picture. Our sense this is a mid-cycle slowdown, or whatever you want to call it, temporary on the jobs market. As I said, as we look forward to 2026, given what we think will be an investment spending boom, or at least increase, and we already saw it in the second quarter numbers, that tends to be highly correlated with job creation. So this may be a slump with 2026 beginning to get those jobs back again. And by the way, freeing up workers from the government sector to work in the private sector, no bad thing for an economy.
Well, do we need them in the manufacturing sector? I think that's one sector that shed a lot of jobs recently, Guy.
Can you go from the government to the manufacturing sector? That seems like quite a jump to do quite quickly.
The U.S. economy and workers pretty flexible. Where there's a job, there's a person. So I find the economy very, very flexible in that regard.
Credit creation is epic at the moment in the United States. Why do we need cheaper cost of money?
I think there are parts of the economy, housing, that has not experienced any rebound. Lower income consumers are still weighed down by credit card debt, et cetera, and they pay quite high interest rates on that. Manufacturing side has still been in, broadly contractionary territory. Small businesses still impacted. So I do think, given where we are, by the way, unit labor costs are actually quite good, given my productivity comment. I think the Fed could loosen up a bit here, and I think it will help the other parts of the economy which have struggled. So, yes, we have to be careful. We don't have too much easing, and we end up with too much growth as we go forward to next year. So it's a tricky situation, but I think full-on, spot-on for a rate cut next week is, I think that will happen, 25 basis points.
Would cutting aggressively with stock markets at record highs be a good idea? Just put those two things together for me.
Watch the bond market. That's the guardrail. Yeah. That's the long end of the bond market. So we've been positive on equities, U.S. equities in particular. Look, I mean,
but you're watching the bond market.
But we're also actually quite short duration on bonds.
But what signal would you need to take from the bond market to worry you about?
A 10-year, 30-year continuing to move higher. I mean, actually
5%?
Move lower.
Yeah.
4.5, 5 begins the red line a bit for equities. So we're going to continue to watch that. But I think that's the guardrail, because what happens with that guardrail is you get a policy shift, right? You'll have less interest rate cuts, et cetera, et cetera.
Well, I guess you have to add in the whole Fed independence, the musical chairs going on at the Fed into that conversation, because that could be definitely something that could freak out the bond market in terms of them pricing in too much easing into the front end. But we did hear from Trump over the weekend, or late on Friday, I think it was, and he said that it was still Kevin Hassett, Kevin Warsh, and Christopher Waller in the running. Yeah. No wild card has made their way into the final three, it seems. Does that give you more comfort that we wouldn't have too much Fed easing coming to fruition?
Look, I think the two Kevins are sensible picks. I don't think these are crazy, appointees. Certainly, they probably are towards easing, that's for sure. Putting that aside, if we look at the challenge to Fed independence, that is concerning. And if Trump manages to get a majority of the Board of Governors, they have the ability to appoint the regional bank presidents, right? And remember, all 12 are up for reappointment next year. So I think that is what markets will be watching. But, you know, again, a guardrail, as we saw during the tariffs, and Scott Bessent well aware of it, when the long end of the bond market starts to freak out, that's when Trump has pulled back.
What would cause that to happen? We talked about Fed independence. That's clearly a challenge at the moment. You've got a tariff story that potentially could drive inflation higher. You've got a labour market that's weakening, but as the labour market's been weakening, we've still got quite strong inflation. What would cause the bond market to deliver that shock that you think could cause equities to kind of take another look?
I think if you begin to see persistent goods inflation, which our own view is it's likely to be one-off. We'll see. We've got a CPI and a PPI number coming up this week, but also services inflation. Remember, super core services are actually disinflationary. If you take out, you know, the sort of rent is a very, very lagging indicator. Super core services were actually down in the month of July, 85 basis points. Goods were up, so we're going to have to see that mix as we look forward to the upcoming, CPI print this week. But obviously, service inflation and goods inflation at the same time, that would be a concern, that inflation becomes more persistent as opposed to one time. So again, it's all in the long end of the bond market. That's the signal. That's what you have to watch. But remember, you know, from an equity perspective, earnings have been fantastic, right? 12% in the second quarter, expectations of 4.9. I reckon third and fourth quarter will also be.
That sounds like an economy that needs rate cuts.
Well, again, I think we have to be careful here. I agree. You know, Trump has called for 3% rate cuts. I mean, that kind of stuff is crazy. But then he always has the most extreme. You know, maybe we'll get 75 basis points to 1%.
Nice to see you, Nancy. Always a pleasure.
Likewise.
Thank you
Great to see you guys.
Nancy Curtin, CIO at LT Tiedemann Global. Let's talk about what we're seeing in the market this morning. Fairly strong bid coming back into European equities, so we'll keep an eye on what is happening there. You can see it certainly within the tech sector. ASML is up. Schneider's having a fairly good session. Luxury also on the front foot. Defense names are back. The more staid end of the market, the more stable end of the market. Nestle, a little softer this morning. Novo, certainly a little softer this morning. What are we watching? Oil front and center as well. We haven't talked about that. Chloe Melly's here to do just that, though.
Good morning, guys. Yeah, let's start with oil majors this morning. They are moving a little bit higher on the back of that OPEC production hike, although it's quite a modest hike, and that explains maybe the slightly modest gains. But we have that wall of green across Shell, BP, Repsol, and Eni this morning. Moving on to Ryanair. Ryanair is down this morning on the back of a downgrade. So it was downgraded to a neutral rating at Goldman. It comes after flagging quite a cautious outlook this summer, and also after Jet2's profit warning last week. So maybe it signals a little bit of weakness in that UK low-cost airline kind of space. Moving on to M&S, another UK stock, but this time it is an upgrade. It was upgraded at Citi. Obviously, M&S had the massive cyber attack that it dealt with, and that paralyzed its operations for months. But now it is apparently turning a corner, and therefore we have shares up this morning on the back of that Citi upgrade. And finally, let's end on another UK stock, quite a UK-heavy day this morning. Shares are down for Phoenix Group. Phoenix is an insurance company. Profit actually did beat estimates, but perhaps investors are reacting to its name change. So it's changing its name to Standard Life from March 2026, and perhaps investors don't like that name very much. Perhaps some other numbers also disappointed a little bit. So it is down almost 5% for Phoenix this morning.
Okay, Chloe Melly from our equities team, thank you so much for those movers at the open. Guy, we've been talking a lot about politics this morning. We've been talking about Japan, the French situation, the UK on Friday, but we've also got to keep an eye on Norway.
I'm going to take you to Norway right now. There's a sort of slightly moving but live shot coming out of Norway as we. This is it. There you go. This is kind of as it's happening in Norway. The election is underway. You could argue that Norway is a sovereign wealth fund with a country attached. It kind of has a disproportionate impact as a result of its wealth and that fund, which obviously bleeds into stories like Israel and what is happening there in terms of the idea that we should be disinvesting, or the Norwegians should be disinvesting from Israeli companies. That's been a story over the last few days. It's also the Nobel Peace Prize coming up over the next few days. Trump wants it.
Well, he's had a few calls.
Yeah,
what happens if he doesn't get it? What happens if Trump doesn't get the peace prize? Does he direct his ire towards Norway and the next government that is going to be formed in Norway?
Well, the finance minister who reportedly got that call, I'm sure we'll find out. We're coming up on the programme. OPEC Plus pushing its bold strategy a little bit further with another oil production boost. We'll get you the details next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. You're watching the opening trade. We are 18 minutes into the equity market session, 19 minutes, and actually reasonably positive. I'm not sure there's a direct line you can draw between kind of French performance this morning and what is happening in French politics. It's actually names like Airbus and Schneider that are trading strongly this morning. Total is also having a good morning within the oil trade, and that is maybe providing the updraft that we're seeing in the French market. But by and large, it feels like a stock story this morning rather than a geopolitics story that's bleeding and pushing into that narrative for European equity markets.
Yeah, it's the international names that are leading the gains, and it is just a wait-and-see moment for what happens in the weeks and months when it comes to France. But as you say, oil, energy, the best-performing sector on the Stock 600 this morning, oil itself climbing, and this comes back to OPEC Plus agreeing to raise production once again, but at a modest rate, and it highlights really the caution from some of the group as the market heads into this unexpected surplus. Now, the group says that it's going to restart 137,000 barrels a day of output. It defies the warnings from Wall Street that the move risks compounding a supply glut. And joining us now for more is Bloomberg reporter Anthony Di Paola. Anthony, good morning. Look, we know that OPEC's given up defending oil prices. They're going after market share here. But not everyone has the capacity to benefit from this. Which are the names, which are the countries that are going to be able to pump more now?
Good morning, Lizzie. Yeah, I think it's pretty much Saudi Arabia that's been pushing these increases and really driving the OPEC Plus group to add production, rolling back these cuts. And it's going to be the Saudis that have the most spare capacity and are being able to bring back the most oil. Also, other Gulf producers, we've seen the UAE with some spare capacity, as they also are increasing the amount of oil that they can produce. Kuwait's also got some spare capacity, and Iraq wants to produce more. Iraq has been producing over their quota as well, and they are continuing to be in talks with the northern Kurdish region there about getting production exported from that region. It's been halted for over 2 years now. So it's really some of those Gulf countries, and of course, Russia will also try to produce some more, but we're also seeing some moves, potential moves, around sanctions and around efforts to restrict oil there. But some of those other OPEC Plus producers will have difficulty bringing barrels back onto the market. At the same time, OPEC Plus is going to be competing with barrels from the Americas, from the U.S., Guyana, Brazil, those non-OPEC Plus countries that are bringing more oil on. And that's the influx in the market that's possibly creating the risk of higher stockpiles and lower prices later this year, Lizzie.
Anthony, you mentioned just there that sanctions are still weighing over the oil market. The EU actually weighing new sanctions on Russia, the 19th package since Moscow's full-scale invasion of Ukraine. They want to hit energy companies. What do we know about this?
That's right, Valerie. Yeah, they are looking at this, as you said, this 19th package, and it depends really on where they try to focus on that. We've seen some of the most effective sanctions being around shipping and insurance that have driven out some of the vessels out from being able to do kind of a legitimate trade if some of those vessels go beyond the European Union price cap. There has been talk about trying to lower that price cap, but that's never come to fruition yet. And some of the Europeans are saying that they would like the U.S. to come along. We have heard some comments from the U.S. Treasury Secretary that they want to do more on Russia. But that's been the real piece that's been lacking. Donald Trump has threatened to put more sanctions on Russia if it doesn't come to the table, if it doesn't agree to a ceasefire. But so far, we haven't seen the U.S. really tightening up the constraints on Russian oil production. Of course, that's probably a resistance to increasing the oil price and also wanting to keep the relations with Moscow good. So we'll see what the U.S. piece is of those sanctions when we get those, Valerie.
Anthony, just to come back to kind of where we are now versus where we were, is there the same amount of Russian crude on the market now as when we put the first round of sanctions on Russia? Has anything materially changed given the amount of crude the world was taking from Russia? And do you get any sense that the European Union would be prepared to back secondary sanctions? That feels like a big step in terms of places like India.
Yeah, Guy. I mean, we have seen some material changes in the market. The oil market adjusts and flows move around to different places where they can get to. So when there's an obstruction, be it a closure of a strait or a port or financial sanctions, the oil market works around to get oil to where it needs to be. The big change that we've seen has been the products going into Europe. So Europe's not taking diesel from Russia anymore. Europe is in a short position for diesel. And so there we've seen the Europeans taking a lot of diesel from India, which has been buying that Russian crude. So, of course, if the Europeans or the U.S., for that matter, the U.S. has already put 50% tariffs on India because of its purchases of Russian oil, we haven't seen the same level of pressure on China to stop its purchases. But the more you pressure those countries that are very strong in the refining business, the more you put pressure on them to stop buying Russian oil, that will filter through into the product market. As I said, Europe is already short of diesel, needing to import from other countries to replace what it's been getting from Russia. Of course, the Europeans are not buying crude anymore. Gas has stopped. A lot of that gas is going to China now. Crude is going around to India, to China. So the more pressure you put on those points, the more you try to cut that off. One, the oil flows will adjust and try to find a way to get to market. And two, you'll see those increasing prices coming more downstream in the refined products.
Anthony, thanks for the update. Really appreciate it. Anthony Paolo joining us on what is happening in the oil market. Let's talk about what is happening in the foreign exchange market. The yen now nearly at session lows as we mark a turbulent picture in the Japanese political scene. Paul Dobson joins us now. Nice to see him in London. She was gone. The yen is down. If we get political turbulence over the next couple of months, though, how much further could we see Japanese assets being undermined?
Yeah, so I think most crucial is to look at those long-end government bond yields and what's happening there and whether demand will resurface. We've seen another push up. People are worried that the government is going to need to spend more in order to secure kind of popular support, and that obviously weighs on Japan's already very high debt load. And investors are expressing that by kind of piling out of the back end of the yield curve, and the core buyers haven't yet resurfaced. So each time we see that sort of increase in yield, we see more pressure on the currency as a result as well, and that kind of, is pushing us back towards that 150 level. Beyond that, there's some support, but beyond that, could be quite a lot further. Flip side is that the dollar is also under pressure, of course, because of what the Fed is up to, and so that kind of balances things to a certain extent.
Okay, Paul, nice to see you. Thanks for stopping by to see us. Nice to see you in London. Paul Dobson, Bloomberg's executive editor for Asian markets, coming to London as we see a tube strike, making things a little bit more complicated. We did that, yeah, precisely. We're going to turn things over to what is happening in France next. The likelihood is that we're going to see the Beirut government being ousted a little bit later on today. We'll turn our attention to what is happening in French politics. That's next. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to the opening trade. We're 30 minutes into today's session. If you're just joining us, maybe you're not joining us from your desk because there is a tube strike here in London. Hence, perhaps we have lower trading volumes. Hence, perhaps why we have the FTSE 100, the underperformer across Europe this morning. It's a sea of green, but the outperformer this morning is the DAX. Thanks to the boost to defence names, you've also got, perhaps surprisingly, given the French turmoil in politics, outperformance here for the CAC 40. But it's more the international names. You've also got a boost to the likes of Total Energy coming off the oil story. But across the Stock 600, Guy, we're 0.3% up at this point in the open.
You could argue there's some action in equities this morning. Not much action, but there is some action. Let me just show you what is going on in terms of the internals. 353 up, 223 down. I'm not sure there's a massive signal there. London's lagging because of names like Astra. Volume is, though, light. Like, it's been light for a while, but volume is definitely light this morning, and I do wonder, to Lizzie's point, whether or not that is related to what we are seeing in terms of the transport situation here in London with the tube strike that is on. I want to flag as well what is going on in the commodity story, less to do with what is happening with oil, but more to do with what is happening in gold. Gold, another fresh record high this morning. Take a look at the chart. You'll see it there once again. Who is a beneficiary of that? Fresnillo is a beneficiary of that. This stock just continues to rocket higher. I keep bringing it up as a 52-week high. There aren't many 52-week highs out there this morning. There are no lows that I've tracked so far this morning on the Stock 600. But Fresnillo continues to stand out as a 52-week high. The stock is now up 323%, 324% on a 52-week basis. And the gold price just continues to power ever upwards. And this is the derivative trade of that, Valerie.
Well, here's what else you need to know this morning. Japanese Prime Minister Ishiba says he'll step down to give way to his successor following weeks of calls for his departure. The move has sent the yen lower and stocks higher in Tokyo and further adds to the risks weighing on the long end of the Japanese bond curve. Oil has been pushed higher today on reports the European Union is exploring new sanctions on about half a dozen Russian banks and energy companies. Sources say the bloc is hoping to coordinate some of the latest measures with the U.S. A delegation of EU's officials are said to be heading to Washington this week to discuss a potential for joint action. And lastly, French Prime Minister Francois Bayrou's government is expected to fall today. Bayrou's coalition will face a confidence vote in France's lower house, a motion he called for in a bid to pressure lawmakers to back his budget-cutting proposals. Guy.
Valerie, let's pick up on that story. It looks like Bayrou's going to go, but what happens next? Let's try and answer that question. I want to take you to Paris. Caroline Conan is at the French National Assembly. Caroline.
And I'm actually with a guest who is from a party that is key to today's vote, the Socialist Party. Arthur Delaporte, a Socialist MP since 2022, the last time that Macron was elected. Is there any way that today we're not going to see François Bayrou fall, or is that a done deal?
I'm sorry to say that today is the last day of François Bayrou's office, and I think it's François Bayrou's fault and only fault, because during the summer he never tried to reach any agreement on a budget, and we always said that it was unacceptable for us, and he never tried to call us, and that's, I think, a problem, François Bayrou's fault, but also a democratic problem.
What is next? Your party wants the Prime Minister seat.
Yeah.
Do you think we're going to have, over the next couple of days, quick and fast decision from President Macron and naming of a Socialist Prime Minister?
I'm not in Macron's head, but I can say that our position is that a socialist or someone from the left is appointed as Prime Minister, because we think that we tried twice a minority right-wing government that never managed to reach a non-censor agreement, and today we say that socialists and the left, without the France Insoumise, would be able to have a majority in parliament, not to be pushed away, not to be censored, and that we think a different method can enable us to be in office, but also to reach compromises in parliament. We said with Olivier Faure that we would renounce to the use of what we call the 49.3, 49.3. It's an article of the Constitution which allows the government to pass a bill without a vote in parliament. But then the government can fall, and that's what Michel Barnier did, and he fell.
But obviously Olivier Faure is raising eyebrows, notably from some of the centre-right. Do you believe the socialists would support a sort of technocratic left-wing figure, such as Éric Lombard, the current finance minister, or Pierre Moscovici, for example, the Cour des Comptes president? Is that the way to go?
What we say, if we want stability, we have to have a kind of political alternative. And that's why we cannot have, for instance, I think, Éric Lombard, because Éric Lombard is responsible of the past budget and one that was presented this summer and that will make François Bayrou's fall. So if we want an alternative, we have to have a sustainable alternative, but also to show that the French people have a new government and not a kind of continuation of the Macronism. Because if we have a new Macronist government, even if with the support of the socialists, then it might still fall.
But of course, the socialists have presented already an alternative budget that includes 22 billion euros of savings, half of what François Bayrou was proposing. You're also delaying the return to a 3% deficit target to 2032 rather than 2029. Don't you think that your socialist program, your socialist budget is actually scaring investors?
I don't say that, because what scares investors is instability. And today, if we have a sustainable trajectory for debt reduction, then we can have sustainability and social acceptance. And that's the key, because if you make, for instance, a kind of plan with 44 billion of cuttings, then you won't have 44 billion of cuttings because you won't have any budget. So if you want a sustainable budget, you have to make choices, and to make choices that are accepted by citizens. Today, we see that citizens are more and more angry against governments. And if we have, for instance, millions of people in the streets tomorrow, we say that what we can do is always spending more. For instance, in 2089, you had the Gilets jaunes crisis, and the government has to spend 10 billions to make this
Are we seeing a new yellow vest potential crisis next week and September 10 with this social anger, all these protests?
I cannot say if we will have this, because maybe François Bayrou's fall will make this kind of crisis smoother. But what we know is that if you have a social crisis, it costs more than maybe 5 fake cuts in 5 billion cuts in budget. So
let me quote two of your proposals from your socialist budget. One proposal is to cancel the retirement reform, come back to a retirement age of 62. Another proposal is the so-called Zuckman tax, which is taxing 2% of those with a wealth of more than 100 million euros. Those two proposals are a no-go for Macron's camp. If you want to get any stability, if you want to get any majority in parliament, you'll have to get rid of at least these two proposals. Today, are you telling me the Socialist Party is ready to get rid of these two proposals?
What we say, if we have a new government, we have to make some proposals that are accepted by people. Today, Zuckman tax is only for 1,800 people. So it's a very small amount of
The
person.
opposition says it's confiscatory, so...
No, because today this person had a wealth progressing of 10% each year. So if you take only 2%, it's 1/5 of this growth of wealth for the richest people. It's not so much, because today you are taking on poorest people, and this is also very recessive decision.
But this is a no-go for Macron's camp. Are you getting rid of this?
With this decision, is creating also recession, because if you take the money from the poorest, then they do not consume, and it's always scary for markets too. So you have to make choices and
what about the retirement reform, really quickly? Are you ready to get rid of this?
The retirement reform is only a suspension of the reform. So we stop the reform at the time it is today. It's not going back to 62, but it's saying that we have to launch new social discussions with an aim of 62, but with also new fundings for this reform.
Arthur Laporte, Socialist MP, thank you so much. He's saying that a Socialist Prime Minister could potentially bring stability to France. Let's see.
Okay, Kathleen, thank you so much for bringing us that conversation out of Paris as we head towards that confidence vote in Prime Minister François Bayrou later. It's definitely a question that's going to come up at the ECB's meeting this week to Madame Lagarde, of course. We'll be watching that rate decision on Thursday. They are due to hold, and ahead of that, we're going to be speaking to Jens Eichensmith on this programme, Chief Europe Economist at Morgan Stanley. That's next. This is Bloomberg.
Single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also, the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Three minutes past the hour. Welcome back. You're watching the opening trade. This is the state of play for European equities. Volume is actually quite light. You are seeing some outperformance, though, coming from the German market. Some of that has to do with what we're seeing within the auto sector. Volkswagen is currently trading up 0.4%. The Munich Motor Show is on. Automakers very much showcasing their latest models. Of course, they're addressing some of the challenges they're facing, including what is happening with tariffs and China and technology. And, well, there's lots of things that we need to be thinking about. On that note, Stefan Nicola from Bloomberg spoke to the Volkswagen CEO, Oliver Blume. He asked him about his view on what is happening with the current trade discussions.
We welcome the joint agreement between US and EU with the opportunity to come to a signed agreement retroactive from the 1st of August on. And that gives us planning security. On the other side, the 15% would be a burden for Volkswagen Group. That's very clear, and we don't appreciate the asymmetric deal in between US and EU because it's distorting the competition in Europe. And therefore, we are counting on our own offer investing heavily in the US, linked to our growth plan. We planned in the US, and there we're in a close contact and good talks with the US government. And we hope that we come to a quick solution also during the next weeks with the support from the US government to our investments, because we think that's very attractive for the US community, building employment, building a supply chain, and that at the end gaining taxes in the US, and that is positive and a better multiplier than having on the other side the tariffs.
Yeah, let's stay in the US for a second. You've long wanted to grow there, and you've made some investments in the Scout brand, for example. Now, things have changed. President Trump is cutting back on EV aid. The tariffs we've already discussed. How do you adapt your North American strategy to those new realities?
Yeah, we are investing heavily, for example, in Scout or in Rivian and other tech partnerships in the US, and we see still a huge growth opportunity for Volkswagen Group with all our brands. And Scout is one positive example to enter now in the biggest US car segment, pickup segment, and the huge rugged SUVs. And Scout stands for this segment, to bringing back a heritage US brand to the market. And what we are offering there is also a car with range extender. You have a internal combustion engine, and offering a huge mileage with these cars, around 800 miles. I think that's very attractive for the US community. And the car is stunning. We were able to present it also yesterday here in Munich. And everybody is excited, and also the first order intakes are very, very positive for this car.
So no changes to Scout. You're doubling down on that brand and that introduction.
We are counting on Scout, and this is one very important driver of our growth strategy in the US.
Your more luxury brands, Audi, Porsche, have struggled with profitability recently. And, your budget-oriented nameplates, Skoda, for example, have done really well on that front. How do you explain that, and what's the outlook for getting those premium brands back to premium margins?
You have to distinguish the circumstances. Brands are playing, Skoda's only playing in Europe, and has got a very low level of labor cost, mainly in the Czech Republic. On the other side, Audi and Porsche are global players. In terms of Porsche is in the so-called sandwich positioning in between China and the US. The luxury market broke down over 80% in China, and that counts over 25% of the Porsche volume. And on the other side, we have the tariff situation in the US, and this puts Porsche under pressure, because both markets are counting over 60% of the Porsche volume. We don't earn any money on this. On the other side, Porsche has a perfect product portfolio, completely new, having record sales in the most of the Porsche markets. But on the other side, we are currently not able to compensate it. And in Audi, we switched the whole product strategy of Audi, a complete restructuring process of Audi. We were able to present the new Audi design language yesterday here at the IAA, and the Audi path is also very, very promising. But we have to fight against the circumstances these global players are faced currently.
That was Oliver Blume, the Volkswagen CEO, speaking to Bloomberg at the Munich Auto Show. If you want to follow along and see some good pictures of some newly released cars, T-Live blog is where to go for that. Let's check ahead of the risk events on the horizon this week for markets. Today is the big vote in France. The French Prime Minister Bayrou's government looks to fall later today on that vote. Tuesday, Apple unveils a new iPhone 17. Focus there on what kind of price hikes on Apple's new devices. Then on Wednesday, we turn to U.S. data. We have U.S. PPI, U.S. CPI follows on Thursday, as well as the ECB rate decision. And then on Friday, some more hints about UK growth. We have UK monthly GDP in a week that the UK and I guess London especially suffering from tube strikes.
So guys teasing me that the ECB event's going to be a non-event. They're expected to
Tell me why it's not going to be a non-event.
Well, the forecasts in themselves are interesting.
Okay.
We've had the US-EU trade deal since the last time.
Okay.
The base case, well, this is somewhere between the base case and the severe scenario, so I'm looking forward to the projections. I'm also interested to hear what Christine Lagarde, a French woman, will say on the French politics.
When do you think the ECB is going to next move rates?
I like the way you use the word move rather than cut, because it could be a hike. Well,
exactly.
Let's ask an expert, shall we? Someone who spent 14 years at the ECB, and that's Jens Eisenschmidt, Chief Europe Economist over at Morgan Stanley. A very good morning to you, Jens. Just talk us through what the bar is to move, as Guy has put it, again for the ECB. Is the next move actually going to be a hike?
Good morning. Yeah, and indeed, from our seat and our forecast, it's not a hike, it's a cut. But as you rightly say, the bar is higher now, that everybody agrees we have reached a level which is broadly neutral, 2%. And I think right now what we are seeing is a council in wait-and-see mode. They have, if you look at the accounts from the July meeting, introduced a new intellectual baby, I would like to call that, that will travel with them for some time, say a high option value of waiting. And so here we are waiting essentially on clarification whether the tariffs have a bigger impact than thought, or an impact as big as thought, or maybe less than that. And how much is fiscal doing to inflation, if you want. That's a very rough description of the sort of questions they are asking themselves. And so the September meeting will be a prime occasion for wait and see. If you ask our specific forecast, we have a cut in December, so we think that weak data will arrive very soon, and another one in March.
Jens, on your call for a December rate cut, we've had quite some hawkish language from the ECB. Our own Bloomberg's ECB indicator shows that their most hawkish language in a few years. We had Isabel Schnabel talking about how global rate hikes could be earlier than expected and that inflation risks are tilted to the upside. What are you seeing in the data different from the hawks at the ECB?
Well, I mean, first of all, I would say that even the ECB says that for now they expect inflation to go down. We have an undershoot next year. They project 1.6, we think, and I think have done so in June. We have 1.7, so in general the market price is the same, so inflation is set to go down. Now the debate you can have is whether that actually is only a one-off, and then in 2007 it goes up, and that's probably where Isabel Schnabel comes from. Again, if you look at the accounts from July, I would say there were more governors, just looking at their language that they use in the accounts, more governors concerned with downside risks than with upside risks. I think ultimately the language in a moment when you are waiting for data, you don't really know, the language doesn't matter as much, I would say here, because it can change very quickly with data. So I think here I would discount a little bit. If there was hawkish language, then I would discount it a little bit, and I would say the data looks set to come in weak. And if that happens, then the December cut is more likely than not.
Jens, we are waiting for the German fiscal push, the impulse that will give the Eurozone economy a leg up. Is that going to happen? When does it happen? And can the ECB really be cutting with that about to happen?
Yeah, no, I think this is the interesting question here, because it basically culminates everything in one country. If you look at the European growth prospects, so think weak growth, weak inflation, right? We look at France, doesn't look great given the political uncertainty, and we project 06 this year, 06 next, so that's not a great run rate. Italy, similar. There's a bit of an exception in Spain, but even there you see some deceleration. So basically everything told, it is really about Germany. How will German growth perform? And this is the most affected economy from the trade headwinds. So essentially it's a question, what's worse, trade headwinds or the push that you get and then the inflationary impact that you might get from the fiscal. Now, on your question, fiscal is going to take time and it's going to sort of be affecting only one country. So even if you are very positive about it, it's affecting the country most affected negatively by trade, and it's only 27% of the euro area. So it's very difficult to construct an upside risk, a meaningful upside risk to euro area inflation from that. So yes, to your question, you can cut even if there is a fiscal stimulus in Germany.
Jens, you know Madame Lagarde very well. I wonder how you think she's going to field the inevitable questions on French politics, how much you think the uncertainty is going to weigh on the euro area economy, and whether you think that actually the ECB would ever intervene to save the oats market if needed.
So I think this is I think the ECB tends to see this from a very technical perspective. First of all, presidents are typically very well advised, and they have, so far from what I have seen, always steered clear of commenting on national politics. So I think that will be her line in the press conference. Similarly, on anything that relates to bailing out, in inverted commas, bond markets, I mean, they have their tools, and they look at that from the perspective of transmission. In particular, the TPI would be one in which, for instance, you see a rout in the French bond market affecting other bonds in the market. So basically, Italian yields going up. That's a clear case for the ECB to think through this and think whether that can be activated. For the French, it's much more complex because, of course, there is an element of looking at fundamentals. How much is essentially to do with the deficit that is not being reined in, potentially. So that's a less clear-cut one, but it's clear that if there are disorderly market conditions, the ECB has all the tools and will very likely also not shy away of activating them if that were to hamper transmission of monetary policy.
Yeah, you wonder what conditionality the French will be prepared to look at. Jens, thanks very much indeed for joining us. Jens Eisenschmidt, Chief Europe Economist, joining us from Morgan Stanley. If the Fed cuts 50, does that change the outlook of the ECB? Does it make it easier for the ECB maybe to cut rates coming up? I don't know.
Well, I mean, that would have an FX implication, perhaps. You know, the euro being stronger, maybe that would hamper economic growth in some way. You know, those companies that are exposed to higher FX, but I don't know. I think it's more down to what he was saying there about how these growth dynamics end up impacting the euro area economy, whether that itself opens up the door.
Is another 25 bips from the ECB going to make much difference in terms of the growth dynamics? They've already cut aggressively at this point, haven't they? The cost of money is coming through now. We're not seeing that much of an effect in terms of the growth trajectory that's being delivered from that.
Yeah, in terms of the growth trajectory, we've got these German industrial production numbers rising for the first time since March. Guy, you tell me I should not...
They're fairly choppy, those data series.
Put too much emphasis on these volatile numbers.
Okay, that wraps things up. We're over and done with Monday. The tube strike continues. I just want to point that one out. But the Pulse is going to be up next. Plenty to discuss. It's going to be a busy week. Hope you enjoyed the show. This is Bloomberg.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
The French Prime Minister François Bayroul's government is set to fall today as he faces an uphill battle to win a confidence vote. We're live in Paris. The yen falls and Japanese markets face more instability as investors prepare for the departure of the PM Shigeru Ishiba. Plus, OPEC Plus defies doomsayers with another oil production boost as the alliance looks to grab more market share. We'll be speaking to Jeff Curry from Carlisle in the next 15 minutes for his take on OPEC Plus and the commodities markets in general. Coming up, we, of course, have Waitlist of BlackRock talking about what we can expect the Fed to do and everything in between, from French market uncertainty and the impact this will have on, for example, the EU weighing new sanctions on Russia, hitting banks and oil trade, the impact this could have also on Brent. Now, you can see we did see a little bit of movement on yen, 147.51. Look, we always look at the 10-year yield. It's a great benchmark to look at what the Fed can and cannot do. Looking at the European markets map, again, it's very clear that traders are bracing for a very busy week that started with the job numbers, of course, in the U.S. on Friday. And you can see the CAC 40 gaining some 0.2% with the DAX 0.7% higher. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, a Fed rate cut this month appears to have been cemented after Friday's weak jobs data. The question now is, how big of a cut will it be? We'll dive into that with BlackRock's Waitlist in a moment. Of course, another key focus this morning, political uncertainty in France and Japan. We'll get the latest from our reporters, Caroline Conant and Jill Decis. Let's start in France, where the premier is likely to lose his job in a confidence vote today. France's inability to fix its public finances have, of course, led to 3 governments in little more than a year. So we're joined by Caroline Conant, who's outside the National Assembly in Paris. Is Caroline, Bayroul's removal a done deal?
It is pretty much a done deal, Francine. 9 months after the collapse of his predecessor, Michel Barnier, Prime Minister François Bayrou will likely fall in this vote of confidence tonight. 98% chances, according to Polymarket. And I was talking just half an hour ago with a socialist MP who was telling me there is no backtrack, there is no compromise in sight. We will not support the vote of confidence, meaning that clearly François Bayrou will not be able to have a majority tonight. Now, what happens next, of course, is in the hands of President Macron. The socialists do believe that it is their turn to get the next prime minister, which is actually something that President Macron hasn't tried yet. We've had 4 prime ministers, it's going to be the 5th one in less than 2 years, but he hasn't tried going the moderate left-wing route quite yet. So perhaps that is one way to go, even if that means possibly losing some of the moderate right Republicans, because of course any budget proposed by the socialists will mean that the spending will be watered down, and clearly that may not be the most reassuring scenario for the markets, even though Bayrou's fall is mostly priced in, and the only concern from the markets at the moment is if we have new snap legislative elections or Macron's resignation, something that the president has ruled out at the moment.
Caroline, thank you so much. Caroline Conant in Paris. Now, Japanese Prime Minister Shigeru Ishiba has announced that he'll step down, setting in motion a leadership race that threatens to unnerve investors as Japanese markets face more instability. Well, Ishiba says that he will stay on as Prime Minister until his successor takes over. For more, let's get straight to Bloomberg's Jill Decis. Jill, who might succeed Ishiba, and what challenges might be next for the next Prime Minister?
Well, that's right, Francine. I think at this point, this was pretty clearly headed toward an exit for Ishiba. He lost two major elections recently, so really kind of is jolting the leadership party within Japan. Now, looking to what's next, we've really kind of zeroed in on two candidates. You've got Shinjiro Koizumi. He's the son of a former prime minister who's much more of a reformist, and so he's more likely, if he were to succeed Ishiba, to be more of a reformist candidate. But I really think it's Tsunai Takaichi. This is a more right-wing candidate. She's really the more interesting possibility here. She's much more of a protege of former Prime Minister Shinzo Abe, so much more likely to be somebody who's a fiscal expansionist, a looser monetary policy. And so if you're looking at the Japanese bond market and potential reasons for that upward pressure there on long-term yields, she's really the candidate, I think, to look out for. She actually came in second to Ishiba when there was a leadership race held last year, so that's also why she's considered a very likely possibility here. But I do think that potential for a return to Abenomics within Japan, particularly if you're looking at somebody that would be Japanese first woman prime minister, I think that's a really, really interesting race to watch here. This is a leadership election that could happen somewhere in early October. So again, going to be a really, really interesting several weeks in Japan.
Jill, thank you so much. Jill Deeses there with the very latest on Japan. And we're also joined by Wei Li, a global chief investment strategist at BlackRock. Wei, there's a lot to talk about. So, of course, there's that jobs report on Friday. There's everything in terms of political turmoil or instability that we're seeing in Japan, but also France. But I love your weekly commentary. It basically says, what are the three things that I've learned so far? And they're always straight to the point. Where are they?
Well, we have had a very eventful year so far this year, but what we have learned is that if we have a very clear framework to navigate policy uncertainty that really help us cut through the noises a little bit, so understanding the things that can change quickly versus the things that cannot change quickly, and compare that versus what markets are pricing, which oftentimes means that markets are getting carried away, creates tactical opportunities that we want to lean into, which we have leaned into, and this is something that we're taking into the rest of the year.
Wait, when you look at the jobs report on Friday, does it change everything for the Fed going forward?
I think something very subtle and very interesting is happening. So when we have the job report on Friday, surprising to the downside, we're talking about 29K on average the last 3 months or so. And just for context, this is like a tenth of what we had at the beginning of the year. So this is really meaningful slowdown here below our estimate of break even. And I think the really interesting and potentially subtle thing that is happening right now is that this creates enough macro justification for the Fed to go ahead with near-term rate cuts without its independence being brought into question. So in the near term, the administration and the government and the central bank are both kind of seeing near-term rate cuts as perhaps the best course of action, so somewhat in line. And what does this mean for markets? It means that some of the previous independence erosion premium being priced out of the markets could actually get priced back in. It's good for equities, but also good for bonds. You see long end now coming back down, perhaps in part reflecting rate cuts, but also in part reflecting some of those independence discussions that actually being priced out, some of those fears being priced out. But from here on, actually some really big questions still stand, because right now it may feel that the tension between monetary and fiscal is somewhat alleviated because of the weaker job number, but just for how long, right? Because they haven't disappeared, the tension. And also the question is the weaker growth. At which point does it stop? Does it get worse? Does it get much worse? And if it gets much worse, then that would offset the positive boost from Fed cut, and that actually could be bad for risk assets.
So wait, 25 or 50 basis point cut in September?
We think 25, but there is a risk of 50, which is something that markets are pricing in as well. Well, cautiously positive risk, but lots of things are happening at the same time.
Is there a risk that actually inflation goes higher, growth, and the labor market deteriorates, and then you're left with a kind of nightmare scenario for both policymakers?
That's always the very tough trade-off that we have been talking about facing central banks in this environment of supply constraint. We have the inflation number this week. Given how weak payroll has been, maybe some of the pressure on the service side is not going to be as strong through the wage feed through, but we're still paying very close attention to goods inflation for decades after a global financial crisis. We're talking about goods disinflationary pressure, and now we're talking about actually 3-month annualizing above 2%, which is very different from the deflationary environment, goods deflationary environment that we came from. So paying attention to how tariffs are feeding through to the goods component, but perhaps the labor market piece gave some respite to the service side of the inflation.
Wait, how do you diversify? Again, I mean, one of the points that you make is actually diversifiers are scarce. And so in this quite uncertain world, where do you go into?
It's really hard to diversify when historical playbooks are not really playing out exactly as you would have expected them to. So I would observe that in this environment of pent-up inflationary pressure over the longer term because of structural transformation, government bonds are less reliable as a diversifier compared to before. But gold has been a better diversifier because there are other drivers of gold beyond previously kind of dollar and rate differential. We're talking about central bank reserve also representing new demand for this asset class in portfolios. So we think that that has actually played a bigger role compared to treasuries. But diversify your diversifiers is really important.
Wei, when you look at France and when you look at Japan, again, these are very political, I guess, reasons, but it goes, especially in France, it goes to fiscal policy. It's something that could be replicated in other countries. How do you play it?
I think the fiscal piece is also a consideration in Japan too, and both developments represent this very difficult trade-off, difficult tension between, on the one hand, fiscal bond pressure, on the other hand, to spend to support economy through transformations. So it represents near-term pressure for asset classes in both countries. And I'm paying particular attention to the fact that when things like this happen, rates are selling off, but currencies are also selling off. That is a somewhat worrisome dynamics I'm paying attention to. But at the end of the day, equity markets may not always be representative of the economy. I say that about the U.S. often, but maybe it also is the case for these two markets as well. So pay attention to equity fundamentals, pay attention to micro, not only macro, as we think about equity allocation.
But when you look at stocks, I mean, they seem to be going from, from record high to record high, with then a little bit maybe of the tech stocks having a little bit of a breather. But how much further can they go?
Well, actually, we're still positive stocks more broadly, but specifically paying attention to U.S. equity market, because when we look at fundamental earnings, U.S. market is the market across the globe that are really driving earnings growth and earnings upside surprise. And within the U.S. is the tech plus rather than the broader market, right? So we follow where earnings are pointing us to, and that is still kind of the U.S. market. For the rest of the market, we want to be more selective. So in Europe, we like likes of financials, we like industrials, and defense names have stood out as well. For Japanese market, we also have an overweight, and that is because of the reform story carrying the earnings growth that is not looking too bad in the global context. But when it comes to equity view, I think pay attention to earnings, because ultimately they could offset the high rate for longer environment.
Wait, is there anything in the UK actually that you like or don't like? Again, there's a bit of turmoil. I mean, this is a fixed-term parliament, so there's nothing, there's no big political changes for the next 4 years. And at the same time, we're seeing the Prime Minister really rechange and reshuffle his cabinet.
Actually, when we talk about the tension between fiscal and the need to spend, the tension between fiscal and also monetary policy, that applies to the UK as well. UK has regularly featured in bond market volatility debate, so we're neutral UK assets at this moment. Yes, they look attractive on a valuation basis, but because of the bouts of volatility that periodically come up, we think that there are better opportunities elsewhere where fundamentals are a bit stronger.
Wei, thank you so much for joining us today. That is, of course, Wei Li, a global chief investment strategist at BlackRock. The perfect way, really, to get us started on a Monday morning, even if it's strike there. So kudos also for arriving on time in the studio. Coming up, OPEC Plus pushes ahead with a boost in oil production. At its latest meeting, we'll have analysis with Jeff Currie, Carlyle's Energy Pathways chief strategy officer. That's next, and this is Bloomberg.
Up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back, everyone. Now, OPEC Plus has announced a modest oil production boost in October. The group says it would restart 137,000 barrels a day of output. Now, the move by the world's top oil-producing nations is set to cast a ball over Asia's biggest gathering of industry executives this week in Singapore, with chatter about an imminent supply glut certain to dominate conversations. Well, joining us here for an oil and broader energy markets is Jeff Currie, Chief Strategy Officer of Energy Pathways at Carlyle. Jeff, thank you so much for coming on. I know you were meant to be in Singapore. It's their loss and our gain. First of all, what do you make of OPEC's decision actually to increase production at the weekend? Why are they doing it, and will it work, or is there a danger that it backfires?
Well, I think it's a lot like Warren Buffett's staying, where, you know, as the tide goes out, you find out who's swimming naked. In this case, swimming naked is not having spare production capacity. Let's go back, before we talk about this weekend's announcement, let's go back to the unwind of the first 2.5 million barrel per day production cut. So far, you know, they've announced a 2.5 million barrel per day increase in production targets. Let's ask, how much has this translated into oil exports? Right. The answer is 900,000 barrels per day, a fraction of that 2.5. Of that 900, 500 to 600 of it is Saudi Arabia, 200 to 300 is UAE, and then a smidgen of others. If you look at exports outside of core OPEC, they're flat to down. So what is that telling you? There's no spare production capacity in the system. I like to go back to, you know, we're on this show a year ago, and people, the pundits were all talking about 6 million barrels per day of spare production capacity. It's such a high level of conviction. Well, we now are finding out how much is out there, and I think the key point here, it's limited. So they're going to bring on that 137. By the way, what is 137? take 1.65 million barrels per day, which is the latter round of production cuts, divide that by 12, and that's where you get the 137. They're just going to keep bringing it on once every month.
So, Jeff, I mean, do you expect OPEC Plus will be going for more increases because it doesn't really matter given there's so little spare capacity?
By the way, it goes, Saudi Arabia is in the driver's seat again. They're the only ones with spare production capacity. You know, you look at the United States, they're not drilling. They've been stagnating around 13.4 million barrels per day of shale production. Russia, flat to declining. And, you know, over the weekend, you had Ukraine take some shots at the Druzhba pipeline. They're not increasing. So I'm going to ask you, where is this, you know, oil coming from? And, you know, this oil supply glut. Again, they were talking about that a year ago. And show me the oil. Where is it? Show me the spare production capacity. Where is it? You know, I'm not going to say we're not going to get an inventory build or we're going to get a contango, but I think what does this mean to pricing? It's a very fine line between oil supply glut and running out of spare production capacity.
But this is, I mean, I've never really seen a market with so, you know, such radical views on it's tighter than believed or we're heading for a glut.
Right. But I think the tighter than you believe story is supported by the data. You know, we're talking about this glut. You have a backwardated market. Inventories in the West are at critically low inventories. People will go, oh, well, it's going into strategic reserves in China. Yes, let me remind you, the United States did this for a decade in the 70s and the 80s. Yes, the Chinese are building strategic reserves at about 1 million barrels per day, but they have 400 billion barrels of spare capacity to keep using, and they got another 200 that they're building underground right now. That's 600 million barrels. This could go on for another 2 more years.
So you're in that camp of it's tighter than believed?
Oh, absolutely.
Full stop. I mean,
show me the inventories. But I'm not going to completely discount inventory build as the market absorbs this production increase sometime in the next 12 months. But that doesn't mean prices are going to go down, particularly if you start to challenge the spare production capacity thesis.
So how much of this is actually China adding to its reserves, but also being maybe less visible in the data?
I think it's a combination of the two. You know, the only group that has visibility on global South demand is Saudi Arabia and OPEC. Let's take China. You know, the numbers are estimated at 1 million barrels per day they're building strategic reserves, which is more than the export increases coming out of OPEC. And if we take that as being face value, and that's kind of what the Americans were doing relative to the market in the 70s and 80s, the current contracts for strategic reserves are expected to end in January of next year. But I like to argue this is part of a broader de-dollarization macro view that the Chinese and other EM players are taking right now. Buy hard assets. Look at gold. We're at record highs this morning. You know, oil. You might as well stockpile copper, oil, gold as much as you can right now to hedge you against concerns around the dollar. So I don't see this stopping in January. They'll just roll over and keep doing it.
So, I mean, to the question, if China can add, you know, keep absorbing excess supplies, there's not much excess supply right now. So it doesn't matter what China does.
We're back to where we were in 2021, you know, 2022 again. But I think the point is that period in 23 and 24, when everybody was so convicted of massive amounts of spare production capacity, it's not nearly as large as people thought.
So, Jeff, everything will go up. Copper,
you know, I'm the perennial commodity bull, and you know I've been quite wrong for the last, let's say, 24 months. But I still very much believe, you know, that the underlying thesis is very much intact. You know, I like that. There's a stat I love to throw out. You know, my ex-colleagues at Goldman, they do this top projects every year. This year was the very first time there were no new oil projects. Zero. There's no new refining projects. Demand is still growing. We're not at that point where the EVs have displaced all oil demand. So I'm going to ask you, demand keeps going up. Where are we going to get this production? Where is the supply going to come from?
Where?
It's not. Prices are going to have to go higher. You're going to have to challenge the spare production capacity thesis, and we'll get that investment beginning to flow. So, but, you know, again, it's a fine line. Right now, I'm in the minority camp. And you got to see evidence. And I think there's ample evidence that this oil supply glut is just not there. Let me ask you another thing is, as a supplier, why would you shoot yourself in the foot is bring on this oil supply glut, let the price go down? There is no price war for Saudi Arabia right now. You know, the shale guys have already cut back drilling. You know, supply is not growing. It's stagnated, or again, as I said, 13.4 million barrels per day. Why are you going to wage a price war with somebody who's already been submissive? So I challenge that thesis. And I like to point out, I've been doing this for 3 decades. I've only seen 2 supply-driven bear markets in my life. One was in 2014-15, and the other one was in 1986. Both were price wars. You can kind of say maybe March of 2020. But outside of price wars, there's no reason to do it.
Jeff, you also wrote, it's a compelling argument. You also wrote this great paper actually highlighting how security was accelerating the energy transition. Where are we now?
Oh, did you see the numbers out in Europe? It's a line going straight up in renewable investment. Let me ask you, why is China investing so much in strategic reserves? They want to wean themselves off of oil imports. They're very dangerous. For all the reason we like oil, portability, storability, are the same reasons it's really dangerous.
But the timeline doesn't really match, right? We need it now, and it will come later.
Right. And so we look at China. They made these investments in cutting-edge EV technologies, nuclear power, lithium batteries. By the way, they can charge a bus in 10 minutes now. They did this long before we knew anything about Paris Agreement. It wasn't done to save the planet. It was done for energy security reasons. And I think same thing. You look at Europe today, they're making large investments in renewables. Why? Because they don't want to be connected to oil imports.
What about the U.S.?
U.S. we actually have gone down, but actually the concerning about the U.S., they're not investing in oil, they're not investing in green, they're not investing in anything right now. Which begs the question, if this energy dominance disappears in terms of this big oil exports and natural gas exports, what happens if they become an energy importer? It's a different ballgame.
How quickly can that happen?
I'm not going to try to...
This is not a prediction. Is it a prediction?
No, it's not. I'm not forecasting that anything, but I think it's a concern is, all the talk of keep the prices down, you don't get the drilling. If you don't get the drilling, how do you maintain the energy dominance?
What can you tell us about, defense shares in Europe? How much more? I mean, they've done pretty well in 2025. How much more can they do?
This is a really big thesis. I put it up there with China and, other big, investment theses. The CapEx boom that defense is likely to generate in Europe is going to be similar. I'm not going to say as big as China was in the 2000s, but it's up there. And I would expect, continue to see a capital rotation out of U.S. assets and into European assets. You look at the euro; it's trading at 1.17, this morning.
But in a meaningful way, because at the moment it's at the margins.
Okay, the worst case scenario. You're talking about a $4 trillion capex boom. And let's not forget the side benefits. Why does the U.S. have Silicon Valley? Silicon Valley is a DARPA. All of that is defense contracting. The side benefits of this, miserable, AI. You have ASLM today, making, large-scale investments. So we're moving that direction. I'm not going to say it's happening overnight, but I think this is a big investment boom, and it's going to open up Europe. And I think when we think about the commodity story and old economy and everything, it's an ex-U.S. story, and I think we're moving that direction.
Jeff, thank you so much. As always, Jeff Curry, their Chief Strategy Officer of Energy Pathways at Carlyle. Coming up, we're live in Paris with Georgina Wright to talk, of course, about the confidence vote later this afternoon. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now. You should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The French Prime Minister, François Bayroul's government is set to fall today as he faces an uphill battle to win a confidence vote. The Japanese markets face more instability as investors prepare for the departure of PM Shigeru Ishiba. Plus, OPEC Plus defies doomsayers with another oil production boost as the alliance looks to grab more market share. So let's return to one of our top stories, a budget crisis and confidence vote in France. Bloomberg's Caroline Conan is outside the French National Assembly with a guest. Hi, Caroline.
Hi, Francine, and I'm very happy to be joined by Georgina Wright. She's a senior fellow at the German Marshall Fund, and she joins us from the National Assembly here in Paris. Georgina, why did François Bayrou do that?
I mean, it's a very good question. Basically for two reasons. The first is he wanted the whole of the l'Assemblée nationale, so the lower house of parliament, to acknowledge that debt was a problem and that we needed to cut public spending. And the second is he wanted them to give him and his government the confidence and to say, okay, well, we trust you that you're going to deal with the debt. But of course, all the opponents said this is crazy. You're putting us in front of the fait accompli without letting us actually analyse and discuss the budget proposals. Even former French President Nicolas Sarkozy said it was political suicide. So it was almost inevitable that we came to this point.
Clearly, so tonight we're going to see François Bayrou's fall. We're going to get probably a new prime minister over the next few days. Do you think this time President Macron has to be really quick? We have this social anger looming as well. We've got this call to block the country in 2 days' time. You've got another union's call next week. Do you think President Macron has to name a new prime minister really soon? And who can that be?
Well, it's again, I feel like we just lived this back in December. You know,
sure.
if we think of the past sort of couple of years, we've had 5 prime ministers in 2 years in France. I mean, it's unbelievable. The question is how quickly he can do that. President Macron has several options. The first is he tries to name a new prime minister in the hope that this new prime minister can form a government and can get a budget through. But that budget needs to pass before the end of the year. And that's a lot of things that you need to discuss. I mean, Bayrou had proposed 44 billion spending sort of a fiscal budget proposal. The socialists said we want to halve that, we want to tax the super wealthy, we want to actually hand out more, help to those who are really, really struggling today. So there are real difficulties and real discussions, and we need that budget to pass before the end of the year. Now, if he names someone, there's no guarantee that that person is going to be able to bring and find consensus in Parliament. So that's one option. The second option is actually to dissolve Parliament, to call new, fresh elections. Well, we know by looking at surveys that actually Le Rassemblement National, so the far right, are probably going to do very, very well. Would they get an overwhelming majority to form a government? We don't know. It could be that we have some form of hung parliament again, or fractured parliament. So again, the difficulty of naming someone. And the third is that you use constitutional provisions to try and force a budget through, but that's very unpopular as well.
Which is something we've already lived just 9 months ago right here in France. Who do you think has the best interest in calling new snap elections? It seems like the National Rally really wants Macron to call snap elections. Marine Le Pen, who will actually find out today when the date of her appeal for the trial is taking place next year. So technically, if there are snap elections really soon, she won't be able to run for her seat as an MP. But do you think that's actually what she wants? Because she's obviously eyeing 2027.
Yeah, I mean, the National Rally now is much more than Marine Le Pen. Of course, she champions it. Yesterday, she did her rentrée politique, so, you know, her sort of setting of the stage for the new year in the sort of school year of politics. And she was talking about the National Rally being really a movement, a social movement in France. So she goes much further than that. But of course, they have an interest in fresh elections because they would probably do very, very well. You also have the left-wing coalition, different left-wing parties who have also, some suggested that they would be open to fresh elections because they still believe to this day that actually if you look at the legislative results last time, they are the ones that should be forming a government. So they also have an interest in that. Of course, the big losers would be Macron's coalition because they're likely to do much worse than they did last time.
Even though in the short term, Macron has said he is ruling out new snap elections, he is ruling out resignation. Do you think that if this deadlock continues, given, as you were mentioning, we're still going to have this fragmented parliament, do you think if the deadlock continues, we can't pass a budget, do you think he will be forced to either resign or call snap elections, perhaps in March, for at the same time as the municipal local elections?
Yeah, I mean, that would be a good time perhaps to hold a fresh round of elections because you already have elections taking place. Of course, they're very different, the municipal and the legislative elections, but it would make sense to try and bundle them up. Also because the French people are tired of elections, right? They're tired of the deadlock. Some people do want change. Others just think, actually, let's just try and get a budget through and let's just try and get a semblance of stability. But it is very difficult with this parliamentary arithmetic to have any form of stability. And consensus and coalition building is just not France's forte. It's not how the French political system works. So it feels like even if Macron does manage to appoint a prime minister who forms a government, who manages to get the support in parliament, how long will that government last? That's everyone and anyone's guess.
You work for the German Marshall Fund. How is this situation, this current deadlock of French politics, being seen outside of France at the European level? Are they seeing this as a political crisis or perhaps the beginning of a deeper Eurozone crisis?
I mean, many people are very worried that this is the sort of the start of and the beginning of a longer political crisis that could touch the whole of Europe. Partly because France's public spending is very, very high. It's been years that member states, you know, EU countries have said, can you please get your public spending under control? This is a problem. And of course, successive governments have really failed to pass a budget that has managed to do that in a way that Germany and others expect it to. So yes, there are fears. I think beyond that, though, Europe has never seemed so French in a sense, where we're talking about industrial policy, we're talking about EU doing more on defence. This is Macron's time to shine, and he's so consumed by what's happening domestically. And I think a lot of people wonder where France's leadership is at this time. You put Ukraine aside, of course, the coalition of the willing, France and working with the United Kingdom. There's going to be a summit between Macron and Keir Starmer and the other countries that are looking at forming this coalition, willing to support Ukraine. But yes, there are real problems of French leadership.
Problems with French leadership. How will Macron manage to get the leadership back? That's, of course, one big question. Perhaps at the G7, when France holds the presidency next year, that was Georgina Wright from the German Marshall Fund live from the National Assembly in Paris just a few hours before the program collapse of François Bayrou's government.
Caroline, thank you so much. Caroline Conan there with the very latest on France. Now, in other news, controversial tax hikes on the rich, oil and gas drilling, and how the world's biggest sovereign wealth fund invests its money could all be shaken up by the outcome of Norway's elections today. Well, the Labour Prime Minister, Jonas Gahr Store, is bidding to retain power in what is likely to be a tight contest. Store currently leads a minority government after his coalition partner, the Centre Party, quit in January. And Keir Starmer has told his new cabinet to step up a gear and deliver for the British people as he seeks to fend off the rise of Nigel Farage's populist Reform UK party. The Prime Minister spent the weekend completing a wide-ranging reshuffle of his government, appointing more than 4 dozen junior ministers after overhauling his cabinet on Friday. Well, Starmer's reshuffle was promoted by the resignation of his deputy just days after he appointed new economic advisors. And wages for new hires in the UK rose at their weakest pace in over 4 years, according to a survey which will be closely watched by the Bank of England. Now, the poll by the Recruitment and Employment Confederation and KPMG found starting pay growth last month cooled to levels last seen in March 2021. Meanwhile, Londoners are facing severe travel disruption as a strike by workers on the city's underground network entered full force this morning. Let's get more with Bloomberg Daybreak editor Mark Perrier. Mark, first of all, I am so grateful to all of the guests and also journalists that actually showed up today because it's been quite something. Why is this strike happening?
Impasse over work and pay conditions. And the real stickler here are work conditions, with the union requesting that the work week be diminished from 35 to 32 hours, citing stress, work-related stress and fatigue. And the TfL, Transport for London, saying, no way, it's unacceptable. So here we have it, 4 million people who don't have access to the tube in the capital.
I mean, this is a big, network, and it's strikes that basically are coming up one after the other because it's the signals, it's the people that are driving the tube. What is the impact on London's economy, but also greater UK economy?
It has a direct impact on the economy, estimated at roughly £230 million, people simply not being able to get to work. But there's definitely a greater impact when you consider consumer spending, retail, hospitality. The numbers are quite difficult to ascertain, but they are huge.
I know. I mean, I know you got here by bike, which has to be applauded. I'm very, very proud.
I got
of
my
you
workout.
To taking a bike at 6 a.m., if not earlier. What's the political dimension of this?
The political dimension is that, these are sensitive times for the government, obviously. Worker rights very much in the news, labor strife, and it has, the potential to become a bigger issue because you're dealing with different levels of government and the union. So this whole thing can grow and grow and grow.
Thank you so much. As always, Mark Perrier there with the very latest, of course, on these strikes until Friday, right? Friday midday?
Until Friday. Friday, service should resume on the tube.
Okay, so there you go, just 4 days of chaos. Now, the Munich Auto Show has kicked off as automakers showcase their newest models while addressing ongoing challenges, including a new wave of U.S. tariffs. Bloomberg's automotive editor, Stefan Nicola, spoke to Volkswagen chief executive Oliver Blume. He began by asking for his view on the trade discussions.
We welcome the joint agreement between US and EU with the opportunity to come to a signed agreement retroactive from the 1st of August on, and that gives us planning security. On the other side, the 15% would be a burden for Volkswagen Group, that's very clear, and we don't appreciate the asymmetric deal in between US and EU because it's distorting the competition in Europe. And therefore, we are counting on our own offer, investing heavily in the US, linked to our growth plan. We planned in the US, and there we are in a close contact and good talks with the US government. And we hope that we come to a quick solution also during the next weeks with the support from the US government to our investments, because we think that's very attractive for the US community, building employment, building a supply chain, and that at the end gaining taxes in the US. And that is positive and a better multiplier than having on the other side the tariffs.
Yeah. Let's stay in the US for a second. You've long wanted to grow there, and you've made some investments in the Scout brand, for example. Now, things have changed. President Trump is cutting back on EV aid, the tariffs we've already discussed. How do you adapt your North American strategy to those new realities?
Yeah, we are investing heavily, for example, in Scout or in Rivian and other tech partnerships in the US, and we see still a huge growth opportunity for Volkswagen Group with all our brands. And Scout is one positive example to enter now in the biggest US car segment, pickup segment, and the huge rugged SUVs. And Scout stands for this segment, to bringing back a heritage US brand to the market. And what we are offering there is also a car with range extender. You have a internal combustion engine, and offering a huge mileage with these cars, around 800 miles. And I think that's very attractive for the US community. And the car is stunning. We were able to present it also yesterday here in Munich. And everybody is excited, and also the first order intakes are very, very positive for this car.
Well, that was the Volkswagen chief executive, Oliver Blume, speaking at the Munich Auto Show. Coming up, we'll take stock of Donald Trump's presidency, almost 8 months since his return to the White House, with Morris Reed, a leading advisor and partner at Actum. That's next, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome back, everyone. Now let's bring you some developing news from Jerusalem now, where our people have been killed. 4 people have been killed in a shooting attack. Now, these are live pictures from the scene. Officials say 12 people have been injured. Israel Army Radio has described the shooting as a terrorist attack. It says the 2 assailants opened fire on a bus and were later neutralized. Now, President Donald Trump's political momentum within his party shows no signs of slowing. The president has a 93% approval rating amongst Republican voters. Now, that's helped give him a stranglehold over Congress. His emergency tariff powers, campaign against the Fed, and deployment of the military within the U.S. are some of the ways in which he's been stretching his executive power. So let's discuss all of this with Morris Reed, partner at Actum. Well, Morris has also been an advisor to prime ministers, presidents, global organizations, and corporate leaders. Morris, thank you so much for joining us. Look, we're almost 9 months into the presidency, the second Trump presidency, and a lot of world leaders, are trying to figure out exactly what his end game is, because certainly on the foreign policy front, he's in everything.
Yeah. Well, he's in everything, period. Foreign policy, domestic policy, choosing the Tupperware at the White House, all those type of things. But I think that he's really in store for an October surprise. There's going to be 2 important things happening. Number one, I think there will be a government shutdown. And it will squarely fall on the Republicans. And then the biggie is October 14th. I think the Supreme Court is going to go against him on the tariffs. So that's going to throw everything up against the wall. But Donald Trump continues to be underestimated by the Democrats, by world leaders, and by business leaders. They don't quite understand that this guy is focused, he has a plan, and his staff has been executing really at precision pace and at a very fast pace.
If the Supreme Court goes against him on the tariffs, what happens?
We don't know. This is unprecedented. He tried to use the emergency powers. It'll be a pushback. Obviously, people will want their money back first and foremost. I think business leaders will scramble to figure out what they're planning for, which ultimately means that the economy is going to go in disarray. And on the fact that there was only 22,000 jobs created last quarter, I think that this is going to be a big October surprise for the Republicans.
March, when you say that a lot of people are underestimating him, is it, for example, on the tariffs, is it that he's trying to get money to fund the big beautiful bill and other things, or is it just putting America putting America first, but in changing its place in the world?
Well, first of all, I think they underestimate him because they don't think he has a plan. He came through the door with a plan. He had 4 years to get organized. They're executing on a plan, so people continue to underestimate that he actually has a plan. You may not agree with it, but they do have a plan. The second thing is people continue to think you can flatter your way through this thing with him. That's not the case. Lots of people come and they flatter. He actually wants to get things achieved. Again, may you agree with him or not, they have a plan and they're focused on it, and their ultimate focus is to reposition the global order. He sees things as really Russia, China, U.S., not the rest of the world or the kids at the table. He's really focused on how does he make America, in his words, great again globally as a real superpower.
But see, it's unclear. His relationship, for example, with Vladimir Putin is close one week and not so close the other week. So is his end game trying to actually achieve peace, or is it to get closer to that sphere of influence?
I think it's twofold. Number one is to make sure that he's the greatest president that's ever happened. That is ultimately the backstory for him. He wants to be great. That's number one. Number two, the achieving peace, he thinks that he can do what other presidents couldn't do. As of right now, it's unclear if he'll achieve that. Vladimir Putin has, again, his own strategy, his own approach. I don't believe that Trump appreciates or understands what Russia wants to ultimately achieve. He thinks that he can go and use the power of personality to persuade Vladimir Putin. It just doesn't work that way on the global stage.
But what do you mean by being a great president? Is it on the economy? Because the labor market is suffering a lot. Does he measure success? How does he measure success?
Well, that's the real question, because at 2 o'clock in the morning is one thing, at 6 o'clock in the morning is another, at 11 o'clock he's forgotten all about it. Ultimately, he has the opportunity to really change the game. He's blamed Biden. Every time there's something good, it's him. When it's bad, it's Biden. As of the end of the year, first of next year, when this big, beautiful bill starts to really have impact, this is Donald Trump's economy. So he won't be able to blame anyone else. He can't say there's 22,000 jobs is because of Biden. Everything will fall squarely on the Trump administration as things start to roll, and the big, beautiful bill is going to hit at a time, I believe, that's going to ultimately have impacts on the reelection. Next year's reelection, which is why, again, will people misunderstand and underestimate him. The reason that he's going to do the rigging of the election or the gerrymandering is because they understand the impact of the bill will happen squarely at the election time. So what they're doing is being strategic. Where the Democrats are being emotional about this, they're being very strategic because they understand when the impact will happen.
How often do you get asked whether there are going to be free elections in the U.S. going forward? And what do you answer?
Absolutely, there'll be free elections in America. As long as you have $1 billion to spend to run for president, if you can raise money unlimited, people always say about free and fair elections. Elections are expensive in America. This is why you have free speech. People pay for them. So there will always be free and fair, but they will be extremely expensive.
Morris, why can the Democrats not really rally behind a candidate?
Well, I think that they were, first of this is a tough question, right? They did rally around the candidate. They rallied around the wrong candidate, the Biden piece. Secondarily, they then had to move very fast, and that's where they went to Harris. If the Biden people had really moved him out of the way, you would have had a better candidate, a better process. That doesn't mean the outcome would have been any different. As you know, I think a year ago in Doha, I told you I thought that Donald Trump would win. I thought he would win because he was a superior candidate. He had a superior message. What the Democrats have to do is get back to the basics. It's about communicating, connecting, and stop demonizing business and stop talking down to the average American.
But again, September 2025, it's crazy that they haven't been able to find a single voice. There seems to be a lot of infighting within the Democrats.
Well, that's always the case when you're the opposition party, right? When my boss, Ron Brown, took over the Democratic Party, remember, George Bush Sr. was at 98% in the polls, so you have to coalesce around a leader. When you're in the White House, the president's the boss. When you're outside the White House, you have different factions. What's going to happen is there's going to be an election next year. It's going to be people voting if they agree with the direction that Donald Trump is taking them or not. It's going to be less about the Democrats. It's going to be more of a referendum on who's in the White House.
I mean, Gavin Newsom has been doing a social media campaign, which is quite formidable. Actually, does that work?
It works in the short term.
Yeah.
In the short term, it does, because what he's doing is he's playing to the base. The base is looking for a hero, someone muscular to push back. Beating Donald Trump doesn't mean you have to be exactly like Donald Trump. You have to show some authenticity. What Gavin Newsom is doing as an incumbent term-limited governor, he's fighting back. Yeah. He's the opposition. There's a void. He's filling the void. Does that mean that this will work for him to run for president? I'm not for sure. But right now, the Democratic Party, they're looking for leadership. They're looking for someone to push back, and Gavin is playing that role.
I mean, a lot of CEOs will, maybe not on the record, but actually, in corridors say they worry about the fact that there's no real opposition, that people are afraid of speaking up because they don't want to be in the fire line of President Trump. I mean, this is concerning.
Well, it's concerning from a business standpoint. A lot of business people don't want to be in the fire line. That's why they capitulated, gone to Mar-a-Lago, cut deals, kept quiet, flattered, doing all those things. That's not the role of business. That's the role of politicians, right? So the Democratic Party, the opposition has to get organized. They have not been organized. They've been distracted and emotional. They need to get organized. They need to come up with a message. They don't need a leader right now. They need messengers to push back on the White House.
But it's also unclear to me what some of the Trump administration is trying to do with business. That 10% of Intel, some of the deals that have been cut with some of the tech companies for, to get some of the revenue. Is this a dangerous precedent?
Well, it's unprecedented. The democracy of the American stature has never done that. We don't have a sovereign wealth fund. We have a big, beautiful country and businesses. But again, the presidency takes on the personality of who's in the White House. Right? Any president could have done and could do what Donald Trump is doing. They've chose not to. They've looked at being president as something that they aspire to be. They really say, like, I'm happy to be here. It's bigger than me. Donald Trump is redefining the presidency. He's ultimately making it a personality-driven presidency. Now, this trend has been happening all over the world. It's just now arrived in America, and people are seeing it at an unprecedented level. But Donald Trump is doing what every American president could have done, but chose not to do because they felt the presidency was bigger than them.
And so how's that playing out with actually approval ratings on a national level, and how will that change?
It's polarized, right? You have 92% of Republicans say he's doing great.
Yeah.
2% of Democrats are for him. So it's a polarized situation. What's really happened is Donald Trump, the Republican Party, is organized and energized, right? That's what you see at 92%. Organization and energy, right? When you're at 2% with the Democrats, you see they're distracted and emotional. The Democrats need to get their act together. Donald Trump, whether you agree with him or not, had a plan, and he's executing on that plan.
Morris, do people like his personality, or do they like his policies?
Well, it's two things, right? Some people like his personality. He's an affable, funny guy, right? He says crazy things, right? So people do like his personality. The thing that's really interesting about Donald Trump is it's style versus substance. A lot of people get caught in the style, but there's some substance behind it, right? The China situation. People agree with that. Situation with NATO. People agree with that. It's his style that people get distracted with, but the substance is sometimes there.
Morris, thank you so much, as always, for joining us. Morris Reed, their partner at Actum. Up next, Bloomberg Brief, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's Beige Book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Credibility concerns. Critics question the Fed's independence, warning of blurred boundaries. Chips exception. The U.S. considers approvals for exporting supplies to South Korean chipmaker factories in China. All of that as weak labor market data puts a jumbo Fed cut back on the table. Payrolls revisions and CPI on deck this week. And of course, that's what attention will be turning to as we see futures pointed higher. After all the roller coaster rides last week, we did finish the S&P 500 up 0.3% and with the Nasdaq 100 up 0.1%. So it was not a negative week last week in spite of everything. The dollar index a little bit weaker today. We have a stronger euro offsetting a weaker yen. We're going to get into those stories in just a few minutes. And I want to point to oil as well because, of course, we did get some production back on the table from OPEC Plus at the weekend. The headline number, not the number to watch. Shelley McCroft of RBC pointing to this incremental production coming back online because some of it had already been back online. That's helping to support the market. Let's have a look at treasuries because that's where a lot of interest will be this week, particularly when we get that CPI data. The 30-year yield at 4.76. We did give back some of those moves on Friday. The 2-year yield at 3.50.08. Remember, towards the end of August, we were at 3.80 on the 2-year yield. So that's another full cut priced in and more. And that's what you're seeing in the swaps market as well. One cut and maybe a 10% chance of a 50 basis point cut. Well, let's get to some individual stocks to watch now. Over in London, here's Valerie Teitel.
Good morning, Vonnie. All of these stocks I want to mention today have to do with the S&P 500's new index inclusion. The first one being Robinhood, up 7.6% on the back of S&P Dow Jones on Friday, saying it will be included in the S&P 500 on the 22nd of September. Once a disruptor of Wall Street is now turning into a pillar of it. Robinhood up 7.6%. Another stock included in the S&P 500 is AppLovin. This is a mobile app marketing company. The stock has doubled since its April low, up another 7.5 on this index inclusion story. One stock, though, that was not included in the index is MicroStrategy. This is Mark Saylor's company called Strategy, previously called MicroStrategy, the Bitcoin holding company. That stock is trading down nearly 2% in the pre-market on the back of this disappointment. Vonnie, there has been some excitement priced into this stock after S&P Dow Jones included Coinbase into the S&P 500, maybe giving some hopes that they wanted to build out a crypto sector when it comes to the S&P 500, but a bit of disappointment there for this Bitcoin stock. Bonnie?
Yes, excitement, one word for it. Valerie, thank you so much. That is Valerie Teitel there in London. And later in the show, we're going to catch up with Thierry Wiesman of Macquarie for his read on a big week ahead for U.S. data. Well, lots of global market moves this morning in Japan. The yen weakening after Prime Minister Ishiba said over the weekend he intends to step down. Joining us now is Bloomberg's Jill Desus. So a little bit of chaos, I think it's fair to say, in Japan. Jill, what happens from here?
Well, Bonnie, I think while the removal, or the resignation rather, of Prime Minister Ishiba was pretty widely telegraphed, the question, though, now shifts to who eventually replaces him. And so I think this is where in Japan it becomes really, really interesting, because Ishiba, who came into office last year in a leadership race, was known for more of his, fiscal discipline. And I'm not sure that any of the major candidates in Japan right now actually still fit that particular mold. So we're actually focused on two who may come into the equation once a leadership election is held. We're expecting something as soon as October for that position. The first one is Shinjiro Koizumi. He's the son of a former prime minister who is really focused on reform. So he's expected to campaign more on reform if he does enter the leadership race. But I think a really interesting candidate is Sanai Takaichi. So she would become Japan's first female prime minister, but she's also somebody who is a protege of Shinzo Abe. So really more focused on that idea of looser monetary policy, the idea of potential fiscal expansionism. And I think that's where you might see some pressure on long-term yields were she to actually take that spot. But I think the bottom line here, Bonnie, is that we're looking at a pretty significant transition either way in Japan. There's likely to be more candidates enter the picture here, and I'm just not sure anyone really fits that mold of Ishiba. So lots of uncertainty over the direction that Japan's leadership may ultimately take here.
And certainly markets celebrating in their own way. We have stocks rallying in Japan today, Jill, and of course, as you say, risks mounting for particularly long bonds. Have we risk of a divergence here, depending on who the candidate is?
Yeah, and again, I do think that it's if it becomes Takaichi, who I'll point out came in second to Ishiba during the leadership race last time around. If it is her, I think that's where you see that pressure kind of increase. It could be that markets are already kind of looking at that likelihood just given her performance last time around. I think the other component of leadership, if she were to become prime minister, is that she really kind of leans more into the sort of the far right political sphere here. Again, I think sort of taking some cues from from Shinzo Abe, and really would kind of pull that leadership party more toward the right a bit. I think, again, bottom line here is that there's just a lot of uncertainty in Japan right now, a lot of change, and ultimately some pretty interesting directions that this leadership could ultimately take. Right now, we're sort of gearing up for, again, that idea of a leadership race in early October, but we'll have to see sort of how that situation develops over the next few weeks.
The merry-go-round continues. Jill, thank you so much for all that context. That is Jill Desus. Over in France, meanwhile, Prime Minister Bayrou faces a confidence vote later today that may cause the government to fall. Joining us now from Paris is Bloomberg's Caroline Conan. So, Caroline, is Bayrou's removal a done deal at this point? And if so, what's going to happen today and in the next few days?
Vonnie, let me tell you what happened in just the last few seconds right here. Michel Barnier, the predecessor of François Bayrou, was just here saying hello to me. He said, I know this situation well, because he lived it just 9 months ago. 9 months ago, he was here in this National Assembly just behind me as Prime Minister, and his government collapsed over the previous budget. Now, French history seems to repeat itself. This is probably what's going to happen today. Again, with François Bayrou, Michel Barnier's successor, is likely to lose this vote of confidence that's going to happen this afternoon. He actually provoked this vote of confidence when he called it on August 25, saying that I want people to realize that the debt issue in France is the most important issue of all, and we need to tackle this in this next budget. The problem, Vonnie, is that, as you know, French National Assembly has been fragmented since the snap elections of last year, and even though a lot of opposition parties say they do agree on the importance of the debt issue, they do not agree with the method of François Bayrou, which is calling this vote of confidence before any discussions on the details of the budget. So 98% chances that we're going to see another French government collapse here today.
What are the consequences for the markets and the French economy? Is there somebody out there that can placate markets, Caroline?
Beirut's fall is currently priced in. We've seen the CAC 40 falling. We've seen the spread between the French and the German 10-year yield widen by about 10 basis points since the announcement to around 80 basis points. Now, the question is what happens next? What happens next is, of course, in the hands of President Macron. Likely, he will name a new prime minister over the next few days. Perhaps he will call a socialist prime minister, which is something he hasn't tried yet. But the parliament is still fragmented, so a lot in the opposition are calling for new, snap, fresh legislative elections, perhaps around March, when France is already holding local municipal elections. That would make sense, so you don't ask the French to come to the polls twice. Of course, some opposition parties are also calling for Macron's resignation, which would be a further blow to the markets and which obviously would add pressure to French bonds and domestic stocks. But this is something that at the moment, President Macron has ruled out.
Caroline, thank you so much. We're anticipating a day of events there in Paris. That is Bloomberg's Caroline Conan. Now to the Middle East, oil gaining after OPEC Plus agreed to raise production over the weekend, but at a more modest rate perhaps, with the group signaling caution. Bloomberg's Anthony De Paola joins us now from Dubai. And Anthony, I was just quoting earlier Halima Croft talking about how this increase really isn't the headline increase. In fact, it's, you know, a lot less than that. It's an incremental increase. Let's, before I come to you, listen to Jeff Curry of Carlyle Energy Pathways, who spoke earlier on Bloomberg on this decision.
Saudi Arabia is in the driver's seat again. They're the only ones with spare production capacity. You know, you look at the United States, they're not drilling. Russia, flat to declining. And, you know, over the weekend, you had Ukraine take some shots at the Druzhba pipeline. They're not increasing. So I'm going to ask you, where is this, you know, oil coming from? Show me the spare production capacity. Where is it? You know, I'm not going to say we're not going to get an inventory build or we're going to get a contango, but I think, what does this mean to pricing? It's a very fine line between oil supply glut and running out of spare production capacity.
So, Anthony, do you agree with what Jeff Curry said?
Yeah, good morning, Vani. It is the Saudis that have the massive amount of spare capacity, the most that they can bring back to the market. And the Saudis have been one of the drivers behind the OPEC Plus decision-making for a while. And we've seen them kind of shift away from this idea of defending a higher price than where we are at now, in terms of going back to this idea of getting more market share. And that's because the Saudis do have that spare capacity and that extra oil to bring on the market. You alluded to the fact that this is a smaller increase. They're putting on less than 140,000 barrels a day next month, starting next month in October. That's about 4 times less than what they've been putting on the market in August and September. So reversing some earlier cuts and bringing back oil over the last 6 months. Now they're going to kind of slow that pace of increase over the next year. OPEC, of course, says if we do see supplies building up, we can slow down or reverse those increases. So they're giving themselves that flexibility. But the Saudis, who have got that extra spare capacity, they're the ones that want to put it onto the market. And a lot of the market watchers and barrel counters are looking at the fact of the production capacity from some of those other members in the OPEC Plus group. And they're saying that not everyone is going to be able to meet their own quota. Not everyone is going to be able to bring that oil back. The most of the spare capacity is here in this region. We've got Saudi Arabia, as I mentioned, the United Arab Emirates, Kuwait, and to some extent Iraq, who will also be trying to bring back production. So we'll see that coming back. It's going to be parceled between those members of OPEC Plus, so not huge amounts for each country, but we will see it coming back from those key OPEC Plus members in the Gulf, Fani.
And Anthony, what's the dynamic with the U.S. shale producers? Because obviously, you know, there's a bit of competition here as well. Would OPEC Plus be happy with a lower price in order to maybe take some of the U.S. supply offline?
Well, OPEC is never really content with a lower price. I think they do see some of the writing on the wall here in terms of the geopolitical situation, that Donald Trump does want lower prices. So they are gaining some favor in terms of putting more oil onto the market. But OPEC Plus has tried before to handicap U.S. shale. And what happened at that time when there was increased production, dropping prices there, U.S. shale kind of adapted, conserved cash, didn't really reduce production that much. And then once prices swung back up, they were a more efficient producers and came back into the market. We are seeing shale production in the market slowing, though, with the increase in the drop in prices and the increase in costs to those producers. But we are seeing also some oil coming on from countries like Brazil, like Guyana, so other places in the Americas. So there is growth in non-OPEC plus supply, and that is a challenge to the OPEC plus countries.
Anthony, fantastic context as always. That is Bloomberg's Anthony DePaula there in Dubai. Now to other top stories trending on the terminal this morning. London commuters are facing major travel disruptions as underground workers go on strike over pay. Stores, restaurants and bars in central London are expected to suffer most. The walkouts could cost the economy £230 million, or about $311 million. The disruption is expected to continue until late morning Friday. The EU weighing new sanctions on Russia. They're expected to hit about half a dozen Russian banks and energy companies. Sources say the bloc is hoping to coordinate some of its latest measures with the United States. China's export growth slowed to the weakest in 6 months as a slump in shipments to the US deepens. However, a surge in sales to other markets kept Beijing on track for a record trade surplus of more than $1.2 trillion this year. Coming up, President Trump picks his top 3 candidates for the Fed chair role. We'll dig into what one of these finalists is saying about central bank independence. That's next. This is Bloomberg.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Last Friday, Treasury Secretary Scott Bessent called out the Federal Reserve for putting its own independence at risk. He wrote in the Journal about the central bank's, quote, overuse of non-standard policies, mission creep, and institutional bloat. NEC director and finalist for consideration to be the next Fed chair, Kevin Hassett, echoed Bessent on CBS.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
For more, I'm joined by Bloomberg's Kasia Klimashinska, who leads our DC breaking news coverage. Fed independence has been percolating for many weeks and months at this point, Kasia. Now it seems like those in contention to be Fed chair and actually doing the adjudication, Scott Bessent, are taking control of the narrative. Would that be fair?
Good morning. Indeed, the Fed and Fed's independence has been in focus since basically President Trump took over the White House, because Trump is pressuring the Fed. He wants the central bank to cut interest rates, and that is causing some concern among investors who, of course, want low interest rates, but also they want in long term the inflation to stay in control. And that's why the Fed's independence comes into focus. If the central bank is independent, it can focus on those prices. It can focus on basically doing its job in the economy. And we heard Kevin Hassett. Kevin Hassett is one of the top 3 contenders. President Trump on Friday listed them. It's the 2 Kevins and a Chris. So Kevin Hassett, Kevin Walsh, and Christopher Waller. And Kevin Hassett, a very close advisor to Trump, was there on TV networks on Sunday saying that he supports Fed's independence, but also he wants the central bank to kind of limit its focus to just monetary policy. At the same time, I think he calmed investors by saying that he doesn't have any big overhaul in mind.
Well, elsewhere, the U.S. is weighing annual approvals now for exports of chip-making supplies to factories in China. Can you give us some more details on this particular story?
This story just landed, but it shows that the U.S. wants to control what exactly is flowing into the U.S. from China. So the Trump administration realizes that the U.S. still needs some of the gear that is currently being produced in China, but it wants to have a final say over what exactly and how many items are coming into the U.S. So the Trump administration will issue those kind of waivers or licenses to companies like, for example, Samsung, allowing them to bring some gear from China into the U.S., but only for a year at a time.
So it'll be conducted annually. Elsewhere again, federal immigration agents conducting raids across Boston over the weekend, and the president threatened Chicago may be next. What more do we know about what happened?
Yeah, so these were federal law enforcement officials going into those cities and arresting dozens of people in Boston, and then Chicago could be next, perhaps also New York. As President Trump says, you know, he wants to have control over the immigration. He wants to make sure that those jobs go to Americans. He wants to get rid of, workers who don't have permits to work here, and especially those who commit crimes. He wants them to go back into prisons or even back to the countries that they came from. So again, we saw a lot of action in Boston, in Washington, D.C. before, and perhaps Chicago or even New York could be next.
Yeah, and in fact, it also hit Georgia, an immigration raid on a Hyundai EV battery plant. What's the latest? Did it get reversed?
This was a very big story last week and over the weekend. This was a raid from federal officials on a plant in Georgia where 2 South Korean companies are building a plant to build EV batteries. More than 400 people were arrested, including 300 South Koreans. That was covered by South Korean newspapers over the weekend, of course, triggering an outrage and really a political crisis of sorts where the South Korean politicians had to intervene, and they will most likely get those South Korean citizens released. Perhaps they will fly back to South Korea on Wednesday, but in the meantime, also President Trump commented on the issue, citing it as an example of what needs to happen. He says that those foreign workers can come here, but they need to train Americans, and ultimately Americans need to learn to do their work.
Kasia, thank you so much for that roundup. That is Bloomberg's Kasia Klimashinska in Washington, D.C. Coming up, concerns grow among Republicans about RFK Jr. Plus, a look at what else is making headlines in your front page news. All next, this is Bloomberg.
with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to 0. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Time now for your front page news. First up on the New York Times, Russia unleashes its largest drone assault since the war began in 2022. Ukrainian officials said the assault damaged a key building in Kyiv's government district. It marks the first time a government building in Kyiv has been damaged in the war. Next up, on the Washington Post, growing doubts about Health Secretary Robert F. Kennedy Jr. among some Republicans. Among those speaking out is Senator John Barroso of Wyoming, who is the #2 Republican in the Senate and is a medical doctor. Officials from Trump's first campaign administration are also increasingly condemning Kennedy, saying that his broader vaccine agenda was doing, quote, tremendous damage to public health. And the Wall Street Journal reporting OpenAI is lending its resources to the creation of a full-length animated movie made largely with AI. It's going to be called Critters. Do stay with us. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter, we were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Credibility concerns. Critics question the Fed's independence, warning of blurred boundaries. Chips exception. The U.S. considers approvals yearly for exporting supplies to South Korean chipmakers' factories in China. All of that as, of course, weak labor market data puts a jumbo Fed cut potentially on the table. Payroll revisions and CPI on deck this week. So let's take a look at where we stand futures-wise in the very early going. Futures pointed higher. Now, don't forget, we did finish the week with a weekly gain for the S&P and the NASDAQ 100 last week, 0.1% for the NASDAQ 100, 1/3% for the S&P, in spite of the whole roller coaster ride that we saw throughout the week. We also today have David Kostin saying we're going to see another 2% gain by the end of the year and a 6% gain for the S&P 500 by mid-next year based on interest rate cuts. Of course, that all changes if we somehow lose control of inflation or if other variables change. The dollar index is a bit lower, but we are seeing a stronger euro and a weaker yen today, so there's a little bit of balancing going on. And I do want to point to crude oil as well. It is supported up about 2% after those increases that OPEC put on the table were perhaps not as crazy as the market was looking for, or at least the market priced already in most of that. The 2-year yield, 10-year yield, 30-year yield, very little change today, but as you can see directionally, we are getting that steepener continuing. That 2-year yield at 3.50 is quite the eye-popper, though. Let's get to some individual stocks to watch now, though. Here's Valerie Teitel in London. Valerie.
Good morning, Ivani. Let's start with Robinhood, up 7.5%, nearly 7.5% on the back of S&P Dow Jones saying it will be included in the S&P 500 come the 22nd of September, once the disruptor of Wall Street is now going to join one of Wall Street's most exclusive clubs. That stock is in the green on the back of this. Another one that was not included in the index, we're seeing in the red, that's Michael Saylor's strategy, previously known as MicroStrategy, down 2.3% in the pre-market trade. There had been some excitement priced into this stock on the back of Coinbase getting included into the S&P 500 and those thinking that perhaps that S&P Dow Jones wanted to expand the crypto sector, but that did not come through for Strategy Inc. That stock is in the red in pre-market. Lastly, I want to hit on Loan Depot. This stock went absolutely crazy on Friday, up 27% in Friday's trade, and pre-market up another 12.5%. Vonnie, this is on the back of perhaps some positivity in the stock after Trump's war on housing. Remember, it was last weekend we heard from the Trump administration that they wanted to declare an emergency when it came to housing and perhaps teasing some extraordinary government measures. And we're seeing those that extend these residential mortgages, such as Loan Depot, being some of the key beneficiaries from that skepticism. Bonnie?
I can tell, Valerie, it's going to be a fascinating week once again in markets. That is Valerie Teitel in London. Another big week then in economic data. Tuesday, we'll get those annual revisions on non-farm payrolls from April last year to March of this year. Then, of course, PPI Wednesday, CPI Thursday, and New Michigan Sentiment Friday. All that after last week's jobs report, which has cemented a Fed cut next week, at least in market pricing. Joining us now is Terry Wiseman, Global FX and Rates Strategist at Macquarie. Terry, thank you so much for joining.
Good morning, Bonnie.
So Standard Chartered now looking for a jumbo cut, but not quite sure what happens after that. We have Bank of America putting 2 cuts on the table, where previously they had none. Is there any scenario where we actually don't get a cut next week?
I really don't think so. I mean, there's of course a slim chance that the CPI report for August comes out and it's high. It may be high, but even if it's marginally higher than expectations, I don't think it will cause the Fed to not cut effectively or hold back. I think it would have to be very high. Now, obviously, there's a small chance of that happening. Data, to some extent, is unpredictable. The Fed probably at this point does not know what the CPI is. I do think the Fed will cut on September 17th, but there's, of course, always a little chance that the data will derail that vision.
If the Fed decides to go 50, which would be, you know, the other side of the coin, does it risk panicking markets that it's playing catch up and too late?
I think it risks panicking markets because the market will undoubtedly believe that the Fed knows something that the market doesn't about the direction of the economy. There's obviously already a lot of concern around the direction and outlook and robustness of the labor market. And given that the Fed has already said that it is going to pay a little bit more attention to what's happening in the labor market as opposed to paying attention to what's happening with inflation, i.e. shifting the focus of the dual mandate towards unemployment, I think that the market will infer from a 50 basis point jumbo cut that there is something much more seriously wrong about the labor market than the data has led on so far. So yes, I think it could, in some quarters at least, create the sense that we're going to have a recession. I don't think we're going to have a recession. I don't think the Fed necessarily wants to behave in a way that it conveys to the market that it believes that either.
Now, we're looking at a 3-month average of 29,000 jobs created in the economy. We may get revisions tomorrow that maybe even put a month or more into negative territory from, you know, previous months. And of course, we have the unemployment rate now at 4.3%, which we haven't seen for 15 months. How concerned should the Fed be about this labor market?
It should be a bit concerned. I don't think it should be overly concerned. Remember, I say a modest amount of concern. Because we don't really know yet if the decline in non-farm payrolls growth has been due to the reverse immigration issue in the United States. There is a possibility that 30,000 jobs to 50,000 jobs per month created is exactly what one would expect in view of the reverse immigration we're seeing and the prospect that we're seeing a decline in the labor force itself as a result of this. So it should be concerned, but it should temper its concern with the possibility that there's something else going on. And I think the other thing that's going on is the fact that the unemployment rate being at 4.3% is not overly high. In fact, it's still below what the summary of economic projections had implicitly predicted for where the unemployment rate would be at the end of this year. So it's not a cause for concern, for panic yet. There is a modicum of concern, I think, that's building.
So, Terry, 25 basis points then next week would be your base case.
That's right.
What do we get then for the rest of the year? Do we need to keep going with the cycle?
I think when the Fed starts to cut, it's usually signaling that it's committed to more cuts. It wouldn't just do one unless it believed that there was a little bit more effort needed to bring the labor market back into a more robust equilibrium. So, yes, I do believe that the Fed is going to cut again this year. It may, in fact, skip one of the meetings between now and December. It's not clear that it will do 2 more in a row, but I think all told we're looking at about 3 rate cuts of 25 basis points before the cycle ends. That is a much more hawkish view than the market is offering us right now. If you look at the swap market right now, you look at the forward curve implicit in the swap market. The swap market is talking about 5 to 6 cuts coming in the duration of this easing cycle. We think that's excessive, and one of the reasons we think it's excessive is not because we are very optimistic about the economy right now, but come 2026, you will see fiscal stimulus coming out of the One Big Beautiful Budget Act, and we think that the economy will recover at that point.
Yeah. So we saw a lot of volatility in rates markets last week, to say the least. Is the 25 cut priced in now, or do we see more volatility in coming weeks? I mean, 350.
Well, again, the 20 we can't see that much volatility because we're not that far away from the Fed's meeting on September 17th. So there's a certain amount of limited range that the market can move over the course of just a few business days. But I will say again that the primary issue going between now and September 17th in the meeting will be the CPI number. Remember, the CPI has been sticky. Inflation generally has been sticky on the way down in the U.S. We are seeing evidence that there is positive pressure on goods inflation. And keep in mind that some of these indicators of cost, both on the services side and the manufacturing side, like the ISM prices paid surveys and business prices paid survey, are still signaling that there's upward inflationary pressure in the U.S. So that is my concern. Do I think that it'll turn off the prospect of a rate cut? No, it'll still happen. But the market may adjust the outlook for future Fed cuts if CPI is high.
We have a lot of talk about Fed independence from the Republican side at the moment. I'm curious as to whether these questions are priced into the Treasury market. I mean, we have the 30-year yield right back down to 4.7725. Clearly, you know, all eyes are on the FOMC at the moment. But will Fed independence and this whole question and who gets to be next chair and so on have an impact on particularly the long end?
Yeah, absolutely. In fact, it's having an impact, I believe, not just on the long end. We could talk about that, but it's having an impact on the forward curve that I alluded to earlier. 18 months out. Remember, that forward curve is projecting that the Fed will be cutting by 5 or 6 times over the next 18 months or so. And I just said earlier that I don't think it's going to cut by that much. But one has to try to rationalize why the market is pricing in that aggressive a path for rate cuts. And I think it's one of two things. It's either pricing in a recession or it's pricing in a loss of autonomy on the part of the Federal Reserve due to the leadership changes that are going to cause the Federal Reserve to be much more structurally dovish than it is right now. Those are two ways to rationalize what the curve is saying.
Very briefly, Terry, dollar call.
Yeah, no, we still think that the U.S. dollar is going to weaken from here. A lot of the weakening has already taken place, so it's not as if the next few months are going to see massive dollar weakening. There are things that could interfere with that view. Obviously, what's happening in France with the fall of the government can interfere with that view and bring money back into the U.S. But generally speaking, the trend is still lower for the dollar.
Terry, thank you so much for joining us in studio early this morning. That is Terry Wiseman of Macquarie. Coming up, Fed Chair finalist Kevin Hassett echoes Treasury Secretary Scott Bessent in calling out the central bank. More on that next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Treasury Secretary Scott Bessent called out the central bank last week for risking its independence by overusing, quote, non-standard policies, mission creep, and institutional bloat. Kevin Hassett, NEC director and finalist for consideration to be the next Fed chair, was asked for his view on Fed independence on CBS yesterday.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
For more, I'm joined now by Bloomberg's Kasia Klimaszinska, who leads our DC breaking news coverage. So, Kasia, we have been talking about Fed independence from many angles for many weeks and months, and suddenly it's the Republican narrative. What are Fed watchers saying about Bessent and Hassett's remarks?
Good morning. Indeed, we saw Kevin Hassett here. Hassett is one of the top contenders to lead the Federal Reserve after the term of the current chair, Jerome Powell, expires in May. So Hassett went on TV on Sunday, and he kind of echoed this narrative that is coming from Republicans, that the Fed is doing too much, that it's expanding beyond its core mandate of monetary policy into perhaps financial regulation or even looking at issues like climate change. And so Hassett reiterated that the Fed independence is key for him, but he would like the central bank to focus on its core mission of monetary policy. And that's also what the markets want. Markets want the Fed to stay strong and independent so that it could keep the control of prices, so that it could prevent the prices from spiking. And you had your earlier guest pointing to rates, especially long-term rates, that show that there is some concern in the markets now about whether those prices will stay in check, whether inflation will stay in check over the long term.
Meanwhile, also in D.C., the U.S. weighing annual approvals now for exports of chip-making supplies to factories in China. So what are the details here?
Yes, this is just a proposal, so we are in early stages of solving this issue. We know that the Trump administration wants to limit how much of IT gear is flowing into the U.S. from China. So it revoked licenses from some companies like Samsung, for example, preventing it from just bringing semiconductors from China into the U.S. And now the two sides are looking into how to solve it, because the U.S. still needs some of those items, some of its gear. We cannot produce all of it in the U.S. yet. So perhaps there will be those annual licenses telling companies exactly how much and exactly what it can bring from China to the U.S. each year.
All right, Kasia, thank you so much for joining us. That is Kasia Klimaszinska in D.C. Companies around the world still grappling with trade uncertainties with the U.S. Volkswagen Group CEO Oliver Blume spoke with Bloomberg's Stefan Nicola on the sidelines of the Munich Car Show. Take a listen.
We welcome the joint agreement between US and EU with the opportunity to come to a signed agreement retroactive from the 1st of August on. And that gives us planning security. On the other side, the 15% would be a burden for Volkswagen Group. That's very clear. And we don't appreciate the asymmetric deal in between US and EU because it's distorting the competition in Europe. And therefore, we are counting on our own offer, investing heavily in the U.S., linked to our growth plan. We planned in the U.S., and there we are in close contact and good talks with the U.S. government. And we hope that we come to a quick solution also during the next weeks with the support from the U.S. government to our investments, because we think that's very attractive for the U.S. community, building employment, building a supply chain, and that at the end gaining taxes in the U.S. And that is positive and a better multiplier than having on the other side the tariffs.
Yeah, let's stay in the U.S. for a second. You've long wanted to grow there, and you've made some investments in the Scout brand, for example. Now, things have changed. President Trump is cutting back on EV aid, the tariffs we've already discussed. How do you adapt your North American strategy to those new realities?
Yeah, we are investing heavily, for example, in Scout or in Rivian and other tech partnerships in the US. And we see still a huge growth opportunity for Volkswagen Group with all our brands. And Scout is one positive example to enter now in the biggest US car segment, pickup segment, and the huge rugged SUVs. And Scout stands for this segment, to bringing back a heritage US brand to the market. And what we are offering there is also a car with range extender. You have an internal combustion engine and offering a huge mileage with these cars, around 800 miles. And I think that's very attractive for the US community. And the car is stunning. We were able to present it also yesterday here in Munich. And everybody is excited. And also the first order intakes are very, very positive for this car.
So no changes to Scout. You're doubling down on that brand and that introduction.
We are counting on Scout, and this is one very important driver of our growth strategy in the US.
Bloomberg's Craig Trudell, who leads our global autos coverage, joins me now. So, Craig, very difficult time for European, well, global automakers, really, but dealing with the US, and the Volkswagen CEO didn't hold back there. What's the outlook for potential deals with the US for European car makers, and would they all get the same one?
Yeah, you heard Bluma talk there about not appreciating the fact that we're now in a situation where the tariff rate going from U.S. to Europe is nothing versus a 15% from Europe to the U.S. and that of course is not something that the European car makers are particularly happy about, in part because they are a sort of bright spot in this story of lopsided automotive trade between the U.S. and Europe. You have German manufacturers in particular sending quite a lot of vehicles from the U.S. to Europe. And yes, they're also exporting a lot from Germany and from the rest of Europe into the U.S. And that is, the sort of reason that Trump wants a big change in terms of approach to trade with Europe. But you do have an effort on the part of these manufacturers to try and get some recognition for the fact that, if they're going to, be a part of the limited amount of exporting going on from the U.S. to Europe, that they should have some offset there, some recognition of that in terms of how they're tariffed going forward.
Craig, how is the rollback of emission standards in the U.S. going to affect, global automakers, European and Chinese automakers in particular, who are in a fierce fight on the EV front?
Yeah, I think, you heard our colleague Stefan ask about the Scout brand. I think that is really an interesting sort of question going forward, because initially that was going to be an electric-only brand. Pickups and SUVs that Volkswagen sort of reckoned would be, where the American consumer would be most likely to go electric. What we've seen is real sort of disappointment and letdown in terms of just how quickly the American consumer is willing to buy EVs, even in those segments that are more popular in the U.S. And they've had to kind of pivot in terms of their strategy for Scout, where it's now not going to be electric only. It's going to be electric and range extended electric vehicles, which is, a sort of glorified hybrid. And they're having to do that in part because the demand hasn't been there, and because the equation is really changing, as Stefan alluded to, where you now have IRA tax credits going away after this month. And, a real question about just how supportive the U.S. is going to be from a policy perspective for years to come for electric vehicles that already, weren't really taking with the consumer.
Craig, thank you so much. All of that there from Bloomberg's Craig Trudell, who covers autos for us. Coming up, we'll get you set up for your week filled with economic data. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Now a look at what's ahead this week. Annual revisions for non-farm payrolls coming out on Tuesday morning will be closely watched, of course, followed by PPI Wednesday and that all-important CPI report Thursday. Friday, we also get Michigan. And we wrap up the week with that University of Michigan sentiment data Friday. Fed watchers will be looking at inflation expectations in particular. So a morning of new S&P 500 entrants, AppLovin and Robinhood rising ahead of being included in that index. Oracle sees its price target raised by Barclays thanks to inking that $30 billion deal with OpenAI back in June, and it's up more than 2% pre-markets. Some nice moves to the upside there. So let's take a look at markets more broadly, because of course we had that hugely disappointing jobs data, which, caused the market to rebound as it does, equities-wise at least. We do have another positive day potentially on deck today, with S&P futures pointed to a 0.25% rise at the open, NASDAQ 0.4%. They both did end last week with small gains. The dollar index very slightly weaker. We have a stronger euro today and a weaker yen. Lots of chaos and lots of elections and pre-election movement to watch. But I want to take a look at treasuries, because now we're all focused on next week's FOMC. We have Standard Chartered now calling for a jumbo 50 basis point rate cut in September, followed by question mark for the rest of the year. We also have Bank of America now putting 2 rate cuts on the table for this year. Swaps market, though, pricing in a definite rate cut next week and maybe a 10% chance of a 50 basis point cut. So lots of conversations to be had. That's it, though, for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
It's a weaker report, but it's a weaker report that solidifies 25.
We don't think they have to do much more.
The markets are quickly moving from pricing in 2 cuts for the rest of this year to possibly a cut at all 3 meetings.
We can all agree that the tone from the Fed has tilted more dovish. It should be a dovish September FOMC.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, rate cuts signed and sealed. Investors looking for one more read on inflation before Chair Powell delivers. As political instability overseas sends Japanese bond yields back to record highs, Europe is preparing for another French government to fall over failed budget efforts. The struggle continues.
And the struggle on an international level, and this is something that Scott Besson has been very clear on, and others in the United States, this is not a U.S. issue. This is a global issue of potential political instability, causing questions by bond investors about whether some of these nations will be able to pay their debts back. And it raises this question: if the Fed cuts now, does that encourage a higher inflation, higher, instability type of regime in the future, or is it isolated from some of the noise overseas?
So the good news stateside is that bond yields are lower, a whole lot lower. The bad news is the why. The data's not great. In the last week, wage growth has slowed. Hours worked hasn't picked up. The Doves have got a really strong argument going into the meeting next week because the payrolls growth we've seen has seen a serious step down.
Yeah, and with the downward revisions, you saw June become the first month with actually a negative headline jobs print going back to December 2020, leading some to think, okay, yeah, there's a lot more weakness in the pipeline. I'd build on that and say on Thursday we get CPI. How weak does the CPI print have to be for them to consider going 50 basis points at their meeting next week? And that, I think, is what people are looking for.
Steve Englander, Standard Chartered, looking for exactly that. The note dropped overnight. We now expect a 50 basis points Fed cut in September.
So he's been arguing that they should have been considering that anyway because of the downward revisions. He said that pretty much any headline number, you're going to get 70,000 fewer jobs when it is revised. And it goes down to where is the credibility in some of this data. The anecdotes are confusing. Can you have a labor market that is slow while still having profitability at a pace that has been what it has been? Maybe the answer is yes, because if you look at tech companies, for example, they're delivering pretty big profits while still laying people off. So it's a very strange market, and it goes back to what you've been saying. Is it cyclical or is it structural? And that, I think, continues to be the question.
There's some real tension in this market, I think. Things are super finely balanced going into year-end. You've got a market very close to all-time highs. Small caps up for 5 straight weeks. I think the home builders last week up 6.5%. This market and investors are looking for a cyclical rebound. This data it's not justifying it just now.
Yeah, and David Kostin of Goldman Sachs leaned into this and said, actually, small caps will outperform. So leaning into the rally that we've seen, Stuart Kaiser really doubled down on bad news is bad news over the weekend, and he put out a note where he said, essentially, this is what you're going to get, and it potentially will lead to weakness in risk assets. It's been a frustrating market, I'll be honest, because I feel like you can't really make a definitive argument one way or another about which way things are going to break. And so it feels like we've been in limbo for quite a while. And it just seems like it's unclear. Both arguments have legitimacy, whether you get a downturn on one hand, which would be not very good for these risk assets, or whether you get a reacceleration on the heels of one big beautiful bill and all sorts of other things that would lead to this cyclical rally. You can make an argument on either side.
I hope we get a reacceleration for the good of the US economy.
Of course.
Just don't see many signs of it right now, that's for sure. Equities up by 0.2% on the S&P 500, a lift to this equity market on the Nasdaq up by 0.4%, and the rally continues on small caps higher by 0.1%. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth, anticipating a stagflation-light scenario. The former White House trade advisor Kellyanne Shaw joins us on the risk of a massive tariff refund, and Ellen Zentner of Morgan Stanley on growing concerns of mission creep at the Federal Reserve. We begin this hour with stocks higher as investors await key inflation data. Cameron Dawson of New Edge Wealth writing the following: we continue to see this as stagflation light, where growth is slow and muddled, inflation is sticky, and we could see bouts of upward pressure on yields. Cameron joins us now for more. Cameron, good morning.
Good morning.
Is stagflation good for equity markets?
Well, stagflation is only good for equity markets if companies have pricing power, meaning if we go back to 2022, we were in an environment where growth was slowing, but because companies had pricing power back in 21 as well, we were able to see margin expansion. That's the key difference in this inflationary environment, which is that companies are talking about less ability to pass on price increases to consumers, which implies that you get less top-line growth, which implies that you get less margin expansion, which comes into the face of the fact that consensus has about 100 basis points of margin expansion priced in for 2026. So that's the big key question. And then if margins do compress, does that mean that companies turn to layoffs in order to defend those margins?
So this is the problem right now. Do you have pricing power when you have a labor market that's weakening? You're pushing back, I can hear that. Would you push back against the market priced at all-time highs on the S&P 500?
We think that the market priced at all-time highs is a function of the fact that 12-month forward earnings estimates are also at all-time highs. As long as forward earnings estimates continue to climb, we think the market is well supported. If those earnings estimates start to flatline, or heaven forbid they start to move lower because of some of these potential challenges to margins, that's when we would expect markets to take more of a breather. But as long as you continue to see that upward pressure on earnings estimates, markets likely rise.
Don't we basically have a Fed underwriting risk assets at this point?
When have they not?
Okay, but this is an important question. They didn't when you had this idea of runaway inflation.
Yeah.
So at what point does it really hinge on CPI, whether or not they are going to more dramatically underwrite risk assets and whether you can really get behind small caps?
One of the things that's so interesting is that even as we have seen the Fed talk about rate cuts with inflation remaining sticky and higher, we have not seen the bond market price in the potential that the Fed will move away from its 2% target. If you look at inflation break-evens or inflation swaps over the 5-year, what you can see is that they still are fairly well contained, meaning the bond market has this confidence that the Fed is going to stick to its 2% inflation target. The question is that confidence well supported, given the fact that the Fed is looking that it's going to prioritize the mandate about jobs versus inflation?
You know, we keep talking about this K-shaped economy, and regardless of whether we're entering a slowdown or not, the consumer that happens to be wealthier keeps spending, and we've seen that with the S&P 500 companies continuing to do okay and having pretty strong profitability even with this weakening labor market. Can't that continue? Can't you get a situation where the S&P 500, which are less and less representative of the rest of the economy, do well with profitability, while small caps don't do well, while the economy kind of flags, and we get this sort of slow growth, low hire, low fire type of regime?
So we're watching that high-income consumer really closely because they do make up the majority of consumption. They are the top 20% income quintile, makes up 40% of consumption. But here's the kicker. You're seeing interest income to that consumption consumer, where they have all of the savings, they have the majority of the savings, start to fall as the Fed is cutting interest rates. So what's fascinating about the past year is that as the Fed has cut rates, their interest income has been hurt more than they have been helped by lower interest rates, which suggests that as the Fed cuts interest rates, could this hurt the interest income of that high-income consumer and cause an unintended consequence of a slowdown in some of that consumption growth, which goes with the idea that you're actually starting to see delinquency rates for that high-income consumer start to pick up more than it has in the past few years.
Do you think that foreshadows an economic downturn?
If that is the case, yes. Well, so look, we think the U.S. economy remains still very much resilient. We think the economic downturn really depends on whether this little higher labor market turns into a higher firing labor market, which brings us back to the notion of margins. Secretary Bessent sat in this chair and said that margins got very fat during COVID and that it is okay if they start to moderate. If they start to moderate, the question is, how do companies defend them? If they defend them by cutting headcount, then that's when we see a much weaker economic growth environment.
And that's a completely different problem. And I think if you're going into the FOMC next week, next Wednesday, this is why the Doves have got the ammunition at the moment. Maybe that changes in the future. I don't know what the future holds. But for the moment, based on the data we've seen, the step down in payrolls growth, January through April, we averaged 123,000 a month. We've stepped down May through August to 27K. We've done that in just a few months. That's brutal.
It's also brutal when you look at the downward revisions, which tend to foreshadow what's to come in terms of the direction of travel. And the fact that you had a negative number for the month of June with those downward revisions caused a lot of people to say, wait a second, this looks pretty negative. The hawks, if there are any, I don't think there are any, but if somebody were hawkish, they could argue that what you are seeing is a market with just a fewer population growth type of dynamic. And so that's part of what's going on here. Either way, it's clear. This is not a churn. If you're out of a job, it is tough for you.
Speaking of brutal, you've seen this from Politico. I'll share it with the audience now. The Buzz, a private dinner attended by dozens of administration officials and close advisors to the president, was temporarily marred by a dramatic clash between two of Trump's top economic officials. Treasury Secretary Scott Bessent at one point threatening to punch top housing finance official Bill Pulte in the face. Pretty brutal down in Washington, D.C., apparently.
Well, we've heard about other altercations between some of the members. I believe Scott Bessent and Elon Musk at one point were reportedly in a tit-for-tat, in a friendly conversation. This isn't the first time we've seen or heard about some of Trump's advisors getting into an issue. What this actually shows, though, is some of the tension around how the Fed is treated and whether necessarily going after Fed officials is beneficial to get 10-year Treasury yields down to 3%, the way Scott Bessent won. So I wonder how much that was behind it. I'm totally speculating, so I should just take a step back.
The Treasury Secretary with a vicious left hook, I'm told.
Oh, yeah.
Reportedly.
I can picture him at the boxing ring.
Cameron Dawson of New Edge Wealth. We'll let you go. Don't worry. Cameron, appreciate your time. As always, equities on the S&P. What a story. Equities positive by 0.25% on the S&P 500 this morning with an update on stories elsewhere. With your Bloomberg Brief, here's Yahara Anand. Hey, Yahara.
Hi, John. We start over in Japan. Shigeru Ishiba has announced that he will step down as Japan's prime minister. The move follows calls for his resignation after back-to-back election losses that cost his party its parliamentary majority. With no clear successor, his departure is likely to fuel uncertainty among investors. Meanwhile, President Donald Trump has a short list of candidates to replace Fed Chair Jay Powell when his term expires in the spring. Kevin Hassett, Chris Waller, and Kevin Warsh are the finalists. Over the weekend, Hassett said the U.S. Central Bank put its independence and credibility in jeopardy by expanding beyond its mandate. And Aryna Sabalenka successfully defended her U.S. Open crown, defeating Amanda Anisimova in straight sets on Saturday to claim her fourth Grand Slam title. Sabalenka is the first player to win back-to-back U.S. Open women's singles titles since Serena Williams did it over a decade ago. And on the men's side, Carlos Alcaraz beat Jannik Sinner, taking home his sixth Grand Slam title and his second at the U.S. Open. That's your Bloomberg Brief. John?
Yahara, thank you. The president in attendance. Have we got pictures of that? I hope we do. In the Rolex suite, which I think is the most newsworthy thing about all of this. They've just slapped tariffs of close to 40% on luxury watches coming out of Switzerland. There's the president sitting in the Rolex suite, Arthur Ashe. And I was wondering if we woke up this Monday morning to some exemptions
yeah, exactly.
on some Swiss tariffs.
Yeah, well, that is something that we can be watching for. I also was going to say, you know, I would have attended, but I got stuck in the security line.
Yeah, you and how many others?
I mean, honestly, did you see
imagine
that?
dropping 10K for courtside seats, 1 and then 2, needing to wait outside for hours to get in?
Yeah, and having the match delayed 45 minutes and still starting before most of the people had gotten into the stadium. So definitely an interesting night.
Yeah, the organisation of that event, got some things to say.
The giving out of deodorant.
The presentation.
Having
all
to take
the
it
whole,
back
the
because
whole
of the
thing.
security line.
The whole thing is just...
There were some problems.
Very strange. Up next on the programme, refund risk.
I am confident that we will win at the Supreme Court, but there are numerous other avenues that we can take. We would have to give a refund on about half the tariffs, which would be terrible for the Treasury. If the court says it, we'd have to do it.
A conversation up next with the former White House trade advisor, Kellyanne Shaw, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Main event this week, a read on US inflation. It starts with PPI on Wednesday, and then we get CPI on Thursday. A read on the consumer again going into the weekend. Consumer confidence and inflation expectations in focus ahead of next week's big Fed decision. As the week ahead, here's the price action, snapping 2 days of gains on the S&P 500 into Saturday. This Monday morning, we had some weight to the rally again, up 0.25% on the S&P, on the NASDAQ, and by 0.4. Down in Washington, D.C., under surveillance this morning, confronting refund risk.
I am confident that we will win at the Supreme Court, but there are numerous other avenues that we can take. They diminish President Trump's negotiating position. We would have to give a refund on about half the tariffs, which would be terrible for the Treasury. There's no be prepared. If the court says it, we'd have to do it.
So here's the latest this morning. President Donald Trump's administration looking for other avenues to implement tariffs if the Supreme Court rules against the president's agenda. Treasury Secretary Scott Bessent warning the U.S. would have to refund nearly half the country's tariff income if the case is lost. Bloomberg's Tyler Kendall joins us from Washington for more. Good morning, Tyler.
Hey, John, good morning. You said it. The U.S. government could be on the hook for tens of billions of dollars in refunds if the Supreme Court doesn't side with the administration's case for imposing tariffs under IEEPA, the International Emergency Economic Powers Act. Because as you well know, last month, federal appeals court ruled that President Trump overstepped this authority. But importantly, that court put that decision on hold, giving the White House this chance to ask the Supreme Court to intervene. Now, the latest data from the U.S. Treasury Department shows us that the U.S. U.S. government has so far recorded more than $184 billion in tariff revenues this year alone. And while projections vary, you heard the Treasury Secretary say about half would have to be given back. We've seen other estimates, including from the Committee for a Responsible Federal Budget, which projects that 71% of anticipated tariff revenue would all but vanish if the Supreme Court ends up upholding this decision. And a lot of things are factored into these tariff revenue projections, including, as you all know, the U.S.'s credit grade. Take S&P Global Ratings last month, for example, citing tariff revenues they say would help soften the blow from any fiscal health risks when it comes to the tax cuts from the One Big Beautiful Bill. It's something that we're going to have to be watching closely here, but also probably worth mentioning that just doesn't mean that all tariff revenues are going to go away. The Treasury Secretary said that they're looking at these other federal authorities. We know those Section 232 tariffs enacted over national security concerns are still going to be on the books. But still, John, the Treasury Secretary said that if the power to invoke tariffs through IEEPA goes away due to a Supreme Court decision, that would diminish, in his words, the president's negotiating power in the ongoing trade talks.
Tyler Kendall with the latest down in Washington. Tyler, thank you. Brahma, this from Mark Dow out on X this morning. Tariff refunds are fiscal stimulus.
Wow, that's I mean, look, that's what we just heard from Cameron Dawson, is that essentially the high interest rates are also stimulus because the income that wealthy investors are getting from that supersedes any kind of interest expense and actually is some kind of stimulus. Look, I was actually looking at the Yale Budget Lab, and they came out on Friday with this data saying that all tariffs that have been announced so far this year would raise $2.4 trillion over the decade starting in 2026. Under the invalidation of IEEPA, it would only raise $700 billion over the same period. So that is less than a third of that revenue that I think would really make a big difference. It might be stimulus, but it might not be good for the long run.
Stimulus for the economy, but yeah, this is something that a lot of people in fixed income have said has supported this bond market at a time when we've seen some real disruption elsewhere abroad.
Yeah, there's been this sort of question of how is Japan, how is France going to pay for this? Well, in the U.S., it's going to pay for it through tariffs, and that's been one offset. If you don't have that, how much of a runaway do you get of yields, particularly in the 10-year and 30-year denominations?
Joining us to build on some of these conversations, the former White House trade advisor Kellyanne Shaw joins us now for more. Kellyanne, welcome back to the program. Are these tariffs, this policy, is it too big to fail?
Good morning. Thanks so much for having me back on. I have to say I tried to take the weekend off, only to be surprised by a large executive order on tariffs as well as news over the weekend. So no rest for the trade lawyers anytime soon. So are these tariffs too big to fail? In some cases, yes. In some cases, no. I do think that if the president loses this case before the Supreme Court, that loss of tariff revenue is going to be a tremendous blow, as the Treasury Secretary did announce there. But the administration has said they have other tools to reimpose tariffs. So it's really about everything that's been collected to date that they're concerned about. But I don't think the president's going to back away from a tariff policy anytime soon. He likes a strong tariff. He thinks the tariff should be a strong feature of U.S. economic and foreign policy. So I don't see that changing.
How much do you see, Kellyanne, companies lining up to prepare for the instating of this decision, the idea that IEEPA tariffs are not going to be held constitutional? How much are they lining up to try to get those rebates?
I think companies are definitely weighing their options and trying to understand what's going on, where the court might go, certainly talking to a lot of different importers about this and keeping them updated as to the status. But at the end of the day, everyone is holding their breath to see what the Supreme Court does, and nobody is making decisions based on a court case until we really know what the outcome is there.
How much are people more concerned about the ongoing instating of the tariffs under IEEPA versus the idea that it could really shake the budget and shake the questions around how long the recent tax cuts can remain in place going forward? In other words, are the tax cuts more beneficial to the clients that you work with than the tariffs that they have to pay?
Yeah, and what's been interesting to see, particularly for those who are in the market, right? The market has really come full circle on these tariffs from April, where there was a tremendous amount of negative reaction to a president's tariff policy, to today. You actually see that the market is getting nervous about the loss of potential tariffs through some of this litigation. But what I would say is it really depends on what sector you're in. So I work with clients across sectors, those in manufacturing sectors versus others who rely on more or diversified supply chains will have different reactions to these tariffs, including some of the country-based tariffs versus those sectoral tariffs. And so it has been interesting to see because there isn't one universal view. There's really a pretty strong mix across the board.
Kellyanne, there's a couple of stories that I think we're all finding a little bit confusing. I'd love some clarity from your side. 39% tariffs on countries like Switzerland. The president then over the weekend in the Rolex box, which got my attention and many others as well. What's happening with relationships that we thought were pretty good? I've been confused by this. If you'd asked me about the relationship between this administration and the Swiss, that was fantastic in the president's first term. What's happened in the second term?
Yeah, and that has been a very interesting relationship to watch, in part because the word on the street had been that the Swiss were one of the first countries to ink a deal with the administration. It was just pending that final sign-off by the president. And then, of course, when the president had his call with the leader of Switzerland, that deal seemed to fall apart over disagreement about the size of that $40 billion trade deficit with a country of 9 million people. And so what you're seeing play out is exactly what the president talked about during the first term, but is really exercising on in the second term. And it's the fact that even if you're our ally, even if you're our friend for national security reasons, for value reasons, that at the same time, he's going to hold countries' feet to the fire where there is that trade imbalance, or in Switzerland's case, a large trade deficit. So I do think that relationship will ultimately work out for all of the reasons you can understand and suspect, but really it's about addressing that $40 billion trade deficit. And once they figure out a plan for that, I think we'll see some lower tariffs.
Look, I get it. You want manufacturing to come home. You want manufacturing to build in places like, let's say, Georgia, a battery venture by a South Korean automaker. You know where I'm going with this, Kellyanne. And then there's raids by ICE on the plant. How difficult is it at the moment to move your manufacturing from abroad to the United States?
Yeah, what I'd say is it's still very dynamic, right? The tariff landscape, we have a bit more certainty where some of these tariffs are likely to land, although these tariff rates could go up or down. We could see sectoral tariffs come on certain sectors. And so in terms of making some of these investment decisions, even just looking at the tariff landscape, there remains a fair amount of uncertainty that companies are having to weigh, although the administration's message is just build it here and you won't get tariffed. But there are a lot of other policies that need to fall into place. And so even looking at something like the pharmaceutical sector, it's not just about building plants and factories here. It's about that FDA approval process, that regulatory process. And every sector you go down has its own unique features that need to be addressed to really bring much of this manufacturing home. So we've started heavy on the trade policy, heavy on the tax policy. Now it's time for the administration to really work on some of these other more domestic-facing policies to finish that storyline.
Kellyanne, appreciate your take. As always, Kellyanne Shaw, they're the former White House trade advisor. Stunning pictures coming out of Georgia over the past few days.
450 people arrested. The warrants were initially for 4 people, I believe. And this was the largest one-spot arrest that we've seen from ICE so far. It raises a question exactly to your point. How do international companies create plants in the United States and staff them? We heard from the president about what his take on that was. Again, how consistent has the relationship been with some of our trading partners, and how much do they have a sense of exactly what they can do to appease the president?
We'll go back to that story later on this morning. Up next on the program, Jim Bianco of Bianco Research with bond vigilantes watching political turmoil in both Japan and in France. Plus, we'll touch base with Danny. She's got your morning movers with stocks jumping on news. They're joining the S&P 500. Robin Hood up 7.5%.
said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From New York City, welcome back to the program. Equity futures positive here by 0.25% on the S&P 500, bouncing back from Friday's very muted mild losses. On the Nasdaq, up by 0.4. On the Russell, what a run, up every single week since that very weak July payrolls report that we saw back in early August. In the bond market, switch on the board, 2-year, 10-year and 30-year. 2-year bond yields down for 4 consecutive days. We're down another single basis point, 349.87 on twos. Weak payrolls report on Friday, basically reinforcing the view this Fed's going to cut in September and maybe signal there's more to come.
And maybe cut by 50 basis points, as Stephen Englander was talking about. Right now, you've got 28 basis points of cuts priced in for that Fed meeting next week. How weak does CPI have to be to really reinforce this? And does this mean it's guns a-blazing time for risk assets, or does it mean watch out? Because this means that there's weakness on the way.
The CPI, a few days away. That drops on Thursday morning. Look out for that. That's the price action, 3 hours away from the opening bell. With your morning movers, it's Danny. Hey, Danny.
Hey, John. Another day of gains for Tesla. This stock ended up the week last week more than 5%, a 3.6% gain on Friday. All of that around Elon Musk's pay package that he would get $1 trillion over the next 10 years if he met certain very, very high bar metrics. And again, shareholders still sending that higher in the pre-market trade, one of the best performers in the S&P 500, up 1.4%. Speaking of the S&P 500, we got the rebalancing of the index itself. Whenever we hear about who might be included, that tends to boost the stocks because of all the passive money that flows into these indices that benefits the stock. So Robinhood and AppLovin, of course, the brokerage and the app monetization company, both added in, both jumping more than 6.3%. Robinhood specifically flagged by Bloomberg Intelligence as this move really helping their shareholder base and emphasizing their profitability path. Now, with the winners, there are also losers, people who got the snub. One of them was MicroStrategy. It was potentially a company that had rallied enough and gotten big enough to get into the S&P 500. Of course, it's a committee that decides these things. It's not an automatic inclusion. So those shares falling 2% for not getting the move into the S&P, John.
Danny, thank you. Appreciate the update. More from Danny in about 60 minutes from now. On our radar this morning, the National Economic Council Director, Kevin Hassett, backing criticism of so-called mission creep at the Federal Reserve. The finalist to replace Fed Chair Jay Powell saying the central bank is putting its independence and credibility at stake. President Donald Trump calling on foreign companies to train U.S. workers and respect immigration laws. Trump making the comments after an immigration raid at a Hyundai factory in Georgia. The DHS calling it the largest single-site enforcement in history. And finally, Japanese Prime Minister Shigeru Ishiba stepping down after a historic defeat in the country's national elections. Japan will now await a new prime minister to take office only about a year after Ishiba assumed the role.
And this isn't really helping either the yen or the long bond over in Japan. You're already talking about how yields are back up to record highs. The idea here is Prime Minister Ishiba had a plan to try to tamp down some of the debt, as well as encouraging the Bank of Japan to raise interest rates in order to tamp down inflation. All of the potential successors are viewed as less fiscally credible, which raises this question: is Japan going to become a node of volatility after decades of being the node of bond market stability.
It's been an anchor around this bond market's neck for a long, long time, keeping yields down. That anchor moved away over the last few years. Now you've got a situation, as you say, got a government that could come in now talking about fiscal easing, not fiscal conservatism, and that could be another big change at a time where people already think inflation's creeping higher and this Bank of Japan's going to have to make another move.
Yeah, and this comes after the Prime Minister did negotiate the trade deal that was announced on Friday with the Trump administration, saying, now that that's over, I can step down. What's interesting is it's not just Japan. Today, we also have the no confidence vote in France, with the same tension playing out there with Francois Bayrou, the Prime Minister over in France. A real question about globally whether this is a shift in the regime, and you've really pinpointed this, of developed markets trading more like emerging markets, with really a doom loop of weaker currency, higher bond yields in the face of a deficit that really does seem less controllable than possible.
Let's stay on that political instability and head over to Europe. As Lisa indicated, the Prime Minister of France, his government is facing a confidence vote on its budget proposal later on today. Bayrou's spending plans are not expected to get the necessary votes to pass, leading to another government collapse. Bloomberg's Oliver Crook joins us now from Paris with more. Ollie, good morning. What can we expect? Just walk through the process for the day ahead.
Yeah, Jonathan, this begins here at the National Assembly, where lawmakers will vote on Francois Bayrou, a no-confidence vote on the government of France. He is all but expected to lose this basically universally. You watch interviews he's been giving in the last week trying to rally support, and basically many of them were starting with journalists saying, hey, listen, you've got a few days left in the job. How does that feel? Because this is seen as a sort of foregone conclusion. The main problem will be in about 8 hours' time, when we expect this government to fall and this vote to have been completed, is the path forward is not any more easy for Emmanuel Macron. The situation in the French Parliament, something we're seeing really across European nations, a great many of them from the Netherlands to Germany to the United Kingdom, is you have this massive fragmentation publicly, three major blocs that just cannot agree on anything. So the three options for Emmanuel Macron will be install a new prime minister with basically some of the same instincts and initiatives, a centrist person. Maybe he will go tack to the left to try to bring in some of the socialists. That will obviously not necessarily make the private sector particularly happy. He could call another legislative election, but that likely will not change the calculus politically. And then the final option is, of course, what the far right is calling for, which is the resignation of Emmanuel Macron. But he says he's going to stick around and serve the rest of his term to 2027. But likely what we will see is the continued sort of dragging on, limping ahead, yet another European story here. And when you look at the debt situation here for the French, the sort of bond market hasn't gone into full vigilante mode, which is part of the problem to try to address many of their sort of debt stats, which are really staggering when you look at them, particularly and even against other European nations.
Ollie Crook with the latest on the ground in Paris, France. Ollie, thank you. Busy day ahead for Ollie on the French political instability. Let's stay on that and pair it with what we've seen in the global bond market over the last month or so. Joining us now is Jim Bianco of Bianco Research. Jim, welcome to the program, sir. We've got the highest yields in the UK since the late 90s. We saw that in the last few weeks. In Japan, record highs. The good news is in the United States, yields have actually backed away from 5% on a 30-year at the long end. But Jim, something has changed, and we'd love your thoughts as to why you think things have changed.
Well, it depends on which country you're talking about. If you start with Japan, you know, they calculate taxes in their inflation rate. And if you take that out, their inflation rate is higher than the United States' inflation rate for the first time in 50 years. They've got a real inflation problem. They've also got a debt to GDP, twice the U.S. at 225%. So you've got a country that borrows massively, has inflation, is talking about easing. Okay, that's going to drive your yield straight up. And that's what's been happening. In Europe, they've got something similar to that. They've got huge deficits, they've got huge deficit spending, and they've got a loss of confidence. Just to take France for one example, their 10-year yield is within 10 basis points of Italy's 10-year yield. France has never traded at a higher yield than Italy, and they're just a handful of basis points away from doing that. Who would have ever thought that the rock of stability for Europe is Italy? Maybe that says a lot about Europe, that Italy is its rock of stability.
Maybe it says that Italy is just, in a better shape because more people like to visit, Jim. I mean, look, when you take a step back, there are two schools of thought here. On one hand, you could say yields higher in Japan, yields higher in France, yields higher in Great Britain, all lead to higher long-term yields in developed markets globally. There's another way of saying, actually, this makes the U.S. look even more like a haven. It sends people back to the United States, even though there are doubts about the U.S. fiscal situation. Which side do you line up on?
Oh, I think that all the developed world government bonds trade more or less in lockstep. So if they're all going up, it's going to put upward pressure on the U.S. And you could argue that it has put somewhat upward pressure on the U.S., despite whatever we think about falling inflation and everything in the U.S. is going well. We were at 3.6% on our 10-year yield a year ago, and now we're at 4.1. We were 4.2 on Friday. So we've also got higher yields, just not as high as those are. And also, there's also another warning sign too. All the European markets are cutting rates, and their long-term yield goes up. This idea that you hear in the marketplace, cut rates and mortgage rates go down, it's not a given. It didn't work last year when the Fed cut rates, and it's not working in Europe, cutting rates to push long-term yields down.
This is only true, though, if you do have a Fed that is biased to cut rates, even if inflation isn't necessarily tame. It's not necessarily true if the Fed is cutting rates in the face of real economic weakness, which is what a number of traders were starting to price in, at least in the bond market on Friday. Where do you see things shaking out? Is this the Fed that seems just biased to cut regardless of inflation, or is this really a Fed grappling with a dramatically weakening backdrop in the United States?
I think it's a Fed grappling. At his July press conference in Jackson Hole, Chairman Powell said that the labor supply and labor demand are both falling, and he used the word oddly in balance. Now, what he means by that is kind of the thing we don't talk about when it comes to the payroll report. Yeah, we talk about 22,000 jobs. We talk about how many construction jobs we had or how many retail jobs we had, but we're not talking about how many do we need. How many does the United States need to create in order to have the break-even rate? And that's driven by population. And our population is driven by immigration. And we have closed the border. And our population growth might be approaching zero. And 22,000 jobs might be all we need. And if it is all we need, then we don't have any excess capacity. And if the Fed wants to cut rates to stimulate an economy with no excess capacity, they're just going to create more inflation. This is the question that needs to be discussed, and it's not really being discussed. The chairman admitted it, it's oddly imbalanced, but then he kind of said, well, I'm afraid that things might be going bad, so we better cut rates anyway.
Jim, it reminds me of something Governor Carney said at the Bank of England maybe close to 10 years ago after Brexit. He said something like the speed limit of the UK economy had changed before inflation starts to pick up because of the damage done to the supply side of the economy. Jim, I imagine this is where you're taking this conversation. Do you think the Fed is there? And do you think it raises questions about the kind of guidance they can provide after cutting rates at this meeting next week?
I think the Fed is there, that they understand the argument that the supply side of the labor market is coming down rapidly, and it isn't about how many jobs, but how many do we need. I think where their problem is, if I could be honest, it's a political problem. Do they want to say that out loud? Does the chairman want to go to the lectern next week in his press conference and say, look, 20,000 jobs is enough for the United States because we have no population growth? I think he's definitely afraid to say that, because if he does and he's wrong, the whole institution will be permanently damaged. So they're going to err on the side of easing, and is what they're going to do. And the real question is, are they erring by easing? And that's only going to be known over the fullness of time, whether or not they do overstimulate. Yeah, it is a lot like Brexit. Something has changed in the supply dynamics of our labor market, and we need to kind of understand it.
Jim, I do think there's a simple way to navigate that, though. Diplomatically speaking, you can anchor your view on the labor market around unemployment, or you can anchor your view around the labour market on payrolls growth. Now, something changed, Jim, for the Federal Reserve Chair, because in the last news conference, he anchored it around unemployment, and in Jackson Hole, it seemed to be about payrolls growth.
Yeah, he's not been consistent on that. And, anchoring it around unemployment means you're looking at demand indicators for the labor market. Are companies not hiring? Well, unemployment would go up, and it largely hasn't. It was at 4.2% 13 months ago, and it's 4.3% today. Payroll growth can be a supply-driven thing. So the Fed has been a bit inconsistent with that, and that's because we've never had to break up the labor market and say, here's the supply measures and here's the demand measures, and we should be looking at things like unemployment or like, initial claims or some of the other things that would be more signifying of the demand by companies to want to hire workers.
Jim, with the latest, appreciate you waking up early for us. Thank you, sir. Jim Bianco there of Bianco Research, looking ahead to the Fed meeting about a week away.
It's added some of the confusion when you have Scott Besson on the TV over the weekend saying that likely there will be revisions to the upside with respect to the jobs figures, and that probably the labor market is doing better than some of these numbers represent, still arguing, though, for rate cuts. So it's kind of mind-twisting, especially given the mind fake that we got last year in the same kind of way. This idea that the Somme rule had been triggered spurred a bunch of different cuts by the Fed, and then a increasing of the long end of the yield curve. These are some of the tensions right now underpinning the market.
You run the risk of doing a Biden. And what I mean by that is ultimately telling everyone that things are okay when people are seeing an economy that isn't. And that's the risk they run going into year end. Now, I've said repeatedly, I hope we see a reacceleration, a bounce back once we've got clarity on policy. We're just not seeing it right now in the labour market. People are telling you it's hard to get a job. The data is telling you it's difficult to get a job. You can't keep going around saying that everything's okay.
Which is the reason why there's increasing political pressure for them to do something. Question is, does this market believe that a 25 or even 50 basis point rate cut next week is more motivated by politics or more motivated by the economy? The long end seems to indicate more motivated by the economy, and then try to square that with a rally in small caps. That's really what we're really having issues with.
This equity market is pricing in that rebound I think we'd all like to see in the US economy. Equity futures up again this morning by 0.25%. With an update on stories elsewhere, with your Bloomberg brief, here's Yahara. Hey, Yahara.
Hi, John. U.S. Treasury Secretary Scott Bessent says the U.S. and Europe are discussing a new round of sanctions and secondary tariffs on Russia with the hope an economic collapse, as he put it, will bring Vladimir Putin to peace talks with Ukraine. Russia is already under sanctions from both the U.S. and Europe, but has found customers for Russian oil and gas in India and elsewhere. Meanwhile, President Trump says Hamas needs to accept his terms to end its war with Israel. The Truth Social post you can see behind me comes after Trump's envoy to the Middle East sent a new proposal to Hamas for a hostage and ceasefire deal. Hamas said it needs a clear declaration and an Israeli commitment to ending the war, plus a full troop withdrawal from the Gaza Strip to agree to peace talks. And thousands of London Underground staff have launched a week-long strike. Staff are protesting over pay and working conditions. The transit operator said there are expected to be few or no trains running today through Thursday. No talks between the union and management are currently scheduled. That's Bloomberg Brief. John?
Yahara, thank you. Whenever this used to happen when I was in London, I'd get lost because my mental map of London is actually the tube map. And it's not actually the proper map. So you sort of go upstairs. If you were a tube rat like I was, you come upstairs and try and walk home and not know where you were going.
Yeah, I had this situation back in the early 2000s. There was a strike from the subway, and it was the middle of winter. It was very cold, and I biked all the way to a ferry to then take a ferry to come to get to work. And by the time I got to work, I was so exhausted, I was ready to go home. I did that for a couple days, so let's hope it reopens soon.
I feel for Londoners this week. Up next on the program, concerns about mission creep.
Well, Secretary Bessent talked about the central bank's independence being under threat due to mission creep. What's your plan to overhaul the Fed?
Well, I don't have a plan to overhaul the Fed right now.
But you would endorse what Secretary Bessent wrote in that article
I
fully?
agree with this article, yes.
That conversation up next with Alan Zettner of Morgan Stanley.
case you missed it on The Close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Big week ahead for inflation data, PPI later in the week, CPI dropping on Thursday. Equities at the moment positive by 0.25% on the S&P 500, on the Nasdaq up by 0.4. Under surveillance this morning, concerns about mission creep.
Well, Secretary Bessent talked about the central bank's independence being under threat due to mission creep. What's your plan to overhaul the Fed?
Well, I don't have a plan to overhaul the Fed right now.
But you would endorse what Secretary Bessent wrote in that article
I agree
fully?
with this article, yes.
And you would be prepared to implement that vision for the Federal Reserve if you are chairman?
It's a hypothetical that we'll see.
So here's the latest this morning. The National Economic Council Director, Kevin Hassett, reiterating concerns about mission creep at the Federal Reserve. The Treasury Secretary, Scott Bessent, writing in the Wall Street Journal, quote, "The Fed's new operating model is effectively a gain-of-function monetary policy experiment. Overuse of non-standard policies, mission creep, and institutional bloat. The Fed must change course." Joining us now to discuss, Alan Zander, the Chief Economic Strategist at Morgan Stanley Wealth Management. Alan, good morning. It's good to see you.
Morning.
Let's start there. I know you've read the article. What did you make of that? What was your takeaway?
Yes, I think mission creep is one way to redirect the focus on the Fed. You know, Bessent is the only one to think that there is bloat at the Fed, that you've got 300 PhD economists running around and maybe it's a little bit of an echo chamber. And there have been concerns before this about mission creep, especially on the regulatory front. So the article reads like, okay, get rid of all of that, and then they can focus more directly and solely on the setting of monetary policy. That is not going to get the president what he wants, though. But it does redirect the focus on other changes that are needed at the Fed.
Is the president about to get what he wants anyway?
I don't know. I'm sure that he would like to get what he wants, and that is an FOMC that's tilted more toward his understanding of what he believes monetary policy setting should look like. And so you want to be really aggressive here, because if you're thinking about political affiliations on the Fed, and especially the board governors, it tilts away from the president's idea of the appropriate setting of monetary policy.
To build on what John is talking about, is it sort of a be careful what you wish for? And isn't the Fed potentially poised to cut rates, but for the wrong reasons, because the economy is weakening enough to justify the kind of rate regime that Trump has been touting?
Yeah, so yes, that is absolutely correct. And the Fed's going to cut 25 basis points in September, and it won't be enough. And then they're going to cut 25 basis points in the next meeting, and it won't be enough. It's not going to be enough to satisfy the president that wants immediate, drastic cuts in rates. But as a mindful, careful thinker looking at the economy and what the economy needs, you cannot sit on the FOMC today and say rates need to be drastically lower. They need to be lower. They're too tight, especially when you've got a plethora of weakening data on the labor market. It's not just the headline payrolls report. So it's easy to look at these numbers and say, we don't need to be as restrictive. We can make some modest changes here. But one cut's not going to be enough. Two cuts is not going to be enough. But more than a handful of cuts is going to be too much because we are set for some reacceleration next year, early in the year.
It's interesting that you say that because in bond markets, people always look for what is that terminal rate, right? Where do we end up in this cycle? And initially, for many months, it was above 3%. Now we've gone well below that, actually, for the end of next year. And I wonder if you agree with that, if you think that the bond market has it right.
Yeah, so I think the bond market is in a difficult spot here because if you're just looking at the likely path of the economy, we've got business investment that is broadening out more so outside of tech, just tech. You've got a record high tax refund season that's coming. And so you could say, okay, we can adjust rates maybe 75 basis points, 100 basis points here over the next several meetings. But based on just economic factors, you really shouldn't go further than that, an economy that's set to reaccelerate next year. What the bond market may be pricing in is, okay, up to May, we can probably be sure that the Fed is going to do what's right for the economy. After May, no idea, and the odds are lower than higher.
Would love your guide for the rest of this week before we talk about May next year. Payroll revisions, 1, CPI, another, PPI, 2. How are you and the team thinking about those data points this week?
So the benchmark revisions, we can surmise that they are going to be net downward. Now, those revisions just cover through March of this year, but it's already a weaker backdrop for the labor market. Now, you could look at that and say, okay, under Biden's economy, those are jobs that are going to be even weaker than before. It's only a couple of months into Trump's presidency, but it does set the trajectory lower at a time when we've got changeover in staff at the BLS, and it's going to be all too easy to point fingers at that time. So you'll probably see some changes at the BLS this week as well. That will further raise the specter for, can we trust this data? So there's going to continue to be a lot of volatility around the data. The inflation data, that's secondary for me this week.
Is it really?
Yeah.
Interesting.
Yeah.
Do you not trust the data?
Oh, no. Oh, no. I trust the data. I trust that it's as good as it ever has been. We're trying to measure a massive data set where you can change the seasonal adjustment factor by 0.001 percentage points, and it gives you an 80,000 K difference on payrolls. So who's to say what's right and wrong?
True.
Yeah.
Alan, it's good to see you.
Yeah.
As always, thanks for dropping by. Alan Zender there of Morgan Stanley Wealth Management. The CPI data is secondary for Ellen this week.
Of the potential staff changes at the BLS, it raises a question, what will the market implication and economic implication of that be, given that there has been so much ire placed around the BLS? And what is the plan to try to make it better, more accurate under President Trump? That I have not gotten a clear answer on.
I haven't got a clear answer either. But things are going to change. We're told repeatedly. Things might change. Equities right now in the S&P 500 positive by about 0.25%. Coming into this week very close to all-time highs in the equity market, even with the softer than expected payrolls data that was delivered on Friday morning. In the next hour, we'll catch up with Dan Greenhouse of Solace Alternative Asset Management, Tobin Marcus of Wolfe Research, Eric Resnick of CareSouth Capital Partners, and Brad Rogoff of Barclays. From New York City this morning, good morning.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is bad news is good news for the stock market because the Fed's going to ride to the rescue and cut rates.
We think that corporate profitability will remain intact.
The stock market's whistling past the graveyard a little bit here.
It's all about earnings.
Look for those companies that allows you to stay invested, that continues to have strengthened the balance sheet.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 positive this morning by 0.25% on the NASDAQ, up by a third. In the bond market, yields lower at the front end of the curve on a 2-year for a fourth consecutive day. We're down about a basis point to 350 on a 2-year. And then through the week, we're looking out for this data right here. Inflation, PPI Wednesday, CPI on Thursday, the main event for this market.
Yes, people try to understand what the threshold is for the Fed to cut even more than 25 basis points next week. What I find interesting is in the past 3 months, we've seen 2-year yields drop by 50 basis points in the United States. We've seen 10-year yields drop by 43 basis points. Is this because of a Fed that is more political and going to drop rates? Is this because of a weaker economic backdrop? Or is this a belief that maybe tariffs aren't going to be as inflationary as they were perceived to be, and there can be the sort of soft landing that so many people thought about?
We have seen limited pass-through so far from tariffs, without a doubt. That can change, and we'll see if it changes in the months to come. At the moment, the Federal Reserve's just got to confront a real step down in economic activity based on payrolls growth, decelerating to an average of 27K May through August. That's a problem for a lot of people on the committee. The dumps go into September 17th with extra fuel.
Yeah, and there's this feeling, and Ellen Zentner was just saying that she actually thinks that some of the revisions from the BLS this week will be more important than the CPI print, because what it will show is through March, the labor market was in a much weaker position than it was previously believed to be. So in other words, we came into this period with less momentum. It is a question of how far has the economy deteriorated, if you're going to measure it by the labor market, in a way that warrants the rate cuts. So you could talk about whether it's political or not, but right now what the market is saying is that it's warranted by virtue of the fact that you have not seen yield curve steepening. In fact, you've seen flattening on Friday after that number.
This bond market has changed a lot. It's changed a lot in just the last week. Last week, we were approaching 5% on 30s. This morning, Bramo, we're back down to 477.
With people saying maybe this is an economy that doesn't have as much heat in it. Now, you pair that with the international picture and you get a mess, because essentially you've got Japanese yields on the long end that are creeping higher after the resignation of the prime minister and a question of a no-confidence vote in France. And this idea that globally there is a developed market problem in the bond market. I'm not sure how you put this all together, but it seems like the U.S. is going to benefit by dysfunction elsewhere, and so it will remain at least a haven in some aspects in the short term.
Record highs at the long end of the Japanese curve, once again off the back of that political instability. If you are just tuning in, welcome to the program. Equities close to record highs on the S&P 500 this morning, positive by about 0.25%. Coming up this hour, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management, with investors betting big on rate cuts. Tobin Marcus of Wolf Research as President Trump wants foreign companies to hire American, and Eric Resnick of KSL Capital Partners with consumer demand remaining resilient. We begin this hour with stocks hitting another record high ahead of this week's key inflation reports. Dan Greenhouse of Solis writing, we're probably in for a pause here. The employment picture is now sufficiently slow as to lock in a rate cut in September. Dan joins us now for more. Dan, good morning.
Good morning to you.
It's good to see you. You've been on the more positive side when it comes to this economy. How do you reflect on that job market data from Friday?
Well, it wasn't good. I don't think I'm breaking any news by saying that. Listen, I've generally been more positive since COVID, and certainly since Liberation Day, if you will. But the last couple of weeks, really since the equity market retook its pre-Liberation Day high, I've been a little more concerned. I think there's a sense that the tariff story is a ship that sailed in a positive sense. Tariffs, as Lisa mentioned a couple of minutes ago, tariffs are not going to be, some are suggesting tariffs are not going to be as worrisome as perhaps we thought. I listen to what the companies are telling me, and I hear that over the 6 to 9 month period going forward, some of those tariffs are going to start to be put in place that haven't previously been put in place. And I don't know that we're necessarily sure how that's going to unfold. And you layer on top of it all the other stuff that's going on, the slowdown in the jobs market, what's coming out of Washington, et cetera. And I'm a little hesitant right here with the acknowledgement that the consumer has been and remains incredibly resilient.
You know, the bull case at the moment, we'll see a reacceleration supported, fueled by Fed rate cuts. That's all still to come. Do you see some information in our future that constrains the dovish bias of the Federal Reserve? Do you see anything like that?
No, I think that they're going to cut 25. I felt for a while they should cut 25, if not had done it already. The recent slowdown in the jobs market only locks that in. You've got 4 months in a row now where private sector job creation is sub 100, including a negative month. The last time you saw something like that was at the end of 2007, obviously heading into 2008. That doesn't guarantee that there's a recession coming, but the jobs market is not as lagging an indicator as some like to think it is. When you start getting the type of job creation that we've seen, it's an alarm bell for sure. Now, there are mitigating factors. Weekly jobless claims haven't gone up. The earnings season was quite good. You look at charts of O'Reilly and AutoZone. The home builders are rebounding. Pulte's back to a high. Cyclicals have done really, really well here. And you look at some of these charts, and that just doesn't scream, forget a recession, it doesn't even scream slowdown.
Yeah, but do you think that that can continue? And this is something that you raised with valuations being a little bit high. And we've been saying there's a conflict here with the Fed potentially cutting rates as a result of a weakening economy, and then this bet on cyclical stocks that are hinged to a recovery. Do you find that consistent?
So to address the first question about valuation, I would just note valuations are so useless in terms of market timing. Not that they don't tell me something, but my favorite analogy to talk about is the 90s boom. People were talking about valuations being excessive in 94, in 95, in 96, in 97, 98. It wasn't until the trade that was driving the bull market at the time, which was, of course, the telecom and the tech boom of the day, before you started getting profit warnings in and around 2000, before the DOJ stepped in to prevent the WorldCom MCI merger, I think it was. Wait, no, it was MCI WorldCom was trying to buy Sprint. and that M&A wave came to, came to an end. You've seen nothing like that right now. Broadcom just reported demand outstrips supply. All of these guys talking about demand outstripping supply.
Yeah, but you're talking about AI. I'm talking about small caps. I'm talking about this idea of a cyclical kind of recovery that can be baked into a market that's already betting on a weakness that's going to require a Fed to cut rates significantly. Does that square for you?
Well, with respect to the small cap market, the point I've made repeatedly is I would ask most people, name me 3 of the top 10 stocks in the Russell 2000. I'm not sure they can. Frankly, I'm not sure most people can name 5 of the top 10 in, let's say, the mid cap. But that said, so do I think I'd be betting on cyclical stocks as the Fed is reducing interest rates to combat an economic slowdown? My one argument there is the jobs market is super consequential, and I'm not trying to dismiss it, but you do have a host of other indicators that are not telling the same story. The ISM has been improving. Again, cyclical stocks, not just the performance of the stock themselves, but the underlying earnings and the commentary out of some of these companies remain incredibly positive. They're not talking about, well, we have a pocket of weakness here, we have a pocket of weakness there. They're generally speaking across the board in a lot of their divisions doing quite well. And so that's offering some mitigating factors to me. So when you take the totality of the data together, to address your issue, I can understand why people would be betting on that type of stock right now as the Fed begins to reduce interest rates. I would just add real quick.
Sure.
This is not too dissimilar what happened at the top in 2007. The day of the top in 2007, if you've got a Bloomberg terminal out there, you can go see it. The news story of the day was the Fed minutes had come out. The day of the peak, 1565, I think it was, the Fed minutes had come out, and the Fed said, oh, everything looks okay to us. And everyone said, oh, here we go. The Fed's coming to the rescue. They'd already cut rates. They were on the way to doing more. And obviously that didn't stop what eventually became what it became. I don't know that today is going to be any different.
Lisa, name 3. Go on.
Credo, Fabrinet,
You're cheating.
Nice. What did you mean?
Bloom Energy, IonQ, and Ensign Group.
Everybody I know knows the Russell 2000.
Obviously.
Just sort of like, you know,
rolls off the
ready to
tongue.
go.
Ensign.
You've mentioned 2007 twice in this conversation, Dan. Twice you've mentioned 07. You know what that does to people?
Sure.
Why'd you keep reflecting on that moment of time?
Well, listen, I think because the job slowdown is an alarm bell for me. As you mentioned, I've been pretty positive, and for much of my career, I've been pretty positive. Numbers usually go up, but a job slowdown is an alarm bell, and it traditionally is something to which we shouldn't ignore. And 2007 was the last time that. Now, to be clear, let's not forget that for much of 2007, it was a normal recession. The first half of the year, it was a normal recession. It wasn't obviously until Lehman when it became a big problem, of course. But a job slowdown is something that we should pay attention to. And I have dismissed, I think correctly so, a lot of the worries over the last 15 years. But a job slowdown is not something to be ignored.
You know, crises always happen in the assets that are perceived as safest, the AAA-rated bonds, et cetera. This time around, there's a question of whether developed market sovereign debt is going to be an epicenter of some of the volatility. We've already seen just some hints of that. Where do you hide as the safety at a time where that's potentially a risk?
Let me push back. How long have people talked about a failed bond auction? How long have people talked about the U.S. debt is unsustainable? I've got articles and reports 30, 40 years old. The Greenspan Commission, I think it was in the early 80s, came together to try to. This has been a boogie. And by the way, let me state for the viewer and for this is disgusting. The level of debt that we have, the level of spending.
Sure.
A budget deficit 6.5% of GDP, crowding out private. I'm on board with all of this. But as a market participant, I have to make an investment decision what to do with all of this. And if I went to my Chris Picciolo, the CEO, and I said, oh, you know, the government's debt's very high, we should sell Broadcom, he would throw me out of the room. We're on Zoom, but he would throw me out of the room. And deservedly so. And so I push back. And I would also add, everyone's freaking about UK debt, about French debt right now, and deservedly so. There's a lot of political instability in those countries. Look at a broader chart, 3-year, 4-year, 5-year. The UK 10 years, what, 460? Where was it 4 years ago? 460. It's obviously the top end of the range. Same thing with France. The only country, ironically, in the region where yields have been trending down over the last couple of years is, say it with me, you know it, Italy.
The silver lining of this whole moment is the US debt market.
I thought you were going to say Italy.
Never mind Italy. I've always got good things to say about the fatherland. But the US debt market doing what the debt market's meant to do Bad news, good news for fixed income. I think that's probably the best news of the last week.
Yeah, especially given the fact that it came in the long end as well as the short end, that we actually we saw yield curve flattening on Friday, not steepening, with the perception that any kind of rate cuts would unleash some sort of huge round of massive inflation.
Just a quick final question. Have you sold down some of your credit exposure?
I can't taltalk about, as a hedge fund, I can't talk about what we've done or don't do. I would say we're as a general rule, we're a slow-moving shop. But we are a single manager platform. I've got to convince one guy that I'm right. I usually am, if I don't say so myself. And I think that where I'm going with this right now is the average casual viewer and investor. I think there's a potentially a paradigm shift right now.
Interesting. Dan, appreciate your time.
Thank you, sir.
Dan Greenhouse of Solace Alternative Asset Management. A few mentions of 2007 and full of self-confidence.
All I can say is when you ask me something, when you ask me something and I don't have anything to say, I'll say it's potentially a paradigm shift. It'll hedge my bets.
Hey, look, it could be. It's one of those moments. Feels that way going into year end. Markets priced for re-acceleration. Data said something else at the moment.
Well, the idea that Dan was talking about, and I think this is important, and actually his insights are always welcome. The idea of a job market deceleration and a credit market cycle that we have not seen in a very long time, that's a paradigm shift after what we have seen over the past few decades.
And credit spreads going into it.
Exactly.
Super tight. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Oil prices are rising after OPEC Plus said it would boost production, but at a pace more modest than expected. The cartel said it would restart 137,000 barrels a day of output from October. That was much smaller than the increments scheduled for the previous 2 months. Meanwhile, the U.S. is proposing annual approvals for exports of chip-making supplies to Samsung and SK Hynix factories in China. Sources telling us here at Bloomberg the plan would require the firms to seek approval for a year's worth of restricted gear in set quantities. The compromise is aimed at preventing disruptions to the global electronics industry. And the U.S. Open men's final between Jannik Sinner and Carlos Alcaraz got off to a late start after President Trump paid a visit to Arthur Ashe to watch the final from Rolex's luxury box. Trump was met with both cheers and boos. He was joined by White House Chief of Staff Susie Wiles, Attorney General Pam Bondi, and Treasury Secretary Scott Bessent. Alcaraz went on to win his second U.S. Open title in 4 sets. That's your Bloomberg brief. John?
He was dominant yesterday, absolutely dominant. Yahara, thank you, appreciate it. Up next on the program, the push to hire American.
We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. ICE was doing right because they were here illegally. But we do have to work something out.
Up next on the program, we'll catch up with Tobin Marcus of Wolfe Research, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Bersachi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
That allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Equities are positive here by 0.25% on the S&P 500, up by 0.4 on the Nasdaq. Real turn for Dan Greenhouse of Solos, typically very constructive on the US economy, financial markets, and an optimist, I would say, of a lot of the people we speak to on Wall Street. That's a shift from him just moments ago.
Yeah, you mentioned he talked about 2007 twice. Bigger concern is the downshift in the labor market, if it is real, is a real concern to him. And he said that you cannot ignore that. That is not a lagging indicator. That is very much a present indicator that signals some weakness ahead.
It's hard to ignore at the moment, that's for sure. Under surveillance this morning, a big push to hire American.
We're going to look at that whole situation. We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves.
So here's the latest this morning. President Donald Trump warning international companies to hire American workers and respect U.S. immigration laws. The announcement coming after Trump reached an agreement to release about 300 South Korean nationals detained after an immigration raid at a Hyundai plant in Georgia. Joining us now to discuss is Bloomberg's Tyler Kendall. Hi, Tyler.
Yeah, hey, John. Well, this is no doubt casting a shadow over South Korea's multi-billion-dollar investment drive in the U.S., seen as really critical to those ongoing trade negotiations. And Hyundai plays a really big role in that. The company has so far pledged to invest $26 billion in the U.S. through 2028. Not to mention, it's probably worth pointing out that this was an electric vehicle battery plant, and we know the administration has identified those sectors they say they want to de-risk, and there's a huge reliance on China when it comes to the electric vehicle supply chain. Now, this raid was considered to be the largest single-site enforcement operation in DHS history, and officials say that it came after a months-long investigation, and of course we know it comes against the broader backdrop of this White House's deportation push. But we should mention that it remains unclear what visas the workers did hold and whether they allowed them to be on the site. And while it does appear that we're going towards a resolution here, it no doubt sent South Korean firms reeling. There were local media reports even that Hyundai has now banned staff trips for its workers to the U.S. We're going to have to see how this impacts the relations going forward, particularly when it does come to those trade talks, because, John, we are expecting South Korean officials to be in the U.S. this week in Washington to continue those negotiations. Because, as you well know, South Korea was able to secure that preferential rate of 15%, but it's yet to go into effect on a critical sector, and that is autos. And that is because we are still waiting for both sides to hammer out those details on that $350 billion investment fund that the country say is included in this plan, which really brings us right back to the beginning of this conversation when it comes to South Korea's push to get money into the U.S. to get these lower levies.
Tyler Kendall down in Washington. Tyler, thank you. To build on this, Tobin Marcus of Wolf Research joins us now for more. Tobin, Tyler said it, a $350 billion fund to help South Korean firms expand right here in the United States. How much did we complicate things over the weekend?
Well, I think there have been a lot of complications throughout the trade agenda for a while, and a lot of tensions between different elements of the president's economic strategy as it pertains to manufacturing in the U.S. and getting these investments into the U.S. You have, on the one hand, these big investment incentives in the big, beautiful bill. On the other hand, both tariffs on inputs and immigration restrictions do pose significant challenges for firms who want to manufacture in the U.S., whether they be domestic firms or international firms. I think we're seeing signs of labor availability being an issue in the jobs data, among other things. So, even in the Japan deal that they did finally execute the reduction in the auto tariffs with the executive order from the president last week, the details about that big investment fund that they pledged, which has been characterized very similarly to the South Korean one, remains somewhat thin. I think there are a lot of balls up in the air on this one.
Tobin, how much political risk is there domestically in some of the nations that are negotiating trade deals with the U.S.? I'm thinking you mentioned Japan and the trade deal that they came up with, and Prime Minister Ishiba is stepping down after completing that plan. I mean, how much is the pushback not necessarily coming from the politicians, but from the different populations of a number of these countries?
Yeah, it's a real challenge. Prime Minister Ishida in Japan obviously was under a lot of pre-existing political pressure. Similarly, the South Korean political situation has been very, very unsettled over the past several months, even separate from those trade talks. It is, I think, a political liability for the leaders who are executing some of these deals in countries that have some of their own pride and a sense of domestic among the domestic populace, that they shouldn't be just giving the U.S. whatever they want. I think there's less backlash in some of the cases where it's just an existential threat to the country they had no ability to do much about, like Vietnam, which of course also has a more authoritarian political system. But yeah, in South Korea, in Japan, even in the EU, there's definitely some signs of backlash from, getting, what they would characterize as the least bad available deal in a situation where the U.S. had them over a barrel.
Tobin, do you think that this DHS raid, the ICE raid, was part of a coordinated effort on the part of the administration to put out a multi-pronged policy of both the tariffs as well as trying to encourage domestic training and domestic hiring? Or do you think that this indicates departments that might not be working in sync with one another?
I think there's a real tension between the goals here. The remarks from President Trump that you played a moment ago, he talked about, we need to figure out some way to get highly skilled people here. But I think the folks in the administration who are in charge of immigration policy, up to Stephen Miller, are not huge fans of legal immigration either. It's sort of easy to say, but then doing it is another thing. We saw even in the first Trump administration, they, kind of ground down the pace at which visas for high-skilled legal immigration were being issued. Similarly, we've not seen that ramp up here. If you're trying to create some big new expedited pathway, you would need to work with Congress, and I see no appetite whatsoever to do that. So, I think that there is a sincere commitment to immigration policy from the entire administration. They're pursuing that for its own sake, and to the extent that it creates difficulties for the other aims of the administration in terms of promoting manufacturing, that's just collateral damage.
Tobin Marcus of Wolf Research. Tobin, appreciate the reaction to a big story developing over the weekend. Tobin, thank you. The administration is telling countries that if you want a favourable trade deal with us, you need to come up with these kind of plans to invest hundreds of billions of dollars right here into the United States. We heard that from the Commerce Secretary, Howard Lutnick, on Friday with regards to countries like Switzerland. Then you see how some companies are being treated from some countries like South Korea, and that's going to raise a lot of eyebrows for people negotiating these kind of deals.
And it's going to really halt the reinstatement of some of these factories. We already saw that in the wake of this. And just in general, you've seen just how long it takes to get some of these plants in the United States. Even with the Commerce Secretary and his comments around the Japanese $550 billion fund, a real question around what that looks like, how that gets deployed. And this only raises those questions that much more.
I think you nailed it, Bramo. Washington is huge. And getting everyone on the same page, getting everyone to speak to each other at the same time, with the same end goal in mind, is difficult enough. But what if the policies are in conflict? And that was something Tobin was touching on.
Yeah, saying that on one hand, there's sort of a feeling of trying to ratchet back immigration of all kinds, at the same time that there's a goal of bringing manufacturing to the United States, and a dearth of some of the trained workers to get that underway quickly, right? So there's a time element here too. How do you train people? Where is the money behind that? What kinds of programs? Lots of questions.
We'll stay on top of that story throughout this morning. Up next on the program, we'll catch up with Eric Resnick of Carousel Capital Partners as consumer demand remains resilient. Plus, we'll catch up with Danny with your morning movers. EchoStar surging in the pre-market on a deal announcement. That stock is up by 24%. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Equities firmer here, up by 0.25% on the S&P 500, doing okay on the Nasdaq 2, higher by 0.4. The outperformance on the Russell over the last month has been phenomenal. 5 weeks of gains for small caps, up again this morning by 0.2%. In the bond market, those small caps held out by this. Yield to lower at the front end of the curve for 4 consecutive sessions. Twos, sub 350. At 349.66.
Yeah, and this comes after a non-farm payrolls report that really disappointed, not only with the headlines number for August, but also for the revisions downward for the prior couple of months. Key questioning, Dan Greenhouse nailed it. Is this the beginning of something else? Or is this just simply a head fake that is going to unleash further strength later on? We don't know. And downward revisions that we're likely to get this week, likely to confuse the picture that much more.
There is a massive difference between a mid-cycle adjustment at a Federal Reserve and the start of something much worse, an end-of-cycle rate adjustment, which would imply more than 100 basis points of rate cuts. Now, the market wants all that, but without the downturn in the economy, and unfortunately, that's often not how it works.
Yeah, the eating the cake and having it too, sort of a problem. It seemed like on Friday, some people were cheered by the idea that front-end yields went down, but so too did long-end yields. The idea that this wasn't leading to some unanchoring of inflation expectations. But the flip side of that could be that weakness that is more pervasive, that is something more than a mid-cycle adjustment.
I was comforted by that too, to see 10s down to 4.1% around those levels this morning, and 30-year bond yields back down to 4.77, responding in the right way, so-called right way, to weaker than expected economic data on Friday. That's the bond market. As we count you down to the opening bell for the equity market, 2 hours away. With your morning movers, let's cross over to Danny for more. Hey, Danny.
Hey, John. Some deal news to get through this morning. Just announced Starlink will be buying mobile spectrum from EchoStar in a deal that's worth about $17 billion. You can see the immediate impact. EchoStar shares up 22.5%. The government has been trying to pressure EchoStar to sell off some of their spectrum assets after filing for bankruptcy. For SpaceX, it means that they can more easily provide direct-to-device services, something that they previously had to partner with cell providers like T-Mobile for. Speaking of T-Mobile, it is falling off the back of this news because, for one, maybe Starlink and SpaceX don't need them as much, but also there was a Semaphore report about a month ago that T-Mobile was also interested in those assets from EchoStar. AT&T has previously bought some, so perhaps they were considered a contender too. Both of those shares falling more than 2.5%. Finally, we learned from United Health they will be giving their annual Investor Day meeting this week. They recently filed saying that they will reaffirm their 2025 outlook, their EPS outlook to be specific in those meetings. That is a $16 EPS at the bottom of the range. When they initially issued that during earnings, it was seen as a disappointment and shares fell. So this is how you set the bar low. Shares are up 1% off of that, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, the Treasury Secretary, Scott Bessent, warning of massive refunds if the Supreme Court strikes down President Trump's tariffs. The administration asking for an expedited ruling after an appeals court said the levies are illegal.
The irony that right now the tariffs are considered a positive thing, at least when it comes to the fiscal backdrop of the United States, because the estimation from the Yale Budget Lab is that they could bring in some $2.4 trillion over the 10 years beginning in 2026. How much does that get reduced? under IEEPA, if IEEPA is stripped away, it gets reduced by almost 2/3 to almost $700 billion. So a real question of how the U.S. raises this money, and then also, if they're raising so much money, where's it coming from?
Yeah, should be careful with language too. Warning of massive refunds. Some people are hoping for that. That's 100%. Not a scary prospect at all. In fact, some of the companies that have paid a lot of those tariffs, they want the money back.
Yeah, and is it stimulative, right? You were talking about that earlier. Does that end up being a stimulative because people have otherwise been getting taxed? Look, this just adds to the question mark. We have no clue how policies that are somewhat, I don't want to say radical, but radically different than what we've seen over the past, some 50, 60 years, how it's going to trickle out into an economy that seems to be in flux as well.
It contributes to uncertainty, and I think it makes it harder for the C-suite to know what to do next, when it was already difficult anyway, particularly with things like pricing strategy. If you were sitting facing down, say, Q4 and thinking about passing on these costs to the end consumer, raising prices, you're going to have to rethink now because maybe these tariffs won't be on in the next few quarters.
They won't raise prices on things that are not loved. Maybe your Crocs, because you don't love Crocs. But
big fan of Crocs.
Actually,
yeah.
I've got to say, I personally have no problem with it. If you're, in a beach house or something and just want to get to the beach, I think it's fine. But maybe have less pricing power there, more pricing power on, say, the latest sneaker.
I've got no problem if they put up the price of Crocs. I think that's good for humanity.
You need to stop.
Okay.
I'm going to get you a pair of Crocs, and you're going to actually wear them, and you're going to love them.
Not
you're going to be
happen.
a Croc.
What are those other sandals called? The people wear the
socks.
socks with? Yeah, no,
okay.
No chance.
You just clearly have, lost your inner hippie.
Clearly. I don't think it was ever there. All right. President Trump saying he's ready to move forward with the second phase of sanctions against Russia in a push to end the war in Ukraine. The latest threat coming after a massive Russian airstrike on government buildings in Kyiv. Elsewhere, New York City mayoral candidate Zohran Mamdani said the city should brace itself for the deployment of the National Guard as part of President Trump's attempt to fight crime and round up undocumented immigrants in democratic cities.
There's so much focus on this mayoral race, and I know that you're trying to tweak me and get me to talk about it more. I will just say it is notable to me how much focus there has been on this and how representative it has been of a shift that we're seeing around the world, which is a real grappling of how you deal with the fact that there are a lot of people with affordability issues, the housing issues, et cetera, and a real lack of agreement on how to address them. That was really good and political.
Congresswoman Alexandria Ocasio-Cortez in town.
Yeah.
I think it was a rally over in Brooklyn alongside Senator Sanders. This is what Ron DeSantis, the governor of Florida, said over the weekend. Ladies and gentlemen, the Palm Beach Realtor of the Year, with a picture of those three. That's the story for a lot of people. This is going to push people to move even more than they already were from New York down to Florida.
Real questions and anxiety around crime in particular, as well as taxes, and that's definitely going to be a huge issue. It will remain in focus as we all look forward and try to understand what the future of the city looks like.
That's the latest on New York politics. You did well.
Thanks.
Stay diplomatic.
I appreciate it.
Give you a few more months.
Thanks.
The economy adding more than 25,000 leisure and hospitality jobs last month amid the weak August payrolls report. Eric Resnick of CareSouth Capital Partners, a global investor in travel and leisure business, writing the following. Consumers are still prioritizing experiences over goods, even as they trim budgets, reinforcing long-term tailwinds for the sector. Eric joins us now for more. Eric, good morning.
Morning, John.
Thanks for dropping by. Would love an update. Would love an update from you about how things are, because only in the last hour or so we had a guest talk about the upper income consumer maybe starting to crack on the edges. Do you see any of that at all?
No, I wouldn't call it cracks at all. We do see the upper income consumer being much stronger than the lower income consumer. We've been investing in the travel and leisure space for 30 years now. And so an operator investing in the U.S. and globally, and I would say we continually see there being a prediction that there's going to be a reversal of what's been a secular trend for 6 decades in favor of experiences over material goods, and travel being the primary beneficiary of that. We don't see a fundamental sign that that's shifting.
They're always going to do it for the gram, and they're going to keep doing it for the gram, and that's what
right.
we keep seeing. So regardless of what happens, I do wonder, though, just on a relative basis, whether you've seen a deceleration in what the upper income tiers of travelers are willing to accept. Are they still willing to pay that extra whatever it is to get that even better room or that better experience all around? Or is there a bit of pushback that you're starting to see come into the fray?
I think there is a little bit of, I would say, fatigue. You know, a little bit of pricing fatigue. Coming out of COVID, people were willing to pay any price to get that room, to get that trip. And, you know, that now has waned. We're in a more normalized environment. So the rate of growth has shifted down. Right, where it used to be, coming out of COVID, double-digit growth every year in terms of both price and overall revenue. You know, now is mid to high single digits for us. which is better than the industry overall, but the industry overall is quite healthy, at the high end in particular. The lower end, the trends are a little bit negative.
Well, how much is that really continuing, the idea that there is this dispersion between the upper income and the lower income? The lower income is really starting to struggle? Or is there still this sort of desire to go out and travel, et cetera, it's just that not as sort of profligate with their dollars?
The desire fundamentally has always been there, and we don't see that waning. What we do see is the impact of inflation, interest rates on the wallet of the lower end. So you've seen trends in the last 3 years since interest rates really kicked up as a result of inflation. You've seen the lower end hit harder. The higher end has continued to spend just at those lower growth rates than we had, but more normalized. So like right now, our bookings are up mid to high single digits as we look forward over the next 12 months. That's good, healthy, a good, healthy trend. It doesn't, the news cycle, right, the report on jobs, where hospitality added 28,000 jobs, last month, last quarter, that is surprising to many. It's not surprising to us. The resiliency of travel, going back, having done this for 30 years, is something that never surprises us, but always seems to surprise the media. No present company excluded.
No, of course, we're dialed in. Every time we see a move on euro dollar, we often joke that people are going to stop going to Europe. Euro dollar 117.29. Could you give us some clarity on that? How much do things move based on a 10% move in the US dollar, based on the exposure that you have to travel properties around the world?
I would say 10% moves don't move that much. We see that, right? We've seen that in the pound over time. We've seen it in the euro. What does move people? The Japanese yen being 30% weaker than it was, right? That definitely impacts trends from Japan into Hawaii. In particular, that's the market we see that being most impactful for us, being in the leisure business. What that break point is, do people move between 10 and 30? Yeah, somewhere between there, I think they do. I can't answer where that line is, but I don't think that line is around 10.
Does the political tension ever show up? Some of the political tension has driven some of those currency pairs. And we've talked a lot about how Canadians were maybe stopping to come south of the border. Have you witnessed any of that? Are the accents changing around the properties?
We do see a little bit of it. Canadian travel to Hawaii and Palm Springs, for example, down meaningfully. Canadian travel to our Mexican all-inclusive properties, and we just made a large investment in Mexico and the Caribbean in that space, actually well up. So it's a little bit like the common currency. There is a threshold. Most of the geopolitical news is line noise when it comes to travel patterns. But there is a threshold above which you hit, and some of the Canadian and U.S. tensions, if you will, I think got above that level where it did start to impact travel patterns. In fact, actually, this is a stat I'm not proud of, but the U.S. is the one country out of 184 that are tracked by the World Tourism and Travel and Tourism Council that is negative on international arrivals this year.
Which raises a question going forward. As you make acquisitions, as you make investments, that's what you do. How much are you seeing opportunities continuing in the United States, given valuations, given some of these concerns? Are you getting more active, or are you still kind of sitting on your hands, waiting for things to shake out?
Well, we see there being a large amount of opportunities across the world to invest in travel. It's not just a U.S. thing or a global thing. Right now, we're still seeing overall transaction volumes down 30 to 50%. We do see the early signs, and we've talked about this before, actually here, I think a year ago, but we've seen the early signs of we have lower interest rates, we have an increase in NDAs being signed, an increased number of called fireside chats of kind of early stage conversations between buyers and sellers about potential transactions. Those early signs are definitely here. Coming out of the summer, you've seen that kick up just in the preparation of that for the last week post-Labor Day. So we anticipate that over the next 6 months, activity on the transaction side will get much more active. We've been active, but still, it's been more idiosyncratic deal flow, right? That transaction I just mentioned, we bought $2 billion of hotels from Hyatt Hotels in Mexico and the Caribbean, or announced it rather, we'll close later this year, but announced that a couple months ago. So we've been fairly active, but we see a lot more activity in the forward-facing mirror.
Eric, appreciate the update, as always.
No, pleasure.
Thanks for giving us some time. Thank you, sir. Eric Resnick there of KSL Capital Partners. Let's give you an update on stories worldwide with your Bloomberg Brief. Here's Yahara of the Moor. Hey, Yahara.
Hi, John. France's government could collapse today with Prime Minister Francois Bayrou expected to lose a confidence vote in Parliament. Bayrou called the vote in a bid to pressure lawmakers into backing his budget plan. If the government collapses, President Emmanuel Macron could name a new prime minister prime minister or call fresh elections. Meanwhile, it's M&A Monday. PNC is buying First Bank in a deal valued at more than $4 billion. The Wall Street Journal, which first reported on this, said the move would increase PNC's assets to just under $60 billion, putting the bank more in line with the size of its rivals. PNC is set to take over nearly 100 First Bank branches in Colorado and Arizona. And it was a rough start to the NFL season for New York fans. Aaron Rodgers led the Pittsburgh Steelers to a victory over his former team, the New York Jets. Meanwhile, the Giants dropped their opener to the Washington Commanders. But Week 1 was capped off by a remarkable come-from-behind victory by the Buffalo Bills, who defeated the Baltimore Ravens 41-40. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, the Treasury Secretary pushing back.
We are going to push through with the economic policies that are going to set the economy right. I believe by the fourth quarter, we're going to see a substantial acceleration.
Up next, we'll catch up with Bradley Rogoff of Barclays from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
With the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Equities doing okay, positive by 0.2% on the S&P 500. No drama this morning in this market, up another 1/3% on the Nasdaq, and the Russell keeps moving up and to the right. The Russell 2000 up by 0.24% this morning. Under surveillance this morning, the Treasury Secretary pushing back.
We are going to push through with the economic policies that are going to set the economy right. I believe by the fourth quarter, we're going to see a substantial acceleration. We're at new highs in August, and we're not going to do economic policy off of one number. We believe that good policies are in place.
So here's the latest this morning. The Treasury Secretary, Scott Bessent, defending the Trump administration's economic agenda following Friday's weak payrolls data. Brad Rogoff of Barclays saying labour market data are flashing amber. Corporate activity appears fine for now, but tariffs should create headwinds in 4Q. Brad joins us now for more. Brad, good morning.
Good morning. How you
Thanks for dropping by. We're great. Let's start with that payrolls report.
Yeah.
Not so great. How concerned are you and the team?
Concerned, but amber. We said amber, not red, right? Just to be clear. And look, the market seems to be in one of these: is bad news good news? Is it bad news? And the market seems to be struggling with that a little bit too. The reason it's flashing amber is we do have to remember there's been a lot of changes this year. One of them is around immigration policy. And so when you think about a normalized, okay, payrolls number that wouldn't be flashing anything, that number would probably on the 60,000, maybe the 75,000 that you guys just showed was the estimate. It's not a six-figure number, which is what we've gotten used to for a while now in terms of where payrolls have been.
Given all of the policy changes, given the fact that we're getting revisions to the data, how much clarity do we understand? Are we just fitting narratives to fit the data as it changes to understand exactly why we're getting numbers that are so much lower than what we thought they would be, say, 3 months ago?
Yeah, and obviously there's a bunch of different surveys when it comes to things like payrolls and employment, and they were all pointing towards those revisions. So I feel like, yes, there's not perfect clarity, but we had a clue that we were heading in that direction, and concerning but not fully alarming, as we're saying. Corporate earnings and things like that have been a bit better, right? And John just alluded to that. So, that helps us a little bit too.
Barclays shifted its call after non-farm payrolls, leading up to it, to 3 rate cuts this year. And that comes with the rest of the street. We saw a similar kind of move from Bank of America after thinking there'd be no cuts. Was it the payrolls report? Was it something else? Is it because you do believe that the economic cycle is slowing down, or do you think it's politically motivated, that there's something else behind it at the Federal Reserve?
I think this Fed with this chair has not proven to be particularly politically motivated. I think the numbers are a lot weaker, and I think your revision point, Lisa, is a huge one there, right? The revisions have made a big difference, right? And so you thought you had one source of data, and you thought it looked pretty strong, and now it looks okay at best. And so you've got to react to that. And, the inflation data, we'll get more of it this week. It hasn't been enough to prevent those kind of moves yet, even though it's still a little bit higher than I think the Fed would like.
Does your view of how you view this Fed change once you get past May? Is it a different institution? And do you think about monetary policy in a different way?
I don't think it's a different institution, but you have different people. You have to think about it a little bit differently, right? And they have different views. And look, some people are, as we know, a little bit more dovish, a little bit more hawkish, but they're also willing to change based on data points, and people react to data points in a bit different way. And so, obviously Fed independence is something we're thinking about always and questioning. I worry a bit less about that and just more that you've got different personalities.
Mark Cabana of Bank of America was sat in your chair just last week, and he made the argument that maybe people are underestimating just how hard the next Federal Reserve will be willing to run things. Why would they stop at 3% on Fed funds? They're the kind of things that we're trying to give additional thought to. Why would they stop at 3%?
Yeah, I mean, we just talked about inflation briefly, right? And where we have seen, the worst parts of how the Fed's react is when they haven't been able to control inflation, if you think historically, right? And that's something that we know Powell thinks about a lot when he thinks about history. Now, to your point, could someone else care a little bit less about that? Sure, but there's a dual mandate, right? And, whenever you're in a job, you've got to follow the mandate.
Chairman Powell's not following it now because he's been above 2% for years and years, and is forecasting more of the same.
And I think that was actually one of the other interesting things that came out recently, right? Because they've talked about flexible, right, average inflation targeting, and they seem to, which gives you the ability to run a little bit above 2%, right? We're not running at 4% today, and they're kind of moving a little bit away from that, and that would actually make it a little bit harder, to your point, to sit here at high twos, roughly inflation.
So does it make sense to you that inflation expectations in markets are somewhat under control, that they don't feel like they're actually getting to be this sort of runaway trajectory that would actually represent some of the fears that we're hearing from other people, at the same time that they're expecting the Fed to underwrite the risk rally?
Yeah, it doesn't feel like inflation expectations are out of control, right? But, if you're going to target something like 2%, we're definitely not there either, right? And so I think the concern is not that they're out of control today, but if you have too stimulative a policy, do they grow from here and get out of control?
But does it make sense that credit spreads are so tight, given the fact that we're talking about a turn in the economic cycle and the fundamental data showing a labor market that's not so great?
Well, that's, I think there is a question in terms of if we're fully going to have a turn in the economic cycle. That still remains an open question to us, right? And now, obviously, if you're cutting, you're trying to prevent that. I think you guys were talking about cake and eating it too earlier today, right? So we will see. Now, to answer your question more acutely, does it make sense where credit spreads are? They're probably a bit tighter than where they should be. But when we think about how much wider they should go, it's modest. So credit spreads have been, we've backed off it a little bit, but you're in like the bottom, decile of credit spreads if you think about it historically, where, arguing should you be in the bottom quartile when earnings have held up just fine, right, so far, and leverage numbers are under control and all of that. Yeah, I get that you should be below average credit spreads, but it feels too tight right now. I actually agree with that point.
How many times have we spoken to people who are just excited about all-in yields and are just saying, you don't buy the spread, all-in yield's great, that's why there's still this wall of money piling in?
And they say those companies look better than the U.S. government, so why should there be such a huge yield gap? And that's something else that we're seeing. I just wonder if everyone is as confused as I am trying to put all these stories together and make sense of markets, because it seems like you can make an argument that this is actually pricing in a perfect soft landing. You can make an argument that this is pricing in a more political Fed that can then get the back end of the yield curve under control, and you see that in gold. You can make any argument you want because it seems like we're at a tipping point that hasn't tipped for about 3 months, and it's very frustrating.
Look, this market is priced for a cyclical turn up. This data is speaking to a cyclical turn down. Something has to give going into year end, one or the other.
Yeah, and does a Fed that is more accommodative change that trajectory? Or is it too late? And that's something else people don't have a good sense of. That's the reason why the revisions that we get this week are also going to be interesting. I'm going to stop ranting, but it does feel like a very confusing moment. But it is a confusing moment.
Very on brand.
You mean that I always just rant? It's just a constant, continual rant every morning? Tune in.
Steve England is going to tune in the next hour or so. He's going to join us. He's looking for a 50 basis point rate cut from the Federal Reserve at next week's meeting. He's going to join us in about 60 minutes from now, so look out for that conversation. Brad, it's good to see you, sir. Thanks for dropping by. Up next on the programme, we'll catch up with Mike Contopoulos of RB Advisors, Chris Marinak of Jenny Montgomery Scott, Kathy Bosjancic of Nationwide, and Steve's going to join us at about 8:45 Eastern Time. The third hour of Bloomberg Surveillance, up next.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
This is bad news is good news for the stock market because the Fed's going to ride to the rescue and cut rates.
We think that corporate profitability will remain intact.
The stock market's whistling past the graveyard a little bit here.
It's all about earnings.
Look for those companies that allows you to stay invested, that continues to have a strength in the balance sheet.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now with equity futures positive by 0.2%. Your scores look like this, 90 minutes away from the opening bell. Up a third of 1% on the NASDAQ. The positive run continues for small caps. The Russell up by 0.2. In the bond market, some comfort from falling bond yields at the front end of the curve. We're down by another 2 basis points. 349.25, setting the stage for price action worldwide later this week. 2 data points, PPI and CPI, Wednesday and Thursday.
Does the CPI print, does the idea of inflation becoming more complacent or less aggressive give the Fed a green light to cut rates more aggressively, not only next week, but through the cycle? That is the key question. Are we going to start seeing the ramifications from tariffs pass through to consumer prices or not? That will be the debate on Thursday.
Should we talk about the fight, never mind the debate, taking place in Washington, D.C.?
Sure, which one?
Let's get to it. If you're just joining us, welcome to the program. I mentioned this story a little bit earlier this morning. I think it's worth going over again from Politico. A private dinner attended by dozens of administration officials almost turned into a fight. They said, quote, Treasury Secretary Scott Bessent at one point threatened to punch top housing finance official Bill Pulte, quote, in the face.
Yeah, and then we started talking about what this could possibly be about. And we're getting into the realm of speculation, but why would Scott Bessent have a disagreement with Bill Pulte? Well, Scott Bessent's been coming out and trying to argue for the independence of the Federal Reserve at the same time that Bill Pulte is aggressively going after some members of the Federal Reserve. So you wonder if there is a disagreement on the sides of the cabinet about exactly how to deal with this this reputational mix. Look, this is all speculation, but it highlights this feeling that maybe not everybody within the administration is working in lockstep.
We're a week and a few days away from this Federal Reserve decision, and we still don't really know who's going to be there. Stephen Marin going to make it? Will Governor Lisa Cook be there? Makes this news conference all the more awkward following that decision to cut rates. We imagine they'll be cutting rates.
Yeah, it's a difficult enough time economically to understand what's going on. There's a question, does it really change anything, given what the compositional changes might be as far as the decision-making goes? But it does raise questions about how the market will treat it. Does it give the market more of a question around just the independence of the Federal Reserve, and then does that get us further away from that 3% sweet spot in the 10% in the 10-year yield that Scott Bessent would like to see?
Getting close on twos, 349 this morning. We're down about 2 basis points. Coming up this hour, we'll catch up with Mike Kontopoulos of RB Advisors as stocks trade near all-time highs. Chris Marinak of Jenny Montgomery Scott on a new deal in the banking sector, and Steve Englander of Standard Chartered looking for a 50 basis point rate cut next week from this Federal Reserve. We'll begin this hour with stocks edging higher ahead of key inflation data later this week. Mike Kontopoulos of RB Advisors writing the Fed is not going to bail out markets. They're caught between a rock and a hard place. We imagine that until unemployment accelerates, the Fed will ease only modestly. Mike joins us now for more. Mike, good morning.
Good morning.
And this is an interesting take. So 25 basis points next week.
Yep.
And then what do you think happens after that?
John, I think, really the Fed is data dependent. I don't think that they are as politically motivated as some, want them to be or assume them to be. I think it's going to depend. I think it's going to depend on what happens in the labor market. I think it's going to depend on what happens to inflation. We just happen to think that inflation will be higher than what's expected. So, I think they're probably going to cut less than the market expects, or less than some of the more recent upgrades for cuts from the sell-side shops.
You've heard the communication from Chairman Powell in Jackson Hole. He basically said we could have a one-off effect from tariffs, but not all at once, which ultimately is setting us up for a series of hotter than maybe people expect inflation prints and a Federal Reserve that ignores them for a while. Why would they become sensitive to it?
Well, the first thing I'd say is I'm not certain how one-off it will be. I mean, the oil embargo of the 70s was supposed to be a one-off event. The COVID supply chain shock was supposed to be a one-off event, yet we're still at, 3+%. So a lot of these one-off events turn out to be non-one-off event. And I found it ironic that Chair Powell in the last press conference also mentioned how, when washing machines were tariffed, dryers were also tariffed, and the spill-on effects of that. So on one hand, he's saying one thing, on the other hand, he's saying the other. So I'm not entirely convinced here that, this really is going to be a one-off inflationary event. And I think what you're going to see is longer-lasting inflation, maybe not at 4, 5, 6%, but certainly inflation that feeds through for quite some time. Tariffs, you can't have your cake and eat it too. Something's got to give.
So what's the market getting wrong right now? Because right now the market doesn't seem that worried about the scenario that you just laid out.
Yeah, I think, you hit it on the last segment, Lisa. You mentioned that the market's really pricing in this Goldilocks scenario. And again, it goes back to that sort of idea of you can't have your cake and eat it too. Remember, the weighted average tariff rate today, or what certainly will be the case over the next couple months, is exactly what the market was pricing on April 2nd when it tanked. Yet now we're actually realizing it. And the market's looking straight through it. They expect no inflation. They expect no margin compression. They expect earnings growth to go up. Every analyst has upped their earnings estimates over the last several months. And I think they're just missing the impact on margins, the impact on corporate profits, and the follow-through to inflation.
What's the bigger risk for you? The idea that inflation is significantly higher, or gets significantly higher than where we are now, or the idea that Dan Greenhouse was putting out there of a downturn in the jobs market, a real cyclical downturn that really questions some of the momentum that we're seeing, particularly in more cyclical stocks?
I think it's a combination of the two. It's not either or. I could, given the more recent jobs data and the revisions, I think some of the risks have sort of transferred more to labor and demand destruction coming from a weaker labor market. But remember, you're going to lose top-line growth as well as inflation does go up and consumers start to pull back. So it's a combination of the two. It's not just necessarily one or the other.
You are, of course, across all asset classes now, but your baby is fixed income, I imagine, still. In the bond market, given the kind of scenarios that you're forecasting at the moment, where does that leave this yield curve?
Well, it's tough to say. I mean, I think that the Fed is likely to cut 25. The market has largely priced that in. I think for now, steeper is probably still the right call, as you have deficit worries, you have inflationary worries, kind of putting pressure on the back end. I think Friday's print was actually a bit surprising in terms of how the long end reacted. I thought that it would not hold up quite as well as it did, and obviously it rallied quite a bit. And I think that's suggestive that the long end is still sensitive to economic data. The question is, how much will it be sensitive to economic data if the data weakens but doesn't fall off a cliff? So I think steeper here for now as we go into the September rate cut, but from there, it's anybody's guess.
Steepness led by the front end.
Yes.
And do we have falling yields in that steepening of the curve at the long end? That's kind of what I'm getting at here. When you say steepness, of course, you can steepen in very, very different ways. You get the drop at the front end of the curve, got that sorted. Are 10s and 30-year yields dropping with that, just not as much? Or are they staying at these levels?
I think, again, kind of good not to push it back on the inflation and jobs numbers again, but I think largely comes back to what happens with inflation and the jobs numbers. If you get a really bad print on inflation this week, then I think the long end could easily go up. But the front end will go up as well, right, in terms of yield. So, and if the labor market continues to weaken and inflation isn't quite as bad, hangs out maybe at 3.1%, the entire curve could fall, just the long end less than the front end.
Is the U.S. Still the haven? And I ask this given the fact that earlier this year people were saying no, and you see that in the dollar, you see that in gold. But now people are saying, well, where else are you going to go? France? You're going to go to Japan? And there's a real question of, cleanest shirt in the dirty laundry bin or whatever kind of cliche you want to put out there. I mean, how much has your view of U.S. versus ex-U.S. changed over the past couple of months?
Well, I think from a fixed income perspective, yes, the U.S. Treasury market is still the world's safe haven. I do believe that. I think when things get really bad, you're going to see investors flock to Treasuries. And it'll probably be the belly of the curve, quite frankly. We think that will ultimately be the part of the curve that outperforms over the medium term. From an equity point of view, yeah, I mean, listen, the conditions that really created U.S. exceptionalism was low inflation, zero interest rate policy, allowing for private equity, venture capital, and growth, which the U.S. is exceptional at, to perform really, really well. If the landscape is changing to one of higher interest rates, higher inflation, deglobalization, et cetera, et cetera, et cetera, then the dichotomy should change. And I do think you're going to see global leadership outside the United States from an equity perspective.
You're also a small business owner. Mm-hmm. Has it been fun?
No, it's been tough over the last few months. Coffee prices have gone up tremendously. I think in the last year they've gone up about 60%. So we're taking hits on both margins, without a doubt. And then we also have passed through quite a bit of our costs to our customers as well.
Is that because you don't think you can pass it all on at the moment?
Yeah, Jonathan, unless you want to pay $5 for a small coffee, there's only so much you can pass on drip coffee. But I would warn.
Put a shot of vanilla in there and call it something else.
I would warn all listeners that the espresso-based latte drinks are only going higher.
Mike Contopoulos of RB Advisors. Mike, appreciate it. Thank you. Of course, of RB, but also owns a few coffee shops across Westchester.
So get ready to pay $15 for your vanilla lavender latte that you love, or what is it now, pumpkin spice?
Is that what it is?
Yeah, well,
it's
getting to be
already?
fall. Yeah.
I saw that promoted in August.
Yeah. I don't take you as a pumpkin spice kind of guy.
I'm not that kind of guy.
Really?
At all.
Do you like pumpkin pie, though?
Sure, yeah.
Okay.
I'll have that for Thanksgiving.
But you don't want pumpkin pie flavored coffee?
In my coffee?
Yeah,
no,
that's a little, it's like you don't even have to have a pumpkin pie. You can just have coffee that tastes like it and save calories.
I'm not a big coffee guy anyway.
I know, it's true.
Caffeine free.
Oh, I don't understand that.
Believe it or not. All right. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump has a short list of candidates to replace Fed Chair Jay Powell when his term expires in the spring. Kevin Hassett, Chris Waller, and Kevin Warsh are the finalists. Over the weekend, Hassett said the U.S. Central Bank put its independence and credibility in jeopardy by expanding beyond its mandate. Meanwhile, StubHub is seeking to raise as much as $851 million in an initial public offering. The ticket-selling platform plans to offer about 34 million shares for $22 to $25 each, according to its filing. It plans to list on the New York Stock Exchange under the symbol STUB. Meanwhile, shares of EchoStar are surging 20% in the pre-market. SpaceX's Starlink agreed to buy wireless spectrum licenses from EchoStar for $17 billion. The deal consists of up to $8.5 billion in cash and up to $8.5 billion in SpaceX stock. The Elon Musk-owned company will also fund $2 billion of cash interest payments on EchoStar debt through November 2027. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes. Up next, the morning calls, plus Chris Marinac of Jenny Montgomery Scott and a new deal in the banking sector. That conversation up next from New York City this morning. Good morning.
consequence for U.S. markets.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The Fed's going to cut 25 basis points in September, and it won't be enough. And then they're going to cut 25 basis points in the next meeting, and it won't be enough. It's not going to be enough to satisfy the president that wants immediate, drastic cuts in rates. Looking at the economy and what the economy needs, you cannot sit on the FOMC today and say rates need to be drastically lower.
That's one opinion. It's from Ellen Zentner, the Chief Economic Strategist at Morgan Stanley Wealth Management. In equities right now, equity futures on the S&P 500 doing okay, up by 0.1% on the S&P, doing better than okay on the Nasdaq, up by 0.25%. That's the price action. Let's get you some morning calls. First up, Jefferies raising its price target on Apple to 205, saying, quote, the good news is in the price. Your second call comes from TD Cowen, raising its price target on JetBlue to $5, citing strong pricing and premium fare momentum. And finally, Citi cutting its price target on Nvidia to 200, expecting a sales hit from Broadcom's chip deals. That stock is up just about by 1/3% in the pre-market. Let's turn to banks. PNC buying First Bank in a deal valued at more than $4 billion. The acquisition will add 95 branches to PNC's network. Joining us now, Herman Chan, U.S. Regional Bank Analyst for Bloomberg Intelligence. Herman, welcome to the program. Just talk to us about this deal, where it comes from, and why it makes sense.
Sure. So PNC has talked about growing organically in some of its expansion markets, including Denver and the Southeast, building upon what they've done with the BBVA deal a few years back. So this is just a continuation of that. And the regulatory backdrop has been really positive. You've seen some regional bank MA deals close really quickly and gain really fast approval. So this is something that we expect to see going forward for the regional bank space.
That's what I was going to ask, Herman. How much more to come is this? Is this really going to open up a watershed moment to open up a bunch of deals that are in the pipeline? Can you give us a sense of the scope of those types of deals?
So M&A has definitely been more constructive over the past couple months. You've seen Huntington buy Veritex in Texas. You've seen the merger of equals with Synovus and Pinnacle. And this is the third large regional bank deal of size within the space. That's something that will continue going forward. We have thousands of banks in the United States. Scale is king, and we've seen the largest banks grow at a much faster pace than some of the regionals. And so the regionals need to catch up a little bit to gain scale, and that the market share that is incumbent to really win the battle for customers.
And forgive me if this sounds like a needlessly difficult question, but is a regional bank still a regional bank when they want to become a coast-to-coast lender?
Right. I would say for PNC and some of the larger ones, I would call them a super regional bank that have graduated from the regional bank moniker, but aren't of the size of the trillionaire banks like a JP Morgan or a B of A.
Got it. Herman, appreciate your take, sir. Herman Chan there. Joining us now to build on this conversation, Chris Marinak of Janney Montgomery Scott. Chris, welcome to the program, sir. We've been talking about this happening for a long, long time. Is this the start of something bigger?
Absolutely. I mean, I think Herman nailed it with the other acquisitions that were announced, John. I think that there are several more in the pipeline. You know, the consolidation of this industry has been happening for 40 years, and it will continue to play out. The regulatory environment is much better today, so it's greasing the skids for commerce to take place in the banking consolidation game. I also think it's good for customers because if you're in Colorado, you now have access to a national bank platform with PNC. PNC is going to do, I think, a very low-risk transaction here because they're buying a bank with very good deposits, low-cost funding, and then they also have a lot of mortgages that they're picking up, which are immediate customers they can cross-sell. This bank, First Bank, has almost 50% of their portfolio in residential 1 to 4 family mortgages.
Chris, are there certain regions right now that are hotter than others?
Well, the Southwest and Southeast have the best population growth. I think even post-COVID, we still have a lot of move-ins to Texas. The tax advantages in Tennessee and Georgia and Florida are very much popular. The Carolinas are doing well. So those are the markets that I think are most likely to have the best bank demand. But even in the West, certainly the mountain states like Colorado have been a boom. It's a migration from California that's been happening for years and years, and it's particularly accelerated during COVID. So Colorado specifically has been a standout. I think that is obviously on PNC's radar screen. I also think that demographically, you're going to see the Pacific Northwest is still attractive, and certain pockets of the Midwest, like Chicago, are having a sort of reemergence, particularly as you have onshoring that continues to take place.
I'm trying to grapple with the scope of the M&A that we're about to see. We've heard a lot of reports about some 4,000 regional banks getting consolidated down to 2,000 or 1,000 banks in the next number of years. What do you see as a sort of scope of this this mergers and acquisitions wave?
So, Lisa, there's about 4,500 U.S. bank charters in the FDIC system that are alive today. I could see that coming down by 15 to 20%. I'm not sure it's going to go down to 1,000. I think you still have a lot of family-run banks that will stay intact. You have a lot of community banks that don't have a bid today. So that's going to sort of gum up the number and the head count. But I think in terms of mid-size and larger banks, you will see consolidation. What will be interesting to me is, are we going to form more $100 to $200 billion banks like Synovus, like Flagstar, that was created a couple years ago? I think that ultimately is going to be the question that remains to be seen. We do have, again, the commerce, kids have been greased by Treasury, by the Fed, by the OCC to allow consolidation to take place at a much faster pace. We're getting deals approved way sooner than we used to in the past few years.
How much does a turn in the economic cycle challenge that? And this is sort of the tension right now that we've been talking about all morning. Is it a good thing to see the Fed cutting rates, or is it a bad thing? How much does that either act as a support or a detriment to some of these deals and the outlook for a lot of these firms?
Well, I think investors like lower interest rates. I think the cost of funds for banks dropped a lot with the first 100 basis points cut. So I feel like you're going to see 30 to 35% betas for bank funding costs. That ultimately is going to be helpful to net interest margins staying where they are, if not expanding slightly. I think that the capability of banks to solve any credit issues they have is better with another 25 or 50 basis points of Fed cuts. So I think ultimately it's a positive, not a negative. Yes, there are banks who are technically asset sensitive who will get a near-term squeeze, but ultimately banks are still resetting interest rates from the past couple of years and all of the low rates from 2020 and 21. So anything that's happening to drop the cost of funds, enable things to turn over, I think is positive in the big picture. So I still see more positives and negatives from the rate cuts that are upon us.
Chris, just to build on that, how much do you think it moves the dial on volume, just on the amount of demand that's sitting out there for loans, for mortgages, that's waited and waited for this moment? 25 obviously doesn't move the dial that much. Is it 50, 75? How do you think about that?
So 50 at least would move the dial, John. I think you're asking the right question. 75 would absolutely be a behavior change, in my opinion. I'm not sure we get 75 this quickly. However, seeing the 10-year Treasury break on Friday, I think, was helpful. If you can get mortgage rates down, there are an awful lot of fence sitters out there. I also think there are corporate fence sitters, folks who have not made decisions to borrow more in the corporate sector. And that, of course, can be an even bigger boon for the banking industry. You know, we've got a ton of liquidity between U.S. deposits, U.S. money market funds. They really have been growing nicely this year, and you could put that to work into loans much more. But banks are also buying securities again, and that also is another way for banks to make money and drive spread income. I think we've got a really good third quarter ahead of us that's going to be talked about at some of the conferences this week. And I think generally should be good as October rolls around.
Chris, appreciate you jumping on. Just one final question. Top picks at the moment. What do you like?
I like Fifth Third, FITB. We're buy rated there. For Citizens, FCNCA. We are a positive on the Synovus Pinnacle merger. We think there's a lot of opportunity there as well.
Chris, appreciate it. Thank you, sir. Chris Marinac there of Jenny Montgomery Scott. That last line on volume, on the amount of volume growth that we could see, and that wall of demand that's just sat there waiting and waiting for this moment. Let's see if it's unleashed.
Yeah, the idea that the pipeline's been strong for so long, when is that pipeline going to get unleashed? Right? We've heard that for so many months. You know, the corporate M&A pipeline is just absolutely stacked, and then it never comes to fruition. Is it enough to see 25 basis points change that equation? Maybe not. 75 basis points being a game changer is interesting, given that's increasingly what's getting priced into the market through the remainder of this year.
It's 25 plus. What's the signal that comes with the 25? And the good news, and I'm right there with Chris, is what happened on Friday. Yes, the data was bad, but the fact that long bonds rallied, the fact that you're pricing in cuts to the front end, and it's actually spreading through the curve and yields are coming down across the curve, particularly at the long end, that could unlock that mortgage activity we've been talking about for a while.
We're retracing that this morning, though, of course. So if you're trying to get too clean of a read, and the reason why I say this is not to be a pain in the butt, but it's to ultimately say this is a market that is so confusing. And that is one reason why there also has been hesitation to complete deals. Notable that this deal is announced and highlights how the banking sector is unique and has been uniquely positioned given some of the change in attitude at the White House toward the financial sector, trying to support regional banks in particular.
We just don't want to see a repeat of last year, dropping rates 100 basis points and yields climbing 100 basis points at the long end. The good news so far is we're not seeing that.
Totally, and I think that people were saying this is a positive signal. This also is coming with the idea that people brought down the entire expectation for where the Fed would end up next year, the idea of a neutral rate. It's early days, and that's what I think a lot of people are trying to gather. Exactly how much are we entering into a downtrend that could potentially be negative for the economy? I mean, if this is head spinning.
The curve just a little bit steeper this morning. Yields down at the front end by a single basis point, up at the long end by a single basis point. 10s at 4.08%, 2s at 350. Coming up on the program, we'll catch up with Kathy Bosjancic of Nationwide as investors gear up for a busy week of inflation reports. Plus, Danny has your morning movers with stocks jumping on news. They're joining the S&P 500.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The open bourse about 60 minutes away. Equity futures positive by 0.1%, up by 1/3% on the Nasdaq. On the Russell, the small cap run continues, up by 0.2%. 5 consecutive weeks of gains for small caps, led by the Russell 2000 off the back of a real repricing of rate cuts from this Federal Reserve over the next year. As we count you down to the opening bell at 9:30 Eastern Time, let's get you some morning movers ahead of the cash open. Here's Danny with more. Hey, Danny.
Hey, John. Some deal news to work through this morning. First, EcoStar gaining off the back of SpaceX's Starlink, buying mobile spectrum for them. $17 billion is the price tag on that deal, and it gives SpaceX the ability to deliver direct-to-device internet. The bad news, though, is for the likes of T-Mobile, who had been partnering with them in order to deliver that. T-Mobile, also one of the companies to have been reported to bid on those EcoStar assets. So EcoStar up 19%, T-Mobile down 5%. We're also going to get some more earnings throughout the week. That includes Oracle, which will report after the bell tomorrow. And ahead of that, a whole lot of sell-side upgrades from the likes of Morgan Stanley, Barclays, also JP Morgan, all upgrading them, all with a view into their AI offerings. So the bar has been set high. Will it deliver? Ahead of that, shares are up 3%. Finally, we got the rebalancing of the S&P 500, learned who would be included and who would be excluded. Two of those names, AppLovin, the app monetization company, and Robinhood, the online brokerage, both gaining because they will be added a lot of passive money flowing into them. A lot of being made in the sell side of what this means for Robinhood, that you get another financial services company included into the S&P 500. So both those, some of the top gainers this morning, John.
Danny, appreciate it. Thanks for the update. Looking forward to the program. Danny Berger, Matt Miller taking things over in about 29 minutes time for open interest at 9 a.m. Eastern Time. Right here on Bloomberg Surveillance, we're counting you down to the opening bell and a week full of economic data, including PPI and CPI. Bloomberg's Mike McKee joins us now with more. Good morning, Mike.
Good morning, John. Danny and I were just talking about how crazy last week was and how crazy this week's going to be and how crazy next week's going to be. We can only take it 1 week at a time, so let's look at the last data that could influence the Fed is inflation numbers, and we get a lot of them this week. Today we get the New York Fed Inflation Expectations Index. You know how much the Fed cares about keeping rates anchored, rate beliefs anchored. Tomorrow, NFIB, the small business people, they do have prices charged index that people are going to watch. And payroll revisions. Now, watch that one. That could be the sneaky number of the week if it provokes people down at the White House. Wednesday and Thursday, though, the big days with PPI and CPI. Jobless claims also Thursday, and then we get another inflation expectations number on Friday with the University of Michigan. And all this inflation stuff adds up to this. Will we see the core rate for CPI go even higher? It's above 3% now. Does it get up to a point where the Fed might reconsider the idea of a rate cut? Hard to see that happening, but I guess it is always possible, so we'll keep our eyes on that. And of course, that's not all for the week. The data aren't just the only thing. We've got a decision on whether Lisa Cook can stay on the Fed due any day now, and then we're going to be waiting to hear from the Supreme Court whether it's going to take the case on the tariffs that were ruled illegal last week. And then we've got this Scott Bessent versus William Pulte Ultimate Fighting Championship bout. How does that end up? Because Pulte's the guy who's really been pushing to get rid of Cook. Is this going to have any impact on that? So an awful lot to watch this week. And as Danny and I were saying, going to be another crazy week.
And we should take those threats of violence seriously because the Secretary of the Treasury, Mike McKee, Scott Bessent, has form with his left hook based on what we may or may not have heard from Elon Musk in the last few months.
And you know, if you don't know Scott Bessent, he's a fairly big guy. I mean, he could probably take either one of us out. I'm not fighting with him. So.
I'm not fine with him either. I have no doubt he could do that. Mike, thank you. Appreciate it. Federal Reserve in a quiet period ahead of the meeting next week. You just wonder how much that inflation story will shape this meeting, because there is a perception, I think, consensus view right now in this market, that the inflation data matters less now after the payrolls report that we just had on Friday.
And after what we heard from Chair Powell when we were at Jackson Hole in Wyoming, a real question of the emphasis on the labor market taking a little bit more precedence than the inflation data. I wonder, there might be a really high bar for inflation to be too high to cut, but how low is the bar for the inflation to be so low that they cut by even more? And I wonder how much that's increasingly the discussion.
CPI comes on Thursday. Sticking with the economy, Kathy Bosjancic of Nationwide Mutual Insurance writing the following. The stall in employment growth supports the Fed starting rate cuts at the next meeting. We continue to see a total of 75 basis points of rate cuts by year end. Kathy joins us now for more. Kathy, welcome to the program. That is a rate cut at every single meeting going into year end. Does the inflation story matter?
Yeah, good morning, John. Well, it's not irrelevant. It certainly does matter, but I think the emphasis, as Lisa said, is it's shifting more to the labor market and employment now. We just can't get big surprises, negative surprises in inflation. If we did, that makes it a little trickier, but I think ultimately still it does come back to the labor market because even if we get some real shocking numbers, it will be analyzed to see is that repeatable and are these one-off changes that eventually will fade over time. What it could influence is the pace of rate cuts this year and the total amount, not necessarily rate cuts themselves.
Kathy, there's a feeling amongst many that if we'd had the revisions at the time we actually got the economic data, this Federal Reserve would have been cutting already. The Federal Reserve, some officials have basically acknowledged that. Now, Kathy, I wonder, this debate about 25 versus 50 next week, in just a moment we'll catch up with Steve Englander of Standard Chartered, who's going to make that argument. Do you have a different view on things? Does 50 worry people? Would it spook people? Do they worry about the optics of a 50, even though it might be required?
Great question. So I think from the fundamentals, it could support 50, certainly, because I think what's happened is the Fed has gotten behind the curve, right? And that's what we've been thinking all along. That's why we thought they would go 75. And actually, a few months ago, we had 50 basis points as our forecast for September. We removed that because we saw that maybe getting a consensus around that would be more difficult. It's not off the table, but I think I would expect them to go more cautiously 25 because there are still some who are worried about inflation. They can always go 50 in October or even December if needed. And they can wait to see more data, in my opinion. I think getting that consensus right now, and I think to your point, would it spook the markets? It may, although now the narrative has shifted so much. Everyone's sort of talking about 50. The market's pricing in some odds of that. Maybe it wouldn't, but I think there is also still that potential. And that's what we were thinking maybe even just a few weeks ago. It could be too dramatic.
At the same time, we're about to get revisions tomorrow, the latest preliminary benchmark revisions to the establishment survey data out of the BLS. The expectation is for those revisions to show even less momentum heading into the year through March than we previously examined. You said the Fed is behind the curve when it comes to their easing cycle. Are we overestimating their ability to stave off a downturn? And that's something that we keep hearing.
It's great. That's another great point. I think it's what concerns me is employment's a coincident indicator, not a leading indicator. And the fact that it's gone flatline for the last 4 months, and yes, we'll get those backward revisions, which are going to be pretty sizable. It does suggest that policy was too restrictive for too long. And there is always that possibility that we get that harder landing. It's not our forecast, but it is that possibility. Well, I guess what I see, though, in the labor market is really companies paralyzed by the uncertainty, given that, we're getting a little more certainty. It's still very high, but we're past peak uncertainty. It means that there could still be the possibility, like looking ahead, not this year, but next year, of them starting to hire and invest. So it's not as if the rates themselves have really paralyzed companies from hiring. It's really the uncertainty and the uncertainty around tariffs.
So you don't think that this is actually the beginning of something that would warrant the Fed to be much more aggressive, not just this year, but also next year. Is that right?
I guess it depends how you label aggressive. I mean, we've had 75 basis point call for a while. The market's now coming to that. I mean, that's pretty sizable, but it's not 50 at each meeting. Next year, I think it's an open question. Right now, we have 50 basis points because we think inflation, lingers a little higher. Maybe that restrains them. And if they go 75 now, they get a little bit closer to maybe neutral. But the composition of the FOMC will matter. Certainly, they could end up doing even more rate cuts next year if that becomes a big factor.
We've talked a lot about this economy. This is actually also a super awkward Federal Reserve meeting, Kathy. The issues over Governor Cook, the prospect that Stephen Myron might be there at the FOMC meeting on the 16th going into the 17th. Kathy, with the news conference in focus, not just the forecast and the decision, what kind of tone do you expect from the Federal Reserve Chair about some of these issues in the news conference?
Yeah, this is really an important meeting because we'll get that press conference. We'll also get the Fed's updated macro and interest rate dot plot estimates, and those will be scrutinized. What are they giving us in terms of guidance, and how much can they give us guidance, right? There's so much uncertainty, and as you said, the shifting of personnel among the board of the FOMC, it's really, really going to be an interesting time. I think Chair Powell, it will be open to being a bit more dovish and signaling this is not one and done, that this is a series of rate cuts if the labor market continues to be soft and there's that belief inflation is kind of one time and eventually fades. These are going to be multiple rate cuts. That's what I would expect to hear from Chair Powell.
Kathy, appreciate it. Kathy Bonjantic there of Nationwide Mutual Insurance. Looking ahead to the Fed meeting next Wednesday. Decision, forecasts, news conference. Can he get the rest of the committee to come with him beyond just agreeing to a 25 basis point rate cut? And after that data that we saw on Friday, commit to more in the future?
I'm going to make your day because I'm going to talk about the hawkish rate cut, right, that a lot of people were expecting after Jackson Hole. Does this move to a dovish rate cut, right? I mean, that's essentially the difference that people will be looking for. Is there a signal that they're going to be cutting more substantially going forward? And can Jay Powell signal that, given, to your point, the lack of agreement that we see on the committee?
The personnel issues are going to be interesting, aren't they, in this news conference?
Yeah, who's going to be there? Is Stephen Myron going to be on there?
He's going to reach to that piece of paper and just go through things line by line and say, it's over to the lawyers.
Yeah, look, this is going to be a very difficult moment. He's going to have to answer questions about Lisa Cook. He's going to have to answer questions about Stephen Myron if he's there. And he's going to say, no comment, no comment. This is an independent Federal Reserve, and he's going to stay the course. How the market reads this, whether the market thinks this is overblown or whether they actually think this is valid, will be in the long-term bond rates, because if you see yields creep up, that's when bond independence starts to come into question.
The good news is we haven't seen a whole lot of that recently. Yields are down this morning by a basis point now on 30s, likewise on 10s, on 2s as well. The whole curve just pulling back going into the opening bow for equities. About 50 minutes from now, equity futures on the S&P 500 positive by 0.2%. With an update on stories elsewhere with your Bloomberg Brief, let's cross over to Yahara Arnott for more. Hey, Yahara.
Hi, John. Israeli police and medics say 6 people were killed and 13 wounded in a shooting this morning. Authorities say the gunmen were from the Palestinian West Bank and that they arrived by car and opened fire toward a bus stop. They were then shot dead by an Israeli security force member and an armed religious student. Meanwhile, U.S. Health Secretary Robert F. Kennedy Jr. may add new members to the committee that recommends which vaccines Americans should get. According to 2 former federal health officials, most of the people Kennedy is considering have been highly critical of COVID-19 vaccinations. The committee is scheduled to vote on those COVID vaccine recommendations later this month. And Aryna Sabalenka successfully defended her U.S. Open crown, defeating Amanda Anisimova in straight sets Saturday. Sabalenka is the first player to win back-to-back U.S. Open women's singles titles since Serena Williams did it over a decade ago. And on the men's side, Carlos Alcaraz beat Jannik Sinner, taking home his 6th Grand Slam title and his 2nd at the U.S. Open. I'm just sad I won't get to watch tennis every day. That's your Bloomberg Brief. John?
Yahara, thank you. The tickets just got so expensive going into the weekend. Do you check some of the prices?
Yes, although not as often as you do, I know.
$1,000 for the nosebleeds.
To me,
Sunday afternoon.
I'm just thinking you pay that kind of money and then you get stuck waiting in a line, having to give away your free deodorant handouts because of some of the security.
You knew the president was coming.
Yeah.
I mean, come on. Couldn't they have organised things better? They knew the president was coming and they still had all those lines outside.
Yeah, and couldn't they have signaled what the actual requirements were going to be so that people didn't bring in more than 3 ounces of liquid or whatever else it was? I feel like it was rather haphazard.
Yeah, I'd agree. I would agree. Congratulations to Alcaraz and to Sabalenka as well. Just absolutely dominant wins. Up next on the programme, we'll set you up for a big week ahead. Plus, we'll catch up with Steve Englander of Standard Chartered, expecting a jumbo rate cut from the Federal Reserve next Wednesday.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
I think some of the risks have sort of transferred more to labor and demand destruction coming from a weaker labor market. If you get a really bad print on inflation this week, then I think the long end could easily go up. But the front end will go up as well, right, in terms of yield. So, and if the labor market continues to weaken and inflation isn't quite as bad, hangs out maybe at 3.1%, the entire curve could fall.
That was Mike Kontopoulos of RB Advisors looking ahead to inflation data later this week as we count you down to the opening bell. Equity futures on the S&P positive by 0.2%, on the Nasdaq 100 higher by about 1/3 of 1%. The small caps doing okay, up 1/3 of 1% also. As we look ahead to the week ahead, here is your trading diary for this week. Tomorrow, payroll revisions and Apple's iPhone event. On Wednesday, PPI data. Thursday, CPI, plus another round of jobless claims and an ECB rate decision. Then going into the weekend, it's UMich consumer sentiment on Friday. Then next week, it's the Federal Reserve. Steve Englander of Standard Chartered writing, we think the August labour market data has opened the door to a catch-up 50 basis point rate cut at the September Federal Reserve meeting. Steve Englander joins us now for more. Steve, good morning.
Good morning.
Can they find consensus for 50 next Wednesday?
You know, I don't think they can find consensus for 50 and let's keep slamming the market with 50s. I think they can find a consensus that says, you know, the last 4 months payrolls have averaged 27,000. Had we known 4 months ago that that's going to be the average, we probably would have cut by now. So we're going to do, we're not going to do a token 25, we're going to do a 50 and then say we've moved much closer to neutral. We can wait and see.
Are they conditioned by what happened last year? They cut by 50, and then it seemed like the data was a head fake.
Not so clear, because it's not as if there's been any real pickup in inflation, and the labor market has deteriorated since then. I think politically it sort of shows them to be kind of neutral, that they can, you know, they missed it last year and they cut, and that's the reason they subsequently gave, and now they you know, the data weren't that clear in real time. Now the data are more clear, so they're saying, okay, you know, we're catching up.
So you think that it would be appropriate for them to go 50 basis point, and more people are coalescing to that view. If they don't go by 50 basis points, do you think that that's a policy error?
Yeah. Look, I think the data justify it. I don't think the data justify them saying we're doing 50 and we're going to keep on doing clips of 50. But I think it sort of says, you know, you look at unit labor costs are going very weak, so domestic inflation isn't going anywhere. The signs that tariff inflation is sort of exploding, I mean, it's there, but it's not beyond what you would expect. And, you know, as we were discussing the other day, if you take out the birth-death adjustment, which is questionable, payrolls growth is negative, which is, you know, usually a sign that you ought to do something and probably should have done something already.
Steve, what do you think so-called neutral is? What do you think that line in the sand is?
Well, in sort of measured correctly, we think it's about 100,000. You know, 70,000 from...
That's the break-even rate for payrolls. I mean neutral for interest rates.
Oh, neutral for interest rates. Probably about 3.5, 3.25.
3.5, 3.25.
Yeah.
So we're not a million miles away.
No, that's right. We'll get halfway there with one cut. So there's a case for doing it, but this, you know, I don't think they'd get a consensus to now say we're going to do more 50s. But I think there is a case. GDP growth isn't that weak. You know, you look at the GDP now numbers, and even if you look at the labor market numbers, they're not catastrophic. This isn't 2008 or April 2020. A lot of the numbers are softish, either at the low end of like a growth or the high end or the mildest recession you've seen. But none of them are really signaling that, you know, you're falling off a cliff. So I think the idea that you sort of catch up to what, you know, where you think you should be and then wait and see, I think that's appropriate.
Well, I think this is going to be the big debate at the Federal Reserve. We can park inflation because that's going to be its own debate. But on the labour market, which Chairman Powell wins? The Chairman Powell from the news conference, who anchored his view around the labour market on unemployment, or the Chairman Powell from Jackson Hole, who anchored his view around the labour market on payroll growth? Which Chairman Powell's going to win out?
You know, look, I think I respect him a lot. I think he's going to say, you know...
Which Powell do you respect? Do you respect the July Fed Powell more or the
Let me put it
August
this way. I've plenty of times in my career I've said, look, I got it wrong. I think he's going to say, look, the data didn't play out the way we expected it to, so we have to adjust. So I think he'll be the Jackson Hole Powell.
There is this question going forward, and it's really interesting to me that you see neutral as 3.25 or 3.5%, because that's not where the market is. The market is seeing a 25 basis point cut right now, next week, and then getting down to below 3% by the end of next year, which is fascinating. It's a different call than yours. Are we at a tipping point where the Fed can achieve a soft landing if they cut enough now, but will sort of precipitate some sort of harder landing if they don't?
Well, if they just, basically build a wall and say we're not going to cut and don't even talk to us about it, I think that would be the wrong policy. If they said, hey, we're doing 25, we'll probably do 25 in November or late October, the world is not going to end. I think doing the 50 and then sort of being data dependent would be cleaner.
If the Fed were to cut by 50 basis points, like you think, what would that do to the dollar?
Short term would weaken it, because I think that the market would anticipate that they're going to do more, even if they sort of followed my script and said it's data dependent. But I think over time the market would catch on. They would see what the Fed did. If they kept on cutting, the dollar would get weaker. We don't think they're going to keep on cutting. And interestingly, there's some indications of productivity growth is picking up, because the output side just isn't that bad. So this is like holding 1997, 1998, you have to be careful what you do. And so I think that they will be.
Are you in the re-acceleration camp for 26?
There could be a bit of a pickup. Like I said, the GDP numbers are looking okay. And ultimately the hiring might resume once there's a little bit more clarity about what's going on and things settle down. We're not in the recession camp, sort of saying, okay, we've gone from 150,000 jobs to 30,000 jobs, and we're going to go to minus 300.
Steve, it's good to see you.
Pleasure.
Thanks for being here, sir. Steve Englander there of Standard Chartered, looking for 50 basis points from the Federal Reserve next week off the back of the big step down we've seen in payroll growth.
And more people are coalescing around this idea after what we saw, and potentially after the revisions that we get tomorrow. It just is fascinating. I really think right now is a black box moment where people are kind of struggling to understand what the paradigm is, because you could say on one hand, a 50 basis point rate cut, wow, that would signal a real slowdown. That's really dramatic. But when you listen to what Stephen Englander has to say, it's actually for a pretty positive, benign backdrop that actually doesn't speak to some sort of falling off the cliff moment. So, it's sort of a morass of lack of clarity.
I think that's the strongest story that you can tell at the moment, is that the unemployment rate actually hasn't climbed that much over the summer, even though we've seen this massive step down in payrolls. The other thing you could point to as well is that jobless claims have just about held up. But that is the best story you can tell right now in the labour market, which is why most people believe this Fed cuts next week.
I keep looking at the employment rate for people, or the unemployment rate for kids who just graduated from college. It is 10.6%. That is the highest it has ever been outside of a recession. People who are just trying to get into the labor market really struggling. If this were a healthy labor market, that would not be happening.
It's hard to get a job right now. That's what we're being told, and that's what you see in the economic data. The week, 25 or 50 seems to be the debate at the moment. It's not a matter of if, it's how big. Max Kettner of HSBC joins us tomorrow. Neil Dutta of Renmac, Amy Wu Silverman of RBC, Amanda Liner of BlackRock. From New York, this was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like
years.
hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it, on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the 4 walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Futures higher to kick off the week, 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg open interest starts right now.
Coming up, bullish sentiment faces a test this week with payrolls revisions and key inflation reports on the data docket, plus plenty of action on the deals front, from a $17 billion spectrum sale to consolidation in regional banking. And Apple's recent rally under scrutiny as the tech giant prepares for its biggest product event of the year. Danny, what are you watching?
I'm looking at changes to the S&P 500. This always gets people excited because, yay, passive money will buy these shares. Specifically, Robinhood, AppLovin, and MCore all higher by at least 2% more for Robinhood and AppLovin. They will be added to the S&P 500 index on September 2nd. They replace Market Access, Caesars Entertainment, and Enphase Energy. Matt, what are you looking at this morning?
I'm looking at SpaceX. I highlighted that spectrum sale. SpaceX agreed to buy wireless spectrum from EchoStar for $17 billion in cash and stock. The deal allows SpaceX's Starlink to offer more independent direct-to-device mobile service for customers, and it gives EchoStar now $40 billion worth of total spectrum sales over the past month.
Yeah, and that's why you see the shares rallying 22% on that. Let's get more detail on the deal itself. Bloomberg Tech co-host Caroline Hyde joins us. Caroline, great to see you.
Great to see you.
And as Matt mentioned, this gives them the ability to give direct-to-device service. So is this a coup for SpaceX that they've been able to pull this off?
Well, they'd already been in the mix when it came to that AT&T spectrum sale as well. Remember, $23 billion worth just in August. This is why we've seen EchoStar shares at a record high before even trading today. They're up 100% in the last few days, let's call it in the last month, because they're doing this sale after sale of their spectrum. But this really gives SpaceX more broadly and Starlink an ability to give you direct to your mobile device connectivity with its satellites, but also from mobile to mobile. This is important for the growth story that we're seeing between Starlink and SpaceX. But what's sad is you are seeing perhaps the views that EchoStar was going to be a key challenger when it came to an offering in the mobile space. The fact that it was going to rival the likes of an AT&T or Verizon, that's not going to be clear anymore, because clearly they're having to offload what was this prized spectrum. The reason they're offloading it is because back in May, they started getting an investigation by the FCC. Look, this is a company that's on the brink of bankruptcy, and now you see its bonds soar, its shares soar, because basically they've been forced by Trump even involving himself as well, but being forced by regulators to start selling off some of this spectrum that it bought at pretty bargain basement prices previously.
Yeah, EchoStar, even though it's the big mover today, it's not really the exciting company in this deal, right? It's all about SpaceX. They're able to use pre-IPO shares to make multi-billion-dollar purchases, and now they're able to get away from T-Mobile. They previously had a partnership with T-Mobile to offer direct-to-device communications, but TMUS, those shares are down because this means Starlink and SpaceX can operate independently.
Yeah, own it themselves, vertically integrated. They're buying this with $8.5 billion worth of cash, but they've also using their own shares. So interesting that EchoStar gets potentially a
a piece
of the pie when they eventually do IPO. Remember, a lot of companies are pushing back that trajectory at the moment. They're also paying down some debt payments as well for EchoStar. So it's a really interesting deal more broadly. But you're right, this is about the play that Elon Musk, Starlink, and more broadly SpaceX, which is run by Gwynne Shotwell, is continuing to have, and actually becoming much more of a D2C kind of play. We know it for the space incredible catches that they do of their super of jets and the likes of rockets going to space, but now people are ever more going to know about it for connectivity, particularly when they're in the wild.
Yeah, chopstick landings are interesting, but if I can use a mobile device with your satellite network, that's even more interesting for a consumer. Caroline Hyde co-anchors Bloomberg Tech. That kicks off at 11 a.m. They'll have more on this deal. We've got more M&A in this market on this Monday morning. PNC is going to buy First Bank for about $4.1 billion, adding nearly $27 billion in assets under management in Colorado to PNC's business. Bloomberg Intelligence senior regional banks analyst Herman Chan is here. And Herman, we're talking about Denver specifically. But is this a bigger consolidation story?
Yeah, we're seeing some more consolidation within the larger regional banks over the past couple months, and this is more of a continuation of that. We've seen Huntington Bank in your home state of Ohio buy Veritex in Texas. We've seen a merger of equals in the Southeast with Pinnacle and Synovus, and this is the third regional bank deal that we're seeing over the past couple months. PNC buying into Colorado and Arizona.
Why is this happening, Herman? And it feels like soon we have to update your title from regional bank reporter to just bank reporter, right. National bank reporter, with the way that this is going.
Yeah, so a couple of things. We've seen really strong deposits competition, especially from the largest banks like the Bank of Americas and the JP Morgans of the world. And the regional banks have been trying to contend with that for a while now, coupled with a much lax regulatory backdrop. So bank M&A has gotten much faster in terms of getting regulatory approval, and they've been able to close deals much faster relative to what was occurring during the Biden administration. So there's less anxiety and risk involved with bank M&A under Trump, and so we've seen more deals because of that.
Herman, thank you very much for that. That's Herman Chan of Bloomberg Intelligence. Let's now, though, turn to the latest from Washington. Top Fed Chair candidate Kevin Hassett says the U.S. Central Bank put its independence and credibility in jeopardy by expanding beyond its mandate. He spoke yesterday on Face the Nation.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
Hassett's comments come ahead of a busy week of economic data that's going to help determine the Fed's policy path if it's not already predetermined. Joining us now, Michael McKee, Bloomberg's international economics and policy correspondent here on set. Mike, what could we see in this data that would change the cut that the market is already pricing in for September 17th?
Well, you probably have to have a big move up in the inflation numbers, and we do get a lot of inflation numbers this week. We get CPI and PPI. We also get payroll revisions, something to pay attention to tomorrow, definitely. We have the Lisa Cook court decision. Does she get to stay on the Fed? The IEEPA appeal to the Supreme Court. Are they going to pick up the case about whether tariffs are illegal? And then we have this Besant and Pulte Ultimate Fighting Championship bout that was reported over the weekend by Politico. Does that have any influence on anything? It could. You just don't know. PPI and CPI, though, man, are the big deals. We have to see if we get a bigger increase in both of those than is anticipated. Right now, the forecast is they don't move much from where they are. And if that's the case, the Fed probably goes ahead and cuts. But on that payroll revision thing, I want to point this out. Once a year, they re-benchmark the numbers, and it's the data from April of 2024 to March of 2025. But as you can see, each year lately, we've seen worse and worse re-benchmarking, 800,000 last year. We get anything like that this year, then there are concerns that the president will once again have a cow, you want to call it, and maybe take some additional actions. Not sure who else he could fire, but he might try to do that.
By the way, that Politico story about Scott Bessent and Pulte's fight makes Elon Musk's black eye earlier in the year.
A little bit more suspect.
A little bit more suspect. But there is a lot of personnel drama going on because we also have a narrowing down of who's likely to be the Fed chair candidate, with the Kevins and Waller being the top three announced by Donald Trump. How does that drama evolve with all of the data also in the background?
Well, Trump is going to announce his pick when he gets around to it. And he has said basically he wants to do it maybe by the end of October, November, could do it earlier. But all along, Bessent has added names to the list of people he's going to interview, but the president keeps going back to those three. So we probably are going to see somebody from those three, except that this is Donald Trump, so we could see anything by then. But the sooner he gets a name out there, then everybody's going to focus on that person and what they have been saying about the economy and interest rates.
No rest this week, basically, is what I'm
No
hearing.
rest this week, but as you and I were talking about earlier today, no rest last week, no rest next week either.
No rest for the rest of this year. Mike, thank you so much for joining. Michael McKee there with the latest. And it is a busy week ahead, as Mike was just highlighting, from the inflation data to the Fed drama. We are now 0.3% away from another all-time high, Matt, up 0.2 for the S&P. The NASDAQ goes up 0.4%. The small cap index, by the way, 5 straight weeks rather, of gains for the small cap.
For the small caps. All right, so the small caps obviously need that rate cut as well. Coming up, an immigration raid on Hyundai's EV battery plant, and LG's EV battery plant in Georgia jolts South Korea, and also poses questions about the supply chain and the stability of that in this country. More on that next. This is Open Interest. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get to high ends now. Look at what's making headlines around the world.
The latest political crisis is unfolding in France. Prime Minister Francois Bayrou is speaking now in front of Parliament. He called a confidence vote today in a bid to break a deadlock over planned budget cuts. The most powerful parties in France have vowed to bring him down, suggesting his ouster may be inevitable. The vote begins later this afternoon, or even this morning before noon. Bloomberg Television will bring you the latest headlines live from the National Assembly in Paris, and we'll show you live shots as well as these beautiful older pictures. The ticket-selling platform StubHub is seeking to raise as much as $851 million in an IPO. The company plans to offer about 34 million shares for up to $25 apiece, according to a filing. Earlier this year, StubHub paused its IPO plans after the U.S. announced wide-ranging tariffs. We'll get more insight into the live entertainment business with the CEO of TickPick in the next hour. Brett Goldberg is going to join us here on Open Interest. Plus, the U.S. is proposing annual approvals for exports of chip-making supplies to Samsung and SK Hynix factories in China. The compromise is aimed at preventing disruptions to the industry after Trump officials revoked Biden-era waivers that let companies get shipments more easily, sell shipments there more easily, Danny.
Elsewhere, Matt, some more company news for us to cover. South Korea's biggest companies are rushing to contain fallout from a sweeping U.S. immigration raid at a Hyundai EV battery plant in Georgia over the weekend. For more, we're joined by David Welsh, Bloomberg's Detroit bureau chief. And David, this is a White House that wants foreign industry to come and build in the U.S. Did these type of immigration raids, are they in tension with that desire from the White House?
Look, it doesn't make it easier for companies to start doing construction and actually executing the kind of investments that the Trump administration wants. Obviously, these people do need to be here legally, and they need to obey all the rules and dot the I's, cross the T's, and it sounds like that's what some of this was. People had overstayed visas, or they were here working on, for a different purpose than the original visa that they were granted. The Korean, some of the press reports there are saying that it's so difficult to get these permits, and it takes so long that some of the workers had maybe overstayed, or they didn't have everything ironed out perfectly. So
not just
like
some,
between
right?
government
Hundreds.
cuts.
We're talking about not just like 3 or 4 workers, but like multiple hundreds of workers. And it seems that the factory must have known about this, right?
Look, I don't know what the factory knew and didn't know, but what we do know is that some of these people didn't have their permits, their visas, and everything really ironed out. But if it takes a long time to get these, and the U.S. at the same time is going to be really cracking down on this, then something needs to be worked out between Korea and the U.S. and other countries that are going to have a lot of investment here and a lot of work. These EV battery plants, I saw this in Lordstown when LG was building the General Motors joint venture plant. You had a lot of Korean engineers working here for a long period of time because you don't necessarily have the expertise here in the U.S. I would assume the same is true in semiconductors. And you just have a lot of engineers and people who have very special skills working to build these plants, and this will add red tape for them whether you like the immigration policies or not.
I gotta imagine it doesn't even just add red tape, but if you're thinking of coming over to the U.S. and you're seeing these images of immigrants in chains at their place of work, yes, they're there illegally, that's probably somewhat dismaying. I mean, this is a president who also off the back of this said, look, send your very smart people because we want to train people up in the U.S. The red tape, the friction of getting the so-called very smart people here for factories, David, how difficult is that?
It's going to be really hard. There's a lot of angst right now in Korea over this, a lot of politicians saying they don't like how it was handled. And those images are really bad advertising. And even if the workers here were not, they had overstayed visas or whatever it is, if you're looking at those images, those videos, as a Korean executive or politician, it's very jarring, and they're going to think twice about what they're going to do with some of these investment promises. And I think you're going to see a lot unfold in the next few days between Korean government and the Trump administration on how to handle this going forward. But it's going to delay some things.
David, I want to ask about another story that you and Keith Naughton had out over the weekend about the
U.S. rollback of emissions standards and how much money that's saving U.S. automakers. I think this has gone a little bit under the radar because if I read it right, Ford is saving more than $1 billion by not having to buy credits. GM and Stellantis must be benefiting hugely as well.
That's right. Ford said it was $1.5 billion. General Motors charges as an expense. It was more than $700 million a year over the past 3 years for regulatory compliance that has to do with these different credit schemes. Look, they sell more gas guzzlers than they do efficient vehicles and EVs. So over the years, they've all been buying credits from Tesla. Toyota has been a seller of credits over the years because of their hybrid program. Then you have others like Rivian. And I think General Motors had bought $2 billion worth of credits, I think, in 2024. They don't use them all in that year. They sort of bank them, and they can use them over several years. But it is something, it is a big expense for them. And if Trump wipes that away, which he's already done that with the greenhouse gas emissions, they're working on a CAFE, if that's a corporate average fuel economy related, kind of watering down of the credit scheme. It's a lot less revenue for Tesla and Rivian, and it's a lot less expense for GM, Ford, Stellantis, and even some others like Nissan, Mercedes, who've had to buy credits or pay fines over the years.
David, thank you very much for bringing those to us. That's David Welsh, Bloomberg's Detroit bureau chief. Now, as we head closer to the opening bell, about 10 minutes away, you are looking at equity futures attempting to rally after Friday's loss, after that payrolls job report. So maybe the bad jobs leading to cuts today, at least, is a good thing. We're up about 0.25% on the S&P. The NASDAQ is up 0.4%. The Russell 2000 continues its run. Coming up, we break down the risk reward for rate cuts, just that, with Citi's Stuart Kaiser. Conversation you don't want to miss on Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
More Morgan Stanley and Goldman Sachs strategists say we are entering the next leg of the bull market. Morgan Stanley's Mike Wilson says a rapid uptick in positive earnings revisions in the latest jobs data suggests that the U.S. is in a rolling recovery. Meanwhile, Goldman's David Kostin sees the S&P 500 rising 6% through mid-2026, 2% this year. Both see small caps benefiting in this environment. Let's add another expert voice to the mix, and it is Citi's head of U.S. equity trading strategy, Stuart Kaiser. Stuart, great to see you this morning. I say something feels weird about this. It feels like since the jobs number, and really maybe since July's jobs figure, that the view has shifted, that the narrative has become we're cutting into weakness, not necessarily strength. Can equities continue to gain off the back of that?
Our view is probably not. I mean, the base case for most investors is probably we slow down but don't hit a recession. And in that case, if you're getting cuts, yeah, I think it's very positive for the equity market. But if what we've seen in the labor market is the early stages of, something somewhat of a more severe slowdown, then we don't think equities or small cap are going to deal with that very well. I mean, June is now a negative payrolls month after all the revisions. So, I tend to agree with you. It's a much more difficult risk reward when you get payrolls down to these levels with valuation at the levels they are to really be, confident in risk reward over the next couple of months.
What does that mean, an expectation of a slowdown in growth for corporate earnings? Because they've been double-digit strong. So what about Q3? What about Q4?
No, I agree. I mean, the bright spot right now is corporate America. And if you wanted to paint a bullish picture, it would be that corporate America kind of sat on its hands for 3 months, amid all the uncertainty around taxes, spending, and tariffs and immigration, and now might be poised to kind of spend those budgets before year end and do some hiring. But you have to put a lot of faith in that. If you look at what happened last earnings season, it was about a 5% earnings beat. But it was a beat and hold. Those companies did not significantly guide up, which tells you they're going quarter by quarter. So I think that means we need to go quarter by quarter in terms of how we think about the market.
So part of the Mike Wilson take and part of the reason he's so bullish is because it's this idea that we're just going to run everything really hot. The Fed's going to be cutting. It's a government that has the one big beautiful bill. They're going to try to get as hot of an economy to spend their way out of debt, to make things so hot that everything's okay. And inflation in that scenario was good for stocks, like it was post-pandemic. Do you find any truth to that?
Look, do they want a successful economy? Yes. I think, look, if you're getting incrementally bullish here, I think you have to have a lot of faith that what we've seen in the labor market is temporary and is going to fade the same way it did last year. I think when you're, even Chair Powell thinks break-even rate on unemployment's in the 50 to 75K range. So we were sub replacement rate last month. We're sub replacement rate on average over the last 3 months. So for us, we're a little bit more cautious. I think if you're in equity markets, you want to do it in a pretty conservative way right now. And I think you need to be very, very careful about what you're getting in this labor market data. So we probably have a little bit less confidence in that sort of tactical risk reward around the economy than he does.
I hate to treat you as an economist rather than an investor, right? But to Danny's point, like if we run the economy that hot, we're going to get inflation that's higher. And you can also put on your poli-sci hat because that's no good for midterms, right? I mean, the government can't really afford to have inflation creeping back up to 4%. And we're already seeing a core PPI at 3.7. So how do you expect those numbers? We're looking at CPI coming out this week. We're looking at PPI coming out this week. How do you see those numbers trending?
Look, I think the market's pretty convinced inflation's on kind of a downtrend, especially if you strip out the tariff-related impact. So again, you're taking a leap of faith that is going to be a temporary impact, and the trend is lower. If you look what happened on Friday, is you actually got a pretty high odds of a cut priced in for October, and I think those October cuts odds are telling you that inflation is kind of under control, and the Fed can focus on growth from a rates perspective. We'll see this week. If you get a very hot CPI print this week, watch that October odds. And if those October odds come in, I think that's pretty telling.
81.2% is what I see right now in WIRP. Going by futures, obviously it looks a little bit different if you go by OIS, but not much. Stuart, you're going to stick with us here. Citi's Stuart Kaiser staying with us through the open. We're looking at futures that are higher this morning, just about 5 minutes to go until we get the opening bell. S&P futures up 0.25%, NASDAQ futures and Russell 2000 futures doing a little bit better. We come back, we'll give you that opening bell and give you the stocks to watch this morning. This is Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at futures higher to kick off the week. Right now, S&P futures up just about 0.25%, 0.2%. We're looking at bigger gains for tech stocks, and even, we were looking at bigger gains for Russell 2000 futures. Now 0.3%. As Danny points out, they've been up 5 weeks in a row, the small caps, but it doesn't really add up to much. Down at the New York Stock Exchange, Genpact ringing the opening bell. They are pumped, and I like the color coordination. Over the past 5 years, the stock is only up about 20%, 5% year to date, but at least they're moving in the right direction there. Down on the NASDAQ, you've got the USTA ringing the opening bell after what was apparently a very successful U.S. Open. I didn't really watch much of it.
So good.
I think a Spanish guy won, which is important. And apparently Donald Trump, the President of the United States, went and sat in the Rolex box yesterday, which is interesting considering he put 39% tariffs on Swiss imports.
Honestly, good for the president for being there, but I was annoyed because it was delayed 30 minutes because they had to get everyone through security, and I think all the fans were pretty annoyed too. So, yeah, there was that, but it was a great match. It was so good.
Well, and you could see those tariffs come down now that he's made friendly with the Swiss, right?
I'm sure that's exactly what will happen, Matt. Okay, away from that, some of the stocks that we're looking at the open, look at this huge move from EchoStar. SpaceX has agreed to buy wireless spectrum from EchoStar for about $17 billion in cash and stock, a whopping 23% rise. The deal also allows SpaceX's Starlink to offer more direct-to-device mobile services for customers, and that's why you're seeing Verizon, T-Mobile, AT&T, all those providers start to fall because real competition coming from them now in the way of SpaceX.
Yeah, I think a very interesting story for consumers of mobile telephony there. We're watching shares of Robinhood as well as AppLovin, one of the worst named stocks, but a great performer here today, and MCOR, which will be added to the S&P 500 index on September 22nd. You can see a couple of 10% gains there. MCOR not doing quite as well, but still in the green. We're back with Citi's head of U.S. equity trading strategy, Stuart Kaiser. And you know, Stuart, we're going to talk a little bit later about more SPACs. We've seen a couple more SPAC announcements today, and more IPOs. Companies like Klarna prepping for big ones. Are companies finally coming back to these markets?
I mean, you hope so. I think a little bit of
public markets.
A little bit of what we've seen though is the first half of the year was just so disruptive from a market perspective that you just, I think, had a lot of people kind of stuck in the pipeline, so to speak, and some of that is kind of coming back out again. M&A targets have been performing extremely well. A couple of the other RPOs have done well. So you put all that together, you had some people that were kind of idling, waiting to come out, and then you've had pretty good performance of those in the secondary market, and I think it's motivated some folks to try to get it done before year end.
Are SPACs coming back a healthy thing? I thought that was the thing we all start to freak out about again, that SPACs are coming back and like crypto IPOs are what's in this market. Are those not like kind of frothy signs, Stuart?
They're frothy signs, but that's the market. I mean, Matt's going through stocks I didn't even know existed, like didn't even know the names of. So look, I mean, obviously crypto's a big part of this, and as is all finance, and that's going to kind of continue. But I think it's a healthy sign that the markets are open and functioning, and that these are performing so well in the secondary that it does suggest that risk sentiment's really positive for both retail and institutions.
So you may not want to put all your bets on crypto SPACs or quantum computing stocks. They always do SPACs. But AI is still obviously a dominant force in this market, and Bloomberg Intelligence thinks that the CapEx increase is going to continue. How much of that is a part of your investment thesis?
It's a huge part. I think what we've seen probably, though, is over the last month or two, people kind of, migrating the way that they're investing in the AI theme. I think focusing a lot more on software. Power gen is just a massively important and well-invested theme as well. So, look, the AI outlook's important. If you look at, earnings last quarter, though, the Mag 7 stocks basically coming into the quarter were estimated to grow earnings in the mid-teens. They reported earnings in the mid-20s. So, when you're generating that much EPS growth, it's hugely important. And again, this has become, it's spreading throughout the market, right? It's not just the semiconductors now, it's software, it's AI. And people, Heath Terry at Citi did a very deep dive into companies outside of technology that are going to benefit from this as well. So this has just become a pervasive theme, and you can't be invested in U.S. equities without thinking about it.
And Peter Scheer was writing on this over the weekend, saying that spending on AI has been instrumental in keeping the economy and getting stocks to record highs. Does that then mean, Stuart, on the other side of things, that there's a real risk, even if there's a slight crack, for things to unravel for both the economy and for the equity market?
Yeah, I mean, look, these things do work in both directions, so you can't completely ignore it. I think what's a little, I don't want to say different this time, but what's unique about AI is this is not just the technology. There's also massive infrastructure spend that's going on alongside this, and massive power generation and consumption that has to go on alongside this as well. So yeah, there's a technology aspect, there's an efficiency aspect outside of those tech companies, and then there's just a real kind of bricks and mortar construction project that needs to go on alongside it. So as I mentioned, it is pervasive throughout the economy and the U.S. equity market. But yeah, what goes up must come down, and you can't ignore those risks if you were to get a real crack in that CapEx spending theme.
Yeah, we talk about from the jobs perspective whether or not AI is going to take out a lot of workers, right? And you mentioned software. Every time I look at a software company, I think, wow, AI could write that code itself. Like, why do we need these separate software solutions providers when I can now do it all on my own with ChatGPT, or maybe not yet, but in a couple of years? Aren't you worried that a couple or dozens of companies maybe go extinct because of AI?
I mean, you do worry about it, but you also hope it creates jobs in other places. If you look at the labor market right now, you've had continuing claims have been quite high. I think if you were to squint a little bit and try to see what the AI impact is on the labor market right now, it's that if you do get laid off, your ability to find a job is much more difficult. And you might argue that that's companies saying, well, why don't we wait 6 months and see, can we do this job with AI or something else? So I do think it's slowed down the replacement cycle in terms of employees. And it is something to kind of keep an eye on. But again, it is creating jobs in other places. And there are certain jobs you just can't do with AI. So I think, the economy is adjusting as it always does.
Can I ask you about one other part of this market? Apologies away from equities, but that's increasingly hot too, that you have to pay attention to, is gold, up another 1% this morning at 3,600. There was this report from the FT that Tether is going to start getting into gold mining, the stablecoin company. Again, when you have businesses who are getting into other businesses that have nothing to do with what they're doing, that seems like maybe a bad thing. Has gold run too far, Stuart? How much further does this thing have to go?
Well, I mean, I think gold has a number of things kind of driving it. One is there's some risk to the economy. and people are focused on that. But excuse me. Second, I think is it's a way to kind of be trading currency markets without taking a view on the currency. So I think for a while when people were concerned about the U.S. dollar coming out of the tariff announcements, they were buying gold because it was a view of I want to be short the dollar. There's no other currency I necessarily want to be long. So I just do that through gold. So again, I think there's two or three different dynamics driving this. Part of it is a growth story, part of it is a currency story, and part of it is just people like shiny things, right? So it's it's got numerous kind of drivers going on right now.
We're all just a bunch of magpies at the end of the day. Stuart, thank you so much for joining us. That is City Head of U.S. Equity Trading, Stuart Kaiser. Okay, let's get a check on your equity markets this morning, about 8 minutes into your trading session. And we are looking at a positive start. I think this should put us around a record, maybe just below it, at a gain of 0.3%. Driving us higher, all the tech stocks. There's Broadcom, there's NVIDIA, there's Microsoft. By the way, we're going to get more tech earnings tomorrow. Oracle will be reporting after the bell, but it's the usual suspects of the big tech reporting. On the downside, it seems that SpaceX is really wreaking some havoc. AT&T and T-Mobile and Verizon, some of the biggest losers this morning with, again, SpaceX's Starlink buying some spectrum, mobile spectrum rather, from EchoStar, challenging some of those incumbent players. Now, when it comes to the sectors as a whole for this S&P 500, a somewhat even split, I guess you would say. We are still looking at infotech. That seems to be the thing leading us higher. Some of the more safety type sectors are moving lower. Real estate, healthcare, those are falling by at least 0.7% this morning, Matt.
Yeah, it looks like a sell-off in the defensive indexes. We're looking at 6,500 basically on the S&P 500, and the closing high for those keeping track was Thursday at 6,502. The all-time intraday high on Friday was 6,532. So we're pretty much there. Coming up, it's a big week for Apple with the September product launch tomorrow, including, if you needed this, a thinner iPhone. Details next. This is Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Let's get you some of the top calls, some of the analyst action in focus this morning. Starting off with Chewy, they're getting a raise to a buy at Mizuho. They expect a strong earnings report and a positive outlook when they report on Wednesday. Shares up only about 0.2%. Next up, TD Cowen upgrading Canada Goose to a buy. The analysts there see new products driving sales growth at the coat maker. Those shares are up 4.5%. I'm not sure how much innovation you can have with just puffy coats. Anyway, finally, Morgan Stanley and Barclays raising their price targets on Oracle. The software company has earnings that will be reporting tomorrow, so everyone giving them an upgrade. Shares up 2%, Matt.
All right, so a lot of upgrades there for Oracle, and interesting story and stock to watch. But I want to get back to the big spectrum sale we've been talking about. SpaceX struck a $17 billion deal with EchoStar to help expand its Starlink network. Really, I think the story is of a spectrum buy, right? Let's bring in Bloomberg Tech's Ed Ludlow, who's been reporting on SpaceX and Elon Musk for years. And Ed, you could say like EchoStar, the stock is moving a lot and they've sold a ton of spectrum. Right. That's kind of interesting. But far more interesting is the growth in Elon Musk's ability to offer direct-to-device communications.
And Starlink's ability to stand on its own 2 feet in a market where it's direct to device, because they already have an existing relationship with T-Mobile where you can do that. I was part of the beta testing phase of that. It works quite well. SpaceX can now just offer this directly. So $17 billion is also a really interesting piece of M&A for SpaceX. I can't think in its history of something that big. $8.5 billion of cash split with $8.5 billion of SpaceX stock. You know, the EchoStar story was they were a bit troubled anyway. The FCC had looked at their use of that spectrum. By the way, for what it's worth, spectrum is the sort of range of invisible radio frequencies that allow you to send data from, in this case, a satellite down to Earth and a mobile phone. But people were like, is this hardware? No, spectrum is not. It's just invisible space.
I think that's a worthy explainer for all, Ed. And
I was trying to explain to my 5-year-old daughter yesterday when I gave her an FM radio.
I hope you also emphasize it did not cause
She was
COVID
like, what's the antenna for? Just catches the waves.
Something you need to learn. You know, when they all signal phones, they all do this instead of this. Now, anyway, Ed, away from all of that, I mean, if you just look at some of the share price reaction, not even just the EchoStar gain, it's T-Mobile falling, which, yes, has a partnership with SpaceX, but it's also Verizon. It's also AT&T. Is this a real threat to the incumbents?
Yes, in the sense that it's a relatively nascent technology. The idea that if you don't have cellular tower coverage and you're up a mountain or the middle of the ocean or just walking in the forest, whatever it is you like to do, you can now do it directly with SpaceX. You know, the story of SpaceX has changed where the proportion of revenue from Starlink has overtaken that of launch, and it's clearly much higher margin. There is some brand appeal. We can debate the Elon Musk factor in it, but a lot of people like to go to SpaceX, do Starlink, rather than, say, sign up with a legacy carrier. So it's not that surprising to see pressure on those carrier names.
There's a great story on Apple stock, Ed.
Yes.
The company's gained almost $500 million, I think, or $500 billion, I should say, in market cap since the end of July. But the reason for the run-up is really that the tariff hit lessened after meetings with Donald Trump, and you know, regulations are not hitting them as hard in terms of the payments they can accept from Google. It's not Apple innovation or their moves in AI that's driving the stock higher.
Yeah, some of the headwinds in the first half of the year were removed, and we've discussed that on this program, right? That was the Apple stock story in the first half. The question we're asking ourselves on this network and the show is, why do we care about Apple iPhone Day? It's not as simple as saying that iPhone is 50% of revenue, but I have a chart in my back pocket that I'm not going to show now. I'm going to do it tomorrow. That basically tracks that iPhone days are a sell the news moment, but on a 30 or 60-day basis, and this is based in Bank of America research, it tends to recover. And so, you know, in a moment in time, however the stock trades this week, you know, that's a short-term thing. But over a couple of months, we really do care what's going to happen tomorrow. And with the political backdrop you talked about, the pressure on Tim Cook and Apple from the president to onshore more of the supply chain here, and above all of that, still begs the question, what is the AI story with Apple? And per Mark Gurman's reporting, we expect to learn a little bit about that officially tomorrow as well.
And I know you'll be at that event, Ed. What I want to know away from AI is who wants a thinner iPhone? Who wants that? Who's asking for that?
Yeah, my first MacBook in 2010 when I was at university was a MacBook Pro, chunky old thing. And before that, I'd been a Windows PC user. I couldn't afford the Air. And what Mark's arguing, and I think I agree with him, is that in the first instance, based on our reporting and sources, this iPhone 17 Air, 6.6-inch screen, incredibly thin, is going to be expensive. It's going to have a limited camera because of the design and the space. It's going to be priced between an iPhone 17 Pro at the top end and base model at the middle end. But it will follow the arc of the MacBook. When Mac had the Air in 2008, it was a slow burn to get it to be adopted because it was expensive. But Apple iterates on the technology quickly. And that's the argument that I think Mark's making, that initially you might see a tepid response. But people like thin phones, I think. And it also sets the ground for a foldable phone potentially in 2026. So again, the short term, we'll see what the reaction is, but the long-term roadmap is a bit more clear with that one.
I'm not buying it because I will break it. I promise you, I will snap
also,
it in half.
we have thin phones.
Yeah,
like we already have thin phones. They can't get much thinner before they start being negative space. So like, who cares?
Well, that's the next thing. They'll just implant the chip in our brains. Ed, thank you so much. Bloomberg Tech's Ed Ludlow, thank you so much. Now, coming up, retail investors are changing the IPO landscape, and companies hopeful of listing are fully embracing them. We're going to have more next. That's coming up on Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks to kick off this week. And we are seeing gains that'll lead us at least close to all-time highs. S&P 500 right now up 0.2%, 6494, 6495 the level there. And the all-time closing high is 6502. So we're right there. The NASDAQ as well, gaining even more, 0.6%. And one of the big reasons for that is that NVIDIA is a heavier weight on the NASDAQ than it is on the S&P. And you can see, Mr. Profit, if you'll follow me to this corner, NVIDIA right now up 2%. When a $4.3 trillion stock rises and it's worth 12% of the NASDAQ 100, I believe, that adds some decent gains. Apple, really little changed. It's a red arrow, but only 0.1%. We just talked about that with Ed Ludlow. We're going to see new products from watches to whatever they call that Vision Pro thing to a thinner iPhone. AppLovin is one of a number of companies that's going to be added to the S&P 500 as a result. Major rally in those shares as index trackers are going to have to buy the stock. And then EchoStar, we've been talking about a lot this morning after selling a combined $40 billion worth of spectrum over the past month, basically. This morning, the deal was a $17 billion sale to SpaceX. Finally, you see AST Space Mobile on the way down this morning as it faces increased competition. Danny?
Yeah, as are Verizon, T-Mobile, all of those incumbent players. Now, elsewhere in this market, Matt, payments firm Klarna is among the high-profile companies that are planning to go public this week. And as that happens, retail investors have been flocking to the buzzy IPO market. Bloomberg's Bailey Lipschultz, who covers IPOs, SPACs, and more, joins us now. And Bailey, you can understand why retail has been going into IPOs because you've had a lot of these like crypto kind of things that are loved by retail audiences. Can someone like a Klarna recreate that magic?
We're seeing that play out. We're seeing them cater to the likes of Robinhood and Moomoo. These platforms are promoting Klarna and a number of these other companies. Moomoo, it's a trading platform. One of my favorites, just to say.
Is that like a bullish cow pun?
Is it a giant dress, or is it 2 times what a cow says?
I'll take the latter.
Okay.
Unconfirmed, though. But we are seeing these platforms catering to retail investors and promoting some of these stocks. Again, buzzier names, more household names, the likes of a Klarna or a Gemini, which has kind of the Winklevi twins associated with it and are in crypto. So we're seeing retail investors really showing up in size.
We're seeing a lot more SPAC activity today, well, recently as well. And today I noticed that a lot of these companies are not just in crypto, but in quantum computing, right?
Yeah, we broke the story that a SPAC led by Michael Klein, the well-known banker, is
the Lucid guy. Churchill did Lucid.
They brought Lucid public. They brought Oklo, the Sam Altman-backed nuclear fusion company or fission company. They struck a deal, $1.8 billion deal. In terms of valuation for Inflection, which is another quantum computing name, we've seen a few companies in the quantum space going public via SPAC back in the old days. So now we're seeing kind of that flavor playing up again in the SPAC market. The big question is, when do you reach profitability? When do you actually kind of unveil more products and actually drive the entire industry forward? That's the uncertainty, but we are still seeing SPACs striking deals in crypto, striking deals in clean energy, and now getting back into quantum.
Or again, right, it's a resurgence of, this was your beat during the meme stock days when it was huge, it died off, and now it's really come back.
It's really come back, and we've seen a number of serial sponsors coming back. So we see this deal from Churchill. We've seen Chamath Palihapitiya filing to launch his first SPAC since going under, or shutting down a few back in the bust days. We've also seen the Cohens, Betsy Cohen and Daniel Cohen, coming back to the market and really tapping it, though they have been leading that whole crypto and crypto-adjacent charge.
Still, it is the companies that are going public via SPAC or IPO. It's still these tech-enabled companies. When do you get IPOs that broaden out beyond that? I know StubHub was also announced today or reported that they're going to be raising money for an IPO, but still you could argue it's just another one of these tech companies. It's not necessarily broadening out the IPOs.
It's another tech company, and it's also another tech company we've been waiting for years to go public. So today we saw Netscope launch its process. We saw StubHub, as you mentioned, launch its process. WaterBridge, which is in the water space as it relates to the oil and gas industry, they started their process. We're seeing kind of a broadening out, but a lot of these deals are smaller. We have BlackRock Coffee, the first real consumer name since Kava. We have a Legent, which is a Blackstone HVAC roll-up PE play on the road right now. Figure is also in the blockchain space. So we still are seeing those themes that are catering kind of the hot markets, AI, crypto, blockchain, really dominating. The big question is, when I talk to bankers, what do we see throughout the fall, and really a big focus on what 1Q26 looks like?
By the way, the Politico report on the Bess and Pulte blow-up, apparently that was at an event
birthday.
that was Chamath's birthday.
It all comes full circle.
Yeah, wow, what a party.
Yeah. All right, Bailey, thanks so much for joining us. Senior stocks reporter Bailey Lipschultz there, also all over IPOs, meme stocks, and SPACs for us, and has been for years. He's the voice here at Bloomberg on that reporting. Coming up in the next hour, Franklin Templeton's Katrina Dudley on whether the U.S. is in a rolling recession or is it a rolling recovery. Plus, we're going to talk to Carlyle's head of secondaries, which is, I think, closely related to this IPO SPAC story, on a new $20 billion fundraise. And Ethan Allen, CEO, talks furniture ahead of potential tariffs. This is Bloomberg Open Interest.
about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A deadly day in rush hour traffic in Jerusalem. Officials there say at least 6 people were killed, 21 hurt when 2 attackers opened fire at a bus stop. The BBC's Yolande Nell.
Dashcam footage captured the moment when a morning bus commute in Jerusalem turned into a deadly shooting attack. An off-duty Israeli soldier at the scene shot dead 2 suspected gunmen, believed to have come from the occupied West Bank. This is usually a busy junction. It's near to Jewish settlements in East Jerusalem, and Palestinians and Israelis mix on the road.
So far, no claim of responsibility, but Hamas issued a statement welcoming the attack. Meantime, Israel's military says it demolished a 12-story office building in Gaza City today, an hour and a half after warning the occupants to get out. President Trump took in the men's final at the U.S. Open as large demonstrations took place in Washington and Chicago after he amped up threats to send in National Guard troops to more cities. Correspondent Ed O'Keefe is at the White House.
When the president got back here last night from watching the tennis, he was asked if he had plans for Chicago this week. He responded, no, not really. He said they're going to go someplace and that a decision would be made over the next day or two.
There's new controversy over a plan to get rid of vaccine requirements for school kids in Florida. Questioned by CNN, the state surgeon general admitted he had not studied the potential impact because his focus was personal rights. CBS News medical contributor Dr. Celine Gounder.
This is alarming. If you're going to make a big change in policy, any kind of policy, whether it's public health or not, you should be making projections as to what will be the positive and negative impacts of that decision.
The Australian woman convicted of poisoning her in-laws with a mushroom-laden beef Wellington has learned her fate.
The total effective sentence is life imprisonment, and I fix a non-parole period of 33 years. 4 generations of the extended Patterson and Wilkinson families have been traumatised by your crime.
A tiny roadside gas station in rural Fredericksburg, Texas is getting a whole lot of attention after selling one of 2 winning tickets for Saturday night's $1.8 billion Powerball jackpot.
We don't know. I could have sold it. Any of my cashiers could have sold it.
Melanie Carter, who manages Big's gas station, says she was floored when she found out.
We are a brand new store. We opened the end of February of this year, so this is great excitement for us. It's also also a blessing for whoever the winner was.
The second winning ticket was sold in Missouri. Each has a cash value of over $410 million. Their owners have not been identified yet. This is CBS News. The joke was on Howard Stern fans today, who were led to believe the shock jock was ending his satellite radio show.
The Associated Press, Variety Magazine, and CNBC all fell for it, reporting that Stern was leaving SiriusXM. But it was a prank, pulled off with the help of another SiriusXM host. The AP said Stern was replaced by a flustered Andy Cohen.
I don't know how much I'm allowed to say, except that he's not here. And I am.
About 20 minutes into the show, Stern returned and admitted it was all a hoax. Christopher Cruz, CBS News.
Police in Glendale, California have caught up with a couple of suspected wedding crashers. They say the alleged thief, Armian Shiragini, was arrested at his home in Sherman Oaks, the getaway driver in Los Angeles. Officials say Shiragini is the one seen on surveillance video running off the dance floor with a gift box filled with 60 grand in cash and checks. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning from the Bloomberg Interactive Broker Studio in our headquarters in New York. I'm Scarlett Fu here with Alexis Christoforous. Paul Sweeney is taking a well-deserved vacation.
Yes, he is.
Coming up this hour of Bloomberg Intelligence, we're going to keep track of what's going on in France. There's a government that is teetering, and Stephen Carroll of Bloomberg Daybreak Europe will make us smarter on that. We're also going to talk with Louis Navalier. He's founder and CIO of Navalier and Associates on these markets, with the S&P 500 higher by 0.2% before some key inflation data. Herman Chan of Bloomberg Intelligence will talk to us about PNC agreeing to buy Colorado's first bank, spending about $4 billion for that deal. And later on in the program, we're also going to speak with Ellen Wald about OPEC Plus's decision to increase production ever so modestly. All of that coming up on the first hour of Bloomberg Intelligence. But let's get things started first with John Tucker, who's got our Bloomberg Business Flash. John.
And this flash being brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. In the early going mixed market right now, S&P 500 up 13. That's a rise of 0.2%. The Dow down 76 points, and the Nasdaq 100 right now up 171 points. That's a rise of 0.75%. Broadcom, best performing stock in the S&P 500 right now. That is up 4.4%. Deal news today includes Starlink, SpaceX company, buying wireless spectrum from EchoStar. It's worth about $17 billion. EchoStar shares right now up 17.2% as a result of that deal. And ahead of the Fed meeting next week, we're going to get inflation data this week. Producer price data on Wednesday, consumer price index on Thursday. Standard Charter expects a 0.5 percentage point Fed cut. Cameron Dawson is with New Edge Wealth.
The question is, do spicy, hot inflation prints really driven by tariffs and supply chain disruptions challenge that rate cut path by the Fed, even as they're looking at some of the weaker jobs data like we got on Friday?
Yeah, right now the 2-year yield 2 basis points lower, 3.48. The 10-year is down just about 3 basis points. That's about 4.04%. Did you see this one from Politico? Great story. A private dinner attended by dozens of administration officials and close advisors to President Trump was marred by a dramatic clash between two of the president's top economic officials, with Treasury Secretary Scott Bessent at one point threatening to punch the top housing official, Bill Pulte, in the bleeping face.
This was during the dinner?
This was, yes, during the reception. The dinner did follow.
Wow.
I mean,
that's
be a fly on the
That
wall
is
for that dinner.
very interesting.
Spicy.
All right, John Tucker.
Looking at the two of them, sizing them up,
Yeah.
I would have to go with the Treasury Secretary.
I think
on
my
this
money's
one.
on the Treasury Secretary. I think you're
Yeah.
right, John. We'll see what happens at the next dinner. All right. Market Drivers, guys, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Just go to commonwealth.com to learn about their consultative support and technology.
All right, let's take a look at some stocks on the move today. I'm Scarlett Fu with Alexis Christoforous, and let's bring in Bloomberg's Christine Aquino. And Christine, you're focusing on one company whose shares have hit a record high.
Yeah, absolutely, Scarlett. That is EchoStar. John Tucker mentioned this earlier as the subject of this deal with Elon Musk's SpaceX. So EchoStar, ticker SATS, shares are up more than 18% at the moment. So a healthy clip from that deal. It is definitely investors taking this deal positively. So as John mentioned earlier, it is a deal to acquire, for SpaceX to acquire some EchoStar spectrum licenses. So they're designated for satellite and mobile communications. By the way, Bloomberg reported on this earlier, and the company confirmed it in a statement. And so, they're saying that the sale should resolve inquiries from the FCC. Apparently, the regulator was accusing EchoStar in May of not effectively using the spectrum it was awarded and threatened to strip some of its valuable licenses. So Bloomberg Intelligence weighing in on the deal, saying that it may materially shape EchoStar's credit profile by enabling significant debt reduction from its $27 billion loan.
All right, let's go into banking for a moment. PNC making a big push into Colorado and Arizona with a $4 billion deal.
Yeah, absolutely, Alexis. So PNC, ticker PNC, shares down more than 1% at the moment, down 1.3%. So investors not necessarily seeing that as a positive at first blush. But yes, PNC agreeing to buy First Bank holding for about $4.1 billion. That will add $26.8 billion in assets for PNC, particularly in Colorado and Arizona. That transaction is expected to be completed early next week. And after that acquisition, PNC's total assets will be approaching $600 billion. So that will bring it closer to the largest regional bank, which is U.S. Bancorp. And Bloomberg Intelligence saying that the pricing looks conservative. The deal is at 12.1x annualized 2025 EPS.
All right, so let's stay in the financial sector, but move on to a fintech company, Robinhood.
Yeah, absolutely, Scarlett. That is enjoying a nice bump this morning. So Robinhood, ticker HOOD, shares are up more than 13%. And that's because we did get news late on Friday that it has been added to the S&P 500. And, we know that its rise was really during the pandemic, when we had all these retail traders probably bored sitting at home and trying to figure out what to do with their stimulus check. And therefore, Robinhood came in and provided a platform for them to trade. And now, 5 years later, it's becoming a lot more legitimate by joining the S&P 500. So that is quite astounding. And, the one perk of joining there's many perks, but one significant perk for Robinhood by joining the S&P 500 is that they will enter the portfolios of index funds, pension plans, retirement accounts, which is quite the contrast between them and that type of investor and the retail traders that have really given rise to Robinhood.
For sure. All right. Thanks a lot for the update on our market drivers, Christine Aquino. Always appreciate it. Talk to you a little later on. All right, folks, it's a big day in France. That's because, getting rid of governments is now about as commonplace as complaining about them, don't you think?
It seems like it's an annual thing, isn't it?
It is. And so later today, there's going to be a no confidence vote for the prime minister. If the government collapses as expected, France is going to be looking for its 5th prime minister in just 2 years. Here to break it down is Stephen Carroll, Bloomberg Daybreak Europe host, coming to us from our Paris bureau. So, Stephen, just break down for us what we can expect to happen in the timing of today.
Sure. Well, things are already underway in the National Assembly. So we've heard from the Prime Minister, François Bayrou, Prime Minister as he is for now. More on that in a moment. He spoke for about 40 minutes, reinforcing his key message that France has to tackle its debt problems. We're now in the middle of hearing from the leaders of all of the political parties in the National Assembly. So altogether, 12 speakers are lined up. We're on number 3 at the moment. It's the leader of the Green Party who's speaking right now. We've heard from the centre-left Socialists and from the centre-right Republicans Party, and they have been laying out their positions. The Republicans, some of whom are supporting the government in this, the Socialist Party who definitely aren't, and who are voting against the government in this motion as well. Even though we still have to hear from quite a lot of these speakers, we already know how most of them are going to vote, and it basically doesn't look good for François Bayrou. He doesn't have a majority in Parliament. We knew that already, but since even as soon as he called for this confidence vote 2 weeks ago, we had the parties coming out on both ends of the political spectrum saying that they would be voting against confidence in the government. So it does look like we will be heading for, as you say, the 5th French Prime Minister since 2022.
And just like last year, Stephen, the issue is France's deficit and what it's going to do fiscally. And here, politicians, opposition lawmakers are concerned about his plans to narrow France's deficit in 2026. What is he doing that has got everyone so worked up?
Look, François Bayrou, to his credit, has been talking about the problem with France's debt for at least 20 years. I remember him talking about it in the 2007 presidential election campaign. He's always been very consistent that France spends too much and its debt is growing at too fast a rate, and that something needs to be done or it's going to be saddled onto the next generation. That was the whole plan with this budget. He saw this as his main aim as Prime Minister, was to try and put France on a sustainable fiscal path. Of course, the debt has gotten so much worse over the years with things like the COVID pandemic and the government support that was provided during that period, but also during the energy crisis in Europe and the government support that was provided to households at that period as well. So what he tried to do was bring the deficit down with his plan to 4.6% of GDP next year. That's down from the 5.4% of where it is this year, which is the widest in the euro area. That involved 44 billion euros of tax rises and spending cuts in the next year. Some controversial ideas in there too, like cutting 2 public holidays in France. You can imagine how that went down. He said it was all open for negotiation, but essentially nobody wanted to negotiate with him, and that's led us to where we are now.
Well, let's talk, Stephen, about why we should care, because what are the ramifications here for the Eurozone and even for those outside the U.S., given the fact that we are such a global economy?
Yeah, I mean, look, first of all, it's worth remembering that France is the 2nd largest economy in the euro area. This is a big economy in Europe. It also has a large amount of debt, 60% of whom are held by foreign investors. So that is something that has already an international impact there too. Interesting, our colleagues from our FX and rates teams already noting that French bond yields have actually come down slightly as this debate has been playing out. Some of them see they're getting quite good value, quite a good return on their investments in French debt right now. There is a question of broader fiscal stability in the euro area when you're talking about a country that's heavily indebted, and it's not France alone. If you think about Italy, their debt-to-GDP ratio also above 100%. We know the stories in the past from Greece, Spain and elsewhere that have taken a very long time to come under control with very painful measures. So there is a question of how this could spill over and drive up borrowing costs elsewhere in the euro area. Could it force the European Central Bank to intervene? We're not there yet. I mean, that's the situation where it is right now, but certainly that's the warning that François Bayrou is trying to put out there with this budget, is that if things aren't done now, it's going to be a problem that gets much worse, leaving France in a more difficult position when it comes to things like paying for pensions and social benefits and essentially the minimum of what people expect to get from the state here.
Right. Stephen, very quickly, in about 30 seconds, where is Emmanuel Macron in all of this?
Well, it's up to him, essentially. If the French government loses this confidence vote, he has to pick the next Prime Minister, or he has the option of calling fresh elections to the National Assembly. He said he won't do that, but I always say that Emmanuel Macron likes to surprise us, so we never know. So the next big job he'll have is to decide who he wants to be Prime Minister and how he thinks they might be able to build somewhat of a working minority in the National Assembly, something that the past 3 Prime Ministers haven't been able to do.
All right. Thank you so much for giving us a rundown of what we can expect. A big day here in France. Stephen Carroll, he is Bloomberg Daybreak Europe host on the French no confidence vote. Right now, the lawmakers are still speaking, but there is a vote scheduled for later on this evening in Paris, about noonish time on the East Coast. And at 8 to 9 p.m. Paris time, we will expect a result. That'll be about 2 p.m. New York time. Alexis.
Looking forward to it.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/ Bloomberg. Right now, the S&P 500 is higher, up just 7 points. That's about 0.1%, 64.89 on the index. So it's hovering around the record close of 65.02 that we had last week. But only 3 of the 11 major industry groups in the index are up right now. It's being led by information technology. That's home to AVGO, Broadcom. Broadcom up just over 5%. It also happens to be the best performing stock in the S&P 500 right now. Worst performing industry group, that belongs to real estate right now. EchoStar shares soaring, hitting an all-time high. The satellite broadband company agreeing to sell the wireless spectrum to SpaceX Starlink for about $17 billion in cash and stock. And it was a big deal over the weekend. OPEC Plus agreeing to what I guess you could call a pretty bold strategy. It's aimed at trying to sink the competition. They're going to further raise the amount of oil they produce from October, and there's some element of caution to start off with the new policy. 8 of the OPEC Plus nations will add just 137,000 barrels a day initially. So I'm going to say that's why oil right now, despite that news, is actually higher. Brent, the international benchmark, is at 47 cents a barrel, 65.97. And then the refined product, which I put in my gas tank, that's like $3.20 a gallon, at least it was this morning. And that in large part is because of the Western sanctions on Russia and Iran. So we're not seeing a lot of relief at the pump, at least, you know, I'm not.
I filled up for $3.14 in upstate New York this past weekend.
Are you the kind of person who will drive an extra mile to get the better gas price? Because I know I am.
That's quite a trip to save.
I am. I feel better. It's a psychological thing.
Anyway,
Yes.
we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Scarlett.
John, thank you very much. As I think about that as I drive the extra mile to get my next tank of gas. Let's bring in Enda Kern right now. He is our global economy reporter to give us an update on the latest on trade headlines and the U.S. economy. And I'm looking at a story about how the U.S. is now proposing annual approvals for exports of chip-making supplies to companies like Samsung Electronics and SK Hynix. What does this mean in terms of how easy it is for these companies who are operating in China to be able to do what they need to do to keep the global economy going? Is this an added irritant?
Well, it's certainly an added complication, Scarlett. As you mentioned, essentially SK Hynix and Samsung are going to have to go to the US government and get an approval to sell basically the year's worth of equipment and kit and gear that they want to sell into their clients in China. So these are providing kit to all of the the smartphone makers and electronics makers and all of the consumer kind of goods that we use every day. So on the one hand, it allows the US to keep some control on that process, make sure that chips are flowing to maybe non-sensitive areas that they want to restrict. That's the US side. They're keeping kind of a quota of approval on that. But on the other side, of course, the two companies can carry on doing business and doing trade with China. That's a sense of relief for them. It's just certainly, obviously, a complication. It feeds into this whole backstory of technological competition between the two big economies and speaks to the idea that this kind of tit-for-tat US-China story hasn't gone away, even though they have, of course, ongoing trade negotiations happening in parallel.
And I want to talk about China for a moment because I know the Chinese President Xi Jinping and Russian President Vladimir Putin, they're going to be attending a virtual BRICS trade summit today. It's hosted by Brazil, and I guess it's meant to coordinate a response to Trump's new tariffs. Who will not be there? India's Prime Minister Modi. He's sending a senior representative. So what do you expect? What are you looking for from that summit today?
Well, on the one hand, it's significant it's happening at all. This was called, as you mentioned, by Brazil's President Lula a week or two ago. It is bringing together leaders of some of the world's biggest economies, clearly in response to President Trump's pretty hawkish, aggressive trade policy. So it speaks to this idea that there's another bloc out there, the BRICS bloc, willing to push back. But then, of course, as you mentioned, within the detail, India's President Modi won't be online. We don't, need to know more detail about that, but that's an absence in and of itself. But more broadly, I think there's still some skepticism about how unified that group actually is. Clearly, they are aligned on some topics, but how aligned can they be in terms of creating a unified response against President Trump when it comes to these tariffs? But we do know that these companies are grating. when it comes to the tariffs that the US has put on their goods, so they are looking for options to respond, and clearly we'll have to see what comes out of it, but that's what the mood music around this meeting is going to be.
So we started with Korea, or Korean companies at least, and I kind of want to end there because over the weekend we had, of course, this immigration raid, or I should say last week, at a Hyundai Motor and LG Energy Solution battery venture in Georgia, which raises a lot of questions, Enda, about how the president is intent on forcing companies, including foreign companies, to bring jobs and production back to the U.S., but it's hard for them to do that if they're going to see that their employees and their factories get raided.
Yeah, look, clearly there's a legal aspect to this. The immigration authorities can comment on what the specifics are there, but just broadly, the optics of it obviously are very jarring for South Korea. Hundreds of South Korean nationals part of this roundup of workers from this plant at a time, of course, when big trading allies are looking to invest more in the US as part of the ongoing trade negotiations. And of course, you throw into that mix the ongoing conversation around skill shortages in key critical sectors like construction sector and in more higher value add manufacturing sectors and the like. It all adds to the idea that doing business with the US is getting somewhat more complicated. South Korea, of course, have responded. They plan to repatriate those workers back to South Korea over coming days. It doesn't sound like it's going to derail broader trade or economic relations between both economies, but it does speak to how the aggressive moves in immigration can spill over into causing complications on the trade front too.
All right, and Bloomberg's global economy reporter, thanks so much for talking tariffs with us today. We appreciate it. Want to switch to the markets for a moment. Just looking right now, we've got a mixed market with the Dow. The laggard here down by about 17 points. It's a big week, we know. Key reports this week on jobs and inflation. And of course, we've got that little Fed meeting next week. So here to break it on down is Louis Navellier. He's chairman and founder at Navellier & Associates. Louis, good to have you. I want to talk about this jobs data we're going to be getting tomorrow because we're expecting quite a large revision. This is backward-looking data, we know, to March. But do you think it's going to be market-moving data?
It might be. I hope they just get rid of all the seasonal adjustments. That's what's messing everything up. I mean, look at the downward revisions for June. I mean, there were 2 downward revisions for June. So if the Labor Department can't hit the broad side of the barn, let's just start fixing it. And I know they do this twice a year, okay? But I really would like to see those seasonal adjustments disappear.
Yeah, I think a lot of people would. However, we know that there are problems with the response rates to surveys. So it just feels like the quality of this data is now under question in a way that it wasn't a few years ago, certainly before the pandemic. As an investor, what does that mean for you in terms of you're looking for the most reliable data to get a better sense of where the U.S. economy is?
Well, fortunately, we have ADP, and that's pretty reliable. The ISM surveys are also very good. Manufacturing still below 50, but it did improve. There's some green shoots in there. And services obviously improved dramatically. And, we're growing, but, the problem with America, as Scott Bassett said, 50% of America is in debt, okay? And that's why we got to lower rates, because those are the people we got to fix. And, if you're a boomer and you got real estate and stocks, things are great, okay? But if you're in that bottom 50% or a younger person that can't, afford a home and things like that, it's really tough. And I think we're bordering on deflation because real estate's falling now across America. I will be very curious of owner's equivalent rent on the CPI. I know that's just rental costs, but there's a glut of rental property now. So we'll see if that finally cracks. Once that cracks, we should get within the Fed's inflation target. And of course, we got falling crude oil prices now. OPEC just boosted production. I know oil's up today, but we're entering the time of year where seasonal demand collapses. So we should have much lower oil prices for at least the next 5 or 6 months.
So if we're indeed entering this deflationary atmosphere, as you're suggesting, what does that mean for rates? Pretty much next week, it's a foregone conclusion that we're going to get a rate cut. I guess the question now is how big will it be? Do we get 3 at each of the Fed's, meetings for the rest of the year? What's your take?
Well, the consensus is 3. We'll see what the dot plot says. I think if you really want to know what's going on in rates, you have to look overseas. Britain and France have budget problems. and they both might have the collapse of the respective governments. In fact, Bloomberg's done a great job reporting on that today. And so, you know, what happens is if you can't pay your debt, you got to keep your rates low, just like Japan did, or just like China is now, because they have a massive demographic problems, and they might even have to have a currency devaluation. So I'm expecting a global interest rate collapse, period, okay? And hopefully that will cause money to flow to America because our rates are higher than everybody else and our economy's growing and the dollar get its mojo back. And that's what I'm expecting. But those external factors are probably the most important. And, you know, the bond vigilantes tried to jerk the rates around last week, but they ended up a lot lower and they're still falling today.
Yeah, it's not just Britain and France. We're also looking at over in Japan, the Prime Minister Shigeru Ishiba said he will step down following weeks of calls for his departure. So there's going to be a change in leadership in that country as well. So it feels like G7 is very much struggling with these long-term structural debt issues. Louis, when you bring it back to the U.S. and you look at what's happening in the markets here, we know September historically is a very bad month for U.S. equities. It tends to be really weak because pensions and mutual funds are rebalancing their portfolios, retail buying tends to slow. But does that change because we are looking at a September in which the Federal Reserve will cut rates and perhaps, possibly, could cut rates by maybe even 50 basis points?
Yeah, well, the weakness in September is through September 15th. A lot of it's also everybody's paying their estimated taxes. But after September 15th, I think things will be fine. And we get the Fed rate cut. We get a dovish FOMC statement. You know, I think it would be great if they did 50, but, you know, they may not want to panic markets. You know, it really depends where market rates are. And then, but if rates are going to go down 150 basis points, as Scott Bessent asked for, we're going to need Europe to crack. And once they crack, then all hell breaks loose, and then you know, the 10-year will be, you know, 330.
All right, Louis Navellier, thank you so much for joining us. Louis Navellier is founder and CIO at Navellier and Associates, talking about these markets. And Alexis, we've got some big revisions to the jobs growth, at least for the 12 months to March of 2025. Some people are expecting a downward revision of 800,000.
Wow. Which means that the job market was a lot weaker than we thought, right? Heading into even the Trump administration. I'm sure the Trump administration will be quick to point that out.
I'm sure they will be. And of course, that'll increase the pressure on the Federal Reserve to move quickly at its next FOMC meeting on September 17th. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. So the S&P 500 continues to kind of flirt with the record we set last week, but only 3 of the 11 major industry groups are higher right now. After last week's weaker jobs report, the economic data, of course, this week, including the PPI and the CPI. And Eric Winograd, the chief economist at AllianceBernstein, says a 0.5% rate cut at next week's Fed meeting is certainly not out of the question.
I don't think it's in order, but I think it's on the table. I think that there are certainly scenarios where you could see them doing that, largely circulating around the inflation data we get later this week.
Right now, the Dow down 8 points, S&P 500 20 points higher. That's up 0.3%. 6502 on the index, so just right about that record. NASDAQ Composite Index right now up 174 points. That's a rise of 0.8%. 2-year yield 2 basis points lower. That's at 348. The 10-year down a basis point at 4.06%. Deals plenty this Monday. SpaceX, the Elon Musk-backed company that owns Starlink, has agreed to acquire wireless spectrum from Charlie Ergen's EchoStar. Price tag there about $17 billion. That's going to be in cash as well as stock. PNC Financial agreeing to buy First Bank Holding for about $4.1 billion. That'd be a trick.
Really big.
PNC shares down 1.2%. EchoStar shares, by the way, they're 17% higher. Target says some of its stores are going to be open at midnight, local time on October 3rd. They're going to sell copies of Taylor Swift's Life of a Showgirl album. A number of local stores taking part in the midnight opening will be about 500. They've yet to announce. It's going to be on their website.
First of all, buying a physical book, going to a store to buy a physical book.
It's a book?
It's unheard of.
I
can already see the line around the block.
Album.
Oh, it's an album. Yeah.
But also going to a physical store to buy an album?
Yeah, I don't get it.
This is a collector's item, guys.
I guess.
Yeah, you need the physical
Is there
copy.
going to be a poster that's included?
I would hope so. I mean, if you're standing in line at midnight, I'd like to think Taylor Swift is including a poster, but we don't know. You didn't hear it from us.
I don't know what the price tag is, I confess, but...
Get on that, John.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Alexis.
All right, Scarlett for Alexis Christoforous here on Bloomberg Intelligence. Paul Sweeney is off for the week. We want to also get a check on oil prices. You have Brent crude up about 0.75% at $65.98. WTI traded here in the U.S. is up about 0.6% at $62.24. And this after OPEC Plus agreed to raise production at a modest rate. So it kind of is counterintuitive why the oil prices would be rising on this news. So let's bring in Ellen Wald. She is president of Transversal Consulting, also a senior fellow at the Atlantic Council. Ellen, can you explain to us why it is that oil prices are moving higher when OPEC Plus is increasing production?
My guess is that there was definitely some talk that this could have been a larger production increase, and so they're actually kind of compensating backwards because it was expected that it might be a bit bigger. One of the other interesting things is that the group recently just put out a compensation plan. So a lot of the countries that actually agreed to the voluntary increase in production are also being tagged for overproducing their quotas. So they've established a kind of schedule for them to cut production, actually. So while they're putting through this formal production increase, it's actually not going to put very much more oil on the market other than really Saudi Arabia. A lot of these countries don't have that spare capacity, or they've already been overproducing and actually have to cut. So it's a production increase that isn't exactly what it has been said to be.
More than meets the eye, Alexis.
Yeah, exactly. So, I mean, look, we have an impending supply glut, right, of oil on the market. I know that this is just a modest increase, but it seems as though the mandate is shifting, right, for OPEC. Is this really more about boosting market share than it is about supporting prices, Ellen?
So I don't really see it so much as like a ploy for market share. I think that OPEC countries are very secure in their market share, particularly Saudi Arabia. Really, I think this is an opportunity for Saudi Arabia to put more oil on the market, which I think they want to do, and they do see a need for this. I know we're all talking about this oil supply glut, but OPEC's actual forecasts are not nearly as, they don't see as big a supply glut as a lot of the other forecasting agencies. So if you kind of look at this in line with what OPEC is saying, there's not actually as big a supply glut as is feared. In fact, apparently a lot of countries there already is more oil on the market than the official numbers are showing. So we may not really be in for as dire a supply glut as we believe to be. Of course, a lot of that depends on economic output, economic progress. In many areas, including China. It also depends a lot on Russia, and I think that this is also potentially a way of responding to Trump's new sanctions and tariff policies about Russia, because Saudi Arabia wants to have enough oil to supply those countries that are either going to be cutting back on their purchases of Russian oil or are already not purchasing Russian oil, and so they want to make sure that there's enough oil where they can supply them. So while I'm not sure I would say that they're fighting for market share, they're looking at maybe shifting their customers from one area to another.
That makes a lot of sense. Thank you for explaining that. Ellen, one detail that really got my attention was the fact that this was an 11-minute meeting on Sunday, which feels like it was perfunctory. What does that suggest to you in terms of how open these discussions and these conversations among OPEC Plus members are?
Oh, I think this was definitely a Saudi Arabia says, this is what we're doing, guys. Hop on your Zoom and let's all just confirm it. Because one of the things about OPEC and OPEC Plus is that it operates by consensus. So everyone has to agree. It's not like they can just take a vote and majority rules. Everyone actually has to agree. And so that means a lot of times the decisions are coordinated beforehand. So there's a lot of, WhatsApp and signal chatting amongst the ministers before they actually step onto that, get on that Zoom and kind of affirm what's already been agreed upon. And I do think this is mostly Saudi Arabia saying, look, we're going to put more oil out there, and the rest of you guys need to step up and cut your overproduction, and we'll kind of give you a little bit of wiggle room by increasing production for everyone, but this is what it's going to be. And I think that in this case, it was really hard to say no, because this is all voluntary anyway. And I wonder when we do actually see the numbers for who's producing what, if they will actually conform to this compensation plan, or if they're just going to continue in their overproducing ways.
And Ellen, just want to talk about the impact of lower interest rates on these big oil companies, because we could be very well entering a period of lower interest rates from the Federal Reserve. So just connect the dots for us on how that might affect oil.
Sure. Well, a lot of oil companies, especially those in the U.S., cite higher interest rates as reasons for lower revenues. In fact, and this is not limited to just oil companies. We're also talking about lots of companies in energy, natural gas companies, utilities alike. And so I think a lot of them are concerned about expansion plans and going through with these with higher interest rates. If interest rates are lowered, I do think we'll see companies that know that they need to expand, or they need to, make infrastructure changes or do infrastructure upgrades. I think they will start to, take advantage of those lower interest rates, and maybe we'll see more of those projects get started, despite an atmosphere of low prices. So we could have low prices and see some projects getting started, because by the time those projects start putting out oil, prices may very well be higher. We may be in a different part of the cycle, but they want to take advantage of lower interest rates, particularly if there's a sense that could change with the new administration. So I think we should look for that.
Ellen, very quickly, does this put the lower interest rates, the OPEC Plus modest increase in production, does this put U.S. shale drillers in a better or worse position?
That's a really good question. I think it really does depend. We're at very high levels of production, but there's a very big sense that this is it. This is the top, and it's going to be falling down. I think that we've seen some big companies announcing they're going to be laying off people and consolidating. So I do think we need to watch that space carefully. We could definitely be seeing some pullback in production.
Ellen Wald, president of Transversal Consulting and senior fellow at the Atlantic Council, on the latest from OPEC Plus. Oil prices slightly higher, almost by 1%. From New York, this is Bloomberg Intelligence on Bloomberg Radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
10:53 Wall Street time. I'm Alexis Christophers along with Scarlett Fu. You're listening to Bloomberg Intelligence, and we've got a big bank merger to talk about here this Monday. PNC agreeing to buy Colorado's first bank for about $4 billion. This is a big push by PNC to really go coast to coast. And here to break it down for us is Herman Chan, Bloomberg Intelligence's senior analyst for U.S. regional banks, joining us live here in our New York studios. Herman, good to see you.
Thanks for having me.
First off, I'm just wondering, are regulators going to be okay with this? Because the combined company is going to hold 15% of deposits in, what is it, Colorado?
Yeah, in the Denver market. So that was a real push for this deal in particular. But the regulatory landscape has been really great for banking and getting bank deals done. That's why you've seen some more bank deals over the past couple months. You saw Huntington, which is based in Ohio, go into Texas for Veritex. And you've seen a merger of equals in the Southeast with Synovus and Pinnacle. And this is sort of like the third large regional bank deal over the past couple months. So it just sort of signals that the Trump administration is really open for bank M&A.
And this is not PNC's first attempt at really expanding its Colorado presence. It had previously sought to open 16 locations in Colorado. Why is Colorado such a hot market for PNC?
Right. I would take a step back and sort of highlight that the PNC, which is mostly in the Northeast, Mid-Atlantic, Midwest, that they've expanded across the Sunbelt states and Colorado with the 2021 deal for BBVA USA. And they sort of double down on those markets with this expansion plan to grow organically by opening up new branches. And this deal today that they announced really sort of supports that growth and accelerates it in Colorado and in Arizona.
So Herman, you're a specialist here in U.S. regional banks. This is your sweet spot. So I'm just wondering, as you look out onto the landscape now, who might be the next takeover candidate? Who might we be talking about in the not too distant future?
Yeah, so you've seen some of these deals where these slower growth Midwest banks grow into areas like Texas, Florida, Colorado. So the banks that are sort of smaller in size, and we're talking about the first bank's about 20 billion in assets. So banks of similar of that size in these higher growth markets are really attractive to some of these larger institutions.
So with this purchase, PNC's total assets approaches $600 billion. It will bring it closer to the #1 regional bank, which is U.S. Bancorp. Is U.S. Bancorp still a regional bank, Herman?
Yeah,
it is?
I would say there are 3 super regional banks, and I would put PNC, U.S. Bancorp, and Truist, where they're sort of below that 750 mark, but larger than your typical regional bank. And they PNC now is a coast-to-coast lender, and have operations all from the Northeast all the way down to Florida, Texas, California. So you can't really call them a regional bank at this point. I would view them as more super regional.
And I want to tie it back to the Fed next week and interest rates, because don't all roads really lead there at this point? And
That's right.
Want to talk about what, again, if this is going to be an environment of lower interest rates for the foreseeable future, what is this going to mean for the banks, but especially these smaller regional banks? Because I'm thinking it may even squeeze their profitability more.
Yeah, it's interesting because we had a few Fed rate cuts at the end of last year, and the regional banks that I cover were able to navigate that pretty well. They were able to keep their net interest margins, which is a key metric for profitability, fairly stable. And that's one of the reasons why they've been able to do that, is they've been able to lower their deposit costs, which was one of the things that really is a key metric for banks to really show top line growth. On top of that, lower interest rates could help loan growth. You've seen some companies like Rocket's Mortgage be very ebullient for lower interest rates, and so that could help improve some of the demand for lending, and that's something that we're seeing so far over the first half of the year.
So they'll make it up in volume. What they lose in profitability, they plan to make up in volume.
They can make it in volume. You'll see some dents in like the rates that they charge for loans, but they'll also make it up in volume and lowering their funding costs.
When you look at the landscape overall of M&A in the banking sector, it feels like we've been waiting for something to happen for a long time, and maybe this is kind of the first domino that falls. Yeah. Will the big banks, and I'm talking about the JP Morgans, the Bank of America's, Wells Fargo's, will they play any role in this consolidation?
They're already too big. So there's they are prohibited from doing such deals because they just have dominant market share in their markets. One thing that we did see during the height of the regional banking crisis a couple years back is that JP Morgan bought First Republic in an FDIC failed bank acquisition. So if in the sense that if we do get to a place like that, that's when the big banks can play. But in a straight M&A type scenario,
to clean up messes, they can clean up
messes, but they can't outwardly buy a bank at this point. They're just way too big.
And just what about the consumer out there only shopping for the best deal? You know, it used to be that these smaller regional banks would be the place to go for the better CD rates, right? Or a more friendly mortgage terms. Is that still the case in the 30 seconds we've got?
Yeah, sure. So that's what really great about these markets that PNC is going to, where they can have really dominant market share in Denver and Arizona, and just having that marketing and having the branches really helps with deposit taking and helping your consumer out.
All right, Herman. Herman Chan, Senior Analyst for U.S. Regional Banks for Bloomberg Intelligence. Always a pleasure speaking with you. Thank you so much. Now, for our listeners in the U.S., a reminder that you can listen to us on satellite radio on SiriusXM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121, presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning from the Bloomberg Interactive Brokers Studio in our headquarters in New York City. I'm Scarlett Fu here with Alexis Christoforous. Paul Sweeney is taking the week off. Coming up on this second hour of Bloomberg Intelligence, we've got Stephen Carroll of Bloomberg Daybreak Europe to give us the latest on the French no-confidence vote. The speeches are happening. The vote is scheduled for shortly in the next couple of hours, and then we'll get the vote count. And after that, Michael McKee speaks with us on the U.S. jobs markdown. There's going to be a revision of jobs numbers tomorrow. So what does that do in terms of setting the stage for a Federal Reserve interest rate cut? Anurag Rana will be joining us after that to talk about Apple's $450 billion rally facing some scrutiny before its big product launch on Tuesday. And following that, Lisa Nee, Managing Partner, Head of Real Estate at Eisner Ampner, will give us an update on the commercial real estate sector. As well, we've got John Butler to talk about Elon Musk's SpaceX agreeing to buy EchoStar Spectrum for $17 billion. All that coming up, but first, Sean Tucker has our Bloomberg Business Flash.
All right, and right now we're looking at the major stock averages. They are advancing. In fact, the S&P 500 at another record if this keeps up. Just wanted to bring you some breaking news. This is from the Supreme Court. The Supreme Court Justice, the Chief Justice, letting President Trump oust one of the FTC commissioners. This happens to be the Democratic commissioner who was reinstated to her job after an appeals court ruled that she couldn't be fired except for cause, of which there was none, and the Chief Justice effectively reversing that. Again, the S&P 500 right now up 23 points, a rise of 0.4%, 65.05. Again, a record if this holds up. A best performing individual stock in the S&P 500 belongs to Broadcom. It's up over 4%, adding to the Friday gains and the record close that we saw for Broadcom last week. Meantime, as the Fed meeting approaches, this is next week, Ellen Zentner at Morgan Stanley is looking for rate cuts.
It's easy to look at these numbers and say, we don't need to be as restrictive. We can make some modest changes here. But one cut's not going to be enough. Two cuts is not going to be enough. But more than a handful of cuts is going to be too much because we are set for some reacceleration next year, early in the year.
And right now, shares of EchoStar 15% higher. SpaceX, Elon Musk-backed company that owns the Starlink satellite network, agreeing to acquire wireless spectrum from EchoStar. They're going to pay about $17 billion stock and cash deal there. Dick's Sporting Goods, they've completed the acquisition of Foot Locker. Dick's Sporting Goods, those shares up close to 3%. The Wizard of Oz, drawing 4,000 to 5,000 fans to the Sphere in Las Vegas 2 or 3 times a day, the movie. They're paying an average of almost $200 a piece.
Wait,
now,
to watch a movie?
To watch a movie, but it's also sort of like an not interactive, but it's more of a theme park ride as a movie, because when the tornado blows, you feel the wind, all that stuff.
The chair shakes and all of that.
Why am I doing this? Because it is a story. The original story was actually more about monetary policy than anything else, about expanding the monetary base.
The Wizard of Oz story, you mean?
Yes, from gold, not just gold, to silver. And Dorothy, in the book at least, Dorothy's slippers were not They were silver.
Ruby, they were
They were not
silver.
ruby sapphires.
Well, that changes the whole thing for me, John.
Yeah, it's all about monetary policy. Everything comes back to monetary
At
policy.
Bloomberg, it does.
At Bloomberg, it certainly does.
We
Well,
check
well
the
said.
markets and other boring stuff too, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. You didn't know that? Come on.
I knew that, but I like how you brought it all back. We have to come full circle
So
here.
we all have to go to the Sphere and watch it.
All right, let's move on and take a look at some stocks that are on the move today. I'm Scarlett Fu with Alexis Christophers, and we're joined right now by Bloomberg's Christine Aquino. And Christine, T-Mobile on the move, but down.
Absolutely, Scarlett. So if EchoStar is the winner of that SpaceX deal, T-Mobile is one of the losers today. So T-Mobile ticker TMUS shares down more than 3% at the moment. And that is because it's probably going to be the main competitor for EchoStar if it does expand its footprint in the wireless space, right? Because T-Mobile has the largest market share in that space, so potentially more robust competition. Definitely not good for that stock. But we do have some, the T-Mobile it's not doing too shabby with its own acquisitions, right? Last week, we did get updated customer financial guidance with regards to its deal to acquire U.S. Cellular's wireless operation. So it's making moves in that space as well. And so T-Mobile telling us last week that the integration is now seen to be achieved in 2 years, down from 3 to 4 years. So that's an improvement. And costs to achieve synergies expected to be about $2.6 billion. So T-Mobile making moves in that space as well. It's just that the news today is definitely negative for her.
Well, you know what? Not negative for United Health, though, right? I mean, investors in United Health have had a tough go of it. I mean, the stock is down something like 37% year to date. But it's up today. Tell us why.
Absolutely, Alexis. So yeah, United Health, ticker UNH, shares are up a little bit more than 1% at the moment, 1.1%. And so we do have news that it's going to investor meetings this week, and it intends to reaffirm the guidance for adjusted EPS for fiscal 2025. So that is coming from a little bit of a position of weakness, though, because remember last month they did reinstate guidance for about $16 EPS, adjusted EPS. They withdrew it in May, and now that they've reinstated it, it's almost 50% below the initial view. But, that's being taken as a silver lining. At least they reinstated the guidance. The other reason why UNH is improving mostly is because of the Buffett effect. Because we remember in August, we did get news that Warren Buffett's Berkshire Hathaway revealed that it bought a stake in health insurer in the second quarter. And of course, it enjoyed a 24% increase that month.
Buffett effect. Everyone wants the Buffett effect. Let's also talk about AppLovin, because a lot of passive funds may soon be forced to buy that stock.
Absolutely, Scarlett. So AppLovin, ticker APP, shares up more than 11%, and so enjoying the benefits of S&P 500 index inclusion. So that's also one of the companies that has been granted entry into the benchmark. And, they're sailing pretty smoothly this year. We did get their second quarter results last month. Those beat estimates, and Bloomberg Intelligence weighing in that its third quarter sales guidance implies 10 to 12% growth, which is more than a consensus estimate for 8%. And some of its features, such as the self-service ad dashboard and AI-powered user acquisition, is proceeding according to plan. So now that it's also being included in S&P 500, another jewel to its crown.
All right, Christine Aquino, thanks so much for bringing us those 3 stocks today. Appreciate it. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Big day for France, folks. It's facing more turmoil with its government on the brink of collapse ahead of a no confidence vote. What's it going to mean for not just the French stock market, but for the global markets? We want to bring in Stephen Carroll now, Bloomberg Daybreak's Europe host, for more on this. Stephen, before we really dig in, just give us the timeline of when we can expect this no confidence vote.
Yes, we've got about 5 speakers by my last count left in the list of party leaders that are giving their point of view ahead of the confidence vote. Then we're going to hear again from the French Prime Minister, François Bayrou. So we're thinking at the moment, it looks like we're about 2 hours away from that vote starting. It takes about 30 minutes for the deputies to file into the chambers around the main parliamentary chamber in the National Assembly, where they'll cast their ballots, and we should have a result after that. So we're looking at about 1:30 Eastern time for that result. So about 2.5 hours away at the moment, but things can change before then. We are seeing some people not use all of their allocated time in Parliament, which is speeding things up a little bit at the end as well. We've heard from the Prime Minister. He stood up in Parliament earlier and laid out his position again, very much focused on the problems France has, needing to bring down its deficit, needing to get its debt under control, and in his words, not to be drowning in this sea of debt that he sees France currently in.
Now, last year, Stephen, he managed to convince some moderate left-wing lawmakers to back his plan. Is there any chance at all that, he might find folks who can support him?
I'm afraid the politics has trumped the economics here. He has been, the Socialist Party, the centre-left party, has been really the focus of quite a lot of the speculation, because they are the ones seen as most likely to join the centrist bloc and give them a chance of being able to get measures passed. As you say, they were key to getting the budget passed the last time for François Bayrou, just after he took over as Prime Minister, when the previous Prime Minister was felled in a no-confidence motion. This time around, the Socialists have very much said they're available and willing to lead the next government if Emmanuel Macron would like to pick one of their ranks to be able to do so. But they have their own budget plans, which involve less in terms of tax cuts or tax rises and spending cuts in the short term. They have measures in their proposal, like a wealth tax on fortunes of over 100 million euros. They want their plan to be the template for the budget, and they've made some promises about how they want to go about doing that, building alliances in the Parliament. For the moment, they are expected to vote against this motion, and they're part of the reason that we are expecting the government to fall in the next couple of hours when that vote goes through.
So, Stephen, what's it going to take to have France tighten its belt? Is it time to call in the International Monetary Fund? Could that be happening in the not-too-distant future?
Look, we're not there yet, and I think I spoke to Jean Dalbas from Bloomberg Economics about this on radio earlier, and he was saying we're not in a fiscal crisis yet. Things are creaking, as they have been for quite a while, it's fair to say, in the French fiscal situation, but there is time still to be able to right the ship before they run into real crisis territory. I mean, we're still looking at bond yields on the 10-year about, 78 basis points wider than Germany, which is not as wide as we've seen in the past. It's certainly not good, but it's not crisis levels. It got to around 90 last December when Michel Barnier was being ousted as Prime Minister. So we're not seeing alarm bells yet, and we're still talking about borrowing costs way off the 7% danger level, which used to be what we thought about in terms of crisis during the era of the Eurozone sovereign debt crisis. So not at crisis levels yet, but none of the signs are pointing in the right direction. And the point that François Bayrou has made over and over again over the coming weeks is the cost of servicing France's debt is getting higher and higher, and that is the part that's going to eat up more of the budget, which means that if you don't squeeze the spending at this stage, it's going to mean much more pain down the line. And this is at a time when people in France are worried about cost of living issues, they're worried about funding for education and for healthcare. This is something that people want money to be able to go into, but François Bayrou's argument is, well, you can't have that if we're spending so much money on servicing our debt costs.
Yeah, a lot of big structural problems to resolve, which probably won't get done anytime soon, but it's something we'll continue to monitor. Stephen, thank you so much. Stephen Carroll is the host of Bloomberg Daybreak Europe on the latest on the French no-confidence vote. The vote has not yet begun. Speakers are still speaking right now. Let's come back to the United States, because we just got a jobs report last week, Alexis, and you would think that we're done with jobs data for a while, but no. That's not the case. Michael McKee is here with us now. He's the international economics and policy correspondent. And Michael, we're going to get a recasting of some of the jobs data up until March of 2025. And the recasting is going to leave us looking a lot worse off.
Yeah, that's the expectation. Now, to give you a very quick explanation of this, once a year, the Bureau of Labor Statistics re-benchmarks its labor numbers with tax information, Social Security withholding and things like that, so that they can update the numbers to be more accurate than what they've put out in the previous reports. And each of these re-benchmarkings encompasses the time period a year to the March of that year. So this will encompass April of 2024 to March of 2025. This will be a preliminary release tomorrow by the BLS of approximately how many jobs will be different higher or lower than the BLS had already reported. Now, last year, it was 800,000 lower, and these will be in January spread out over the months, but the feeling is that we're going to see another big number, maybe 600 to 800,000, and that will certainly catch the White House's attention.
Yes, I would imagine it will. So we can expect more criticism of the Bureau of Labor Statistics. And I would imagine President Trump would point out that these numbers really reflect before his administration took over.
You would think so, because it would include all but 2 months of the Biden administration. It's the first 2 months of the Trump administration. So it would seem like good news for the president. But remember, this president is on a crusade against the BLS. So he may well take this as another sign that there's something wrong and people are doing political shenanigans behind the scenes there, which no Wall Street economist or statistician, anybody who knows anything about this, would believe. But that's what the president wants you to believe at the present time, that there's something wrong with this data.
I mean, in terms of there's something wrong with this data, one issue that economists have had is the fact that there's a declining response rate consistently to a lot of the data that the government collects. And I'm not sure that that's something that is a political problem so much as it's something that has evolved over time, especially during the pandemic and afterwards. What kind of solutions are being bandied about in terms of how to address that?
Well, one thing to remember is that the response rate that we're talking about is to the first release. So in terms of the August jobs report, it was responses received by the end of August from companies, and that has dropped in the 40 to 60% range from a much higher 70s and 80s before the pandemic. However, these numbers are revised twice, and by the second revision, the third month, they're back up to 95%. So it's not that the response rate has dropped, it's that respondents are getting slower at sending in their responses. And so there have been a number of efforts made by the BLS to try to update the way they do that. They now have most of these responses coming in via computer, electronically filed by companies. They simplified the reporting forms and requirements to make it easier for companies to get things in. And what seems to be happening is that smaller companies are the ones that are slower, and they may just not have the people, and it's been busy and it's been crazy, and ever since the pandemic it's been very difficult for a lot of companies to get their numbers in on time, but they are getting them in eventually. So there's not a whole lot the BLS can do about that. There are other ways they can statistically adjust the numbers, but the problem is they need to test this first and have basically parallel systems running to know that the new system would work as well as the old system before you switched over, because you wouldn't want to have a big, huge break in the data series that would mean we can't trust any of the data going back to who knows when.
But Mike, do you think it's realistic that these numbers may move to being seasonal as opposed, I'm talking about the monthly jobs numbers, but may they not be monthly soon enough?
No, they're going to be monthly, even though our first month numbers may be a little bit less reliable in terms of what the longer term numbers are. People who trade, people who make policy, want to have numbers on how the economy is doing, and the jobs report is one of the key reports each month, and so there would be a lot of pressure to keep it going, and people just have to recognize that they're going to have to live with the imperfections of the number. Yep. But as we've always said, you know, the Fed has to deal with the numbers that it has, not the numbers it wishes it had.
All right, we're going to get those numbers tomorrow morning. Mike McKee, Bloomberg International Economics and Policy Correspondent, thanks so much for that preview. And I'm Alexis Christoforous, along with Scarlett Fu. You are listening to Bloomberg Intelligence on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. And this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Major stock averages, they are higher right now. Broadcom, that's gaining 3.7%. In fact, it's the best performing individual stock right now in the S&P 500 and helping push the index to near a fresh record. The semiconductor and software company rose 9.4% last week on Friday. It closed at a record of just over $334 after it announced it had secured an AI order of about $10 billion. Wall Street continues to pile in bets that the Fed's going to cut next week with at least a quarter-point rate cut. Stocks rising in speculation the policy will ease. And then you have the deal of the day, SpaceX, Starlink, buying wireless spectrum from EchoStar. That's a deal worth about $17 billion in cash and stock. Porsche is launching the most powerful 911 to date, 711 horsepower. It's actually a hybrid. It's going to cost you about $318,000.
$318,000?
That's the basic starting.
No frills.
Right, no frills price, which is kind of the price of a house for a lot of people. But remember, you can't drive your house, but you can sleep in your car.
You know, you leave it to you, John, to come up with these little nuggets.
The 911.
So you're seriously considering it, right?
I mean, absolutely
that's
not.
Nothing for John Tucker.
I can see myself in it. That's more of a Matt Miller thing. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Alexis.
Go get your Porsche, John Tucker. Want to talk a little markets now. That's what we do here at Bloomberg. And, you know, the major indexes have been at record highs, near record highs, hanging out there despite all the uncertainty, the geopolitical issues, the tariffs. We could be looking at lower interest rates next week. What does that mean for your portfolio really in the fourth quarter? Let's bring in Nora Youssef. She's Senior Portfolio Manager at RBC Wealth Management to get her take on all of it. And Nora, in your notes, I liked what you said. You said, you know, look, returns in the past year have been good for equities, but you don't want investors to ignore fixed income. Why?
Exactly. You know, with stocks at record highs, they're getting all the attention. And I don't hear fixed income getting enough love. So I urge people not to sleep on fixed income portion of their portfolio while we're still at these over 20-year highs. It's best to lock in those elevated yields for as long as you don't think you're going to need the cash before that window of opportunity potentially continues to close on us. Otherwise, your cash will have some serious FOMO, and that is a technical term, as rates go down, and those money market and high-yield savings accounts will follow.
So, Nora, within fixed income, are you talking about treasuries or are you talking about credit, high-yield credit or investment-grade credit? Because there's a lot of concern that spreads are pretty tight and that perhaps signals a lot of complacency in the corporate credit market.
Yes, so essentially both. Now, of course, we'll see what the Fed decides to do next week. And what I'll say now that, wow, the markets are flying high, you know, as a reminder, markets are like a roller coaster. They're slow and quiet on the way up and they're fast and screaming on the way down. So I tell my clients, listen, when we're at these all-time highs, don't get too complacent, don't get too comfortable when we have a run-up like this. It's actually a great time to review your portfolio and the fixed income portion of it. Make sure you're covering the fundamentals, you know, and that there's no over-concentrations like in cash. Make sure your risk and time horizon are aligned and you're properly diversified. No, that doesn't correction-proof your portfolio, but it helps take some of the pain away. One of the biggest mistakes I see investors make is taking their eye off the ball.
What do you do with some hedges, like traditional hedges like gold, which is, we know, flirting with a record high? Has the boat sort of already left if you wanted to get in on that gold boat?
Like any other part of the market that's run up, you just want to make sure you're not over inundated and don't have an over concentration. As for the rest of the outlook of the year, my crystal ball is as crystal clear as yours, but it's reasonable to say that, listen, the next few months here, we're going to be the market's going to be trying to bake in what to expect in 2026 as tariffs set in and the $8 or $10 trillion of new investment from foreign countries and private companies reverberate into the U.S. economy. And as the developments for the one big beautiful bill set in, my business owner clients, they're eager to find out, what this nearly 900-page legislation means for their business. And I'm having constructive conversations with retirees, both on the fixed income side, equity side, but also on the planning side. Now that we know what we're working with, Social Security wise, deduction wise, tax bracket wise.
So let's dig into that a little bit more. As you have these conversations with clients about the one big beautiful bill, what has surprised them and you the most in terms of how much more flexibility or limitations it puts on their ability to position themselves?
Well, a lot of the conversations I'm having, they're relieved because a lot of their worst fears didn't quite happen, like losing all of Social Security they've legally paid into the system. So it's really interesting. And now that we have some certainty here, knowing that the tax brackets are going to be permanent, it helps make that forecasting so much easier just for individuals and businesses.
So let's talk a little bit more about what other conversations you're having with your clients. We talk about how you want to lock in these yields while the opportunity is there. We've also seen how a lot of younger investors, Gen Z, for instance, they are very enamored with the idea of really investing in companies or ETFs that pay a lot of dividends and hoping to use that as their income rather than working full time. And I'm wondering whether you see that echoed in some of the conversations you're having.
Yes, and being that we're in September and October is a month away, that could, if we're looking at the historical trends, present volatility and therefore potentially opportunity. Let's just say that the Scarlett and Alexis effect is a much better connotation than the September-October effect, with September being one of the worst performing months for the stock market. It's actually the only month of the year with average negative returns in the market. October, of course, in line with Halloween, is scary, and the trends tend to be that it's the most volatile month. Yes, there may be some opportunities here for people looking to, purchase their individual stocks or ETFs, perhaps at a producing dividend, sure. But I do warn investors be careful not to be overzealous here about the market timing. As the old saying it goes, it's about time in the market, but not timing the market. And it's important not to make some reckless, drastic moves, because we just recently saw, as a great example in April, had you sold at the low or not got in, you missed on the 25% run up of the market, which happened in about a 54-day recovery, one of the fastest in history. So you want to be measured and tempered, which will be hard to do with so much being thrown at the market in the just typical trend of October and September being volatile.
All right, Nora, thank you so much. Nora Youssef is Senior Portfolio Manager at RBC Wealth Management. All right, I'm taking a look at shares of Apple right now, down about 0.4% because tomorrow, Alexis, they're launching some new products, a new line of iPhones.
Yeah, I don't know if it's going to get me to run out and buy a new iPhone. It takes a lot for me to upgrade, and it can't just be the camera.
Or the better guts, right? Or a thinner body.
I don't know what it's going to take for Apple.
It's all incremental change. I think that's the issue. Exactly. Anur Agrana is technology analyst over at Bloomberg Intelligence, and he's joining us now to give us a sense of what the view is on Apple's stock as we head into this product launch. And Anurag, is this annual product launch usually a good thing for Apple's shares?
Not really, to be very frank. It has been a non-event for the last several years because the models have not seen a big upgrade. It's the same thing, looks slightly different. Maybe the camera is deeper, a faster chip, but as you said, it's not forceful enough for somebody to go out and upgrade their phones. In our experience, people upgrade their phones when either the battery life goes down or the phone actually breaks. So there are a handful of reasons why people upgrade, but we don't think that it is going to be that monumental difference. Although there's one new thing that one should focus on is, for the first time, they're going to come up with a new hardware change, which we haven't seen in a long while, actually.
So do you think, though, that the stock has more room to run, or has it sort of tapped out here? I mean, it added hundreds of billions of dollars to its market cap over the summer.
Yeah, but that has very little to do with the iPhone shipments or the release of a new product. There were two major incidences that happened in the last 6 months. One was Tim Cook going to the White House and basically making peace with the president and, talking about a huge investment in the U.S., which was a big overhang for the stock because the President Trump had talked about, Apple's, not playing or not making phones in the US, making them in India. So there's a bit of friction over there. I think that's been smoothed over. And the second big is the judgment from the Google case, where Apple gets a very big royalty payment from Google to have a search onto the iOS. And I think that judgment in the last few days is the second big catalyst. So I think it has a lot less to do with the iPhone or the fundamentals of stock, but two different characteristics.
And these are all external events that Apple doesn't have that much control over, right? The president's trade policy and what's happening with Alphabet and Google. In terms of things that Apple can control, its strategy on AI is still not really clear. I mean, anyone who did upgrade to the latest iPhone is not exactly using AI on their phone. What is Apple's strategy right now beyond its treading water and looking for something?
Yeah, no, I think you're absolutely right. See, last year around this event time, we thought there could be a faster refresh cycle because of AI. But those AI features never really came up. I mean, in terms of Siri being a lot more smarter. So you're absolutely right about that. Apple's behind in that case. But one of the things that we are hearing now is Apple's looking for partners like Google's Gemini or Anthropic or other large language providers to embed more AI into their iOS or the ecosystem. They already have a partnership with OpenAI where if you are looking for a query and you can't figure it out, it goes up to the cloud and you can get OpenAI's help. I think that's Apple's strategy, is to get help from other third-party providers who are specialists in AI models and then embed that into their services. If that comes in over the next 12 months, that can help some of the, you could say, unit shipment refresh, because when we look at the data, roughly around 80% of the phones are still not what we call AI ready or have the faster chips to enable those kinds of processing or transactions.
So I guess, Anurag, I shouldn't hold out great hope that Siri is going to get much smarter. I'm so frustrated, every time I ask Siri a question.
I don't even turn Siri on.
I'm with you.
Give us an example of the kind of questions you're asking.
Well, that's between me and my Siri, John. But Anurag, what can we expect tomorrow in terms of the unveiling of the day? Is there that one product folks are going to be talking about?
Yeah, Mark Gurman's already reported on it. He does a phenomenal job of telling us what's happening even before the event. And Apple's going to launch a thin model, like the Air, or it's going to be much more slimmer than the regular iPhones. And the big question is whether that's going to resonate well, especially in areas and emerging markets. Because fair, it won't have the fastest camera, the best camera that's out there yet. But the slim feature may be enough to at least go out and have some people upgrade.
Right.
When I look at consensus estimates right now,
Anurag?
The consensus looking at only a 1%.
We got to leave it there, Anurag. Anurag Ran is technology analyst over at Bloomberg Intelligence on the latest Apple iPhone launch. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And I just want to bring you some breaking news across the Bloomberg, coming across as a headline. The Supreme Court has lifted the racial profiling ban on the Department of Homeland Security. This applies to Los Angeles, at least for now. Basically, they're going to allow racial profiling in Los Angeles while this court case proceeds. Right now in the markets for the 11 major industry groups in the S&P 500, they are higher right now. Information technology, the leader, and that's home to AVGO, Broadcom, building on its record close from Friday. So we're hovering right around the record close with the S&P 500 right now. Ahead of next week's Fed decision, we're going to get several inflation reports this week, as well as the jobless revisions, as we heard from Mike McKee. Terry Wiseman at Macquarie says it will take a big surprise to keep the Federal Reserve from cutting.
I mean, there's, of course, a slim chance that the CPI report for August comes out and it's high. It may be high, but even if it's marginally higher than expectations, I don't think it will cause the Fed to not cut effectively or hold back.
Some of the individual shares on the move. The deal of the day, EchoStar shares, ticker symbol SATS. That is soaring right now, just about 13.5%. The satellite broadband company agreed to sell wireless spectrum to SpaceX Starlink. The price tag there, about $17 billion in both stock and cash. And Planet Labs, the ticker symbol there, PL, that is soaring after the Public Earth Imaging Company boosted its revenue forecast for the full year. Once again, S&P 500, 21 points higher, 65.02. The Dow Jones Industrial Average up 56 points, and the Nasdaq 100 right now up 177 points. That's a rise of about 0.75%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett, Alexis.
Thanks very much, John Tucker. We appreciate it. Want to talk a little commercial real estate now. Call me crazy, but I actually get excited, Scarlett, about commercial real estate. Right, John? Because I think it tells us a lot about the broader economy when we look at how it's doing.
Yeah, it's long-term investments, and so they don't move. Things aren't reacting to day-to-day movements and expectations on interest rates. But once rates are moving down, then you can expect slow, gradual movement, but sea change in how people perceive it.
So where are we now, right? After years of high inflation, limited growth, is the commercial real estate industry coming back to life? We wanted to bring in a pro. She's here in our New York studio, Lisa Nee, managing partner and head of real estate at Eisner Amper. Lisa, thanks so much for being with us. Just in my little cosmic world here in Midtown East of Manhattan, I'm seeing storefronts that had gone empty for so long now having tenants. I'm going to call it a mini upswing. Am I right in saying that?
Well, thank you for having me. And yes, I get excited too when we talk about commercial real estate, so we're in the right group. So office in New York has definitely taken a new surgence again. And so I think I made a prediction at the beginning of this year that's saying by the end of 2026 that we were going to be pretty much at capacity for New York City, and vacancy for office is definitely moving down. And so rents in New York City are about little under $75 a square foot, and the level of volume is really close to 2019, which is really amazing when you're seeing that.
So pre-pandemic levels.
Pre-pandemic levels is the amount of volume that we've seen in office leasing in New York City. And you can be excited about other cities, San Francisco as well. We talked about earlier in the year with AI dollars being spent. So when you look at $55 billion of AI that has been spent in San Francisco, rents there are about $72 a foot. So for I know that's really exciting. So for Class A buildings in San Francisco area, that's where the money's going. Now, whether we have a bubble or a boom or what's going on with AI, it remains to be seen. But initial reports are that people are excited and they do see productivity with AI dollars being spent. So, the excitement, I'm excited. It's there. It's real.
We can feel it from you, Lisa. So it makes sense that in San Francisco it's an AI story. What's the story here in New York? Because the call for folks to return to work, the city being busy once again, has been in process for a couple of years now. Is there anything that kind of flipped a switch?
So it's, again, what's here in the market in demand. And so there wasn't a lot of office being put back into the market. And so now people are absorbing those office units are there. We always know New York is still a hub for financial, for entertainment, for all the, it's still a capital of the world. So people want to be here. They want to live here. They want to work here. And they want to be in that environment. So just creating that excitement around New York again is really going to help with the vacancies and bring back the retail and the retail experience to life, which what you noticed earlier on.
Yeah, I mean, there's a big high-rise going up not too far from where I live, and I'm just wondering who the anchor stores on the bottom will be, because sometimes those buildings go up and those anchor stores remain empty for a long time.
So most of those projects have the anchor tenants pretty much in place when they're penciling or they're mapping out the deals. And so making sure that it really does create that energy and that vibe for that, for the multifamily. And again, when you look at multifamily, you really have to make sure that you're able to sustain the construction costs and the zoning. And so a lot of goes into those projects to make sure that those will really work. And everybody wants it to work. That's why we have the City of Yes mandates now and things are going through. So really the excitement, I think, is there. And I think it's just, as you had said before, it's the long-term planning. It's not going to change overnight. It's really knowing that where we're going to be in the next 5 to 10 years with some of these properties.
But the rules of the road have changed, right? You had the One Big Beautiful Bill, which, you know, the president is a former property developer and in many ways still is a property developer. So, I mean, he knows what the industry wants and likes. What did you see in your industry from that bill?
So the real estate industry fared fairly well with One Big Beautiful Bill. There's lots of incentives for both affordable housing, for low-income housing credits that were awarded by the federal government. What the states do are now a different story of how they award those experience points for affordable housing. Same thing with qualified opportunity zones, where there is, in the One Big Beautiful Bill, there are incentives to go for some of these economic zones and create new spaces in there. Things with bonus depreciation. So the incentives are there in One Big Beautiful Bill. It's whether or not the states and the federal governments are going to be able to work together to make sure that developers can still build in those areas that really, really do need economic development and growth.
You talked about Class A buildings a moment ago. I know Boston has been having some real struggles there. And what happens to the non-Class A buildings, to all the other buildings that would need to be retrofitted, or that people, they just don't seem that desirable anymore, given these new buildings coming up with amenities?
So I was in Boston maybe a month ago, and that Seaport District looks great. It was thriving and vibing and doing really things. So the A market, as you said before, is going to fare very well. The B and the obsolete buildings are really going to be the ones that struggle, and that's what's going to remain to be seen is, does the capital markets, which there's a lot of money out there, where are they going to put those investments to put back into the marketplace? Is it going to continue in the Class A, or is somebody going to come and try to revamp those Class Bs and the obsolete buildings, or what are we going to do with them as those properties? And that's a great question, and it'll remain to be seen as in the next 7 to 10 years of areas. But that Seaport District is really exciting in Boston.
I was there just dropping off my son to college a couple of weeks ago, and we went for some seafood down by the seaport, and it was bustling, and it was hard to get a reservation.
Yeah. I mean, that feels like every city these days.
I'm telling you.
Lisa, how much of your day or how many of your conversations focus around data centers? Because that is an area, you're smiling already, so I can tell it's probably, would you say more than half?
I wouldn't say more than half, but it's definitely an area of interest of where people are dedicating to time to see where it makes sense, if they should be investing in data centers, building data centers. It's interesting, we talk with real estate about square feet, everything's square foot, but on data centers, it's on energy consumption and how much energy usage it is in those centers. So it's a little bit different of a mind shift and change. And the places or the regions that can house these centers are much different than when we're talking the downtown Boston. And so really it's an entirely different niche within industrial, figuring out to make sure that if where dollars get allocated and the excitement around those data centers and energy, I have to make sure I say it, energy consumption.
In the 30 seconds we have left, the most affordable commercial real estate market right now?
Oh, that's a tough one. That is a tough one. I think when people are looking, everyone still likes the Sun Belt and the mountain regions.
Sure.
Is still, because again, when we talk about affordable, it has to be where people want to be. And so you need to look to see where people are moving towards and where they want to be around. Interest rates matter, because when we talk affordable, it's what we're going to see what happens, what the feds do in this month, how many basis points that they reduce interest rates, and affordable definitely goes hand in hand with we're seeing that. And we didn't talk about tariffs, thankfully, but both
That's
are
for next time,
uncertainty.
Lisa.
Yes.
That's for next time. Lisa Nee, managing partner and head of real estate at Eisen Amper. Thanks so much for stopping by and give us a reality check on commercial real estate. I'm Alexis Christophers with Scarlett Fu on Bloomberg Intelligence.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
And it is 11:53 on Wall Street. I'm Alexis Christophers with Scarlett Fu. Paul Sweeney has the week off. And more deal making for Elon Musk. His SpaceX has reached a deal worth about $17 billion with EchoStar for spectrum licenses that it's going to use to beef up its Starlink satellite network. We want to talk more about this deal and what it means for both companies and the stock of EchoStar, which is doing quite nicely today. I want to bring in John Butler, Bloomberg Intelligence senior telecom analyst. He's joining us from our Bloomberg Princeton office. John, good to see you. Let's just talk about what this deal is going to allow SpaceX to do that it can't currently do.
So the key to this deal, Alexis, is a spectrum called AWS-4. So if you look at Starlink and its rivals in the satellite space, they all hold spectrum, but they're not allowed to offer wireless services over that spectrum. AWS-4 spectrum, according to the FCC, can be used flexibly. It's called flexible use spectrum, meaning the satellite providers can offer anything from mobile services to satellite data downlink services, video, whatever. It's open use spectrum, if you want to think of it that way. And so Starlink getting its hands on this key spectrum will allow them at some point in the future to potentially enter the wireless market as a competitor to AT&T, Verizon, and T-Mobile.
So EchoStar's shareholders seem to like this deal. The stock is up about 14% right now. What are they going to do with the proceeds? What will EchoStar do with the proceeds of the sale?
So for EchoStar, it's a very good deal as well. They have really struggled to get their wireless service off the ground. They've been building this 5G wireless network and have a relatively weak prepaid brand called Boost, and they've really struggled there. So this brings in much needed funds for them to pay down debt. They've been a bit stretched on that front, over leveraged. And, you know, this deal together with a deal a couple of weeks ago with AT&T is going to bring in billions of dollars to reduce debt. That's number one. And number two, it brings in fresh capital for them to invest in the business. And I have a feeling they're probably going to take a step back and reevaluate the strategy here based on the fresh funding and decide what the best avenues of growth may be going forward.
And I'm wondering if this is going to satisfy the FCC, this deal, because I know that they were sort of on EchoStar's case, if you will. They wanted them to sell some of their airwaves as the company looks to roll out its 5G technology. I know they sold some spectrum licenses to AT&T recently. So do you think this is going to sort of take the FCC off their backs?
I do. I mean, I think Starlink was working with the FCC. They had written a letter about EchoStar's underuse of the spectrum. Starlink obviously really wants to get their hands on it. And I think the FCC really took their side on this one. I think they understood that EchoStar, being the only owner of this flexible use spectrum, had not really put it to use to date. So in their view, it was being underutilized, and being such a critical asset, felt that, you know, a sale might make sense. And so they really, EchoStar really got into it with the FCC, trying to protect those licenses. But in the end here, I think if you want to think of it this way, the FCC won the day. And net, I think it's a good deal for both EchoStar and Starlink and the FCC.
Now, I know SpaceX or Starlink had a deal with T-Mobile, right? How is this spectrum acquisition with EchoStar different, if at all? So I think ultimately Starlink could go from being a partner with T-Mobile to being a competitor of T-Mobile's. As I said a moment ago, this spectrum opens the door for them to get into wireless directly without having to partner with a terrestrial carrier. The current deal with T-Mobile basically has Starlink. I think the best way to think about it is they're almost like a tower company. They're providing the space-based cell sites, if you will, to carry T-Mobile traffic, and they get paid a fee for that, but they're not earning the level of profits that you could as a direct carrier. So down the road, Starlink, understanding this, wants to enter the cellular business directly. They have a lot to do before that happens, but I think it longer term puts the deal with T-Mobile in jeopardy. And in the remaining seconds we have, is $17 billion a fair price for these spectrum licenses, do you think?
You know, spectrum's a very illiquid market, so it's tough to gauge valuation. But in my mind, I look at it as a fair price, given the potential, again, for Starlink to enter this huge market down the road. And they're very well capitalized, as you know. So I think those two factors together probably make it a good deal for them.
They are well capitalized. All right, John Butler, Bloomberg Intelligence Senior Telecom Analyst, thanks so much for talking through that deal with us. We appreciate it. And for our listeners in the U.S., a reminder that you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. All right, taking a look at the markets once again, we have a green on the screen here with the NASDAQ Composite leading the advance up 171 right now. Taking a look at the treasuries, the 30-year yield at 4.70. We've got the 10-year yield at 4.04, down just slightly there. Gold still on a tear, up nearly 1% now at 36.79. And Brent crude, WTI, up slightly. I'm Alexis Christophorus. You're listening to Bloomberg Intelligence. Balance of Power coming up next.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kafen. President Trump this morning again defends the use of federal troops domestically. He suggested it will go beyond what's taken place in Washington, D.C.
We are a safe city. You can walk to a restaurant. You can walk to the White House if you work there. You can walk to the Capitol. And even the Democrats say, I can't believe it, but they don't want to admit it, but I can't believe it. We could do the same thing in Chicago, New York, Los Angeles. We did it. We saved Los Angeles.
The Supreme Court is clearing the way for federal agents to conduct sweeping immigration operations in L.A. The justices lifted a restraining order from a judge. Federal appeals court has upheld the civil jury's decision requiring President Trump to pay $83 million to the writer E. Jean Carroll. As we hear from CBS's Christopher Cruz.
In rejecting Trump's appeal, the court said it found the damages fair and reasonable. Carroll had sued Trump after he repeatedly attacked her on social media after she accused him of sexually assaulting her in a department store in the 1990s. A separate jury awarded Carroll $5 million in a 2023 sexual assault and defamation case.
Chief Justice John Roberts has let President Trump remove a member of the Federal Trade Commission. Trump first moved to fire Rebecca Slaughter in the spring, but lower courts ordered her reinstated. In Florida, jury selection going on today in the trial of Ryan Ruth, the man charged with trying to assassinate Trump last year at a golf course. Legal analyst Lori Levinson.
The first thing that happens is they'll bring in a big pool of potential jurors, about 60 at a time, and question those individuals about what they know about the case and what their biases might be.
Overseas, Hamas has not claimed responsibility but has applauded an attack in Israel that left 6 people dead. CBS's Courtney Keeley.
The 2 shooters were shot dead on the scene. This took place near Hebrew University on the outskirts of Jerusalem at a bus stop. Very reminiscent of years ago of many bus stop shootings, and this was the worst attack in several years.
Ukrainian officials have led 60 foreign diplomats on a tour of damaged government offices in Kyiv. It follows Russia's largest aerial attack on Ukraine with more than 800 drones and decoys used in the assault. CBS's Holly Williams.
Many people simply do not believe that Vladimir Putin has any real interest in ending the war because they say he still wants to control Ukraine and he's tied his legacy to this bloody war. They think he is simply going through the motions to avoid angering President Trump, and they think that even if he does do a ceasefire or a peace deal, he won't stick to his word.
The Dow is up 38 points. This is CBS News. Get ready for a movie made with artificial intelligence.
I'm David Attenborough's neighbor, Dennis, and welcome to a forest filled
What little critters.
Wall Street Journal reports the startup is lending its tools and computing resources for the creation of a feature-length film. It aims to debut at next year's Cannes Festival.
Witnessing their subconscious adventures is truly adorable.
Goal to prove AI can make movies faster and cheaper than Hollywood, with a production time of just 9 months instead of an average 3 years. Critters has a budget of just $30 million. Deborah Rodriguez, CBS News.
An Australian judge has sentenced Erin Patterson to life in prison for killing 3 of her estranged husband's relatives with toxic mushrooms baked in a beef Wellington. She'll have to serve at least 33 years. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
3 weeks to a possible government shutdown, and congressional leaders haven't even spoken yet. Welcome to the Monday edition of Balance of Power as we pick up right where we left off last week. Lawmakers getting back to work with very little to show for it, and a White House that may prefer a shutdown. We'll explore that idea coming up as we update things with Nathan Dean at Bloomberg Intelligence. He's, of course, running the odds. Just got off his morning weekly call here. We're going to have a lot more from Nathan to let you know how you can hear that call as well. Russia launching the biggest airstrike of the war in Ukraine. To think we're running a headline like this now. We'll get the latest from Bloomberg's Courtney McBride, and we'll look to another confidence vote in France. Yes, when we talk to Bloomberg's Stephen Carroll in Paris. Rick Davis and Jeannie Shanzano are with us, our panel, with analysis later this hour, and we start it all with a look at Wall Street. Charlie Pellet holding forth in New York with the latest on the Monday trade. Charlie, how's it look?
Hi, thank you very much, Joe Matthew. We have got the Dow, the S&P, NASDAQ all solidly in the green. Back to work Monday, an 18-point advance right now with the S&P at 64.99, up by about 0.3%. Dow Industrials up 31, up 0.1%. The NASDAQ Composite Index up now by 148 for NASDAQ. That is a gain of just about 0.7%. The Bloomberg Mag 7 Index gaining 0.7%. Apple shares, though, down 0.7% ahead of its product launch tomorrow. 10-year at 4.04%, with the 2-year 3.48%. Gold is surging $51 the ounce. Gold hitting a fresh record, extending gains after Friday's weak U.S. employment report. The precious metal up 1.5%, now at $36.38 on gold. West Texas Intermediate crude up 1%, $62.47 a barrel, and Bitcoin up 1.1%, $112,541 on Bitcoin. Katrina Dudley is senior investment strategist at Franklin Templeton Investments. She says markets are now looking beyond tariffs and politics.
America had a pretty tough time during the tariff regime. We had a lot of uncertainty, and I think that we've really showed how resilient we are, how resilient our economy and our countries are, our companies are. I think this outside noise is just that. We've been dealing with pockets of political weakness, and I think that that's exactly what it is. It's small pockets of political weakness. The market has got enough momentum behind it to be able to kind of work through that.
Katrina Dudley of Franklin Templeton, interviewed this morning on Bloomberg Open Interest. The deal news, PNC Financial Services Group is buying First Bank Holding for about $4.1 billion to add $27 billion in assets and branches in Colorado and Arizona. PNC down right now by 1.1%. Recapping, stocks push higher. S&P at 64.98, up 0.3%, with the 10-year 4.04%, the 2-year 3.48%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington once again. Here is our friend Joe Matthew.
Yes, indeed. Charlie Pellet, thank you so much. Our dear friend covering Wall Street for us every day here on the fastest show in politics. Charlie will be back in a little bit less than 20 minutes for more on the markets. I'm Joe Matthew. Good Monday to you. Thanks for starting your week here on Bloomberg Radio, satellite radio channel 121. You can watch the radio on TV as ever. Go to YouTube and search Bloomberg Business News Live. You can also catch the program on Bloomberg Originals. We're 3 weeks out. If you're keeping score on your home game, there is still no deal to fund the government beyond the 30th of September. Yeah, it's the 8th now, and we have fewer than a dozen legislative days to get this done. This is the conversation we were having going into the weekend, and we're still having it now as lawmakers get back to town. Nathan Dean talked to us last week about this and introduced a really interesting prospect that's now being fleshed out in stories around Washington, D.C. Democrats say they don't trust Republicans, right? Not only did you have the president's big, beautiful bill that they say cut Medicare, Medicaid, I should say. Then there was the rescissions package, followed by a pocket rescission. And Democrats pulled away from the table and said, okay, we're done. Can't trust Republicans when they're clawing back money that's already been passed and appropriated. Appropriated, just not spent. The idea would be, well, boy, so you shut down the government. Republicans could have a real problem politically coming into this fall season, but the White House says, oh yeah, maybe we do want to shut things down. And that's what I want to talk to Nathan about here, who incidentally just got off, very importantly, the Bloomberg Intelligence Financial Washington Policy Weekly Call, which until now was probably off limits to you. Nathan starts the week Monday morning with this call. All the terminal subscribers who want to be there from all around the world get involved. Well, we've decided to do something pretty cool, and Nathan is with me right here. And he's got the fleece vest. Senior U.S. policy analyst Nathan Dean, great to see you. So here's what we did. We turned your call into a podcast, which is now on the podcast feed of Balance of Power. So every Monday before this show drops, you get this guy, Nathan Dean, to set the table for policy that'll run you through the week. This is like the coolest thing we have going. So thank you for playing ball. And we're like on the same show now. We're team members.
Absolutely. No, thanks for having it. And, you know, one of the best things about the call that we try and advise our clients, and look, if you want to listen to it, go to the podcast and you'll hear it, is we try and advise the clients how to deal with the red lines that are coming from the terminal, meaning the headlines, because there's a lot of noise in Washington. But when you get down to the process of how Washington works, whether it's executive orders, legislation, regulation, committee hearings, you can sort of figure out what the process drives you to these ultimate end games, if you will. And so if you're an investor in Visa, MasterCard, Bank of America, JP Morgan, whoever, you know, this is the call that we decide to help you figure out how does Washington impact your portfolio.
Amazing. This is super cool. And it's frankly why we've been dragging you on the air for this whole time, is to answer some of these questions. So it's just a little more, Nathan, a little deeper, and a sense of what people are asking, which I'm always curious about, which is, you know, what we always talk about. What are people hitting you on today? Nathan, what are they calling you about? And right now, it might be a government shutdown, but I'll let everyone know. I wasn't eavesdropping on purpose. I overheard a conversation that you were having with a client, and you were going out of your way to say, I want you to know, from the investor's standpoint, this is not a big deal.
Yeah, absolutely. I mean, the government shut down, and apologize to, if you're listening to us in D.C. right now and you're a government worker or a contractor, because obviously you don't get paid during government shutdowns. But from the market perspective, whether it's a S&P or whether it's even a government contractor, if you're looking at individual equities, there really is minimal impact here. During the 31-day shutdown that happened under Trump's first administration, S&P went down just a little bit, but then by the end was up like 10%. And even these large contractors, they're working off of contracts that are usually 2-3 years in length. The one thing that we would advise clients is, if you're a trader in commodities, for example, or if you're looking at just Fed data, data tends to slow down in government shutdowns. And so whether it's a commitment of traders report from the CFTC or a USDA report or something coming from the BLS, that's where you're going to have to be a little bit careful. But, you know, for the most part, it's really those of us who want to take our kids to the zoo. That's what we pay attention to.
I got you. And now you're still at 40%, if I remember from last week, 40% odds on a shutdown.
Yes.
The idea that the White House might prefer a shutdown, I'm guessing, would change the way you're answering some of these calls, because there is a thought, and we talked about this last week. Patrick McHenry talked about it at this table, so did Mick Mulvaney. Say, hey, you know what? Russ Vought's got a plan. There's a folder somewhere in his desk that says shutdown, party time on the front of it, because the idea is you shut down the government, then the White House can start doing what it wants when it comes to doling out money. And maybe the White House would just let it stay closed all year, and that's sort of the ultimate Doge event if that happens, right?
Yeah, absolutely. I mean, when you interviewed former director Mulvaney, he said he was, and I'm paraphrasing here, he was giddy that
jealous
he wanted,
was the word he used.
Exactly. He wanted to be Russ Vogt. Because look, who is the person that decides who's an essential employee or a non-essential employee?
Right.
It's the OMB. And if I'm Russ Vogt and we get into a shutdown situation, Congress is irrelevant. I'm now the person that's driving here. And so if I'm the Democrats, that may not be something that I want to give up right now. Because this is what we're telling our clients is that, look, we still have a year and a few months until the midterms. It's not like many people are going to be walking into the voting booth in November 2026 and say, hey, I remember what happened on September 30th, 2025, because the government shut down for 2 days. I'm not going to vote off of that. So I need to see strategies from the parties going into September 30th that if you want to shut the government down, what's the strategy and what's the end game here? Because the end game is, I'm not exactly sure what it is.
Right.
And so if the Democrats get into a situation where there is a government shutdown, and, you know, Matthew Iglesias wrote this on Bloomberg Opinion that maybe healthcare is the reason why you want to do it, what's the end game? But ultimately, I think the OMB here is going to do a lot of things the Democrats don't like.
Because there might not be an end game for lawmakers, which is when the White House takes the ball and holds on to it. So in a world like that, let's say this is the extreme, by the way. A lot of people don't think the government's going to shut down at all. But in a world like that, you get 3 to 6 months in a shutdown, the White House is closing agencies or moving people around. That becomes an investor problem. That's a market story, is it not?
Yeah, and I don't think we would ever get into a situation like that because if you remember, shutdowns are not popular with the American populace, and it's the person who always is seen causing the shutdown is the one that pays the political price. And so, you know, when you hear that, you know, Russ Vogt may want a shutdown, you're also hearing language from the White House saying, look, we want a 1-year CR.
That's correct.
Well, why do we want a 1-year CR? Because then we don't have to deal with shutdown fights in an election year. And if you go back to that 31-day shutdown, remember, there were a lot of World War II vets who showed up at the memorial and they pushed those gates down and everybody supported that. And so with the American populace not supporting the idea of shutdowns, that's why I think they'll ultimately kick the can. And if we do have a shutdown, say in December or early next year, I think it'd be short term.
What are the chances of a full year CR? Because there are a lot of Republicans who have an allergy to this idea. Pentagon hawks freak out and say that's a cut to defense spending. Is that how we should look at it?
Absolutely. I mean, I think you have the military folks who are saying, look, let's not do this. You have the folks who say, I'm not going to support a CR. But also remember, if I'm a Democrat, I may not want to give a 1-year CR because these are good opportunities to score political points if you're in the minority. And so if you're, for example, one of the things that our clients have been asking is, what is the one piece of legislation that could be attached to this as a way to get to the president's desk? And my answer to that is the Credit Card Competition Act that would increase competition for Visa and MasterCard. Senator Marshall tried to attach it to the stablecoin bill to advance it to the president's desk. And every time you get about 3-4 weeks before this government shutdown, that's when you should start be thinking, what is the bill that gets attached? And for what it's worth, I don't think it's going to pass, but that's the one that I'm thinking of.
Just a minute left. NDAA. This is the one said to be bipartisan, passes every year. Flies above controversy. Will this year be any different?
I think it may be a little bit different. I think ultimately it still passes on a bipartisan nature, but there could be some fireworks that I think this ultimately...
this is the National Defense Authorization Act. What could be attached to it that would be controversial?
Well, is that
it?
That Visa...
So this is the vehicle?
It could be. Okay. I mean, look, it doesn't have to be. I mean, you know how Washington works. It can be something completely irrelevant.
Yeah, right. Wow. All right. So subscribe to the Balance of Power podcast. You get the Nathan Dean podcast, the weekly Washington policy call, right? So this is every Monday morning.
Yep.
It's on your podcast feed now. You already dropped the show?
Already dropped
15 minutes of intelligence, Bloomberg intelligence by way of Nathan Dean. He's America's dad, and he wears the most famous fleece vest in the country. It's great to have you as always. We're going to do this every Monday, starting things off here as Nathan Dean sets the table, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Dow Industrials just turning negative. We got the S&P holding on to a 15-point gain, up 0.2%. NASDAQ up 140, continuing its advance, up 0.6%. But the Russell 2000 index of small cap shares trading lower by 0.1%. Wall Street is betting that the Fed will cut rates next week. Stocks rising on speculation that policy easing will keep powering corporate America. The 10-year at 4.04% with a 2-year 3.48%. Spot gold trading at a record up 1.5%, up $53 the ounce to $36.40. West Texas Intermediate crude up 0.7%. WTI 62.33 a barrel. Bitcoin up 1%, 112,420 right now on Bitcoin. Summit Therapeutics shares are plunging 24% after new data cast out on the future of its closely watched lung cancer drug. It is not the first round of bad news for the drug. Summit and its partner Akeso previously released data showing it did not significantly improve survival, though they urged investors to wait for more information on patients from outside of China. Summit Therapeutics, again, down by 24%. Recapping the Dow lower, little changed on the day, down under 0.1%. We've got the S&P up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, many thanks, and great to have Charlie Pellet with us live at World Headquarters in New York. We'll be back with Charlie a little bit later on this hour for more on the Monday trade as we anticipate breaking news earlier than expected. Yeah, it's going to fall right here in the noon hour, it appears, East Coast time. Breaking news from France. Yes, indeed. Which has had 4 prime ministers in the past 20 months. Now, apparently, on the verge of adding a 5th. Remember Francois Bayrou? We were here for the vote just months ago. What was it? 9 months ago, I think. Looking like he's already done. He's been in office 9 months, the Prime Minister of France, called a confidence vote for today in what most saw as a suicidal move with his unpopular austerity budget proposal in the mix. We're going to talk to Stephen Carroll about this. He's live in Paris as the vote gets underway now. It's going to last about 30 minutes. So just before the top of the hour, we should have a result. And again, it's not looking very good for the Prime Minister here. This was expected to happen a little bit later on in the day. But hey, it's noontime. It's balance of power. There's breaking news every day on this program as we come to air. That's for sure. Producer James, by the way, is standing by, and he's talking with his contacts in Paris for the latest on this. In the meantime, we're tracking what's going on in Ukraine. To be able to say a headline like this in September of 2025 is quite remarkable. The largest ever air assault on Ukraine. It happened last night. Hundreds of drones, 800 drones, and 13 missiles from Russia, of course, in an attack that lasted for hours. It was only a couple of weeks ago, President Trump and Vladimir Putin were together in Alaska talking about a potential peace deal. And we're feeling like we're pretty far away from that, which is why I'm glad that Courtney can join us from, of course, our national security team here in Washington. Courtney McBride, national security reporter. It's great to see you. To think that we're still finding superlatives like this far into the war is remarkable. This doesn't look like a leader in Vladimir Putin who's ready for peace anytime soon.
It does not. Trump administration officials are still hoping that the economic situation in Russia is enough to bring Putin to the negotiating table. But last night's strikes and a series of these barrages in recent weeks have called that into question.
Yeah, I saw Volodymyr Zelensky on Sunday morning television making the case. There doesn't seem to be much hope on his part for a meeting with Vladimir Putin. Can there be peace without one?
It seems unlikely that that could happen without the two heads of state and the parties of the conflict. But Zelensky, I think in the last day, has really focused on trying to shore up his country's air defenses in the wake of certainly what we're seeing is a devastating attack on the capital.
Yeah, the idea that Vladimir Putin would only want to cease fire in an attempt to regroup does seem to ring true when you look at images like these. If you're with us on the radio, we're looking at images of Kyiv and the aerial bombardments going straight into residential areas, into apartment buildings.
Certainly, and even government buildings have been hit as well. Where the business of Ukrainian government is done.
How significant is that? Is that a new level for this conflict?
I don't know that it's it's new, but it's certainly not something that happens every day, even with the constant barrages.
What's the latest on weapons for Ukraine? Are Europeans buying weapons from the U.S. as the program was to dictate?
That is happening, but as with all weapons purchases, it is a bit of a slow process, and so European allies are beginning to take advantage of that mechanism to purchase weapons for Ukraine, but often, particularly the most sophisticated weapons, take sometimes years to be delivered.
Do we have a sense of where the president's head is on this now? He's been kind of talking out of both sides of his mouth on this. Just in the last 24 hours, we're on the verge of secondary sanctions, but also said that he might be meeting again soon with Vladimir Putin and that they want an end to the war.
Sure. I mean, this could be a matter of strategic ambiguity, from the president. He's made abundantly clear for some time that he wants the killing to stop, but the form that takes, is perhaps anyone's guess. But there certainly has been a lot of talk from both the president and from others in his cabinet about, sanctions and as an inducement to Russia to stop.
I have to ask you what's going on in Venezuela. This is remarkable. We talked about it quite a bit at the end of last week, having destroyed a boat that was said to be smuggling drugs, but there's also a U.S. Navy flotilla off the coast, and now apparently the deployment of F-35s in Puerto Rico, Venezuelan jets buzzing American ships, and there was a real question, are we about to enter a true military conflict with what the White House calls a terrorist organization or a cartel that's being led by Maduro? The defense minister in Venezuela says, we are not scared by U.S. threats. We are alert and vigilant. What's about to happen down there?
That remains to be seen. The U.S. Has been very clear about using the military for, counter-narcotics operations. As you said, you had the ship destroyed last week, and, not just Secretary Hegseth, but even Secretary Rubio have been using some pretty aggressive language about the ability of the U.S. to respond or even to act offensively, to prevent these drugs and purported criminals from reaching U.S. shores.
So we're prepared for something down there, it seems.
Yes, and actually the governor of Puerto Rico this morning issued a statement welcoming Secretary Hegseth and Chairman of the Joint Chiefs, General Dan Kane, to Puerto Rico, where they are meeting with troops and thanking them for their role in this mission.
Well, we might need to pull you back in here at some point if this develops. Once again, always great to spend time with Courtney McBride. Thank you, Courtney. As always, our national security team based here in Washington is doing great work. And we're going to keep things international here for a moment because, as I mentioned, the session is underway now in France. Stephen Carroll hosts Bloomberg Daybreak Europe, and he's kind to be on duty for us once again. The last time we were talking, just to believe 9 months ago, Stephen, was the last confidence vote. And so it's kind of curious that we have found ourselves here once again. As I was discussing before you joined us, the Prime Minister, Francois Bayrou, has been in office for about 9 months, and a lot of folks are wondering why he would ever call this vote, which seems to be his political demise. How do you see it?
Yeah, certainly. I've actually just been sitting in this room gathering dust since we last spoke, I think, Joe. But this is, look, a big moment for Francois Bayrou. He is this legendary centrist politician in France. Quite a similar story to the last time we were talking to each other in December of last year with Michel Barnier and his long history and career in France as well, and how that came to an end with this vote. The last time around, it was a vote of no confidence called by the opposition. This time around, it's a vote of confidence called, as you say, by the Prime Minister himself, trying to rally support for his budget plans as he tries, in his eyes, to address the issue of France's ballooning debt. We've heard from all the political party leaders, no surprises in them. It looks like that François Bayrou is going to lose this confidence vote, so he will then become an ex-prime minister very quickly. Afterwards, the voting is underway. About 20 minutes to go on that vote. The MPs have left the main chamber of the National Assembly. They've gone to the adjoining and beautifully adorned, I should add, salons next to the National Assembly chamber where they are casting their votes in alphabetical order, I'm told. And it's actually worth looking up, if you do have a chance, what these rooms look like, because they are incredible pieces of art. Delacroix, Pujol and Casimir Perrier is where the MPs are at the moment casting their ballots.
Wow. Oh, this sounds great. It's even nicer than the room that you're in here. Stephen, the expectation is Emmanuel Macron will then appoint a prime minister from his centrist party?
Yeah, I mean, look, this is the big question. Who does Emmanuel Macron choose to replace François Bayrou? Let's think about where he's been over the past 4 prime ministers. He's chosen somebody, 2 from his own party. He had Michel Barnier, who was from the centre-right tradition, and then he had François Bayrou, who was from a centrist tradition, but not his own party. So where will he go next? We speculated last December that perhaps he might choose somebody from the centre-left Socialist Party. That would change the numbers in the National Assembly, because it could potentially bring the socialists on board, bring them into support. It would still be a minority, but a more significant minority administration. But the socialists are well aware of the position that they hold. They've said they're willing and available should Emmanuel Macron call them to lead a government, but they have their own budget plan, which doesn't involve the same level of fiscal consolidation, around half, in fact, for next year. They say that they can spread out the consolidation over several years. Of course, markets would have their own opinions on that as well. Their proposal includes things like a wealth tax on fortunes of over 100 million euros, some of those things which others in the Parliament would find difficult to digest, but that is another option. It is up to Emmanuel Macron to choose who the next Prime Minister is. He does, though, have the option this time around of calling fresh elections to the National Assembly. He didn't have that option last December. Now, he says he won't do it, but as I love to keep repeating, Emmanuel Macron does have the potential to surprise us, so I wouldn't rule it out just yet.
Just in our remaining moment, what's the difference between a confidence vote and a no confidence vote in Paris?
I'm so glad you asked me that. The difference is it's the article of the Constitution that's involved. It's called by the government. It's been called 41 times in the Fifth Republic. But this, if François Bayrou loses it, would be the first time that we will actually have a government fall as a result of a confidence vote. A no confidence vote, like what brought down Michel Barnier last year, is something that would involve that has happened twice, but this would be the first time that a confidence vote would collapse a government. So a bit of a historical first in current French legal history.
Fascinating. I'm so glad. I don't see any dust on you. I'm so glad we're back together again today, Steve. And you'll be back a little bit later on this hour with some real news. This is happening earlier than we thought. And as Steve and Carol just mentioned, live from Paris, we expect results about 20 minutes away, a little bit less than that. So stay right here for the latest on the confidence vote, not to be confused with the no confidence vote. He's the host of Bloomberg Daybreak Europe, Stephen Carroll, a trooper in Paris. I'm Joe Matthew. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P holding on to a 10-point gain right now, but the Dow is negative, down 34, down under 0.1%. NASDAQ up 111 for the NASDAQ Composite Index, a gain now of 0.5%. Wall Street's betting the Fed will be cutting rates next week. Stocks rising on speculation that policy easing will keep powering corporate America. NASDAQ up 110 for the NASDAQ Composite Index, a gain right now of 0.5%. Our Mag 7 index up 0.4%. The 10-year 4.06%. The 2-year 3.49%. Gold at a record $36.37 the ounce, up $51, up 1.4%. While West Texas Intermediate crude oil trading higher now. WTI up 0.7, $62.30 a barrel, and Bitcoin is gaining 0.9%, 112,378 on Bitcoin. Wall Street still mulling over Friday's jobs report and what it means for the broader economy and the Federal Reserve. Stuart Kaiser is head of U.S. equity trading strategy at Citigroup Global Markets.
The base case for most investors is probably we slow down but don't hit a recession. And in that case, if you're getting cuts, yeah, I think it's very positive for the equity market. But if what we've seen in the labor market is the early stages of, something somewhat of a more severe slowdown, then we don't think equities or small cap are going to deal with that very well. I mean, June is now a negative payrolls month after all the revisions.
Stuart Kaiser of Citigroup interviewed this morning on open interest. Robinhood Markets has been added to the S&P 500. Robinhood shares are up 14.6%. AppLovin and MCore also added to the index. AppLovin up by 11%. MCore out of Norwalk, Connecticut, down now by 0.4%. Again, recapping here, stocks trading mixed. The Dow lower, S&P up 11, a gain there of 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Many thanks, Charlie Pellet. As always, Charlie will have more for us on the markets coming up at the top of the hour, as we also anticipate results maybe 10 minutes, a little bit less from now, from the confidence vote that is currently underway in France. We will have news from Paris before we get to the second hour of Balance of Power. Lucky to have Stephen Carroll standing by in Paris, covering that for us here on Bloomberg. When the headline broke late Friday, it stopped everyone in the newsroom. So what have you heard about what happened in Georgia? U.S. detains 475 in migrant raid at Georgia EV battery plant. This is the Hyundai plant you probably heard about. Hyundai Motor, LG. It's a big operation where they make batteries down there, and federal agents showed up, detained nearly 500 people at the site, at the manufacturing complex. It's a big operation down there, and a majority of them were Korean nationals, many of whom were there to build this thing out and get it up and running. People determined to be working unlawfully turned over to ICE for removal proceedings, generating the next round of headlines that you'll find on the terminal from over the weekend. South Korean firms reel from fallout of Hyundai plant raid. The biggest conglomerates in South Korea are now rushing to contain the fallout here, in many cases canceling travel and expressing deep concern to the administration. What in the world are we doing here if we want to reshore these businesses and we're locking people up when they come to do it? President Trump was asked about that. Here's what he said.
We're going to look at that whole situation. We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves.
Now, this story was developing over the weekend as ICE showed up in Boston as well. Remembering, Tom Homan promised that we'd be in sanctuary cities, and here we go. Federal immigration agents conducting raids across the city of Boston and outside the sort of greater Boston area as the Justice Department files suit against the city and its mayor, Mayor Wu, said to be running a sanctuary city. Let's get into all this with our panel. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, if you want to reshore certain industries, in this case, the battery industries. We want to bring chips back into this country and other, of course, critical technologies that we've allowed to move to other countries. Is this the best way to do it?
Well, this is even more important than reshoring. This is a foreign country corporation that thinks it's a good idea to invest in building their plants in the U.S. So it's a real gift to the American economy that they think building these battery plants is better than building the batteries in South Korea and shipping them here. And by the way, they were right. They got ahead of this before the tariffs took place. But this is a classic situation of the right hand not knowing what the left hand is doing. You played that quote by Donald Trump, who's like backpedaling as quickly as he can. You know, we just deported 300 people who were actually helping the Georgia economy by bringing technology that we don't have to service an industry that's growing in the United States. And then you layer on top of that massive commitments that the South Korean government has made to invest in the U.S. and build facilities here to help our economy, and we just poked them right in the eye. This is not policy, this is execution, and I would say there are a lot of questions being raised this weekend over the competence of this administration's ability to sort of act with one voice.
Well, the president was enjoying the scene from Boston over the weekend and threatening to send troops to Chicago as this was all unfolding. Jeannie, even putting up a post on Truth Social. This is really something. It came from his personal account, and I believe the White House reposted it. Donald Trump, Chipocalypse now. Chicago. There he is as Lieutenant Colonel Bill Kilgore from the movie Apocalypse Now, right? I love the smell of napalm in the morning. It says, I love the smell of deportations in the morning. Chicago about to find out why it's called the Department of War with 3 helicopter emojis. He did clarify that when asked about it over the weekend, said he doesn't want to go to war with Chicago. He just wants to clean it up. But Jeannie, this one stopped a lot of people in their tracks. If you're with us on YouTube, we're just showing you this. Remember Air Cav, Apocalypse Now? Is this a good look for the president?
Joe, I'm glad you did the word Chipocalypse. It took me like 2 hours this weekend to figure out how to say that. So you did it very beautifully.
Thank you.
No, it's certainly not the message the president wants to send. I think we have here an example of the president overreading his mandate to address the problem of illegal immigration and crime. And he's doing so to the destruction of his own party and himself, because while polls show he has still got some approval higher on immigration and crime than, say, the economy, which he doesn't want to talk about. When you ask people about putting National Guard and troops on the streets, when you ask people about going to people's workplace and raiding those workplaces, that is not a popular way to address both of these issues. So the president has that problem. And I would say, you know, the president also said he was going to do this a couple weeks ago in the White House. He said this election, meaning the midterm, will be about crime and immigration. Why? Because he does not want to talk about that very miserable jobs report that came out Friday and all that suggests in terms of his ability to do the one thing that most Americans want him to do, which is lower costs, lower inflation, and address the economic challenges that they are facing. He doesn't want to talk about that, so we're seeing memes like this. And the reality, of course, is that we are facing in this country a huge challenge. This year may be the first year in American history that we lose population. And that matters economically because, like immigrants or not, most of us are immigrants of one sort or another. They drive the economy. And that's why the story of what happened in Georgia last week is so depressing and contradicts completely the president's economic policies and plans to reshore.
You know, Rick, everyone's throwing around this new Gallup poll today. It was in all the tip sheets, and it's in a lot of the stories about that post, the Apocalypse Now post, the raids in Boston, what happened in Georgia. Gallup finds 79% of Americans believe overall immigration is a good thing for the country versus just 17% who say it is not. just from a cultural and political standpoint, when you see a post like that from Donald Trump, what does that mean? I realize there's the base, but then there's everybody else. And this is a president that's had trouble as a candidate expanding the size of his base. What is he doing here?
Yeah, well, this is a president, Donald Trump, the person, who really has never reached out beyond his own point of view, right? He's very much, people need to be for what I'm for, not me be for what they are interested in. And this is a classic example of that. I mean, and you can see it throughout his career, whether it was after the protests in Charlottesville around neo-Nazis and sort of, shouting out to them. But I think this actually portends a bigger issue, especially with the polling that you just described, Joe. And that is, you've got someone in the White House, Stephen Miller, who literally every single day, one of the most powerful people in the Trump administration, is whipping the ICE folks for more deportations, more deportations. So you see things like this South Korean roll up in Georgia, without anybody else really understanding the economic implications of that. And now you see this polling data. Stephen Miller's never been involved in elected office. He's not politically sensitive to the voters. And so you have this disconnection where even as a candidate, Donald Trump was able to connect crime to immigration. They've dropped the pretense of that. This is all about deportations. And anybody who is not a card-carrying U.S. citizen needs to get out. And that message was loud and clear to many different constituencies. And so they're going to live and die off of this, and it seems they're doubling down on it, which a lot of political operatives I know around the country looking at very dicey 2026 races are going, oh, my God, if we're talking about immigration on November of 26, we're sunk.
Jeannie, Governor J.B. Pritzker replying on social media to President Trump's smell of deportations post. He writes, the president of the United States is threatening to go to war with an American city. This is not a joke. This is not normal. Donald Trump is not a strong man. He's a scared man. Illinois won't be intimidated by a wannabe dictator. I mentioned this after Tom Homan said over the weekend on CNN, absolutely, they're going into Chicago this week. Does this help or hurt Governor Pritzker politically? Because the eyes of the world will suddenly be on his state.
I don't know if we're talking about 28, if it helps or hurts Pritzker, but the reality is he's right. This is not a joke. He also has to be cognizant, as all Democrats do, not to get drawn into a battle with Donald Trump on crime and immigration, but focus like a laser beam on the economy, which is Donald Trump's big weakness at this point. The Supreme Court just issued a decision supporting Donald Trump's roving patrols in LA and Southern California. That's a win for him. We also know that one of the people who was behind the LA immigration policy for the feds has now moved to Chicago. So I expect we will see them, what Tom Homan is talking about. But the reality is this. You look at this Georgia situation. We need workers in this country to do what Donald Trump wants us to do, which is build our economy. The problem is not the workers, it's our immigration system. Anybody who's been involved in it knows it's poorly framed, and it's difficult to maneuver. And that's what most people in South Korea are saying today, that some of these people just accidentally overstayed and couldn't get their paperwork in order. That's what Donald Trump should do if he wants to fix the immigration system, not send troop-like figures in under ICE to draw people out who are simply trying to work. They have to be legal, but we've got to make this process something that most people can utilize in a way that makes sense.
You take the administration at its word, Rick? Are we going into Chicago this week, or will it depend on the news flow? We've got about 30 seconds left. I'm just wondering if we're going to be actually talking about this by Thursday or Friday.
Well, is this going to be the taco week where Donald Trump chickens out from his threats, or is he actually going to muscle his way into the Windy City? I guess that he's not going to back off. He's been thrown the gauntlet by the governor, and I think you're going to see troops in Chicago before you know it.
Boy, well, we'll have Rick and Jeannie to help us through that if and when it happens. And, of course, you'll hear about it right here on Balance of Power. I think we're going back to Chicago, producer James. See if we can line that up. Somebody called Gibson's. Hour 2 of Balance of Power is on the way, and we're going to have Jeannie Shanzano and Rick Davis along with us as we anticipate results from the confidence vote in France. That's just now resolving, and we're going to have breaking news for you coming up here at the top of the hour. It could be the end of the line for yet another prime minister in France, the 4th this year.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The confidence vote in France ends with no confidence. Welcome to the Monday edition of Balance of Power as French Prime Minister François Bayrou faces now what appears to be the end of his political career only 9 months after becoming Prime Minister. This may sound familiar. I'm Joe Matthew alongside Preeti Gupta in Washington with a redhead on the terminal. Preeti, 4 prime ministers in the last 20 months. Apparently not enough for France.
They keep coming right back to the same issue. We're no stranger to right here in the the U.S., which is what do you do with the budget? What do you do with the ballooning deficit? And the French have it even tougher. They have a lot of things like pension reform and holidays they have to work through.
Yeah, austerity is the word of the day here. It's just remarkable how quickly this went once again and how many times this has happened. Emmanuel Macron now would, I guess, appoint another prime minister, presumably from his central party bloc, but we'll find out, I guess, imminently here.
It's really tricky. I mean, the French parliament is quite literally divided into thirds. So to find any sort of majority, especially when you have the threat of Marine Le Pen and the far right on their doorstep, it's a really tricky one.
Yeah, absolutely. So how does this unfold over the coming hours? We just literally got this vote. The redhead rolled about 30 seconds ago, and a series of events will now unfold.
Absolutely. And let's not even forget about this bond market that is really reacting to this. But there's a question here of this, we're coming through this just again. Again, it's a very similar feeling that we have right here in the States, which is, oh, look, it's another shutdown. It's another budget negotiation. Right. The French feel the same way.
And conversations about debt and deficits, austerity, do you accomplish this by cutting budgets or raising taxes, which is really a very big question that they're trying to answer in France and one that we're struggling with here in the United States, isn't it?
And we should mention that France is one of the highly taxed countries in all of Europe. They're trying to push for investment. They're trying to push for AI. Emmanuel Macron really trying to make it a hub for investment, pull money away from London, pull money away from Germany. You can't do it if you're taxed at over 40%.
Well, this is going to be really interesting over the next hour. We've got some important voices lined up for you, beginning with Oliver Crook, Bloomberg's Europe correspondent, who's in France right now with the latest. Oliver, this just landed a moment ago. What's the reaction and the feel on the ground?
Yeah, well, listen, this is something that had been very much anticipated by the French public ever since this confidence vote was called a couple of weeks ago. You know, it was really a foregone conclusion for many. He was giving interviews all week, the prime minister, and they basically were opening the interview saying, how does it feel to be in your few last days? And that is a sentiment that was validated today, just now as you speak, by the French parliament that voted no confidence for the fourth prime minister, as you said, over the last 2 years, highlighting the sort of political fragmentation, which, by the way, is a story in France, but is a story all over Europe, but really finding its heart here in France. And François Bayrou, earlier a couple hours ago when he spoke, he said, listen, you guys today have the power to topple this government. What you do not have the power to do is ignore reality. And the reality that he is referring to is a debt to GDP burden that is absolutely the third highest in all of Europe. The GDP to deficit, which is the third worst as well, almost 6%. That is almost twice what it is for the average of the European nations. And this is 51 years now that France has not had a balanced budget. The question is, at what point do the bond vigilantes take over? Do they really impose this austerity that he was trying to sort of, through reform, bring into the fore? But as you say, you know, this is a French parliament that is divided into three groups. And even within those main groups, you have splinter cells within it. And it just shows you how difficult the path ahead is now, no longer for François Bayrou, but for Emmanuel Macron, the president, who took that gamble last June in calling the snap elections and legislation and really backfired colossally. And that is the situation that he needs to continue to live with.
Ollie, we've seen this movie so many times, as you said, just the last 2 years, especially since Emmanuel Macron called those snap elections last summer. Or was it 2 summers ago? I can't even remember. It's all a blur now. Walk us through just a massive step back. What is the future of Emmanuel Macron? If he keeps losing prime ministers, does this threaten his re-election or his succession when it comes to 2027?
So listen, for Emmanuel Macron, he really has three options here. The first, and this is probably the most likely, is he's going to have to appoint another prime minister and just kind of keep rolling with this really inconvenient parliamentary setup that he's got. Where is he going to choose it from? Is it going to be from the center? This is what he's been trying to do. He's been trying to push center and sort of right-leaning prime ministers. Is he going to have to go to either a cohabitation, say, with the socialists in order to woo the left, or maybe someone that's a former socialist that has sort of gone to the center? That could be a path forward. The other is, of course, what we've heard from a number of people in that chamber today, calling for another legislative election. But if you look at a lot of the polls, that is going to basically erode Emmanuel Macron's already sort of diminished role within the parliament, and also basically not really change the sort of political physics that we've got here with those three major blocks. And of course, the last would be resignation. This is very, very unlikely. Emmanuel Macron has pushed back against this. He's going to stay president until 2027. That is his intention at very least. But again, it is getting louder and louder, and you're getting more and more sort of objections from that chamber. And, you know, Marine Le Pen, who now is the biggest party for the first time ever, a much larger protagonist within French politics.
Fascinating. The vote, by the way, we're talking about 194 voted for Beirut, 364 voted against. Oliver, just looking at the reaction in the euro, which is basically no reaction, speaks to the fact that this was expected or something else?
Yeah, I think that there's a lot of this has been priced in. Again, we're some distance away from these sort of red alarm bells ringing across the sort of market complex. But we've got another rating from Fitch that comes out on Friday for France. It's expected to be downgraded. I mean, as you know, with these sort of financial crises that sort of develop at the national level, it's never sort of an instigating event. It's more art than science. And when you look at the sort of spreads that we've seen between Germany and France, I think the thing to really look much closer to is the spread between Italy and France on the 10-year benchmark yield. You look at that, that has come down to 5 basis points. It's only ever crossed below 5 basis points one time since the sort of turn of the century, and that just shows you where the investors currently are pricing risk for France. And again, as François Bayrou said earlier today, this is not just about politics. This is about the future of France remaining a sort of a relevant force on the global stage. He says you can be brought into submission by foreign militaries or by creditors, and that is the main concern for many of the French here.
Bloomberg Europe correspondent Oliver Crook live in Paris. Oliver, thank you so much for the snap reporting in this case. No confidence in the prime minister, and we're lucky to have Catherine Kleppinger back with us today. She was here 9 months ago when he got the job, and back today as associate professor of French and Francophone Studies, International Affairs at George Washington University. Professor, welcome back to Bloomberg TV and radio. 4 prime ministers in 20 months. What would be different about a 5th?
That is, I think, the question everyone's asking. And, I think the biggest question, as I heard from the previous correspondents here, is, which party can one even recruit from? We're hearing from Marine Le Pen, who's saying it's an obligation to dissolve the parliament. So, of course, she has her position. I've been reading that, the party leader for the Socialists is kind of angling for it. There have been many other, kind of the further left is saying that they will automatically vote, sent to censure the next prime minister. So, I mean, it's an open question, and yeah, I wish I could read some tea leaves here, but I fear that we're going to be dealing with more of the same.
Professor, in every iteration of this, there's always the question of the threat of the far right. Marine Le Pen on ice until she has some decision-making, some guidance from the appeals court about a 2027 run. Not enough confidence in Jordan Bardella. Is the National Rally still a threat the way it was when Michel Barnier was ousted?
I think that's been the most kind of interesting point of this moment, to see that Marine Le Pen has shifted her discourse a little bit away from calling on Macron to, resign, because it's not in her interest for Macron to resign right now, because then she couldn't run. So, she's leaving it much more in a parliamentary domain. I think she's still very much focusing on, now that we know the appeals trial will be in January of 26, she's looking at a longer term game here. I'm seeing from kind of man on the street interviews of National Front or National Rally voters that they do want a new election, but that, now Marine Le Pen has to balance, some of the more kind of populist voters who want to disrupt the system with the more stable, market-focused, business community that has been less excited about her candidacy. And so, does she tilt the cart now in order to, impose her party, or does she hold her cards closer for a longer trajectory? It looks like that's where she's leaning right now, because it plays in her interest. But it's true that there is a, sort of groundswell from a certain fraction of society looking for change. It may have come up a little earlier, but there's supposed to be a massive day of rallies on Wednesday that was planned before this vote. So there is this block everything movement announced. They're calling for tractors, to block the roads, and it's throughout France. And so, it's like, how is that going to play in? Do we have a new yellow vest movement? Is that going to mobilize or, kind of detract attention from this? I don't know.
Interesting. Well, when we consider what's about to happen, and you're pointing to Wednesday, which I'm very curious to see how this all plays out. Bayrou's obsession with cutting debt is what got us to this point. What would be the winning message for a successful prime minister?
I think that's the question that, I wish I had the answer again. It sounds like I'm hearing a lot of criticism on Macron for his tax cuts to the wealthy, while also then proposing cuts to social services. So it sounds, like a lot of the debate is still going back to Macron in a way that the prime minister may not have as much control over. But in terms of, like, where does that leave us for the future? The prime minister will need to look at, what does the budget do with, defense spending? That's been a big topic, that impacts the Franco-American relationship. He needs to figure out, how do we balance Social Security reimbursements and retirement ages? So these are all different moving parts that have a negative impact on the budget. And I think that was Bayrou's point from the start. One of the surprising moments from his speech this morning was that he kind of altered the figure on France's overarching, national debt by adding, it went from 3.3 trillion to 3.4 trillion. So he's, kind of trying to play this responsibility card, but showing that, this is a very serious problem that no one has managed to solve. And, it's going to force a lot of really hard reckoning. There's been a lot of criticism that, one proposal was to cancel 2 holidays, one day from Easter and then from May 8th. Is that going to be enough to change France's economy? Hard to see that playing in, that doesn't play well with anyone, really.
Yeah, over my dead body on the holidays. Professor Kleppinger is going to stay with us as we add the voice once again of Stephen Carroll, the host of Bloomberg Daybreak Europe. Stephen is live in Paris as well, having just reported on this breaking story. Stephen, how is this being felt by voters, by people in France? Do you have to have a sense of humor to talk to your neighbor today?
I think probably, but I mean, look, because of the situation, and you mentioned we're heading into our 5th prime minister now in 2 years. This is something that people have gotten used to, and everyone knew when Francois Bayrou was appointed to this job that he didn't have much more chance of winning support than Michel Barnier did before him. He wasn't from outside of the political family that could have changed the parliamentary arithmetic in France and brought in more votes that might have made it easier to pass laws through Parliament. Opposition to him was pretty instant, and when he got to his outlining of the budget, and I think the kite flying around ideas like cutting 2 public holidays was a very interesting tactic, because he was putting on the table, and he admitted this almost immediately, he was putting on the table the most controversial measures so that people would debate them, and his hope was that parliamentarians would get involved and there would be negotiation. And he always said all of the measures were up for negotiation, but with the red line of bringing down the debt and the deficit. Unfortunately, the Parliament is simply too fractured to be able to do that. Everyone looked to their own political interests rather than necessarily looking to the bigger picture and trying to work with it. Everyone's acutely aware that there's a presidential election coming in 2 years' time, and they're pretty much just trying to stake their positions in the ground in the run-up to that, so that they'll be sure that there won't be a centrist who would replace Emmanuel Macron in 2 years' time. Now, a lot can happen in politics, and particularly in French politics, in 2 years. We should point out the last presidential election in 2017 was a big surprise as well for Macron to win. So nothing is all played for yet, but I think for most people in France, they're mostly worried about the protest movements tomorrow, how they're going to get to work, what services will be available, and how serious the protests are going to be.
More drama to come when it comes to Paris. Stephen, just walk us through what a crisis scenario actually looks like, because I hear you. I hear that a prime minister is now gotten or removed basically from the French government. But the bond market's calm, 76 basis points on the Haute-Bund spread. We're looking at a euro-dollar at 117. Everyone kind of knew this was telegraphed. What does a crisis in France look like?
This is a Gallic shrug from the markets. That's essentially what we've gotten. And that is because it had been so obvious how difficult Francois Bayrou's problem was going to be because of the numbers in Parliament. When he called this confidence vote, we pretty much knew the result of it about 10 minutes after he announced it, never mind waiting the 2 weeks for all of the debate and the pleading that came from Francois Bayrou before we had the vote in the past few minutes and the result of that as well. Markets are looking at the longer game here. Francois Bayrou did say in the negotiations, and this was the point that was being made by the Socialist Party, is that you can consolidate the budget over a longer period of time. Bloomberg Economics has said this as well. This is not a fiscal crisis yet. The problem is, as the debt servicing costs in particular mount up, and the trajectory, as Francois Bayrou repeated, is pretty steep from here on up as to how much of the budget is going to be taken up by simply servicing the existing debt that France has and what it's projected to accumulate. In the short term, there's still time, over a month before France is meant to submit its budget to the European Commission. That's mid-October. It doesn't need to pass it really until the end of December. And remember, we got right up to that deadline last year. And even if, in a case that there was no budget passed, there is no provision for, I heard you mention this earlier, there's no provision for a government shutdown in France. You simply roll over this month's budget into next year. It's not a dramatic handbrake turn for anyone. Sure, there will be some people who will be hit by, no inflation-linked increases and things like benefits, but it's not a dramatic change. Things don't close overnight as a result of the budget crisis in France. It does, of course, just push the problems down the line, and that's something the bond markets definitely will be worried about. And I heard Oliver refer to the ratings downgrades or the ratings reviews that are upcoming, the first of which on Friday. There's several of those to come before the end of November as well, so those will also be very closely watched by the markets.
Really interesting. Let's bring Catherine Kleppinger back into the conversation. Professor, did Bayrou have a choice here? He decided to pull the trigger on this himself.
Right. I think that is one of the most interesting aspects of this moment that, I'm coming back here in similar circumstances, but the details are actually very different, where Barnier was kind of solicited, he went through the executive order style of budget negotiations, and then his government fell as a kind of punishment for that. Bayrou was doing something very different. He said from the start, this is a problem. Debt needs to be dealt with, rise up to your responsibilities and do something about it. And so he is going out in a very different posture from some of the previous governments that have fallen. I found myself thinking that it was an interesting gesture that, he was challenging the delegates to live up to what he considered, a responsibility as elected officials. I'm not sure what his alternatives were, although that said, I've read some behind-the-scenes commentaries that he hasn't been as forthcoming with negotiations as, for example, the socialists were looking for. So he may claim, from one side that, I'm putting you in front of your responsibilities, work together, or I'm out. On the other hand, was he truly trying the backroom dealings of negotiating with all the different parties? Hard to say. It looks like he did not want to find himself in the position of trying to, for lack of a better term, herd the cats of all the different parliamentary parties, the way Barnier did try to do, and, trying to please everyone meant that he pleased no one. So, I think it's interesting. I've read the idea and I've thought about the idea that it is in some ways similar to the gesture that Macron did in dissolving the parliament, where it's sort of a poker move, that it's a surprise. Macron called it throwing a bomb into the political sphere when he called those snap elections. Maybe it's the same thing.
Well, I'm just wondering when we're all going to be back together here talking about the next confidence vote. Catherine Kleppinger, Stephen Carroll, many thanks to both of you. I'm Joe Matthew alongside Preeti Gupta with much more to follow here as we turn back to domestic politics and a conversation coming up with Congressman Mark Takano, the Democrat from California, next, only on...
6:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher across the board, but the Dow, the S&P, NASDAQ, they're all in the green. Wall Street's betting that the Fed will be cutting rates next week. Stocks are rising on speculation that policy easing will keep powering corporate America. Traders, though, bracing for almost 3 Fed cuts this year, beginning at the September meeting. Here's where we stand. S&P at 64.95, up 13 points now, up by about 0.2%. Dow Industrials have been swinging between gains and losses, in the green right now by 11 points, little changed. NASDAQ higher by 0.5%. The NASDAQ 100 index also higher by 0.5%. The Russell 2000 index of small cap shares flat on the day. 10-year at 4.05%. Gold is up $49 the ounce. Spot gold at a record $36.36, up 1.4%. West Texas Intermediate crude up 0.7%, $62.33 a barrel, and Bitcoin up 1%, 112,473. Apple shares lower ahead of the unveiling of the iPhone 17 tomorrow. Apple down now by 1%, and Nvidia's price target has been cut at Citigroup. Nvidia shares up 1.3%. Again, recapping, S&P higher by 13, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, live from New York. Charlie Pellet, the voice of Wall Street and the New York subway. Indeed, I'm Joe Matthew in Washington alongside Kriti Gupta as we turn our attention from French politics to domestic politics and a breaker on the terminal here. If you haven't heard this, we got news from the Supreme Court a short time ago, backing the Trump administration's aggressive enforcement efforts in California, in this case specifically Los Angeles, where federal immigration agents will be allowed to resume using tactics critics say amount to racial profiling. In this particular case, a person's apparent ethnicity cannot be the only grounds for officers to have reasonable suspicion to check legal status, but can, Kriti, be a relevant factor along with some of the others that have been identified in the Supreme Court's precedents. This just now landing at the same time that this administration is threatening to go into Chicago. That was the latest we heard. Tom Homan over the weekend said, absolutely, it will be this week.
Absolutely. These are some scary headlines. We should mention, though, this was something that the appeals court had put a pause on when it comes to whether the immigration raids on that basis are even legal, that the Supreme Court has basically overturned when it comes to the appeals court ruling.
Yeah, right. It also comes with not only the president threatening to go into Chicago, but any number of different cities posting on Truth Social over the weekend a meme from Apocalypse Now where he looks like Lieutenant Colonel Kilgore. I love the smell of napalm in the morning. This says, I love the smell of deportations in the morning. The president, by the way, was asked about the second line in that tweet or post on Truth in which he suggested that we would be going to war in Chicago after they renamed Department of Defense Department of War. Last week, he reacted to that when asked. Here he is.
We could do the same thing in Chicago, New York, Los Angeles. We did it. We saved Los Angeles. We saved Los Angeles, Dan. You know that. Los Angeles was a mess. If we didn't send our troops in, Gavin Newsom would have had a real problem. We sent our troops. The head police officer, the top person, said we could have never done this alone. We sent our troops right in at the beginning, and we killed it. And it was nasty, but we killed it.
That was the president earlier today, in fact, at an event about religious freedom. It's where we start our conversation with Congressman Mark Takano. This is personal for the congressman because he's from California, a Democrat in the 39th district, where much of this is resonating. Congressman, welcome back to Bloomberg TV and radio. What's your thought on the Supreme Court ruling here, and what's that going to mean for LA?
I think it's shameful. It's disappointing. It's reminiscent of what my own family experienced, 80 years ago, when they were put behind barbed wire in internment camps because of who they were. They were of Japanese descent. Many spoke a different language, and I am very troubled by the majority on this Supreme Court that they would allow racial profiling to be used by ICE officials. I have constituents that feel compelled, American citizens who are carrying passports because they are concerned about being stopped by ICE. No American citizen should have to carry a passport in their own country. This is shameful. We are the land of the free, home of the brave, but the Supreme Court has said so otherwise today.
Congressman, we saw something similar last week in terms of the immigration raids at a Hyundai plant in Georgia. What message do you think that sends to foreign countries that are actively looking to invest in the United States? Is it safe to do so, especially in your home state of California?
Well, this certainly puts an ominous cloud over the goodwill put forward by the agreement between the United States and South Korea. South Korea agreed to invest $500 billion in our country. In fact, over the summer, I learned about the interest in building more manufacturing plants in my district, in addition to the one that already does exist that was established recently. So this is not a hypothetical or a theoretical question you're asking me. It really affects my own district. And, you know, they were rapidly standing up a battery manufacturing facility in Georgia, Hyundai, and I forget the other company that the partnership with. But, you know, the South Koreans have really expertise in battery technology. And it's an incredible potential alliance between the United States, Japan, and South Korea. If we can determine the future of a battery technology, the next generation of battery technology, which the Chinese currently control. And I would hate to see that jeopardized. I would hate to see the $500 billion of investment in this country jeopardized because of the ham-handedness and lack of coordination of ICE with the Department of Commerce.
Well, that other company was LG, Congressman, and our listeners and viewers should know that you serve on the Education and Workforce Committee, along with being ranking member on the House Veterans Affairs Committee. But from your perch on workforce, what's the message here that we're sending to foreign workers? Would you recommend that they stay away from projects like this in the United States? And if that's where we are, do we have enough American workers to do all of this work, whether it's emerging technologies in batteries, semiconductors, or any other technology we're trying to bring back to this country?
Well, look, I don't know the details about what workers were being contracted with by the South Korean government, but I suspect, given that battery technology is, you know, on the frontiers of manufacturing, that we have to do two things at once. We're going to need some foreign workers to help us stand up these facilities while we're also ramping up the skills and knowledge of the American workforce. We can do both, and I can't imagine that the Koreans were thinking that they were going to fully staff up this Georgia facility with their workers. This was a good faith effort to bring an American manufacturing facility, a Korean investment to build a manufacturing facility in the United States to employ American people, but they need to bring some of their own expertise into the United States to be able to stand up these facilities. So this sends a terrible message to the nations that Donald Trump claims to want to engage and to bring manufacturing. By the way, manufacturing jobs in this country are down significantly this year since Donald Trump took office. So this is not a great step forward for those American manufacturing jobs to be increased when we play such hardball with our economic partners such as South Korea.
Congressman, let's talk about another subject that, of course, is dominating the headlines in Washington. It's a shutdown that we are about 22 days away from, just a handful of legislative days away from at the end of the month. Can you just talk to us a little bit about whether or not you'd be willing to work with Republicans to avert a shutdown if the idea of no rescission packages was on the table?
Well, I would love to work with them. I'm all with full intent to do that. But what I see coming out of the Labor HHS Appropriations Subcommittee is anything but that. It is not an olive branch. It is not what they're proposing. More extreme cuts to domestic health care and that Labor HHS bill. They're cutting AIDS funding. They're cutting funding for prevention. We're on the cusp of defeating AIDS, HIV/AIDS in this country, but I don't understand why after passing over $1 trillion in cuts to Medicaid, and even other cuts we're facing in December with the tax credits for the healthcare policies that Americans get off the exchange. Republicans are doing even more than that. So, if you're a low-income person, you won't be able to get, if you're kicked off of Medicaid, you won't be able to get, preventative care that comes with maybe AIDS prevention. But they're doing more to even cut that even further. This is not a bipartisan conversation they're having in the House Appropriations Committee. I don't see a sign from Republicans that they are seriously, with good faith, wanting to work out a deal by the end of this month.
Congressman, you just came back to town from California, where the big story right now is about redistricting beyond the deployment of federal troops or some of the other things that we've already had a chance to talk about. Gavin Newsom is making good on his plan to follow Texas, rewriting its map to create 5 new red seats. California will do its own to try to maintain the balance. How many seats will you get? I know this is something that you're deeply involved in. And will this mean the end of Republican politicians in California as we know them?
Oh, hardly is the case. I mean, what we're doing in California is called Proposition 50, the Election Rigging Response Act. It'll be in November. It is a measure that is being voted on by the people. It's fully transparent. Yeah. And it's a suspension of our independent redistricting commission, which, by the way, I am the product of. I would not be a member of Congress today were it not for the nonpartisan independent redistricting commission that was created. But look, I favor the creation of these commissions for every state in the union, not because they will favor Democrats, but because we need fair representation. What we don't need is mid-decade redistricting, which really is tantamount to cheating. And Donald Trump and the governor of Texas, Donald Trump is saying, what Donald Trump is saying is, I'm too insecure. My policies are so unpopular that I don't want to be able to face the accountability that will be in 2026. So let's rig the elections so that I can control the House of Representatives.
Well, Congressman, we'd love to talk to you as we get closer to November and that vote in California. Mark Takano, California's 39th, the voice from the Democratic side of the aisle here on Balance of Power. I'm Joe Matthew.
140 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, the S&P, NASDAQ. They're both advancing. NASDAQ trading at a record up 109 points right now at 21,810. That is a gain of 0.5%. S&P up 0.2, higher by 10. The Dow back in the red right now, has been swinging between gains and losses, but down 7 right now, just under 0.1%. Our Mag 7 index up 0.4%. The 10-year is currently yielding 4.06% with the 2-year 3.50%. Wall Street is betting that the Fed will cut rates next week. Stocks rising on speculation that policy easing will keep powering corporate America. Spot gold at a record up 1.4%, $36.36 the ounce, up $49 the ounce. West Texas Intermediate crude up 0.8%, $62.36 a barrel. And Bitcoin now higher by 1%, 112,415 on Bitcoin. Robinhood Markets being added to the S&P 500 index. Shares are surging now by 13.4%. AppLovin and MCore will also be added to the S&P 500 index. AppLovin up now by 10%. MCore down by 0.1%. Again, recapping here. S&P higher by 10, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Charlie will have more on the markets coming up at the top of the hour as we connect the dots between Washington and Wall Street every day here on Balance of Power. I'm Joe Matthew in Washington alongside Kriti Gupta. Thanks for being with us here on the Monday edition. Yeah, it's still Monday on Bloomberg TV and radio with breaking news coming from France. If you were with us a short time ago, you heard it all happen, Kriti. Francois Bayrou is going to have to find something else to do with his time. The confidence vote ended in no confidence.
In the meantime, Emmanuel Macron suddenly has a list of suitors that he now has to rifle through.
We have just heard from him, in fact, which is something that we can add to the pile here. And great to have Stephen Carroll with us, the host of Bloomberg Daybreak Europe, with the latest from Paris. Stephen, what does the president have to say, and what's the short list look like?
Very short statement from the Élysée Palace saying the president takes note of the vote in Parliament. He will meet Francois Bayrou tomorrow, host him at the Élysée Palace to receive the resignation of the entire government as the constitution now dictates, and that he will name a new prime minister in the coming days. Now, if that sounds familiar, I just went back and checked, and the statement in December 2024, after Michel Barnier resigned, also said that he would name a prime minister in the coming days. And it took over a week the last time, so perhaps we shouldn't be holding our breath too closely for when that announcement will come from Emmanuel Macron. But it is now his decision to pick somebody to succeed Francois Bayrou. Who is it? Well, that's going to be the big question. We have discussed it many times, and Kriti, you'll remember very well from last December, where we spent quite a lot of time discussing who we thought was going to be Prime Minister, and Francois Bayrou was on the list then. He got the nod last time around. This time around, we're back thinking about members of, perhaps if he picks them within his own political family. Gérald Darmanin, the current Justice Minister, said to be interested in the job, so he could be someone that perhaps could be considered for that as well. There's the likes of the current Finance Minister, Eric Lombard. Perhaps he might be somebody who Emmanuel Macron might want to pick from if he did want to go outside of his own political family. The names being bandied about from the left-leaning side. So again, this whole effort, and we've talked about it before, that perhaps Emmanuel Macron might try to win over some of the Socialist Party, the centre-left party, to see if that would help to boost the minority government, the minority that he has working in Parliament. And there we have names like former Prime Minister Bernard Cazeneuve. He's one of those as well. François Rebsamen, who's currently the housing minister in the government, or the minister for urban policy. So he's somebody that you could perhaps think of as well. Ultimately, there's quite a long list of names, and this is one of those moments of conversations happening in this city, very similar to those I'm sure that you hear in Washington, D.C. all the time, where people like the idea of putting their name forward and their name being talked about in the reference for the role. And I'm quite sure that Emmanuel Macron has been thinking about this, because the result of this vote was a foregone conclusion, as we've been discussing, but it is only him who knows where things are at this stage.
Stephen, I'm frantically Googling what French is, or FOMO is in French, given the amount of times you and I have covered this story together. let's play a little bit of inside baseball or whatever it is, the French play here. It feels like the socialists are the key player or the key piece of the coalition. Thank you. The key piece of the coalition that are maybe not so much so supportive of Emmanuel Macron this time around. When we saw Michel Barnier's vote of no confidence last December, they were the ones that were the swing vote. Where did the socialists stand on being kind of the make or break player for Emmanuel Macron?
Well, look, the leader of the Socialist Party in the Parliament was one of the first to speak after the results of the vote came through to remind Emmanuel Macron that they are willing to take the government, to take the role of Prime Minister and lead a government if they should be so offered. And they've been very clear about this, and this has been part of the political jockeying that led up to this vote. The Socialist Party had a choice that they could have rode in behind François Bayrou and become part of a governing minority in Parliament. That they've chosen instead to say, here is our alternative budget, which involves fiscal consolidation worth about half of what was in François Bayrou's plan, and a couple of more controversial measures like imposing a wealth tax on fortunes of over 100 million euros. They say that you can do fiscal consolidation slower. That's their condition for taking part in government as well. They've also promised that they won't use the constitutional override in Parliament to force the budget through, that they will secure agreement from across the aisles in the French Assembly to secure a backing for their budget plan, but it's very much they've laid down their positions, and there's not much sign running up to now that there is really any room for negotiation on that front as well. But they're definitely the key players to watch when we're thinking about what happens next, because without them, you end up with exactly the same numbers that Michel Barnier had and that François Bayrou had, and we know how that turned out.
Many thanks, Stephen. You've been great today. Stephen Carroll, Bloomberg Daybreak Europe co-host with us here on Balance of Power on Bloomberg TV and radio. The breaking news and the red headline from Paris, all unfolding since the lunch hour here in Washington, D.C. I'm Joe Matthew alongside Kriti Gupta in Washington, where we have not yet touched the story of the day here in town. It's at least the talker. It's not a very pretty one, but it carries a headline that everybody woke up to this morning in Politico. Quote, "I'm going to punch you in your blanking face. Scott Bessent threatens administration rival." Pretty remarkable, Kriti. We're actually putting on the gloves for this one here. Remember when Elon Musk showed up with the black eye? And it was right around the same time he was said to have a hallway encounter with Scott Bessent.
I was about to say, this is not the first time Scott Bessent has been in the throes.
A lot of folks are wondering, maybe that black eye wasn't from X, his child. We need to bring in the panel on this, but maybe a dramatic reading just to start here.
You're excellent at this.
Well, I'll tell you what, this is what we all woke up to in Politico this morning. Scott Bessent and Bill Pulte, right, the housing finance official, showed up at the inaugural dinner at Executive Branch. This is the new swanky club in Georgetown, open for folks in Trump world. Apparently, Scott Bessent was very upset with Pulte for bad-mouthing him to the president, according to this report, citing sources. Quote, as Scott Bessent approached Mr. Pulte, "Why the blank are you talking to the president about me? Blank you. I'm going to punch you in your blanking face." Club co-owner Omid Malik tried to separate them. Bessent wasn't having it. "It's either me or him," he said. "You tell me who's getting the blank out of here, or we could go outside." Suggesting they go out to do this the old-fashioned. "To do what?" asked Pulte. "To talk?" "No," Bessent replied. "I'm going to blanking beat your blank." Now, this is a network here that has had to, at times, stand by for a president saying swears in the live throes of the news day. So keep the delay handy as we bring in Rick and Jeannie, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, back with us here in hour two. Rick, you worked at the White House in a very different administration. Were people throwing punches when Ronald Reagan was in the Oval Office? Is this the way it's done here in Washington?
Well, if they were keeping it quiet and not putting it on the front page of Politico magazine. I mean, it's and by the way, thank you, Joe, for going through that. I know how dangerous it is for anybody in your business to have to say things that you just said. But look, I mean, what a great way to get some publicity about your new club. Amin Malik must have been like, wow, this is going to put us on the front page. Just what they were hoping for. But look, I mean, we've been talking about this today. I mean, an administration in a little bit of state of disarray, right? The right hand doesn't know what the left hand is doing when it comes to deportations. There have been conflicts over things like trade policy. And of course, you recounted the fight of some sort, either physical or spoken, between Scott Bessent and Elon Musk over who they were going to point to the Internal Revenue Service. And so, I just love the fact that our Treasury Secretary is very muscular attitude toward his relationship with Donald Trump and the rest of the administration.
Jeannie, I don't even know what to ask you. Just react to what Rick said to this Politico story.
Grady, I'm not surprised you are speechless. Boy, I have to tell you, I feel bad for the other members of this club. Imagine you're a founding member, $500,000, and this is the birthday party you get invited to. It's really just very, very shocking. It's not the first time, as you mentioned, we've seen Scott Bessent in this kind of position. But, you got to give him credit. He's 63. Bill Pulte is 37. And online, you're seeing people take bets as to if they did go outside, who would win. So there you go. Give Scott Bessent some credit for, he's not shy about saying, let's take it outside, even if the guy is half his age. So I guess that's something.
Don't mess with Scott Bessent. Let's, by the way, remind everybody, this is the White House that's going to have a UFC fight on the South Lawn at some point next year. Is that what the birthday party? I can't remember if that's a 4th of July event. I think they put a date on that. But Rick, I don't know. Does this speak to the whole bro culture in the White House? What does the Chief of Staff, Susie Wiles, think about this?
We'll never know, because Susie Wiles is one thing, and that is super secretive with how she feels and what she says to other people. So she's the last person we're probably going to see line up on this one. But the reality is, I don't think we've seen the last of this. In other words, there's kind of an all-out fight within the finance community, within the Trump administration. And you and producer James totally stole my thunder. I was going to say chain link fence, put these guys in the arena in the backyard of the White House on 4th of July. And then we could retire the federal debt by putting it on pay-per-view. I mean, this would be fantastic.
Boy, Jeannie, I don't know if you're going to be showing up for that one, but, there's a question here. I don't know if creative destruction is the phrase, but tension within a team can sometimes actually generate results. Sometimes Donald Trump likes this, right? For them to be arguing with each other and for their cases to find the best position on something. Or am I just making it up at this point here?
You're doing very well if you are, Joe. No, it seems like he does. And you look at this and you think, we're told that Scott Bessent's biggest frustration against Pulte was he was talking bad about him to Donald Trump, which is sort of in line with what we see at these crazy cabinet meetings where they are trying to each outdo each other and flattering Donald Trump. So it seems to be that Donald Trump has quite a lineup of sycophants who want to bow to his feet, and this is in keeping with that. But the other thing I think is that Scott Bessent is under enormous pressure, and this reflects that. I mean, let's not forget, he was on Meet the Press this weekend, and he was asked repeatedly if tariffs are taxes. He tried to dodge it, and then in the end, he said no, which Scott Bessent knows is not true. So I might feel a little feisty if I had to say that as well to get my boss's
Interesting.
approval.
I don't know. We were talking team of rivals, or looking for examples earlier, Rick. I'm thinking more like The Who. Roger Daltrey. Like, these guys were beating each other up, or Aerosmith. It's like one of the bands where Oasis, producer James pointing to something a bit younger. Is there actually, in our remaining moments, something positive about that tension inside an administration?
Well, it certainly keeps everybody focused on needing to be able to be inside the booth with Donald Trump. I mean, Donald Trump creates this tension by the fact that he makes himself the only one who decides your fate. And this actually reinforces that. Today, I guarantee you, Bill Pulte and Treasury Secretary Bessent are all about trying to explain this to Donald Trump in the most negative light they can about the other person.
Just imagine what'll happen when they're seen together at the club. How much does that cost a year? It's like $500,000 to be a member.
No, pocket change, please.
Yes, whatever you say. With Preeti Gupta, I'm Joe Matthew. We'll be back. Late edition of Balance of Power starts at 5 p.m. Washington time. Big thanks to our panel for humoring us, as always. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Thanks to the congressman as well for being with us. Congressman Takano this hour. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And And good afternoon, everyone, live on Bloomberg TV and radio, streaming on YouTube and Bloomberg Originals. I'm Katie Greifeld. Alongside me is Bailey Lipschultz. We're doing our best to fill in for Carol Massar and Tim Stenovic. They are out in California. You'll be hearing from them later. But let's kind of check on these markets. The S&P 500 trying to hold on to its gains here. We saw very tepid gains last week, Bailey, but we know it's going to be a busy week ahead.
It'll be a busy week. A lot of economic data, as you were alluding to in the break before we joined the airways. Busy IPO week, which is near and dear to my heart, with Klarna, Figure, and a number of other companies selling shares for the first time. So a lot going on. Buckle in.
Buckle in, buckle up. We have a lot to get to in this show as well. And still ahead, all eyes on that labor market after Friday's disappointing jobs report. As Bailey said, we're going to discuss the big week ahead in economic data. We have BLS revisions and inflation readings.
Plus, we'll get the latest out of Paris after French Prime Minister François Bayrou lost a confidence vote, forcing France's third change in government in just over a year.
And later, a check on the state of the global commercial real estate and investment landscape. We'll discuss with JLL Chief Executive Christian Ulbrich. All of that and more coming up. But first, a check on the day's trade and top business stories with Charlie Pellet.
Very much. Do want to begin with a developing story out of the United Kingdom. Heathrow Airport's Terminal 4 check-in area closed and evacuated. Emergency services responding to an incident. Terminal 4 closed and evacuated because of possible hazardous material. That, according to the Associated Press, quoting the London Fire Brigade. Again, developing story. We'll keep you posted as we learn more about this story out at Heathrow Airport. We have got the Dow Jones Industrial Average right now trading lower, down 66, drop there of 0.1%. The S&P 500 index higher by 3, little change there, up under 0.1%, while the Nasdaq Composite Index surging 91 points at a record, up by 0.4%. Our Mag 7 index up 0.2%. The 10-year is currently yielding 4.05%, with the 2-year 3.98%. Spot gold $45 the ounce higher. Spot gold, by the way, at a record 36.32 right now, up by 1.3%. West Texas Intermediate crude oil is gaining 0.5%, 62.18 a barrel, and Bitcoin up 0.8%, 112,262 on Bitcoin. We're keeping an eye on Summit Therapeutics shares. They have plummeted after new data cast out on the future of its closely watched lung cancer drug. It is not the first round of bad news for the drug. Summit and its partner Akeso previously released data showing it didn't significantly improve survival, though they urged investors to wait for more information on patients from outside of China. Right now, Summit Therapeutics trading lower by 25.8%. Again, recapping, stocks little changed on the S&P, up now by 3 points, under 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you very much, Charlie Pellet. As Katie mentioned at the top, we're in for a busy week of economic data, and likely the most anticipated update will come tomorrow when we receive a revision of the Bureau of Labor Statistics preliminary jobs benchmark. For more on that update and a look ahead to key inflation results, we're joined now in studio by Molly Smith. She is Bloomberg News economics editor. Molly, looking through the Bloomberg story, Wells Fargo and others expecting the BLS to revise March payrolls down almost 800,000. Other shops like B of A and RBC expecting close to 1 million. To start with, how unprecedented is that, and what is your team looking for tomorrow?
So this would be coming after the benchmark of the prior year marked down payrolls by, what was it, over 500,000, I think. So this is definitely, it's not unprecedented necessarily, but we're definitely looking for another sizable downward revision. And this happens when, we see from every month's jobs report that BLS will do monthly revisions to the prior 2 months. That happens all the time. But then this revision is a little different. This is an annual process that BLS does to benchmark the data to another series. And this is something that's taken from the quarterly census of employment wages. So this is a series that it's more accurate, but it's less timely. It only comes out quarterly as opposed to monthly, and it relies on state unemployment insurance records. So this benchmark processing is really important. We get the preliminary number tomorrow ahead of a final number next year. All this to say, data gets revised a lot. This is a very hot topic at BLS right now, something that the Trump administration has very much seized upon, something that they say points to inaccuracies and incompetencies at BLS, but economists and statisticians will tell you that this is very normal. This is something that happens as BLS collects more data, more responses in time, and that's just what we have to do. When you want timely data, this is what happens. You know, you have to, if you're going to, you could put out data quickly, but it's not going to be the most complete set. So this is what happens. This is why we have all these revisions.
Right, and you live and breathe this stuff, obviously. But to your point on the political backdrop here, as you mentioned, the set of data that we're going to get tomorrow, they're more accurate, but maybe a little bit more stale than some of the other labor market sets that we get. But given that political backdrop, given the focus of the Trump administration on the labor market, the BLS, and the revisions that we're getting, I have to imagine that the stakes are a little bit higher. The scrutiny is higher than normal on this specific set of data.
It's very tense right now, for sure. It's been a tense couple of weeks at BLS for sure. And, you know, ever since Trump fired the commissioner after the July jobs report, that one had some big downward revisions to the prior 2 months. Again, this is something that the administration says means that the agency isn't doing a good job, and they say that the data needs to be accurate and fair, and it can't be manipulated for political gains. Everybody would agree with that, but also most people would tell you that that is the status of BLS data already, that there is nothing wrong with it, that this is just the reality of what it's like to collect economic data in this day and age, and that if you want the data to be more complete earlier on, you need to invest in better data collection methods to get businesses and households to reply more promptly to surveys, and that's really where the investments need to be made, not necessarily axing the people who are in these positions and who have the institutional knowledge of how a lot of these processes work.
Well, you touch on the big underlying issue there, and that is collection rates. I mean, we've been talking about revisions to the labor market data for a while. I remember having a very similar conversation with Acting Labor Secretary Julie Su about these big revisions that we were getting. So this has been going on for a while, and the fact that, you know, the initial collection rates have just been going down over time, it seems like that's at the root of a lot of what we're talking about.
Right, and who you're just mentioning, Julie Su, she was acting labor secretary in the Biden administration. So yes, this has been going on for a bit. The Trump administration obviously would concur with that as well, that the revisions are, you know, they take a lot of issue with this, and that I think everybody wants more accurate data, more timely data, but there are just restrictions in terms of like how to go about doing that. And in order to get these collection rates up, I mean, that's really where so much of the conversation should be focused right now. And I think that's what BLS is really trying very hard to do, especially when you look at the establishment survey. Those collection rates for the first month of sampling very consistently been in that 50 to 60% range now for several years. It gets up closer to 80, 90+% by the time they survey firms in the second and third time around. But again, that's the trade-off. Do you want the data up front that maybe isn't the most, you know, comprehensive set because we all want things that are so timely? Or are you willing to wait a while for something that maybe has more of the responses and perhaps is closer to the accurate number? So that's the trade-off.
And Molly, that's not the only set of data we're going to get. Looking ahead to PPI and CPI, what's the expectation? What should investors and kind of economists, what are they looking for? What's going to stand out?
Yeah, so the inflation data, I know, it seems like it's kind of like in the background this week, which is weird. Normally it's like, oh my gosh, CPI, like hair on fire kind of week, but not so much this week. More eyes coming out of tomorrow with the benchmark data that we've been talking about. I mean, I think honestly, though, that is really the right read, though, right now, just given that, especially whether you're thinking about this in the context of the administration or the context of the Fed, it really is the labor market right now that's driving so many of these decisions, and that the Fed, you know, very much priced in to have a 25 basis point cut at the meeting next week. And this is, again, because of the weakness that they're seeing in the labor market data. The conflicting side of that, though, is that inflation is still running well above the 2% goal. And are you in the camp, that you think that this is going to be a persistent inflationary pressure coming from tariffs and other economic conditions right now? Or are you kind of hoping, really, that inflation is going to fade down and that you really just need to step in to support the job market? So that really is the tension at the Fed right now as well.
I think that tension is really interesting. Like you said, I mean, it seems like it's the labor market that is in the hearts and minds and the people making decisions at the Federal Reserve. But that feels like a handoff, right? I mean, certainly a few months ago, certainly at the beginning of summer, it felt like it was the inflation picture that Jerome Powell and company were really worried about. But the labor market has maybe supplanted that.
Yeah, no, that definitely is where what is driving Fed policy right now. And you've heard a lot more Fed speakers talk about this, especially since that July jobs report, which came out a little over a month ago. And that really has sparked a lot more of the conversation around, resuming cuts, and not just for September, but for the other 2 meetings the rest of this year as well. Even some people saying, who knows if the data tomorrow on those benchmark revisions is so bad, could it even spark a discussion for a 50 basis point cut in September? And I find the timing, all of this, just so eerily similar to last year. It's very deja vu when we had a couple of weak jobs reports going into that September meeting, prompted the 50 basis point cut, 2 quarter-point cuts for the rest of the year. But at that time, it was more about the unemployment rate moving up, and now it's more about payrolls.
Time is a flat circle. It certainly does feel similar to last September. We'll see, of course, if they actually go with the 50, but that'll depend partly on what we get in the next few days. That is Molly Smith. She is an economics editor over at Bloomberg News, of course, walking us through what is going to be a hefty week when it comes to the economic outlook. But let's switch gears here and bring in Bloomberg News national security team leader Nick Wadhams. Nick, we know it was a really interesting and consequential past couple of days with the recent immigration raid at a Hyundai Motor Solution battery venture in Georgia. This was, of course, was just one of recent actions that has targeted the workforce, building these sorts of products done by foreign workers. Nick, what do we know so far?
Well, there's still a lot we're sorting through, including what the immigration status is of those workers. But, the broad brushstrokes are that this has really sent a shockwave through the foreign investment community. For so many years, U.S. states like Georgia have really urged foreign companies to come and invest in the U.S. and build their products in the United States. And in this case, Hyundai was really courted very heavily, the idea being, listen, we want these cars made in the United States. We want jobs. We want that output here. So the companies had been brought in, and now you have this real cross-current, contradictory message, which is, okay, you bring those factories into the U.S., and now ICE and the Trump administration are essentially targeting them. So that's going to cause a lot of companies to sort of sit up and say whether, ask the question of whether the foreign investment is worth the risk. So we know that there's a South Korean delegation coming to secure the release of those workers. A lot will depend on their immigration status, so we should know more by the end of the day. But needless to say, this is causing a lot of companies to stand up and take notice.
And Nick, one question to stick here. Is it at all surprising for this to take place in Georgia? We've seen kind of a focus seemingly on typically Democrat-leaning states as it relates to ICE raids and other kind of steps taken by the Trump administration.
Right. Well, I mean, the interesting thing here is I think there's something a little bit different at play, which is in some ways you may have found some officials in Georgia had the ear of the Trump administration. There's some reporting out there that there were concerns from unions that a lot of the jobs at this plant would not be unionized. And so some of the concerns around the potential status of the folks who were coming to work at that plant were raised with the Trump administration because potentially they weren't unionized. So, and which is its whole other element in an interesting story where you've had that, the unions, which were typically a bastion of Democratic support, have really flipped over to Trump and have his ear. So it seems to be a little bit more that's what's at play here rather than the Democrat versus Republican, sanctuary city and blue or red state situation.
Well, Nick, you also touched on another interesting angles, and there's so many different ways you could attack this story here, but it's interesting to hear you say that, some of these foreign companies are standing up and taking notice here, and they're concerned about their workers. It seems like this raid in particular, and maybe some of the other actions that have been taken, stand at odds with some of the Trump administration's stated goals here to bring this sort of manufacturing back to the U.S. and make some of these critical products in the U.S. But if you have foreign companies worried here and maybe hesitant to invest, it seems like that would be at odds.
Right. I mean, and I think what you're seeing across the board is a lot of, I mean, when you look at foreign countries, there's a lot of trying to sort through what the Trump administration's message really is, because this is not the only place where there are a lot of cross currents. I mean, you look at Russia, for example, where the president has talked openly about his affection for Vladimir Putin and suggesting he might step off the gas on Ukraine, but then saying he may impose secondary sanctions on China, and has done so with India. You had the president meeting with the Indian prime minister and promising a very warm relationship. Then that apple cart has really been upset. You obviously have his image as a pro-peace president. He says he's solved 7 wars, and then launches a strike on a boat allegedly carrying drugs in Venezuela. So, you know, it's not only Americans, but also foreigners looking to try to make sense of this administration. And when they have money on the line, especially a putative ally like South Korea, it's going to add to those questions even more. And that's why we are hoping, you know, to see some result as a result of this delegation that's coming into town today to get some answers.
Yeah, Nick, is there any expectation on how long some of these factors or things will take to play out, just given that you are in D.C. right now?
Well, you know, I think there's a lot of sense that folks are going to be buckling up for a long ride through the Trump term, because there are so many forces at play and so many folks who have the president's ear. I mean, especially in this case, it's just, as you mentioned, it is so contradictory when you have the president saying, hey, bring those jobs to the United States. We want that investment in the United States. If you want to avoid tariffs, the way to avoid tariffs is to produce your products in the United States. Well, what happens when it tends to be a plant that's making EVs? You know, in the Hyundai case, and obviously, so the president wants that investment, but he doesn't like electric vehicles, so you have that cross current as well. Suffice to say that when companies are looking at much longer time horizons, they're much more wary about investing in the immediate term.
All right, Nick, great to get some time with you. Really appreciate your reporting. That is Nick Wadhams. He is our Bloomberg News national security team leader, joining us from Washington. Meanwhile, we turn back to what's going on in these equity markets. It is a Monday trading session underway right now. The S&P 500 up slightly right now, but it once again feels like just this wait and see sort of vacuum that we're in. We know that we're going to get some consequential labor market data tomorrow in the form of revisions, maybe a little bit stale, but still politically sensitive there. And then a double dose of inflation.
Double dose of inflation, Katie. We also do get the big Apple event. So the biggest drag on the NASDAQ 100 in terms of points is Apple, down about 0.9%. So pulling back the NASDAQ 100 by about 17, 18 points. But we are seeing what's broadly on the surface of momentum day. Looking on the terminal, factors to watch: momentum and growth outperforming. We're seeing a pullback on dividend and value stocks, though, as you mentioned, not really a ton going on. It seems like we're waiting to see what that economic data looks like. And obviously, again, we do have kind of uncertainty around what that jobs data revision will look like and what inflation is going to signal.
Indeed, for better or worse, this feels like a market that is very focused on the Fed's next step. Of course, we're also counting down to that Fed decision. But a lot coming up on Bloomberg Business Week. Up next, we're going to head to Paris and check in on the state of the French government. I hear that there's some turmoil over there. Don't go anywhere. This is Bloomberg Business Week.
Credit markets all day long here at Bloomberg. We've got the Dow back in the green, has been swinging between gains and losses. Right now looking at a 20-point gain on the Dow Industrials. That's an advance of about 0.1%. S&P 500 index up 12 at 64.93. That is a gain of 0.2%. The Nasdaq Composite Index trading at a record 21,822. Nasdaq up now by 0.6%. The 10-year yielding 4.04% with a 2-year 3.49%. While gold is up $47 the ounce, up 1.3%. Gold at a record 36.33 the ounce. While West Texas Intermediate crude up 0.6%, 62.26 a barrel. Bitcoin up 1%, $112,400 on Bitcoin. Apple shares trading lower by 1%. Apple launching that iPhone 17 tomorrow, and Nvidia's price target has been cut at Citigroup while maintaining a buy rating. Target now $200, down from $210. Nvidia shares up 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you for that update, Charlie Pellet. And as we've been teasing, of course, there is certainly a lot to talk about when it comes to the French government. The news coming today that French Prime Minister Francois Bayrou has lost a confidence motion in Parliament. This should force the third change in government in just over a year. So let's set the scene with Bloomberg Daybreak Europe host Stephen Carroll. He joins us live from the Paris bureau. So what are the different factors that led us to this moment? As I said, the third change in French government in just over a year.
Yeah, I mean, there's sort of a, if you lose one prime minister is careless, you know, but you lose two is perhaps an indication that something bigger is wrong in French politics. And the problem has been, since Emmanuel Macron called a parliamentary election, a snap parliamentary election in June of last year, is that essentially nobody has a majority. The parliament split pretty much into three blocks: on the left, the centre and the right. Emmanuel Macron's party is in the centre. They've been trying to manage with a sort of a working minority situation, and it just hasn't worked, and that's why we're on a third prime minister. It comes down in each occasion to how the government is trying to pass a budget. At the moment, we were working on the budget for next year. The proposal from Francois Bayrou was a fiscal consolidation of 44 billion euros, so some tax rises, some spending cuts. The idea was to tackle something that he's been talking about for actually decades at this stage, which is trying to get France's ballooning debt under control. Something that's been exacerbated by a rise in bond yields globally has been the fact that the cost of servicing France's debt has gotten so much worse. He laid out the plan, first of all, in July. He left the summer open for negotiations. 2 weeks ago, he called a confidence vote, which is his right as a prime minister to do, but he didn't win a majority in Parliament. A majority of MPs voted against him, and so that means that he is now going to resign as prime minister. He's going to be going to the Elysee Palace to meet President Emmanuel Macron tomorrow morning to present his government's resignation, as is foreseen in the constitution, and then it will be up to Emmanuel Macron to name the next prime minister, who will face the same fractured parliament to see if perhaps somebody else might be able to do better and might be able to actually get an agreement on a budget.
Well, where does he turn? Who are the likely names? What actually could be named, or who could be named that would actually kind of unite some part of this parliament?
It's a great question, and it's not the first time we've had to play this game, and it's now at this stage turning into a bit of game of guess who, because we have people ruling themselves out on live TV. As I'm speaking to you, the head of the centre-right party, Les Républicains, said that he doesn't want to be prime minister, so that's one person we shouldn't expect to get the call from Emmanuel Macron. Really the focus, though, has been around whether or not Emmanuel Macron will look outside of his political grouping. He has chosen previous prime ministers from within his own party, from Francois Bayrou, who was from a similar centrist party that was allied with his, and then there was Michel Barnier before that, who had traditionally come from the centre-right party. So the focus really is whether or not he may pick from the centre-left, from the Socialist Party. That would be what would change the parliamentary arithmetic in the National Assembly. That could win over more votes and make the possibility of passing a budget that little bit easier. Now, the Socialists are well aware of their position of power in this. They put forward an alternative budget ahead of this motion of confidence, which included some fiscal consolidation, about half of that of what was given in Francois Bayrou's proposal. So still the idea of cutting back on some spending, some new taxes, including on fortunes of over 100 million euros. They wanted to implement a wealth tax. Those are proposals that they say they're ready and willing to lead a government, but they want to do it on their terms. They want to put forward their budget, and they want to lead a government that's going to include the Socialists and the Green Party. So Emmanuel Macron has a choice. He could open that door to them, or he can go back to some of those from perhaps within his own movement, the likes of the current defence minister, Sébastien Lecornu, is a name that's being mentioned quite a bit. We've also got the Justice Minister, Gérald Darmanin. He's said to be interested in the job as well. And a host of other names that will, people will want to put themselves forward for this role as well. But the question is whether anyone can do any better than the last 3, 5, or 7 prime ministers that we've seen under Emmanuel Macron's presidency.
Yeah, I would imagine that would be one of the big questions here. I want to dig in a little bit more to some of the proposals to try to answer that question, because you mentioned the wealth tax, of course. Bayrou, of course, had proposed 44 billion euro worth of spending cuts and tax hikes. He also floated the idea that maybe they would cut 2 public holidays as a way to reduce costs. I have to imagine that, too, was a very tough pill.
Yeah, I mean, I think you can imagine how that went down with the French public. By the way, there's a series of impromptu parties being held. They're being called leaving drinks for François Bayrou in various cities around France this evening. So there are hundreds of people gathered in different cities around the country celebrating the departure of the Prime Minister. So even in times of political crisis, the French will find a way to be French about it. And this is something that
we can rely on
looking
there.
at the idea. Indeed. In times of great uncertainty, there are things that you can rely on about political turmoil in this country. But, I mean, the question remains is that who could do something that's better or different. A lot of François Bayrou's proposals were about freezing things like income tax thresholds, freezing benefits payments at current levels. There wouldn't be automatic inflation-linked increases next year. That was to try and control it. He had wanted to front-load the fiscal consolidation, something that markets certainly that would be welcomed by markets, because we have seen this pressure on French borrowing costs as well. The Socialists, as I say, want to do it at a slower pace. This is, and Bloomberg Economics have highlighted this again recently, this is not a fiscal crisis right now. It is a political crisis. First of all, the current budget runs to the end of the year, so you've got still several months for somebody to try and cobble together a plan for what happens next year. If they don't get a budget agreed, we don't have a shutdown in this country. What happens instead is the current spending plans simply get mapped on to next year. Not anyone's ideal scenario, but not leading to a situation where there would be massive changes to either how services are provided to taxpayers in this country or how markets would be perceiving the situation down the line. But nonetheless, François Bayrou has repeated, and I think most market participants would agree, long-term, this problem does have to be addressed, and none of the remedies look particularly attractive. Cutting bank holidays was a particularly surprising idea, but François Bayrou, when he announced it, said, look, everything's open to negotiation. If you come up with a different plan, I'm willing to listen to it. None of the other political parties want to engage, though, with that sort of discussion.
A lot of unknowns that we will figure out at some point in the future. That is Stephen Carroll working the late shift from Paris. He is the host of Bloomberg Daybreak Europe here on Bloomberg Radio. Shifting our focus to the energy markets, on Sunday, OPEC Plus decided to further increase their oil production. For more on that, we're joined now by Dr. Ellen Wald, president of Transversal Consulting and a senior fellow at the Atlantic Council from Boca Raton. Dr. Wald, oil prices moving a touch higher after this announcement. Was it all kind of baked in and expected? What's the real takeaway from here?
I think that markets probably expected a slightly larger increase. And so when news of this came in, we were actually seeing prices move higher as a result of those expectations already being baked into prices. The other thing that has come out actually today is that a lot of the countries that are involved in this increase are actually already overproducing their quotas. And so they've all submitted schedules for reducing production in order to kind of compensate for the overproduction that they have been committing. And so it's going to look like actually we're going to see a little bit less oil on the market from some producers, but Saudi Arabia is going to put more oil from its wells on the market.
Yeah, with that in mind, what's the driver there? Is that just strictly Saudi Arabia having the biggest seat at the table and making the decision and kind of driving the ship?
Saudi Arabia definitely has the biggest seat at the table and is absolutely driving the OPEC Plus ship right now, especially amongst those countries that had committed to voluntary reductions beforehand. So these are all, actually rolling back voluntary extra cuts that they had made previously. But I do think that Saudi Arabia is looking at the forecast from its people at OPEC, and they're showing that we're not actually as oversupplied as some people think we are. That's what they're looking at. And so they're looking at a way to, they're looking to add oil to the market. They're looking to increase their revenue, and they're more likely to be able to do that at this point by selling more oil as opposed to selling less oil and trying to kind of jimmy the prices higher. It would be very difficult for them to actually get prices to go higher based on cuts, but if they can just sell more oil, even if prices are a little lower, they're likely to actually make more money. And then you have this whole issue with Russia and sanctions and tariffs. And so I think what they're looking to do is not necessarily regain market share per se, but they're looking to fill gaps in countries that are being pressured to cut back on purchases of Russian oil.
Yeah, definitely a lot of different cross currents there when you lay it out like that. Ellen, it is interesting that heading into this weekend, you had analysts over at Goldman, also at JP Morgan, basically warning Saudi Arabia and its partners that they could risk unleashing what would amount to a supply glut if they didn't cut production. Obviously, they did not cut production. They boosted it maybe by less than expected. But give us the current state of supply. Are we at risk of a supply glut?
So it's interesting. I think that there are definitely a bunch of different forecasting agencies and banks that do see us as either entering a supply glut or soon to enter a supply glut, and then you have OPEC. And based on the amount of overproduction that was actually going on, I do think there is probably more oil on the market now than the numbers that most people are looking at are saying. So if we're actually in a point where we're in the kind of supply and demand balance that we're in, but there's actually more oil on the market than we think that there is, we may not actually be headed for quite a supply glut as these banks have been forecasting. Of course, these things depend on, how global economies go. Are we going to see, slowdown in China or something of that respect? And those things can all act to change, the supply and the demand situation. But I do think that OPEC is not seeing the kind of dire oil glut that Goldman and other banks are looking at.
And Ellen, just in about 15 seconds, what does this mean for the end consumer of pretty much any energy product?
So, for U.S. consumers, we could see gasoline prices going down a bit, but I don't think that that's really all that dependent on OPEC at this point. We're really in an area where we're producing a lot of oil in the U.S. I do think we need to look carefully to see if that production is actually going to start declining, because that could have a more immediate effect on energy prices. In terms of electricity prices, we are looking at higher prices. Right. But that's another story.
All right, great to get some time with you. That is Dr. Ellen Wald. She is president of Transversal Consulting and a senior fellow at the Atlantic Council. For those keeping track at home, Brent's currently trading at $66 a barrel. You're listening to Bloomberg Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all advancing right now. S&P higher by 10. That is a gain of 0.2%. Wall Street's piling into bets that the Fed will be cutting rates next week. The Dow now up 28, up 0.1%. NASDAQ trading at a record 21,804 right now, up 104 points. The NASDAQ Composite Index up by 0.5%. Our Mag 7 Index higher by 0.3%, with the 10-year currently yielding 4.04%, the 2-year 3.49%, and spot gold up $47 the ounce, up 1.3%, 36.33. Gold, by the way, looking at a record. West Texas Intermediate crude oil 62.35 a barrel. WTI right now up 0.8%. Merger Monday with PNC Financial Services agreeing to buy First Bank Holding for about $4.1 billion to add $26.8 billion in assets and branches in Colorado and Arizona as one of the nation's top regional lenders adds to its coast-to-coast footprint. PNC Financial down now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you for that update, Charlie Pellet. Let's check in on the real estate market and specifically commercial real estate. We're joined now by Christian Ulbrich. He is the president and CEO of JLL. He is joining us now on Zoom from Frankfurt, Germany. Christian, great to have you here with us. And you have a really unique perch, of course, a very global perch when it comes to the global commercial real estate market. And so with that in mind, how does the U.S. stack up versus the rest of the world? Is this one broad picture that you can paint with a broad brushstroke, or how much dispersion is there when you take a look globally?
Well, when you look at the Western mature economies, there's the absolute performance and there's the relative performance. The absolute performance of the U.S. is okay. It's improving over the last couple of quarters against what we have seen during the trough at 23. But then there's also the relative performance against the other Western mature economies. And compared to that, the U.S. is doing really great and is an attractive area for investment for international investors.
Are there parts of the market that you see, I don't know, better set up to succeed, whether that's manufacturing, industrials, office? Where are you seeing the strength right now?
Well, again, on the offices side, we saw a really deep trough post-COVID and the discussions around what is the need for offices going forward. But what we have seen over the last couple of months that more and more of the large corporates are asking their people back into the office. In fact, when you look at the Fortune 100, more than 54% of the Fortune 100 companies in the U.S. expect their people back into the office for 5 days a week. And that has obviously resulted in a steady increase in demand for high-quality office space. And as we are coming from a very low base, there's still a lot of runway for the offices sector. With regards to industrial, usually a very strong sector, but still a little bit shaky from the impacts, the unknown impacts from the tariffs around the world. So that is still something where we hope that we get a little bit more certainty into the market, and then that asset class will recover as well.
Well, Christian, you talk about the return to office post-COVID. Obviously, top of mind for investors, consumers, and managers is the impact of AI. How are you seeing companies within office thinking about whether or not they can reduce their in-office footprint, not just kind of to account for people returning to the office, but if you're implementing AI and you need less white-collar jobs, presumably that means you need less office space.
Yeah, that is obviously a big discussion. I would say this is still too early to really make clear predictions what's going to happen. At the moment, it doesn't have any negative impact. You can argue it's at the moment almost the opposite for the US at least, where we have a lot of investment into AI and a lot of new staffing coming into the tech companies. But going forward, that could become a topic. But as I said, we are still in the early innings where AI is really showing its impact. And so we cannot say how that will play out longer term.
Yeah, certainly a lot of investment into AI. Still unclear, of course, what that means for the worker and the buildings that they work in. But I want to wrap in Federal Reserve rate cut expectations to this conversation. It seems like a done deal that we're going to get a rate cut from the Federal Reserve in less than 2 weeks' time. What happens for the rest of the year? Unclear. But how is that conversation and these shifting rate cut expectations sort of translating into what property owners are considering doing with their real estate?
Well, simply speaking, when you have interest rates expected to come down, that will have an impact on pricing because the cost of capital for those real estate investors will come down and therefore they can afford higher pricing. And we had that debate now for many, many months, first whether it will come further up and then when it will come down. Usually these smaller changes in interest rates, and especially the ones which are expected, don't have a massive impact because people are adapting to it. What the market doesn't like is any rapid movements, and especially those unexpected movements. So going forward, those 1 or 2 rate cuts which are now expected for this year, they will support the overall kind of environment for real estate investment, but it will not have a massive impact.
Yeah, well, one thing we were talking about at the top of the show is the impact of kind of immigration and the lack of immigration or some of these ICE raids and how that impacts manufacturing. What's your read of building and investing in Donald Trump's kind of push for manufacturing and bringing manufacturing back to the U.S. if there's so much uncertainty around tariffs and the ability to actually get employees from other countries here in the U.S. to work?
Well, that is certainly an aspect of uncertainty. I mean, before we had all those debates about tariffs to the U.S. Or from the U.S. to other countries, we already had a shortage of skilled labor in the U.S. So that hasn't become much better since then. So for everybody who wants to invest into the U.S., the question, where will they find the skilled labor, is a big debate. And the uncertainty now about immigration, not only the pictures we see on TV, but also the question around whether the most talented people around the world who usually aspire to come to the U.S. will see the U.S. as kind of their destiny, or whether they want to have their careers elsewhere is now an open question. So whatever going forward helps to calm that situation down will obviously then also help to bring more certainty for those who want to invest into the U.S.
We're talking to President and CEO of JLL, Christian Ulbrich. Christian, just want to ask about something top of mind here in the U.S. is potentially the IPO or re-IPO of Fannie and Freddie. How are you thinking about that? What is your view on the potential impact, not only as it relates to U.S. home buyers, but the entire ecosystem as it relates to real estate, if these are two companies that end up getting out of government conservatorship and into the public markets?
Listen, I think we will deal with that situation when they're a private company, as we have dealt with the situation when they were a public company, publicly owned company. So it is a very important instrument for the U.S. housing market. It plays a huge role. And I'm sure that in any format of an IPO, whoever will be the owner of those entities will try to prevail the success of that instrument going forward. And so we see that relatively relaxed.
All right, Christian, really appreciate your perspective. Great to get some time with you. That is Christian Ulbrich. He is the president and CEO of JLL, joining us from Frankfurt, Germany. Meanwhile, we are just about 2 hours to go. Actually, just over 1 hour to go until the market closes. Time flies when you're having fun. Let's take a look at where we stand right now in the U.S. equity market. Taking a look at the S&P 500 right now, kind of an uninspired trade. We're higher by about 0.2%. Volume is bang in line with the 20-day average here. And we're coming off actually a weekly gain for the first full trading week of September. But we know seasonally speaking, this is a pretty hairy, scary time.
Yeah, and just want to call out that we are using that AVAT function on the terminal below average as it relates to trading volume. So relatively sleepy Monday in terms of trading activity, with kind of all eyes on tomorrow's jobs revisions number. We have, as we talked with Molly Smith, PPI and CPI data, and really just trying to get a sense of where inflation is, what that means for the Fed's decision later this month, and obviously how investors are going to position all around that, Katie, whether we get 25, 50, whatever.
Yeah, anything could happen, but probably 25 basis points. In any case, you might be wondering why Bailey and I are here, and here's the answer. It's because Carol Massar and Tim Stenovic are at the Future Proofs conference in Huntington Beach, California, but they're here with us now. So Tim and Carol, you're on another remote location here. What's going on over at Future Proof?
There are a lot of people at the beach, I can tell you that.
Which is right behind us.
Yeah.